Works Focus.
Booyah, we're back. Thanks for having me.
You're going booyah? You're going Jimmy Kramer?
Booyah. Oh, yeah.
Man.
Sorry. Cursed.
Yeah, that's not good.
I don't. God forbid I'm in a good mood. Sorry.
All right. Really, Drama King? You're
works,
number
right?
one. That statement you're changing reporting lines because we're not cloning the drama, the Caberna drama. How are you today?
I am good.
You're new and improved. My God, you must weigh
Considerably less.
Beth,
yeah.
what do you think? 11 pounds less on the hair front?
They cut it all off.
Yeah, they really went to town. Blind barber, right?
Yep.
Cocktail?
So, I had an IPA, which they were running a little behind, so it was nice. But it is a little awkward because it's like, oh, I'm running 5 minutes behind. Here's this time a draft beer, and it's like, well, while I'm getting a haircut, it's considerably harder to drink it. So let me
that's true.
Let me just pound this in 5 minutes.
That is actually true, right?
But I did it, so I can't really laugh. That was my choice. My bad.
Done.
Laid in it. But yeah, it's a summer cut today. Still a little chilly, but this weekend we're sunny and 75. I'll take it.
Yeah, it's like 46 this morning, but we got 80s all next week. See?
So
summer in
excited.
Chicago.
I know.
Fantastic.
And I've been taking a tally of all the extra 30 minutes I've worked throughout the winter every day, and so I'm just going to start leaving.
Oh, you're
way
really
early.
coming in on a rail, aren't you? Look at you. Yeah.
But I've done all the accounting, so it all adds up.
You know what?
Fiscal year to fiscal year.
Hey,
so
you're in by 11, you're out by 1:30, and that's a lot of time.
that's recorded now, so thank you. That's going in the file as well.
That's a lot of time.
Good to go.
You're getting overworked. Absolutely.
You doing anything in your? You have a beautiful backyard. You a new barbecue.
New barbecue? Right? No. This
new
weekend,
fountain.
Actually, getting all that backyard stuff set up and cleaned. So for Mother's Day, everybody's coming for Mother's Day.
Okay, nice.
Yes, we've got. And again, I get the question. It's like she's not my mom. So, but and to my
Dangerous
kids' credit,
road.
I've got 3 kids. To my kids' credit, they're actually embracing that concept, and they're like, all right, one of them's going to handle the food, the other's going to help set up everything, and I think the other's going to play more of a management role.
Okay.
So, no, but they're like, leave it all to us, and I'm like, I'm not going to say a word, and then we're going to see how this unfolds.
Sure. Yeah.
So
that's good. That's
but
fun
yeah,
family event.
Michelle's happy, so
That's
she's happy.
what
I'm
matters.
happy.
There you go. Good man.
Yeah, so that should be nice. But you're off. You're going to golf this weekend.
Yeah, I got a pretty busy Saturday of my own doing.
Now, does the missus get the opportunity to veto things that you are like?
Normally,
hey, honey, I'm going golfing a Saturday morning, and she's like, no, I don't think so.
Normally, maybe. She's in Miami this weekend, so we are.
You're out of the bubble. Wow.
Cleared for takeoff.
Wow.
6:30 a.m.
Now, do you share your location with her?
Yes. And she does too, which is important when she's out in Miami. But her phone turned off or something. But she still had a good time.
What are you going to do? Put together a SEAL team, fly down there and rescue her?
No, just think about it too much. That's all.
Okay, so you track each other's whereabouts.
Yeah.
Is that the norm right now? Pretty much?
I have like 30 people's location.
Okay.
So it's not the most ridiculous thing, and I'm never anywhere I shouldn't be. So.
All right,
by
so
me.
I will. So you will share your location with me then moving forward.
Sure.
Okay.
I have no problem with that.
Yeah. All right. We'll see if that actually comes to fruition.
Yeah, we've got a crazy lineup. We've got golf 6:30 a.m. And then we've got.
Good way to do it, man. Otherwise, you eat the entire day.
And there are people that are just pissed off behind you. Yeah. Then I've got a birthday trolley all around Chicago.
That's fun.
Starting at like 1, and then I've got a concert.
You're going to be blind by 5.
Well, I've got a concert at 5 at Navy Pier. So.
And who's playing?
Just a Brazilian DJ.
Okay, so you call a DJ a concert?
Yeah.
Not just.
Because you're going to see them. It's not like,
Okay.
oh, my wedding has a DJ.
I got you.
It's an art form.
Sounds like that's a marathon. That's a lot.
I know. We'll see how we make it for Mother's Day.
Hey, does the missus come to the concert? Oh, no, she's in Miami. That's right. Oh, that's right.
It's all adding up.
Bachelorette party?
No, just with her friend. Her friend's older sister lives there, but is moving away. So they're like, oh, let's go there, stay there before she leaves.
All right.
Easy money. But yeah, before the weekend, we've got a lot to look at. These weeks and this week and last week, we've ramped up. Monday, Tuesday, a little bit inside.
Absolutely.
And then Wednesday through Friday, we've got action packed. So let's get into the platform. Currency movements, an obvious place to look. Post Fed.
Post Fed, and which was not that much.
Not too exciting.
Dollar buying kicked in overnight.
Yeah. Let's if we
More
can head
on
into the platform,
the announcement
guys.
of huge announcement on trade coming at 9 a.m. That was tweeted out yesterday evening.
How dare you try and steal Jay Powell's spotlight?
Yeah.
It's his day.
God forbid.
It's like wearing white to somebody's wedding, a white dress. You don't tweet on Fed Day. You just don't do it.
Unbelievable.
Can we pull up the platform, guys, and get into some of these dollar pairs?
Where do you want to
go? I thought it was very interesting because I was looking. Last night we had after the close, it's like, okay, dollar stronger. Then it pulled all the way back.
Yeah.
But then, overnight looked like Europe maybe when they got in, some of that dollar buying took place again. Yeah, right around midnight. But yeah, the obvious news, what I want to look at right away, is we just had another piece to the puzzle here, Bank of England rate decision.
Right.
If we go over to the economic calendar, what did they say? This was
25 basis points as expected, but they have, again, where the Fed, when it moves, it's usually a unanimous vote. Here they had some people actually voted to cut more aggressively, others voted not to cut. So there's kind of a mixed bag.
Interesting.
And each person reveals what they wanted to do, and some of the people that wanted to cut more aggressively are now more hawkish. They weren't quite as aggressive. So net, you think rate cut, pound should trade lower. And it did for about 15 seconds and then rallied about 50 pips as we went into it. So
that's interesting because, I kind of like that they post the number of people voting cut versus unchanged. But what totally slipped by me was that, in this cut, you had a couple people that wanted jumbo cuts.
Right.
But pound stronger thus far. We can dig into the details later today, see if there's any. I think the actual the real storyline here is that tomorrow they've scheduled, I think, every Bank of England member to speak, which they don't normally do. So I think we'll have at least a couple more sound bites.
And
that might factor into this.
Right, and there are rumblings that there is some trade deal of some sort.
Ooh, say it again.
Yeah.
Mufasa.
A framework. So it's just this.
That's a good buzzword too.
Yeah, a framework, which means nothing. So, okay, we'll see how long the game of chicken continues to go on.
It looks like it could go on.
This is going to be. I think you look at that. They cut rates. The tail of the conversation was a little bit more aggressive as to not necessarily cutting more. So that interest rate differential, in other words, isn't going to be coming in quite as aggressively. But all we did was take the pounds from the lower end of this new range of 132 to 135.
I was going to say, we bounced right off it.
Would we have had the same reaction if we were at 134.5? Probably not. So while you look at it and it said, well, it definitely, it held that low at 132.60 short-term wise. Do we extend up a little bit? We'll see. But I think it's not that big a reaction. So it'll be interesting to see if we get back up to those 134 level, 133.5. how the market, if it actually holds on to this. This for me is a trade. Okay, we've got a good bounce off the lows. If it holds and plays through the day, then Friday maybe they build a little bit of energy, but if not, probably rolls over a little bit. We'll see.
That's an interesting perspective there when we talk about kind of back-to-back high-impact economic events that I don't always think about. But yeah, with the backdrop of dollar strength overnight, then that leaves a hawkish tone from the Bank of England a little more susceptible to price sensitivity than if the dollar got hammered yesterday. The Bank of England's hawkish as well. It's like, how much are you going to add on to this if we were at 134, but now a little bit more sensitive?
It's a great point, and we do know the mechanics of interest rate differentials between the two countries in normal market conditions drive prices. But while that math exists, the uncertainty around pricing and tariffs is really overriding that equation.
Yep.
So, okay, the UK is supposedly their trajectory, and again, interest rate differentials are not only the implicit or nominal existing rates, but the paths moving forward. That's what currencies price off of. So if the path is they're not going to cut as aggressively, the pound should get some legs to it. Get legs at an elevated level. Trade still uncertain. I don't know how much juice there is in this statement and the move. So it'll be interesting to play through. If we do get trade certainty, the interest rate dynamic will become more important in driving. But I think you can't lean on this to have any more than a transitory kind of impact on it.
Yeah, let's look into one that I haven't looked at the hourly chart yet, but the Australian dollar comes to mind because we've had, I know we had the dollar strength move post-meeting, but you also saw that kind of coincide with a slide in equities, which plays into this market as well. Now we're up like a percent overnight in S&P futures.
Right.
And so coming into this, not really sure where this pair will be if, we kind of bounce off of lows because of the risk on aspect coming back into this, or if the dollar strength overtakes that narrative and it looks like he had still some dollar buying. Is there anything else?
No, and I think if we look at Kiwi, we see the exact same thing. I mean, basically, they got to big levels. 60 cents in Kiwi, 65 cents in Aussie.
Oh man!
And
yeah, this one started a little sooner than that Australian dollar.
It hit
falling apart.
It did a little bit. It couldn't get through the 60-cent level. Again, did it pierce it? Yes, twice by couple of pips, and again for a very short amount of time. So that level again was rejected. This is where it gets to be. There's a little bit more. We're going to see probably a little bit more digestion as we go through the end of the week. So this is one where we've got a great 100-point pullback. If you still think, and we've done this a lot of times, you go out to the daily. If you still think there's some room for Kiwi to normalize, which is probably 65 cents, going back to that period of time. This is a level, you got a nice 100 pip pullback almost, if you want to look at building something for a little bit longer. But this is going to challenge a little bit of this. If we end up trading below 59 cents, as we roll into the end of today and tomorrow, there's probably a little bit more shaking out to be done. It'll be interesting because this is one where the trade setup's there. If you want to pull, if you feel we've bottomed, you're getting a nice pullback. You're not having to buy the highs, and you've kind of got an idea of where you're managing this. So again, these setups I like in terms of just market structure. You also, if they do roll over, this is one where a little bit different than sterling, because we still are at, over the year, a relatively low level. I don't think a breakthrough 59 cents gets me bearish. I think it just means it's going to be a harder trade because we can drift
Interesting.
to 58.60, 58 and a half, 58.30, and it could still be just a pullback from that big rally, but it gets sloppy. So I think this is kind of, they either hold structure here, put another leg into it, or it becomes a sloppier trade. And at that point, you move on to other pieces because I
Right.
think there's more interesting pieces here.
You got a lot of dollar pieces to look at this morning, but if we want to jump into, I've got some slides for
Let's
us
do
today.
the slides, my friend. I love slides.
Let's cut over to the slides. I did my best just to, take one of these high impact events like the FOMC and make it a little bit more digestible. Asking the question, I think a lot of people are asking, but what is stopping the Fed from cutting interest rates right now?
Why?
Just recapping the headline here, Fed held rates unchanged at 4.25% to 4.5%, the Fed funds overnight rate. But I was curious your take on, you've obviously been through a lot of interest rate hike cycles, interest rate cut cycles. Is this graph here normal for something that we've seen, knowing that this 5.5% was the high of the hiking cycle? We took an immediate 50 basis point cut, a couple more, and now we've stayed here for the third consecutive meeting. Is this normal, nothing to write home about, or is this a little weird?
Trying to remember the statistics. I think once they start a cutting cycle, you usually see 4 or 5. But I mean, all bets are off the table right now, given an uncertain, pricing environment. I mean,
Right.
You could see in that press conference, he was definitely, I think he had to catch himself from almost laughing when he said, "There's greater uncertainty." Like, what do you expect us to do?
If he's got a script that he's trying to stick to, he's fantastic because he was so boring. But I think he nailed exactly what he was trying to do.
That one spot where he is greater uncertainty. Like, yeah,
You don't
stuff's
say.
messed up right now. I think he painted a very clear picture of what they're looking at. Why would they do anything? There is, they're right now, given the uncertain nature of what prices are going to look like in 6 months, why would they cut? But they're mindful that they may be compelled to in the future if unemployment continues to rise.
There you go. You nailed it. But that I think is the main question here is why wouldn't you try and front run this if we're having risks of a recession, if growth, we're coming off of this GDP print that was negative for the first time since 2021 or 2022, that scared a lot of people. Why not try and get in front of this? Because even when you're cutting 25 basis points, we're still above 4%. So we're still very high. But I guess the narrative from the Fed yesterday is that they're looking at these two graphs, their dual mandate, unemployment and inflation, and saying that they're okay with unemployment at 4.2% year over year. What they aren't okay with is anticipating a possible spike in this inflation rate that they've tried so hard to bring down from over 5%.
Right. And friction, the unemployment rate, you always have some unemployment because people change jobs. Now, what they used to refer to as frictionless unemployment, or what's the true when no one's unemployed, that number used to be 5%, 5.25%. It's come down now to this. So basically, we're still at what they call the full employment level.
Okay.
Full employment doesn't mean unemployment rate goes to zero.
Right.
Because there's always people in transition.
But it's around 4%.
That full employment level is much closer to 4% than 10 years ago, what they looked at as 5%. And from their standpoint, cutting 25 preemptively gives you a little bit of a cushion. It does, but you lose credibility if pricing ends up, if pricing by whatever gauge you want to use, CPI, PPI, PCE, whatever the acronyms are, if we get back above 3.25% of inflation, they will have basically put themselves in a box of,
I see.
okay, are we going to have to reverse course to address inflation because the unemployment rate is still at the frictionless or full employment level of roughly 4%. Within, we're not at 6.5%
Right.
unemployment. Now, can we get there quickly? Sure, depending on how things unfold. But I think for them to
It's not
dealing with a higher inflation print and holding rates steady leaves some credibility for them to be
Gotcha.
disciplined. And I mean, short of the fact that I think they realize too that what do they control? They're not going to lower the whole term structure of interest rates, and we're seeing that term structure take a life of its own, independent
Yeah.
of where short-term rates are. So, if the goal is to stimulate, manufacturing and investment and home buying, them cutting by 25 basis points is not going to necessarily bring that 10-year or 30-year mortgage rate down.
sure.
Losing the ability to control that by taking action and then not having the outcome you want, you lose some credibility. So I
Interesting.
think that's,
That's a great way to put it. That the risk of, because when you're hiking and you're cutting, you want to do so in one foul swoop, basically, and
Right.
so the risk of having to adjust to the upside and the downside
well, it
is
looks
a
like
lot more uncertain.
You're chasing,
Right.
You're chasing a car. You're
Instead
like a dog
of
chasing
being
a car on the highway.
proactive, yeah.
Right. So
Great breakdown.
short of the Twitter beating he takes or whatever X or True Social, I don't think they have any other choice. And if they see a decline in employment, and inflation hovers around 2.5%, they can go 50 basis points the next
Right.
meeting if they want. So they've got
More tools at their disposal.
absolutely, and I think that we're going to see this bob back and forth. Where are we at? Is this the July meeting? Yeah.
This is the July meeting, which now is the first meeting in which futures markets anticipate a cut of any kind. And
Because we
here
don't have a June meeting.
we do
We do have a June meeting.
do have a June meeting. No cut expected there. And here I've mapped over the probabilities from Tuesday, those black bars there. So we saw really no shift in the probability of a 25 basis point cut at the July meeting, but we did see a little bit of the probability of a 50 basis points lower by July,
Right.
and reverting all of that to where we currently are at 4.25
So what you're telling us,
4.5%.
the trajectory of lower rates has increased intensity.
Right.
That
And-
was the takeaway from the Fed.
but there is still a lot of uncertainty because we're still projected. The most popular opinion in futures markets is 75 basis points of cuts through 2025.
Right, but that tail appeared.
Exactly.
And that, out of everything, you could read the whole thing and whatever. Don't waste your time. This piece tells you exactly what the market collectively assessed is that there, again, and he said it very clearly, I see more downside risks than upside inflation pressure
Right.
at this time. So, and the markets reflected that by putting a little bit more juice in it. In a perfect world, that should make the dollar a little bit softer.
Softer.
Yeah.
If we keep rates where we are.
No. If the trajectory of rates,
Gotcha.
again, there's a balance. If we keep rates the same longer, but the tail, in other words, they've got more baked in as we move forward.
Gotcha.
You can argue that.
Yep.
Again, both.
Over
It's
the
not
long
just the
term.
nominal difference today; it's the trajectory of rates are going to take in the future.
And yeah, so what we saw overnight was dollar strength. Dollar tested a little bit, and now nearing this Thursday open, dollar strength reemerging. So for the time being, markets anticipating. I mean, we had a relatively muted reaction, no crazy moves.
It was there was nothing bumped up against the one standard deviation move.
Right. It was more. It was more decisive than maybe a day of organic price action,
Right.
but in terms of ranges, really kept within its bounds. But like you said, this is a story we have to continue to see develop because a lot of it is taking place in the trajectory of future rates, regardless of when the actual meeting dates are. But that'll do it for us in our Fed recap from the May FOMC meeting. And that'll do it for us on this Thursday edition of Forex Focus. So thanks for tuning in. And we've got Tom, Tony, and Vanetta up next, so stay tuned on Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
Hello.
I like how we are both very just dapper, very like
Yes,
just like
yes.
dressed for the job.
Yeah,
that you
dressed for
want,
success, they
just
call
for
it.
success, and then
And then
we got
Hot Mess Express. Girl, what happened?
What happened was
I'm all dressed up.
You're not all dressed up, not even a little bit.
not even a tiny bit.
You dress up a little.
I'm feeling good.
I think you look nice.
Yeah.
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 Are you wearing your white jeans today?
No, I got a little cargo pants on.
You have your leggings on? Do you wear your socks over your leggings like Gen Z, or do you do the no-show socks like Team Millennials?
Team Millennial.
No, I don't have no-show socks.
So you wear your socks up over your legging, like white athletic socks up over your leggings. So you're Gen Z.
Over my over my knees.
Over your knee socks, kinky.
Those were the thing back in the day. I kind of miss not over the knee,
Your
but
breeches.
Yeah.
When we were growing up.
Yeah.
Yeah, we
No,
had
first it was the ones with the stripes. You had the yellow stripes, the red stripes.
Oh,
And
like
you-
Kareem Abdul-Jabbar.
Yes.
Oh, okay.
Yeah.
Gotcha. Because I was thinking more Sailor Moon, but then.
Yeah, I'm going a little further back.
you would have you'd have a knee pad because
Yeah.
everybody had a trick knee.
Right.
How do you have a trick knee when you're 10?
That's all everybody.
Or if we were sliding for a basketball or something like that, or volleyball, sure.
Gotcha.
And the trick knee.
Gotcha. So what'd you get up
Because
to?
we were all big boned. That's a very big side effect.
Big boned it.
Big boned, yeah. Side effect, trick knee.
What'd you get up to last night?
I had to give a talk.
You had to give a talk?
Had to?
Yes.
Or you were chosen or you wanted to?
Were there people there, or was this just an unfortunate drive-through worker that was on the other end? It was like, sir, this is a
26
Wendy's.
in Wentworth? Where you
Yeah,
guys
sir,
just
this is a Wendy's. And you're like, I would like to give a talk. Would you, while we are on air, because I know that now the talk that you gave, would you like to issue me a public apology?
No.
I would, because I'm probably wrong. What did I do?
So Tom, remember yesterday he was like, "Oh, Vanetta, you don't know how to copyright. You
Yes.
can't speak English.
Yes.
You're a terrible."
I thought it was very pretentious of him.
Right.
Anglais. Yeah.
So, Bat, do you want to know what's hilarious about this situation? He was mad because he did not read my updated slides. He was reading his original slides. And he was like, "These are terrible." And I'm like, "I know." So I quickly, with receipts, proof, timeline, screenshots, I quickly showed him that I am
Self-inflicted
flawless.
dig.
Yeah. So
Wow.
you just
So you don't like yourself as You suck at writing.
I think
you suck at Photoshop. You suck at writing.
Changed something, but whatever.
I did change it into English and for the better. But how did that talk go for you?
It was very good.
Oh, good.
Fun.
Where was it?
It was in western suburbs.
Oh, okay.
It took me an hour and a half to get there.
From here, Lombard. You were right? Were you in Lombard? Or?
Lombard.
Glenbard. Sorry, Glenbard. Yeah.
I don't even know where that is.
Glen Ellen.
I thought that was
Straight
north.
west.
Straight
west.
Oh, straight west.
A skosh north.
Like 100 hours from me. It's like Wheaton.
100 hours.
It's only like 20 miles, but there's no good way to get there from here.
And there's traffic. And to me,
Why didn't you take the Metro?
You could have filmed that.
Did you take the Metro? The Metro goes there.
Okay, I'm not taking them back.
Metro, the only way to fly. What? Okay.
So, yeah, it was good. So I went out there and had a beautiful dinner at Jersey Mike's.
You did not.
Yeah, he did.
You had, what made you, because you wanted to see what they were like?
Eat bitches and be Mandy. What's her name? What is it?
You wanted to see what Jersey Mike's was like now that they're owned by private equity, now that they're owned by Blackstone?
Are they owned by Blackstone?
Yeah.
She just reported on this a couple of days ago.
No, I hadn't been there, and I've been watching the viral videos.
How was it? Oh, is there a viral Jersey Mike's?
Yeah,
you're being sincere. Eat, drink, and be Mandy.
Something.
Oh, so what's the it sandwich? What is it?
Viral chicken salad sandwich.
Chicken salad sandwich? Because I knew that like chicken Caesar wraps were going viral, but this is chicken salad. How was it? What do you rate it?
It's good. It was very good. I was surprised.
How many stars?
Jersey Mike's. I told you this. You just get whatever meat you like. I like the Italian, of course. And you get it Mike's way, and that's it. A little oil and vinegar on there, some seasoning on there. They cut it. You would like the bread because it gets a little mushy. You like
Bada
mushy
bing,
bread.
bada boom, mushy bread, your business.
Cold, beautiful, thin.
Is it hot or is it cold?
Cold, chicken salad, cold.
I know, but I don't know. I don't eat chicken salad, so
It's
I don't.
a viral thing going around. It's like on a million sites.
Okay.
So
viral thing going around. It's been around forever.
Every person eating their food in cars is trying the viral chicken salad sandwich.
Good
So how dirty is this new Lucid now? I mean, it's pretty much, because I remember when.
Oh, no, I wouldn't take that in the car.
Oh, you went.
I dined in.
You dined in?
Yeah.
Oh, you ate there?
Yeah.
You said everybody who's eating in their car. Never mind.
Everyone on TikTok was
Everybody
eating
on
in
TikTok.
their eating in their car. Yeah.
Anyway, that was my dinner.
Okay.
And the event was really nice, and it was good. The kids were good.
Oh, that's good. Were they post grad or were they undergrad? Or mixed?
High schoolers.
Oh, high school. Oh, wow. Are you allowed to even be in a high school?
In 2025, yeah, it's over.
Like, don't you gotta like notify somebody? Like somebody's gotta like. They should not let you around high schooler. Not for any nefarious purpose, but you'd be like, kid, yeah, you don't need this, you don't need that, and then you're just undoing years of parenting. I think.
I haven't been to high school in a long time.
Yeah.
And but it was nice.
That's fun.
Yeah.
All right.
So yeah, but I missed all the good games last night, but because it took forever.
Capitals lost. Right?
Yes, they did.
Yes.
No, the Capitals weren't on. Capitals lost. Yes.
Yesterday.
Last
Monday,
night was
Tuesday.
not the Capitals.
Okay. Who played last night then?
The Panthers played last night.
Okay.
And they lost.
Okay.
And then you had the Stars and the Jets, and the Stars won, I believe. I didn't stay up for that one.
These teams all sound made up. Okay. Well, I'm rooting for the Jets. All right.
Yeah.
Of course you are.
Like the Jets.
But it was yeah. I missed all the. This is like the best time of the year for watching sports. But
While you were out there, though, because they got some good shopping in the suburbs, you should have been stocking up on some Mother's Day gifts while you were out there. I'm just saying. You're on the clock. It's Thursday.
I don't do gifts.
Okay, well, I think whether you want to or not. I'm just saying for the harmony of your life, there's just a lot of women in your life, and they're all moms now, so, you should do something about that.
What do you think Saturday's for?
But it's going to be nice. I think you're going to be on a golf course, and then your lovely wife and daughter and mom are going to get something from the Quick Trip. From the Quick Trip.
Pro Shop.
Yeah.
Pro Shop.
From the Pro Shop, yeah.
Pro V1s.
Yeah, Case. That's all Case wants is some Pro V1s and a new
Vinny's
cover.
Preferred ball when he.
Yeah, a new cover for
He needs a Pro V1.
the hybrid that she doesn't have.
Yeah.
Okay, well, good for you. So that's all you did. You just watched some sports last night.
That's a great idea, actually. I'm going to buy some Pro V1s and give them out.
Last night we had free babysitting, so I took the wife out for dinner. He's in 2 hours of in-class driver's ed.
Oh, that's right. Yeah.
He's like, I can't go again, please. He's got to go twice a week for like the next 2 months or something like that. He's like, no, Dad, please don't make me go again. Don't make me go again.
He doesn't want his license?
Well, that's what I said. I go, listen, you don't have to go. It doesn't matter to me.
Yeah.
Don't go, but Dad,
I was
please, there's
highly
something you can do.
motivated.
Isn't there somebody we can buy?
I was highly motivated to go.
There's nobody in my class.
Oh my God, it's brutal. Driver's ed, sitting in the classroom portion, it's absolutely
2 hours from 6:30 to 8:30.
How long can you talk about buckling your
Oh my God.
Well,
buckling
at
your
least
seatbelt?
now it's like
Certain number of car lengths away. Oh my God.
10 miles per hour for every car length. You don't remember this?
Yeah, sure.
yeah.
I teach them.
But it's like, but that's
It's brutal to sit there.
Oh, it's brutal. It's brutal. It's
But at
gotta
least
be.
the
It's worse than
driving-
taking the Series 7.
at least the driving part is, at least that's something that the kids can't chat GPT, because they can
Yeah.
chat GPT out literally everything else, but at least the driving part they can't fake their way out of that.
His dad, my teacher's name is Mr. Gay Nor. Gay Nor. That's all he goes around
You mean
saying.
Gainer? Just Gainer? It's just Gainer.
Oh my God. There's something inside of this is like, it's almost payback, It's like,
Oh, you plant a bean, you get a bean.
no. It's like, it's almost like you smile, you go, it's good for you.
2 hours.
Won't kill you, kid.
Twice a week. So we had free babysitting. So I took her out for dinner. We had a nice.
It won't kill you.
Yeah, it's good.
Where'd you go? P.F. Chang's?
No.
There's nothing wrong with P.F. Chang's. I was being sincere.
No, P.F. Chang's. I mean, it was good 20 years ago, and I'm sorry.
We know the guy that owns it. Yeah.
What's that?
We know the guy that owns it.
Yeah.
And by we, I mean Tom.
Very nice gentleman, fan favorite. I haven't been to P.F. Chang's in a while. Vinny likes the duck there.
Sure. Well, where'd you go? Of course he does. He's not paying for it. But P.F. Chang's has Wagyu now, I think. So Vinny would like that, yeah.
No, he'd rather go to Roca Core for the.
Oh, sure, of course.
For the Wagyu.
God, I haven't been to Roca Core in forever.
Yes, well, we have a Roca Core out by us, and that's when we go there. He likes the bone marrow and the Wagyu.
I used to love their mushroom fried rice.
I don't know if they have it anymore. I don't remember seeing it.
They have to have it. It was their signature dish.
I don't remember seeing it. I'll have to try it next time then if I remember.
We're getting Chinese food today, though.
I know.
No, we're getting moon bowls or something like that.
No, but Ming Hen and I think moon.
I'm telling you right now, next time you go, get their mushroom fried rice. Unbelievable.
Okay.
It's the best thing on the menu.
Try it. All right, yeah.
It's a steak place, isn't it?
Steak, sushi, fish. Yeah.
Oh.
Yeah.
Very fancy.
Yeah.
Very fancy.
Yeah.
He's
Vinny,
fancy.
Vinny is fancy. He's fancy boy. Hey, we got a great show for you today. It's
We
really
went to Valley Lodge anyway. A good Greek joint if you guys were ever in the neighborhood. Valley Lodge. Very nice. Been around forever.
There you go. You get some spanakopita?
No. We split a slab of ribs and had 2 martinis.
Whoa.
Well, 1 martini and split the second one.
Yeah. You got to be responsible. It's a school
You know what
night.
a martini is, right, Saz?
I mean, I have one most nights.
You do not. You do not. Hey, we got a great show for you today. It's a thrilling Thursday here at Tasty Live. A lot of really good content.
It really annoys me, people who order martinis, by the way.
How does that annoy you?
It just does. It's like such a...
So you're annoyed by James Bond?
It's such a... Well, not by James Bond. But
Shaken, not stirred.
yeah.
Yeah.
It's just
I
like...
don't have any special requests.
It's like, especially people that order like
Kettle One is fine.
A chocolate martini.
No,
It's an espresso
I
martini.
don't even do it dirty. It's
martini.
too salty when it's dirty.
You're just jealous because you want to be you want to be a real housewife so bad.
I just don't even...
You prefer the Cosmo. I know.
Or any one of those things. It's just like, stop already,
I don't know why you're looking at me. I'm an old-fashioned kind of girl, and I mean that literally, like bourbon, old-fashioned.
And it doesn't bother me as much as a martini.
Mm-hmm.
Everything bothers you, so
No, it doesn't bother me.
You're just a crotchety old man who's yelling at 20-somethings who just want an espresso martini. But cool. Hey, we got a great show for you today. It's a thrilling Thursday here at Tasty Live. A lot of really good content headed your way. At the top of the 8 o'clock hour, Trades from the Research Team live. The world's greatest financial think tank is going to present their trade ideas to Tom and Bat. And 8:40, we're going to do an options jive. Yes.
Yeah, sure.
Yeah, we're going to do an options jive. Victor had a family situation he had to attend to. Everything's fine. But hopefully we will be getting Victor tomorrow morning. So don't worry, we are not getting rid of Victor, but he just had something to take care of. So he'll be back on air.
Soon.
He'll be back on air hopefully tomorrow morning.
If he misses tomorrow, we'll get rid of Victor.
Okay, you are the
Promises.
you are the most lenient person I have ever met, which is how we ended up with a decade-long Jewel situation. So come at me,
Start
bro.
getting rid of people now.
Come at me, bro. Okay, cool.
Yeah.
Cool.
Everybody needs to be on their best behavior.
Then at 9 o'clock, we got a market measures. Best times for 0 DTE scalps. I thought we'd done this. Or it was just best times for 0 DTE. And I just thought we'd done a time-based 0 DTE segment.
We've done everything at least once.
Okay. Well, that's going to be at 9 o'clock, part of the 0 DTE series. And then live from the trade desk, big boy Scott Sheridan, counting down all the top trending tickers over at Tasty Trade. And did you watch the Liz and Jenny show yesterday?
I did not.
Oh.
I taped it. I plan on
You
watching
taped
it?
it?
Show.
I'll watch
In like
it
a
this
VCR?
weekend. Why? What's up?
So no, wait, I don't want to mess up the name. Sorry, I should have had this better prepared, but it was.
What they done did.
No, well, they interviewed.
Michael Berry.
Yes.
Michael Berry?
Yes. They interviewed Michael Berry. So,
Eddie Berry, I thought it was.
Eddie.
Okay, whatever.
It's
One of Berry.
Yes,
One of
yes.
Berry.
Sorry.
There was a bunch of
It was Halle Berry. It was
Halle Berry. They interviewed Halle Berry.
Yeah,
the
no,
sister
yes.
to Michael
Ed Berry,
and Barry
Ed Berry, the head of SIBO trading floor
He's
operations.
retiring or something.
Yes. But anyway, it's on our socials if you missed it, but it was just a funny interview because
He's been around longer than us, but
he talked about how he met you guys and that he was a better softball player than the twos of yous.
He was.
that wasn't hard to do. That wasn't hard to do.
He doesn't really. He's old. He doesn't remember the first shot. He has no clue.
Now I'll go the other way. That wasn't hard to do. I mean,
But
we
I
were
think-
part-timers.
I think-
He was a homer.
Yeah.
I think
But it said 47 years, so that's
he was
a
around. He started before us,
Yes,
and yeah,
he started in the 70s. We started in the 80s. I think he started in the 70s, like 79.
well, 47 years would be 78, 70. Yeah.
I didn't hear you when you said that. I
78.
apologize.
Yeah.
But I knew him. I mean, obviously, I still know him, but on the floor for like 20 years.
Yeah.
I don't know what they talked about.
Well, that's what I'm saying. You should go to our socials. Follow us on
was 2
on
days
Twitter
ago.
or Instagram. It was.
It was 2 days ago.
It was yesterday.
No,
Okay.
it wasn't.
Okay.
It was on Tuesday.
Okay. You're right, boss. I'm wrong.
I'm always right.
Okay. Yep. You are. You are always right. I don't even know why I even get up out of
They
bed
do
and
it on
even try.
Tuesdays and Wednesdays, and it was yesterday.
Okay,
Actually,
the interview
boys, it was
on
last
Tuesday.
week.
Say again?
Last week.
But the post,
Right.
they clipped it and they posted it yesterday. So
Yeah, I know.
Everybody's right.
Interview,
everybody's right. Everybody gets a star and a cookie.
You get a participation award.
Everybody gets a star and a cookie. Anyway, hey, that's our run of show for today. You guys want your daily dose?
Sure.
Yeah, hit with my theme music. Let's go.
Our leading story, breaking news, coming across the wire. Our leading story, top story, just in. In today's headlines,
This just in.
breaking news.
All right, everybody. Today is a thrilling Thursday. It's May the 8th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings for today, Mr. Bat.
Yeah, you're not going to like it. Expedia, Akamai, KAM.
Oh, that's no bueno. I think Coinbase, maybe?
Is Coin also? You see, my Taiwanese sources are not up yet.
I think Coinbase is
They do a much
Thursday.
better job than I do. May 8th, after the close. Today's May 8th. You got it. Coin today. Good job.
Boom! Ding, ding, ding.
There is one good stock.
There is one good stock.
There's one good stock. So have I redeemed myself, even though I'm perpetually wrong?
You have. Yes.
I mean,
Anyway.
that's a good kick save.
Hey, getting to the first headline of the day, the Federal Reserve held interest rates steady on Wednesday, but said the risks of higher inflation and unemployment have risen, further clouding the U.S. economic outlook as policymakers grapple with the impact of the Trump administration's policies. Let's talk about treasuries and what happened yesterday and what you're doing today.
I mean, honestly, it was probably one of the most boring Fed days.
Yeah.
They were up small. They were up about a half a point. This morning, they were down about a half a point.
You got jobless claims this morning, too, right?
After 2 days, it was zero, basically.
Okay.
And now the SPOOs are up 50, as foretold, by the way. Yesterday, when you asked the bat, I told you how to do this. I even claimed.
Not exactly what you said, but if you want to.
I said.
You want to revise history?
No, my quote was, this is the most, by the media, most disrespected rally. Everybody's looking for a little bit of a sell-off, and I can see that because of the move we've had. But for that reason, we're going to go a little higher. Exactly what I said.
Book it, Dano. Hey, next headline says investors say this is the toughest investment climate they've ever
There you go.
experienced.
See this?
Yeah, this
See
is
what I mean?
I know it's a funny headline, but I did want to talk about what for you would you categorize as the toughest investment climate that you personally have ever traded?
Last 40 years.
No, I'm being like, was it 2008, 2009? Was it COVID? Was it the 2000.com crash? Was it I'm just curious.
They were all different, but I wouldn't say difficult, like toughest or anything like that. Like I wouldn't use those as.
Was it just the huge periods of just super low volatility? Like I'm being sincere.
That was probably the hardest for me. You're right.
You say investment climate. The toughest investment climate.
9% vol was the toughest investment
is when you're at record highs.
Okay.
We're not at record highs. So
Okay.
this is definitely.
But like during the pandemic when we were at record high, was that hard? Would you categorize that or?
That's the easiest. The easiest.
But though you just said record highs, and then I pointed out a record high, and then you're like, no, that was
Because he
easy.
didn't really mean record.
when we had the pandemic, we dropped 35%.
Right. No, but I mean after that, I'm talking like 2023, 2024, like just the massive
Anytime
rally.
you're at record highs, that's the most difficult environment.
Okay.
The easiest environment is when we sell off.
All right. I just thought it was interesting. Many investors think investing in the current market is more challenging than the global financial crisis or dot com.
I just have a question. Like, who are they polling? Because
that's the most ridiculous thing I've ever heard.
I know.
Most people give their money to somebody
that
else to
article
do.
from?
It is from a place called Your Mom Monthly.
No, it's Yo Mom Monthly.
Your Mama Monthly.
Whoever that published that thing, I'm banning them from this network.
Okay, no, you can't do that.
Ban, baby.
You can't do that. I'm back. Hey, crazy. Overnight news coming out that Ukraine is considering a shift from the dollar to the euro amid geopolitical realignments. A lot of analysts are speculating that there could be a stunning crash in the dollar as tensions continue to rise globally. What are your thoughts around this and then the dollar more broadly?
I think the current administration is putting the dollar in a very difficult situation. Nobody's going to want to.
But doesn't the dominance of the dollar preclude any administration?
Nobody's going to want to protect the dominance of the dollar during a trade war. That's for sure.
Okay.
But I don't know what Ukraine's going to do. I didn't even know they use the dollar.
Thank you for they're irrelevant in so many ways, wouldn't you say?
What? I wouldn't call them irrelevant.
Whether they use the dollar or the euro doesn't impact us.
Sure, no, I know, but
it could be the beginning of a trend.
Right.
I just think that the euro's had a monster move.
Let's talk currencies.
The euro has had a monster move. It's 4 years. It's 10 cents under where it was 4 years ago, though. I mean, because the dollar had a huge move.
Was it 10 cents under where it was 4 years ago?
The euro
was it over 120?
4 years ago it was 220. It was 113, 114 in 2020, 2021.
That's where it is now.
Right there, 113, 114.
Yeah. This is right back to where it was 3 or 4 years ago.
Right. So if 3 or 4 years ago was the right price, then
I don't remember it as being much higher than this. You'd have to go back to.
Is all I'm trying to say.
You'd have to go back to 20. You'd have to go back to 2000 and.
But it was at 02 is what I was trying to say. It's had a 10-cent rally.
Oh yeah. It's been in this range.
Okay.
I think you'd have to go back. I don't remember last time it was up over $1.20, but 113, 114. It's 10% more expensive to go to Europe now than it was. That's all I know.
Sure. Also, ECB holding rate steady. I don't know if you're doing anything in the pound or the yen. Just talking currencies.
We're actually we're long pound.
Okay.
Right this morning, long pound, long Canadian dollar, long euro, and long Japanese yen. And the dollar is actually stronger this morning against everything except the pound.
Nice. Hey, here's a blast from the past. Riot Platforms is selling $44 million in Bitcoin amid mining industry headwinds. The publicly traded Bitcoin miner sold 475 Bitcoins last month because, again, it's hard out here for a pimp.
It's hard out here for a pimp is right.
Riot. We just haven't talked about Riot in a while.
Riot's timing sucks because Bitcoin's 100,000 for the first time in what seems like forever, but really it's back in February.
I don't know where Riot's trading. I haven't looked at it in a while. Where's Riot trading?
Make a guess.
$10? I don't know.
That would be optimistic. It's $8.17 up about 40 cents this morning.
I have not traded Riot probably in.
Ivy rank a 7, under $10 stock. It's very interesting unless you have.
I just thought it was interesting, and of course, in the crypto space, Coinbase is going to report earnings after the bell. What are you going to do in Coinbase?
Well, it's funny. Coinbase is the pre-market's 204, 205. Let's say it.
Okay.
And the last time
it's up about $8 or so.
Yeah, but the last time Bitcoin got to 100,000, I think Coinbase was closer to 300.
Oh, I don't know.
It was definitely higher than 204.
Sure.
That.
Yeah.
I think it was closer to maybe 280 or something like that.
Listen, it started the year at 280. So, you know.
But I'm just saying, last time Bitcoin was 100,000, Coinbase was like, at least 30% higher, maybe 35% higher.
What's the expected move in Coinbase?
Coinbase has an expected move of $16.
But it's already up 8?
And it's already up 8.
Okay.
Well,
That won't
Bitcoin's
change.
up $3,000 this week.
That won't change the expected move. The expected move, $16 to me on there
seems low.
Seems low.
Even though it's an
8% move, that seems low.
See what happens. Hey, let's get to some earnings from last night. Ooh, love to love AppLovin. Shares pop on earnings beat as it announces the sale of its mobile gaming business. AppLovin shares soared as high as 15% in extended trading after the company reported earnings and revenue that beat expectations. Revenue came in $1.48 billion versus $1.38. Did you get out of this early because you already got your profits? I don't remember.
Yes, we had a strangle in there. It came in $4 yesterday. We took it off yesterday, thinking that I thought the earnings were out, but I took it off.
Right.
I didn't put it back on because
you saved yourself.
Yeah, look.
Because you're SMRT.
Yeah, that's one of those things where sometimes being wrong is being right. But I didn't put it back on because
get a song like that.
I couldn't get filled in there. I tried.
Oh, interesting.
Markets were wide.
Markets were like
okay.
$2 wide on each side. I couldn't get a fill.
Gotcha. All right. Well, good job, AppLovin. Other earnings, ARM shares drop on a weak forecast. ARM beat on earnings and revenue, but the company issued a disappointing forecast. The chip designer said revenue this quarter will be between $1 billion and $1.1 billion. They brought in $1.24 billion in revenue. I don't know if you traded ARM.
Down 10.
I didn't because I, A, thought the expected move was too low, and B, again, the markets weren't that good.
Okay.
I didn't like it. We looked
trying to stick to the mechanics of trading stuff that's liquid.
We looked at it yesterday afternoon. I didn't like the markets. I passed.
Because it was going to cost you an arm to trade it.
But I mean, boom.
Hey, I'm here all day. It's okay.
Tip your waitresses.
Hey, surprising news. NVIDIA shares rose on a report that the Trump administration plans to revise a set of chip trade restrictions that was first implemented by the Biden administration. The chip restrictions were scheduled to take effect on May 15th, and it looks like those are going to get rolled back, so then chip stocks. It also caused an uptick towards the close of the market yesterday as the news leaked out. What are you doing in NVIDIA?
Up 2.
We have a small position. We're a little bit long.
Okay.
Oh, look at you. Got that right, Pikachu.
Crazy surprise move in Google yesterday on news that, first of all, Apple's Eddie Q says that AI is going to replace search engines and that Apple was basically effectively looking to partner more with AI companies than with companies like Google for future search. If you remember, Google pays Apple $18 billion a year for preference for their browser and search on iPhones. But then just this little statement sent Google shares down 7% yesterday.
Yeah, Google was down like 12 or 13 bucks yesterday. We got a little bit long on the close. It's up a couple bucks today.
Yeah, it's up $4 right now, 155 and change.
What's Apple doing?
Apple's actually up 2, but Apple's taking a beating too, like Google. So
Apple's been blown up lately.
Yeah, it's 198. I'll say it's up $2, but it's really $1.80. But he's long, so I'm gonna say it's up $2. Make him happy.
Can I just tell you how frustrated I am by search? Like, I will try to find like something that should be so simple and so easy. It's like, okay, I know what this is. Hey, just help me figure out what this thing is that I'm. And then you get the most convoluted, hallucinated AI answer, and I'm just like, that is not even what I was looking for. And I'm just so disappointed. I just use Google. Yeah. What else? What else should I be using?
I feel like it's gotten worse.
It has gotten just monumentally worse.
Yeah, I feel like it's gotten worse too.
So frustrating. Hey, in other news, Microsoft, a federal appeals court rejected a legal challenge by the FTC to Microsoft's $69 billion purchase of Call of Duty maker Activision Blizzard. I feel like this deal has been going on for 10 years. The 3-judge panel unanimously ruled that the lower court had applied the correct legal standards and said the FTC had not shown that it was likely to succeed on its claims of why the merger should not proceed. Basically, massive win for Microsoft. Not sure what the stock's doing.
Up 433, up $3 or so to 436.
Do you have a position in there?
A little bit short.
Okay. Microsoft had that big move, if you remember, about a week ago.
Microsoft's been brutal to me this week.
Oh yeah, that's right. Yeah, because at post earnings it was
But we are a little short of here.
Hey, a string of earnings reports from quantum computing companies this week should help investors who are still waiting to see whether they are financing a technical revolution or hedging their bets on a mirage. IonQ, Qubits, RGTI set to report this week. I'm not sure exactly when, or maybe it was last night, maybe today. But I just wanted to talk some quantum computing stocks.
We don't really trade them, but
they're going to have earnings this week, so maybe man up.
well, we're gonna have earnings soon. I don't think they're having earnings this week.
Okay. Do you want to bet?
You mean they're having earnings today?
Maybe. I think so.
I don't know.
Today.
I mean, you trade any of these?
No.
Okay, so that's my point. You want me to start reporting on things you don't trade? I can do that.
Look it up. Well, you should.
Quantum computing stock.
Would you like me to do that for you? Sure, I could do that.
Here's something that's chilling. OpenAI and the FDA, yes, that FDA, the Food and Drug Administration, have been meeting to discuss the health regulators' use of AI. Sources close to the project says that the FDA could start using AI to evaluate drugs. What could go wrong?
AI is going to operate on you in a week or so.
Oh my God, I don't. What are your thoughts on this, Tom?
Why don't you ask AI?
I mean, obviously, the large language models can obviously very quickly process huge quantities of data and studies and outcomes. But again, sometimes it just makes stuff up. And I don't want because there's a difference between giving a patient explosive energy and giving a patient explosive diarrhea.
I mean,
Two different side effects.
AI doesn't really make stuff up. It hallucinates.
I said that. I said it hallucinates. But it does make sense. It accused some people. It said that they'd committed crimes that they'd never committed, or
it hallucinates.
Right. Just like you, how you have invented lots of things. That's just you hallucinating.
That's right.
AI hallucinates.
Yeah. So.
I'm fine with this.
Okay. Good for you. Hey, Alibaba and RedNote are going to make a partnership as Chinese e-commerce competition intensifies. RedNote, known as Shuanghongshu, is often compared with Instagram, and they are going to be partnering on a feature basically like a scrollable, shoppable feed. So if you see something on like the Chinese version of Instagram, you could then buy it on Alibaba. So that's basically what the partnership is. What are you doing in Baba?
We're a tiny bit long it.
Baba is up this morning, up about $2, but the market's up this morning 1% across the board, pretty much. So pretty much every stock is going to be higher this morning.
Ford Motor Company, Fixer Repair Daily, is hiking prices on Mexican-produced models, citing tariffs. Ford Motor has hiked prices on 3 of its Mexico-produced models, effective May 2nd, becoming one of the first major automakers to adjust sticker prices following President Trump's enactment of tariffs. Prices on the Mustang Mach-E electric SUV, Maverick pickup, and Bronco Sport will increase by as much as $2,000 for some models. Ford.
A better idea? Is that what is Ford?
Ford?
No, that's what is GE has a better idea. What is Ford? I know it's Fix or Repair Daily, but what's their slogan?
Oh, built Ford tough, maybe?
No,
I don't. They might have. I'm sure they've retooled it. I don't know what their new one is.
Up and down. 1036.
All right, there you go.
Also closed up yesterday.
Because
it opened at 996 or something, 994.
You are correct. Good job out of you.
Hey, Netflix hit new all-time highs yesterday. And they also announced they are revamping their TV app interface. They will launch AI-powered search for iOS users. Basically, they want your Netflix homepage to kind of look more like TikTok. They're going to introduce generative AI and allow users to ask for content in natural and everyday language. So for me, I'd be like, show me sexy realtors. And then I would get all the shows that I love to watch on Netflix. What do you think about Netflix making new highs?
$10 make it holla.
Had one downtick this week. Gotta buy those Netflix dips.
You did. It had a downtick on the 5th. You are right.
Yeah. What are you doing in Netflix, though? This is crazy. TP even wrote about it in the Cherry Bomb.
I don't have a Netflix position.
I mean, but shouldn't you?
Obviously not.
I have a Netflix.
There's no earnings. The IV's still high.
Working okay. What do you think Netflix market cap is?
$450 billion.
You know what? That's pretty good. It's probably closer to 500 billion this morning, but yeah, 492 or something. That's pretty good.
It's pretty good.
Good job out of you.
That's why I was a market maker.
Can't stump the Sazi.
Can't. Hey, AMC had earnings. Remember this blast from the past? AMC posted lower revenue over a decrease in theater attendance. Shares of the company fell around 2% in extended trading.
AMC? I'm going to say 472.
I'm going to say sold 271.
Oof.
Ugh.
Ugh. Ugh.
Ugh. Thanks, Nicole Kidman. No. No, she does the ads for AMC. No, anyway. Well, I just was saying that they had earnings, so I just thought I would report.
Nothing
on
to
that,
do there.
so.
I mean, you had to be directional bias.
Yeah.
Hey, Costco managed another month of sales growth in April, but it marks a slowdown from March. The retailer latest report comes as Wall Street looks for signs of tariff impact. Costco said that sales through April rose 7% year over year to $21 billion. That was, though, a slight slowdown from March's gains as retailers process the timing of the Easter holiday, and some consumers look to stock up in advance of potential supply shortages.
Hey, the most important number since the last most important number came out about 6 minutes ago. Even the S&P.
I missed something. What are we stocking up again for?
There's gonna supply shortages just in general.
Who's saying that? Costco?
Doesn't matter. The media's saying it, so it's going to happen, Saz. I mean, come on. You know, media reports on all things.
Supply shortages.
You know how it is.
Yeah.
Get your toilet paper.
Mm-hmm. Get your toilet paper again.
There you go. Hey, what are you doing in Costco?
Costco.
Those are the words coming out of my mouth. Yes, Costco.
1,014 sound enough as the mid price up around $7. Even the S&P just sold off about 10 handles. They're up.
I have to figure out what I'm going to do my next Costco trip. I don't really need anything.
What?
I know.
You've stocked up already? Preemptive strike?
You should. My Costco has the most amazing selection of like Korean beauty, like skincare. There's a moisturizer that would be
moisturizer
perfect
for you with your name on it?
Yeah. Do you want glass skin?
I'm thinking of trying the Costco sashimi.
You do the sashimi. That's a lot for one person. Dude, your hand literally doubled in size this week. Like, maybe let's not.
You did. Like, you had a balloon in it.
Is it better, though? Let me see. How is it today?
No.
Getting better.
No, it's not the right one.
Getting better.
Let me see the other one.
You got hands like... It
is actually better. It actually does. Are you taking your medicine?
Yeah.
Do you wearing the cone at night?
Yes.
So he doesn't gnaw on it?
Yeah.
That's pretty good. Do
There's
you have a nice, comfortable, like, blow-up one, or do you have the plastic one?
Oh, I have the blow-up one.
That's good.
For big dogs.
Big dogs.
There's a new line of protein shakes. Like, you got to start training because you're going to hit the road, you and Bat hard. Like, that's a lot of dates.
And I'm only carrying your back.
You got to, like, I'm worried.
I deserve better.
You're losing, like, several percentage of muscle each year as you age because you don't do any strength training.
Are you kidding me?
You don't do any strength training, though.
Have you looked?
Do you ever do that in the mirror? Like...
But you're not doing any strength training,
Don't make me take my shirt off right here in front of you.
Nobody wants that. Nobody wants that.
Do it.
Nobody wants that. Nobody wants that. But I'm saying, but you should supplement your protein because you're not getting enough protein.
Oh my God, I got too much protein. That's when my hand blew up.
Okay, that's not even true. Anyway, hey, keeping it moving. This is cool. The Ryder Cup is giving away.
Have you ever had your testosterone checked? You should do it.
You got low T. The Ryder Cup is giving away 3,000 free tickets to random golfers on New York's public courses because it's called the People's Perk, and they want tickets to the Ryder Cup to go to true golf fans. I thought this.
Where is the Ryder Cup this year? Is it at Bethpage Black?
Yes, it's at Bethpage. Yes.
Oh, Bethpage Black.
And it costs. You want to guess how much tickets are?
For Bethpage Black to
go
play there?
No, to go to the
to the Ryder Cup?
Yeah.
Oh, I would say $500.
What do you say, Bat?
$750.
So it's $255 just to watch the practice round, but tickets for Ryder Cup will set you back $750.
Bing, 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 bing. I'm a market maker, Sadnov. That's what I do, okay?
I've been to Well, I've been to at least one Ryder
Who
Cup.
cares what you've been to? It's the preferred course of Shark Jeeve and Joe Mama.
They sleep in their cars. But the PGA
By the way, what they do to play that stupid golf course, but not just what those two do, but
what
everybody
people in
does.
general, yeah.
You go there, you basically
The night before.
You go there the night before.
Sleep in your car.
You sleep in your car, and at 3 a.m. they put a ticket on your car. At 4 a.m. they put a ticket on your car. You go up, you pay, and then you wait till you get your tee time. And you're not even guaranteed.
You got to have a clear head to do that.
You're not
okay?
even guaranteed a ticket on black.
Oh, you could be playing one of the.
They have other courses.
Yeah.
Like only a certain number get the tee
obviously.
times.
Sure.
Can you imagine sleeping overnight and then you get and you play the Johnny course?
So the random giveaway, it's going to be 500 tickets a day, Tuesday through Sunday. So good for the PGA. I love this promotion. I think it's a wonderful idea.
Jules and I went to the.
Okay, back to you.
Jules and I went to the Ryder Cup at Medina.
Jules wrote a very nice tribute on LinkedIn about his time here at Tasty Live and how he started the series.
All right, nobody cares. I'm telling you about the Ryder Cup.
At Medina.
The Ryder Cup at Medina.
Nothing could be finer.
But here's the problem.
Nope. Gotta go. Breaking news. Nope. If you sleep overnight, it is guaranteed a foursome. You can walk in at 6 a.m. and you're guaranteed.
To get black, though, Tom was saying you're not guaranteed to get black.
You weren't guaranteed.
He wrote wrong again, Sosnoff. So I thought he was going to tell me about black, but I read it out loud.
Right. See,
I will right now.
Who's saying this wrong?
I can't out him yet.
All right.
I will.
Okay.
I will.
Anyway.
I gotta herd all the boomers together. Okay.
We went to the Ryder Cup.
Yes.
But here's the problem.
What's the problem?
We didn't get there early enough in the day, so we couldn't see anything.
Oh no!
So many.
So you had to sit on Jules's shoulders?
Yes.
In your Daisy Dukes and your bikini top? Oh my God, girl.
Yeah.
Yes,
great.
black. He says guaranteed.
Okay, there you go. Hey, I pulled this for
I'll
you,
spread those
Bat.
bad rumors.
I pulled this for you, and actually, I really like the looks of this. Maybe next time I go out there, I'm gonna get like a hat or something. Utah has picked the mammoth as the mascot to end a year-long search
Don't like it.
after a 13-month process that included trademark drama and more than 850,000 ballots cast by fans in multiple rounds of voting. Utah Mammoth was revealed as the new name and permanent identity for the new NHL franchise. I was Team Yeti. I was Team Yeti.
Team Yeti is 100% what it should have been. I told 6 15-year-olds, and they all agreed Yeti was better.
I do not like Mammoth either. It doesn't.
Did you vote? If you didn't vote, you can't complain.
I like the Utah Hockey Club better.
I didn't like the Utah
I
Hockey
agree with you
Club.
there too. I didn't like it at first, but then I kind of liked it. But
Kinda grew on you?
Utah Yetis
Mammoth
would have been
is the
perfect.
worst.
Well, but look, I want them to see, like, I'm obsessed with, like, Ellie the elephant, who is the New York Spark, the WNBA mascot. Like, if they could get, like, a sassy elephant that ice skates around, I would be into that, right? And they would name her, like, Wooly. Oh, my God, so cute. Anyway.
And I have first 10 to 12 cars guaranteed foursome anytime between 6 and 10:30 going back to New York there. $175 for you, Sosnoff, as a non-New York State resident. No carts allowed, only push carts and carry bags.
Push carts is that's a long walk on that.
Lobster sandwich and calamari, very good there. And the beer when you lose, Sosnoff, tastes better.
Lobster sandwich and calamari at a public course?
It's not any public course, it's Beth Page.
Don't shoot the messenger. That's what.
Hey, finally today from a viral video of the day. Sometimes you just have to believe in yourself. At first, when I saw this, I was like, I wasn't sure what he was attempting to do, what was happening. But I'm just gonna let this play, and he did a good job. I mean, he did the best that he could. Watch this.
You aren't gonna make it, and I hereby say you should not do this. You should not do this. This is a mistake.
I mean, he's got his hat on.
Yeah, I've been recording.
I
Is it ice?
This is
Yeah,
why
so
women-
there's been a layer
No,
like
it's glass, Sosnoff. This is why
yes,
women
they had
live
opened their
longer.
pool and a layer of ice had formed over. Because at first you're not sure. You're like, oh, is there a cover on there? So yeah, you can play it again, but if you want. But yeah, so there's ice. But he's like, of course, the man tells his wife, he's like, I bet I could run across this ice and not fall in. And she's just like, all right, I'm
going
gonna
to
film
make
it.
it, and I hereby
Why?
say you should not do this.
He's right.
You should not do this.
You're a loving wife.
Notice.
Yeah, I
checked
bet
it first.
He's a real man. He didn't check. He didn't listen.
The dog.
I like how the dog is smarter than him.
Yeah, the dog's like, Dad.
The dog ran around, didn't.
Yeah, my dog is cute. Anyway, hey, that's my time, right on the dot. And pet that dog, right on the dot. What's coming up next, Pat?
We're gonna take a quick 90-second break and come back. We got more Tasty Live at this. Confirm and send.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
All right, Julia. All right, Nick. All right, Mike. All right, Jamal. All right, Glenn. What was the last trade that you made?
Oh, it was bad.
Oh, man.
I bought SQQQ. It's like a 3x inverse ETF. I feel like I get shit on for the inverse ETF trades. They're not, I wouldn't say they're always good trades, but I'm like, I kind of don't want to get in the options right now, but I want some leverage.
I got long some Apple, and it just happened to work out in the last about 5 minutes here. So I sold a wide put spread out in May, and it basically lost half of its value in the last 5 minutes.
My last trade was closing out a meta calendar spread that was worthless prior to the 500-point rip in the E-minis.
Last trade I placed was I closed out a put spread in SPY. It went well. I regretted to say it was a long put spread that I put on yesterday into the big move, and I closed it out since we retreated in price today, and it's worked out well.
Short gold options.
How'd it pan out for you?
We're still alive, but we're not looking good.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's look at the market. Even the S&P's back up 43 handles. So I don't know if it's the most important number since the other most important number really didn't move the market. We were up around 50 when the number came out, went to up around 38. We are now up around 43. Nasdaq up 225 and change. Russell up 23. Dow up 229. And volatility for the second day in a row, enough selling off down 71 cents. You would expect it to be volatility go lower this morning. 3% move on this higher opening or higher projected open. We'll see where we open. Bitcoin traded under 115, starting off 114.25 on the number. Probably one of the larger moves with the number this morning was in bonds than anything else. Bitcoin trading, well, it traded over 100,000. It's just a skosh under it at 99.8. Oil up 74 cents. Been going back and forth here between 60 and I don't know, let's call it 56. I'll throw out the highs, throw out the lows. Trading 50, just under 59 right now. Gold was down around 50 a moment ago, a little bit more actually, down 35 cents, $35 right now to 33.56. Silver having a mirrored move, down 26 cents, probably around the same percentage basis. Nat gas up 4.5 cents. That's a little over a 1% move to the upside. And you talked a little bit about the euro and the pound. Euro a little bit lower this morning. Sad enough for earnings. Earnings, we had Carvana. That's up around 11. Shop down around 9. And App 11 up around 40.
Yeah, we traded
today.
We traded a little Shop. It's weird. I saw it up $6 this morning.
Well, let me look one more time. I haven't looked in about 15 minutes. Markets do move. No, it's still down 7.
Yeah. And Carvana, I saw it. It's weird. I saw it down 20 last night.
CVNA
I know.
is it's up, trading 275, up around 15.
So they really didn't help the people that trade pre-market stock.
No.
Those genius bots were wrong, I guess. It's Thursday, May 8th. It's a beautiful Thursday, May 8th, I think, here in Chicago. I don't know where you guys are. We are located in the West Loop in Chicago. If you've ever been to Chicago, West Loop is just adjacent to the downtown area of the city of Chicago. And if you've never been to Chicago, you should get here this summer. It's the most beautiful. It's the most beautiful city in America, especially in the summer. So come on out, check it out. Spend a weekend here. It is great. Everybody that comes here for a vacation freaking loves this city.
It is a great city to visit in the summer. The weather's great. The food is awesome. People are nice.
It's an incredible city. You should get your butts out here. Confirm and send Thursday, May 8th. And we don't take euro. It's cheaper.
True.
I put on a put spread in ZBs, which are the bonds, for a 23 tick credit 2 days ago. This morning, I took it down. I assume that means I took it off.
Okay.
I took it off for a 16 tick debit. That means you made 7 ticks.
Okay.
Right?
Yes.
Okay. So, because they sold it for a credit, they bought it back for a debit. That means they made 7 ticks.
Yes.
How did I calculate my profit?
Well, 7 ticks is about $110. You have to know what a tick is on the bond options, and 1 tick is $15.62. So if you made
figure this out,
7 times 15.62, about $110.
Yeah. So in a full point in the bonds is $1,000, just so you know. And for bond options, it's
So
that's
what they're talking about right here. They're talking about bond options. 15 is half of 32 and change. It's 15.62 per tick. 15.62 times 7 is about $110.
So each bond tick is $31.25. I know this is going to sound a little weird because it's not standardized, but each bond tick is $31.25. Each bond option tick,
because that's what the question is, because it's a put spread. So,
each bond option tick is, like Tony said, is $15.
Thank you for validating.
$15.625. So if you take 15.6,
I'm sorry, I didn't give you the half penny.
And you multiply by.
How do you get the half penny if I just sell something at 1 tick?
It's giving them the exact number. So how do you calculate your profit? It's 7 times 15.625, which is 109.375.
I said 109, 110.
I'm giving you the exact number. 109.375 minus whatever your commissions were or exchange fees to make the trade. But
it's hard being a pimp.
Your profit was 109.375.
That was a long way of going back to what I said originally. Yes, you are correct. You want to tell them? You want to tell them what a euro tick is too, and then go to what a bond option tick is.
15.625 times the number of ticks that you make. Let's go to the next slide.
The answer is 15.62 times 7.
Comes out to 109.375. I recently came into a respectable amount of money. I've never traded more than 5 figures, and I'm a bit intimidated by it. Are there any pointers, or is there anything different I should be aware of with a larger account? Are there tax strategies I should consider?
I mean, I think you should be concentrating on none of what you wrote there and more about making money with the strategies that you're going to use. So go to our page, go to our help desk, learn the strategies, and don't worry about the taxes or anything else on your trading. Now, there could be other ways to shield the money from taxes on the money that you got, but that would be something for a tax attorney or something like that. I don't know that.
If your account jumps in value for whatever the reason is, you put more money in, you recently come into some
Put our
money,
Learn Center,
you sell a different asset, whatever it is. Yes, if you go from $10,000 to $100,000, it's going to be intimidating for everybody because it's just a very different amount of money. It's 10x. If you have $1 million, it turns into 10 million. It's the same thing. Or if you have, $1,000, it turns into $10,000. It's all the same stuff. So there's nothing. You're not going to do anything different. You're not going to trade differently. But
you might be able to use higher probability strategies because you'll have more money in your account, which uses more buying power. So you may have been
more capital gives you what we call optionality. More capital gives you more optionality, gives you more flexibility. It gives you the opportunity to look at more underlyings, different prices, potentially different strategies. It gets you the opportunity to do more of whatever it is that you want to do, but get there slowly. Prove concept, ramp up slowly. Don't do anything crazy, and don't worry about tax strategies.
Agreed.
Let's go to the next slide. What's more important when selecting an underlying to trade, liquidity or IVR?
I mean, the first thing I look at is probably backwards to the answer. So the first thing I look at is IVR. Now, if IVR is high, I then look to see if the options are liquid, or go to the liquidity meter and see if it's 3-4 stars, that kind of thing. So I get the answer would be liquidity is king, but you have to have high IVR to make a trade. So I look at the IVR. It's just an easy way of doing it because it saves me the time of looking at a bunch of stocks that don't have high implied volatility that have illiquid markets, and I go down from there.
It's a really good question because you need liquidity to trade, but if we're going to sort, we're going to sort by IVR. So the first choice is going to be IVR because there's no reason to even look at liquidity if the IVR is not there.
Right.
So I know that's kind of, again, we won't make the trade unless the underlying is liquid. But when it comes to selecting the underlying to trade, rather than look through all the liquid stocks, we're going to look through all the high IVR stocks that interest us, and then go from high IVR, high option volume to liquidity. Let's go to the next slide.
Yep.
I have a hard time remembering how much buying power to use based on the VIX. Instead of a chart that you've shared in the past, what do you think about a simple approach where I just use the VIX plus 10? For example, if the VIX is 20, I use 30% of my net lick. Would that work?
And VIX is 50, you're going to use 60%? I don't hate it. I don't hate it. You're ramping up when volatility is high. I don't hate it. I think, is it going to be 60% or 40% or 50% of your original number that you started with? Is it going to be of the number you have left? If it's the number you have left, then you're actually doing a little bit less than that. I would be okay with that approach. I don't know. It's not bad.
I have no issue with this in the most conservative case.
Yeah.
Here, I'm going to make this easy for you because I actually like what you did here, and I hadn't heard this before. And I think it's kind of a play on what we did research-wise. I actually like this. I'm going to take it a step further, though. I'm going to say in the most conservative case, it's the VIX plus 10. In the moderate case, it's the VIX plus 20. And in the aggressive case, it's the VIX plus 30. So, for example, if the VIX is 20, then in the most conservative case, you'd use 30%. In the moderate case, you use 40. And in the aggressive case, you use 50. If the VIX is 30, it would be, 10 higher than that. So it would be 40, 50, 60. So yeah, I do kind of like this.
Yeah.
Yeah, sure it would work. Let's go to the next slide. But remember, that's the most conservative case. I haven't heard you talk much about the knob. Knob is notes over bonds. I haven't heard you talk much about the knob spread lately. Is that not an interesting trade right now? You're right. We haven't talked about it.
No, you're 100%. I mean, it just dropped off our radar, and I think it is an interesting trade now. I think it's an interesting trade, many times throughout the year. I haven't looked at it to see how wide it is, but it's a viable spread.
We talked about this trade for probably 5 or 6 straight years on the network because, and rightfully so, this spread was trading at a credit. Okay, the knob notes over bonds. Historically, long-term rates are higher than short-term rates. So the knob notes over bonds would historically trade at some debit price. And for about 5 or 7 years, when they lowered rates almost to zero, the notes were had a higher yield than the bonds. Short-term rates. So the trade was inverted, but it was inverted for 5 or 7 years. Every time it got really ugly inverted, we would want to buy notes and sell bonds. And because it made no sense to us why this trade was inverted.
You could put it on the other way too now.
Or it made no sense to us that it would stay inverted. In fairness, it didn't reverse for years. In 5 to 7 years, then finally it reversed, and now it's back to kind of a little more normal. It's not perfect, but it's a little more normal. It's less interesting to us. That's why. When it goes to a debit, it's kind of like, okay, you're back to normal again. For about 5 or 7 years, it was inverted, and I didn't think that was normal. We thought it would get back to where it is now. Timing is everything, though, but yes. That's why we don't talk about it as much. It's not as interesting anymore. Let's go to the next slide. And the last one. I know you're not a fan of Warren Buffett's style of investing. However, looking back at his career, what do you consider to be his legacy? Do you think he has one with respect to retail traders?
It's so funny. I've never thought about Warren Buffett one day in my trading career on I know I've chased Warren, but I haven't thought about what would Warren do in this situation. So for me, I think he brought a good light to investing overall in the market, and I think that's his legacy. I think it's a little bit tainted for the time frame that we have now with the way that we've made advancements in computers and everything else and access to trading so simple. So I don't think he's kind of evolved in that way, but I mean, obviously it was good for the market.
I mean, Warren Buffett was obviously good for, he's the most iconic figure in investing in our lifetime.
Sure.
So,
and a good role model. I mean, he was
a modern day, icon, but that's, so to me though, looking back at his career, I consider his legacy to be something that I talk about a lot, but it's really hard to appreciate. It's about longevity. I think that success for 99% of people, wealth creation, success, whatever you want to call it, is all about longevity. Because nothing comes easy. Everything is earned. I consider the amazing thing about Warren Buffett is, with respect to his legacy and with respect to retail traders, is the amount of time that he did it for. Like, if you could do something for over 6 decades, you deserve, I'm not saying everybody deserves to make $100 billion or whatever, but you know what? That's his legacy, is that he basically, he earned everything. Like whatever he's got, he earned it. And he did it he did it through duration. He's the ultimate grinder.
Yeah, fair enough. We'll take a quick 90-second break and come back. We got more Tasty Live after this. Then what comes up next? Trades and the research team. We'll be back in 90 seconds with Tasty Live.
of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Do you remember Gilligan's Island?
It's near and dear to my heart. Every day I come home from school, what do you want to know? Let's sit right down and hear a tale of a fateful trip that started from a tropic port aboard this tiny ship. 5-6 passengers set sail that day for a 3-hour tour. See, you didn't think you were going to kill Gilligan's Island.
3-hour tour. Which one was Bob Denver? was it this here? Which one was Bob Denver?
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, so enough out of you. Trades on the research team. Who's our first researcher? That's right. Cavassier himself. Gad, what's up?
What's up?
How are you, brother? Everything good?
Good, everything good.
You're looking good again.
Thank you. What's up, Tom?
See?
I like it.
Yeah.
You like it? Why? Because he's got the Tasty Trade up there?
I'm royal, so.
He's a team player, unlike what you're doing over there.
I was a team player yesterday.
What do you got for us today, Gad?
I've never worn a tie. I don't have a tie, actually.
Taiwan or Thailand?
Thai.
When you say Thai, please tell me.
How many ties do you have?
8.
8?
Yeah.
You knew that pretty quickly.
Yeah.
Well, that's what it's in the guy's handbook. 8 ties.
Some
is what
kind
you
of
need.
like. You have 8 ties. You know you have 8 ties.
Yeah.
I mean, I don't know. I ask you, how many ties do you have, Sil?
0.
No. I have 2.
You have 2?
Yeah, I do actually have 2. I actually went for graduation.
Okay. How many ties do you have, Kai?
Probably have 10, 20.
Really? That many?
10, 20 is a big range. I have about 20.
I remember. The last time I wear was like 10 years before I
Right.
moved to California.
Yeah.
How many ties do you have, Data? 100.
Yeah, I got a lot. I wear the same ones,
but I got about 100.
How many ties do you have?
About 20.
Wow, I'm with Sahil. I had 2. I don't even know if I have 2. I think I might have 1.
The work generation where you don't wear ties.
How many suits?
Apparently.
What?
How many suits you have?
How many suits?
Yeah.
I don't have a suit anymore. I have a tuxedo that I bought for my daughter's wedding and for my son's wedding.
Crumpled up on the floor.
I have a jacket I bought for my son's wedding. That's all. I have a jacket and a tuxedo. I don't have a suit.
I bet you do have like 20 suits, right?
I have about 10. About 10 suits. But my suits are,
classic.
I mean, equivalent to his tuxedo, which he bought. I mean, they're like 10 tuxedos. I mean, I buy nice suits. I don't.
Italian ones.
You dress good, you feel good, you trade good. That was my mantra.
Oh my God. Happy horse shit. Okay. Yes, can you trade good?
I mean, the reason why, the flight attendants would call me a hot cup of coffee with a lid.
The only thing I know I own a lot is the shoes. I own a lot of shoes, so.
You own a lot of shoes?
Yeah.
Way too many.
Yeah, he's got a lot.
Yeah.
How many pairs of shoes?
More than 20 or 25 shoes. Oh,
More
wait,
than how many?
more than 25.
25?
More than 25 shoes, yeah.
Like, you talking about sneakers or shoes?
Sneakers and shoes. Like
Sneakers and
mixed,
shoes.
yeah.
I have 2. But I have Crocs.
There's no way.
2 and
Really?
Crocs. Yeah.
Oh, that's so.
Okay, well, this is riveting. What strategy do you have from trades from the research team?
But I'll put my wife up against you because she's got like 500 pairs. So.
Okay.
And Iron Condor and Lily? Lily's always at the top of the leaderboard on movement for the day. Like,
exactly.
Lily's a mover.
So I'm Lily. So I'm doing Lily today. So
I got a position on in Lily. What are you doing? Which one?
June.
Lily down this morning. I'm sorry to interrupt you, Gad.
Again, the stock is PIG, pig.
I wouldn't say it's a pig. It's been as high as 900. It's been as low as 650, and it's 760. I mean, it's in the middle of its range.
776.
Yeah. So
it's been a pig over the last 2 days.
I currently have on the 600, 940.
600 and 940.
Yeah, that's I have a strangle.
Okay, I have 680, 670, 850, 860.
Let's take a look. You want to do 680,
670,
670,
850, and 860.
850?
Yeah, I did adjustment this morning.
860.
Yeah.
You adjusted for the down move.
Yeah, this morning.
It's down $14. Yeah, looks like you did adjust. What price do you think? Well, you better wait and see where this thing opens, but because Lily's not that. Lily markets are wide.
Okay.
Yeah, so I'm going to put it in. Stock's down $14. I don't know.
Let's put it in at $4.50, $5, whatever, and cancel and replace.
$4.50. Put it in at $4.50 and we'll cancel and replace.
Okay, good.
All right, good job out of you. Who is our next researcher? That's right, Jaws himself. How are you, my friend?
Doing good. How are you?
Look at now. Say something nice about him. He's wearing Tasty Trade. Don't say something.
Tasty Trade shirt. No tie though.
That's the way I wear it. No ties. You know.
Is your tie reversible, by the way? What? You said you had 2. I figured you had 1 that was just reversible. I mean, if I know you, that's how you would be.
I only know of actually 1, but I think I have 2.
Okay, there you go.
I
knew
know of
it.
1.
I
There's
knew
probably
it.
1 crumbled up.
I was selling 2. Uh-huh. All right, Sahil, what do you got for us today, my friend?
Airline stocks, UAL.
Your dad said it's nice to see you on air. Glad that you're alive. Call him from time to time.
Uh-huh.
Okay?
Literally just called him 2 days ago. But
2 days ago?
Yeah,
2 days. If I didn't talk to my sons for 2 days, I would cry. So
please.
call him more.
Please.
What?
Nikki, when he was away?
Called him all the time.
Yeah.
Every single day.
Twice on Sundays.
Twice on Sundays.
I'm going to ask that kid when he comes in here. I bet you called once a month. You're lucky.
Nothing good can happen from that phone call.
I just did an entire
and nothing good.
Just did an entire trip with him. Sometimes you need a little,
You did do an entire trip with him. That was.
Call your
And it's
mother.
just me and him.
Call
Mom's
your
not
mother.
there.
She worries. Call your dad.
No. I call my mom.
Yeah, you have to call your mom
That's
because
very
that's
important.
part of the contract.
Yeah. exactly.
Being firstborn son, you have no choice.
Yeah.
Your dad, he'll be okay.
He will be fine. Okay. He was perfectly fine when I left.
I got it. All right. I'm wrong. UAL, get out of here.
Well, you guys are going to be taking a bunch of flights over the next coming.
Oh,
months.
I see what you're doing there.
No, I don't.
Oh,
You should be coming to us to Atlanta. You went to Emory.
Oh, huge news. I forgot to tell you this.
What?
So I got an email from American Airlines. I have to get this confirmed because I don't think it's spam.
This is spam for sure. 100%.
No, I don't think it is.
Go ahead.
And I got an email, and they're inviting me to be, okay, get ready.
An ambassador?
Concierge.
Concierge level. They're inviting you.
Yes.
For $1,500 a month, you can be concierge level. That's what they're going to tell you.
There's no fee.
Yeah, sure. Okay.
Oh, my God.
Okay.
There's no fee.
Okay, we'll see. It's spam.
I've been working on this for 30 years. And finally, at the level, I'm at the concierge level. That's like a free sub.
You got recognized by American Airlines.
What?
We got recognized by American Airlines.
It looks like I just got the email 2 days ago.
right.
Getting concierge level, by the way, is an invite. You can't buy your way.
I understand.
Can't do enough.
Highest elite tier offering the most extensive perks to top spending customers and corporate travel influencers. Such perks as larger cheese cube.
Yes.
More ice in your Coke.
Yes.
You're going to get all these perks. I don't know if it's going to be great.
You get to go to the good lounge.
You get to go to the good lounge, which is right across from the other lounge.
But
Yes.
here's the whole key. Like when we're boarding together, we're flying together.
You get to go get in before the disabled, which is wrong.
You get to go before disabled, before military,
everybody, which is
before
wrong.
families,
Sick and wrong.
families with little
That's
kids.
right. That's right.
You know, you get to push everybody out of the way.
Guaranteed seat availability, even on sold out flights. You're the SOB that they kick off the person who got his seat 3 months in advance. You're that guy. Don't be that guy. Because I was that guy with hair today, gone tomorrow.
You better watch yourself. You better
You're going to kick me off my flight? You're going to just travel just to get me off?
I'm just telling you. If this is true, because I haven't actually got it yet, but I got the email. If this is true, it's going to be life-changing. Like when we're flying places together, all right, it's going to be like, I'm going to go up, okay, and I'm going to get on the plane, and then I'm going to, wave you down eventually.
I want his seat.
So that's why
You just
United,
be like, that guy, I don't know him.
there's nothing we can do with United.
We're not together.
All right, what do you got for us? Give me
Concierge on
some
American.
loving.
You can't do United.
Okay.
Mm-hmm. Oh, the concierge level's being canceled September 21st.
Okay, what do you got here? June, what's the strikes?
65 and 90. I think it's up $2 right now, around 67. So
It's actually it's actually, it's almost 77. The stock on the opening.
Oh, okay. That's what.
So what do you want to do? You want to sell
77,
the
yeah.
65?
Yeah, 65 and 90. Yeah. Mm-hmm. I'm going based off of 77. Yeah. Because the expected move is about $11 or so. So. Mm-hmm. So yeah. When I was checking it, it showed $3.18 in credit, but that depends on how it is this morning, right? Yeah.
Yeah. Let's see where they opened this thing this morning, but sure.
Yep.
But sure. I like it. Don't sell past the close.
No, I will not.
You'll never get to concierge level selling past the close.
Agreed. That's the new goal in life. Now.
That's when you just say, okay, thank you very much. My job here is done.
Concierge on United now. Now
So
the trade makes
so
sense.
I'm going to tell you this right now. It's just a little bit of advice.
Uh-huh.
You start now because you're young.
Yeah.
Early 20s.
Uh-huh.
By the time you're 68, you might have concierge level.
You too might be concierge level, which would be 4 years before he made it because he's 72. Who's our next researcher?
For 45 years.
I will.
The best song for walk-up music. That's right. Kai, what's up, my man?
Not much. Too much jokes flying around. I almost forgot what my trade was.
Apple?
Snapple?
Yeah, I haven't traded Apple for a while.
I've been very active in Apple.
Yeah, because right now the implied volatility is really good. After
Actually, it's Bapple. That's what they're calling the Bush Apple beer. Bapple.
Is that from?
I forgot to bring that for the kids last night. I probably would have got in trouble.
Is that from the commercial Liberty?
Bapple. What do you got in Bapple?
1 standard deviation strangle. The max return on capital is over 20%, which is pretty good for Apple.
Yeah, Apple.
I don't have any problem post earnings.
I have Strangles already on in there. 70.
And you should. Monthly implied volatility of 36. Ivy rank at 36, but the monthly implied volatility is actually very high.
Yeah, not bad.
We are very long Apple right now. We're long stock.
You're long Apple.
I am.
Okay.
I bought it, but I'm long it at bad prices.
You bought stock.
I'm long at my average.
I remember you talked about it Monday morning. Did you buy it on Monday or?
My average is 200.
Oh, okay.
Ugh,
it's been a while.
Why would you buy it at 200? It's 197.70.
I know. right. It was 190.
What's wrong with you?
Well, because when I bought it at 200, but it was just when the day before.
When it had been 210 3 days
The day before was 209.
Yeah, right.
Okay.
Yeah. So yeah, I'm long Apple at 200. So I need a little uptick here.
Sure.
All right. Beautiful. Thank you.
Beautiful. Who is our next researcher? Like your song too. What's up, my man? Dr. D, the big
guys.
D, as
That's
he's
right.
known at home.
That's right. Yep. So I'm trading Queeb today.
K-Web.
Yeah.
Queeb.
So I looked at the Queeb, and we got some of the biggest components here are Alibaba, Tencent, PDD Holdings, Trip.com, which I didn't realize was a Chinese company. It got bought out in 2018 from a Californian company. Tencent and Baidu. Some of those are the biggest components there. But they're U.S. stocks that are, I'm sorry, they're Chinese stocks that are traded offshore. So looking at it and doing a short iron condor, we got pretty good IV in this stock. IV rank is 30, but it does move around quite a bit. 31.29, 37.39 is what I'm doing here.
I prefer the strangle in here.
Okay.
Not buying the wings. 31.36. Oh, you have 31.37.
Yes.
Pretty much 6 to 1, half dozen another. Yeah. I don't mind the strangle in here.
The reason why I did the short iron condor is just heard rumblings about possible delisting of some Chinese stocks. Didn't know how this would maybe impact.
But this is a ETF, right?
It's an ETF, yeah, that's right, and it's one of the most popularly traded ETFs according to
They're not
the
delisting
CBOE.
Chinese stocks.
Not all of them.
It would just be the dumbest thing. Like, I can't believe we'd be that dumb. Why wouldn't you want to control everybody's money and their equity? It makes
maybe they're busy.
It's whatever. I'm not going to get into a discussion. It makes no sense.
Yep.
But thank you. I will do this.
But thank you, but off with your head. Who is our next researcher? Finishing strong, son. We gotta wait for the guys to get out of the office. Like I said, we saved the best for last. That's right, it's Julia. What's up? Save the best for last.
Hello, guys.
Hello, how are
Thank
you?
you for having me. How you doing?
Doing well, thank you.
Julia's very excited for me because she knows that this concierge level just
is something you've been pining after your entire life.
I can't even imagine. I can't even put myself into that space.
I'm setting goals for her.
I hope you get it, because if you're concierge
Which
level
is
and
young,
there's any shimamagegi working with you, that would be me. I get to get the same level as you. I've always said, Sadnov, I want somebody else to be the big shark, and I want to be that little pilot fish that gets to go where the big shark gets
Only when
to
I
go.
fly with Julia will I let her, I'll let somebody come on.
Okay, Britt just committed Harry Carey. What do you have for us, Julia?
Today, I'm looking at Google.
But now Julia has something to aspire to because she's
I know,
young.
I have goals.
Hey, she has goals. Yeah. It's
I'll
exciting.
never be able to experience that, but I can dream. And today I'm looking at Google because it took a dump yesterday.
Dare to dream.
It recovered a little bit.
It's
I can
gonna
dare to dream.
It recovered a lot this morning. Up
It
like
did actually.
$3.
It's reversed a little bit. I think it's up 3.5 now. It was up like 4, I think, when I put this trade together. So I tried to adjust for that, but it does seem to be moving. So I'm looking at the 140, 175 short strikes, going to find risk in here, and then went $10 wide on this one. Collects $2 in credit for under $800 in buying power.
Doing a little upside skew.
Yeah.
Okay, let's take a look. Google. June.
Google be schmoogle.
Google bishmoogle.
I got all these strikes in here.
It is moving around quite a bit. The goal was for this to be pretty centered on the open, but it's going to be a little bit skewed just based because the strikes are $5 wide.
140, 130, 175. Oh boy.
You should take about an hour.
I got a lot of stuff. I got a lot of these same strikes. I'm just trying to figure this out.
Mm-hmm.
That can be my other goal. My other thing to aspire to is having so many Google positions on. I don't know what to do with them.
Yeah. Actually, I'm just going to eliminate the wings because I already have the same position on.
I think I'm 1 for like 20 at this point. You bought wings on one of the trades that I have shown.
All right. I routed it without the wings. Wingless.
You know, to be expected. Wingless.
What's a bird that can't fly? The dodo bird?
Can chickens fly? I don't
yes,
think they can fly.
Sometimes confused with the turkey.
No.
Turkey?
No, chickens can fly. It's dodo birds,
Chickens
right?
can fly?
Have you seen a dodo bird out in the wild?
A dodo bird?
Yeah.
We have one in our house. We have it in our backyard.
Chickens
No, you
can
have
fly.
one in your house. She doesn't have one in her house. We're going to take a quick 90-second break and come back. Julia, great job out of you. Great job out of the whole team because they're listening right now. We're going to take a quick 90-second break and come back. We got opening bell, Julia, the moment we've been waiting for. We'll be back in 90 seconds.
Thanks, guys.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Penicillin.
Tomas, we are back and the opening bell's in 10 seconds. Son, when was the last time you saw a dodo bird?
Live?
Yeah.
I don't know if I've ever seen one.
Right, because they've been extinct since like the 1700s. So
could they fly?
No, they could not fly.
Okay, there you go.
But we can't prove it because you've never seen one. So
Are they
there's
really-
your bell. You got low ding over there.
Are they really extinct?
Yeah, they're really extinct. Sosnoff, I'm
so
sorry.
maybe that wasn't a dodo bird I had in my backyard.
Probably not. Even the S&Ps.
I did have a peregrine falcon.
Yes, because they were brought here to.
I know. A peregrine falcon in our backyard sat in a big giant tree. You fly around the city all day and then come back and sleep in our yard.
Even the S&Ps up 38. NASDAQ up 207. Russell up 23.
No, we have a bald eagle too. In Michigan, we have a bald eagle.
Oh, Michigan.
Yeah.
Okay. Michigan.
Bald eagle.
Maybe. I have finches in my yard. I had an Oriole the other day. I have a picture of it if you'd like to see it. Beautiful bird. Vibrant colors on it. The most vibrant colors I've seen. We have bluebirds and we have obviously robins, but not a ton of them. Do you know why we don't have a ton of robins?
I have.
Because they eat worms. They don't eat the seeds that we feed them.
Huh.
And I give finches finch food. And I'm very complex, many levels to this onion, Sosnoff, and jelly to the Orioles.
Jelly to the what?
To the Orioles. That's what they like to eat. See that? You didn't know. In finches, they're yellow and red. They're beautiful. You would never think they were in the sky. Everybody should have a finch feeder.
A finch feeder?
Finch feeder. They eat Niger, a little grain-like black seed.
Hell, something's wrong with you, dude. Niger?
Russell, yes, your kids will love it. Everybody will love it. Russell up 22, Dow up 200, volatility in by 66 cents, Sosnoff, as foretold. Bonds are up 1, Bitcoin back at 100,000 even, Sosnoff. There it is. You saw it. Get your 100,000 hat out. Oil up $1. Gold down 22. Gold trying to catch a little bit of a bid here. Silver down 7.5 cents. What's moving this market, Sosnoff? Well, to the downside, you got Lilly down 11 and change. You're trying to make a trade in there. ARM for earnings down just about $7. Shop for earnings down $2.50.
Funny thing about Shop, the puts we sold.
Shop should be okay. $3 move.
The puts we sold. Wow. Puts we sold in Shop for, I forgot what. We bought them back for 22 cents.
I will get you your number.
You
did not sell them for 22 cents. I can guarantee
we just bought them back for 22 cents.
I know you said you don't know what you
sold them 60 cents, maybe
61 cents.
It's a pretty good trade. Stock down.
But Johnny,
Carvana,
CVNA up $14.
Sold a strangle in there. Nice little winter chicken dinner.
Sold at $1.90.
Sold a what?
You did more puts than calls.
Carvana, no.
Okay, well, you bought more puts back than calls, so you must have sold more puts than calls, don't you?
I'm not sure what movie you're watching. I bought him back the same number, but whatever.
You
it just got filled.
Yeah. What about? I'm so sorry. Yes, you did a. Did you do it? 170, 335 also?
Oh, that was yesterday.
Sorry. Okay. Well, you did that, right?
Yeah, that was yesterday.
Okay, I apologize.
All right.
I was looking at yesterday.
So taking a quick look through everything. Problem children this morning. Ooh, don't rally back gold. Don't rally back gold.
I just said gold's trying to catch a bid. Now it's only down 20.
Rally.
Yes.
Rally.
Did you do anything in app? No,
EPP, no. I did yesterday, but I didn't do it today.
Right. You got an app up $39. Let's see what's moving to the upside, Sosnoff. Looks like MSTR up $16, Carvana up $13, Meta up 10, Tesla up 8 and change. Coin for earnings. Vanetta was right. Up $8.50. Costco up $7. We mentioned that a moment ago. Microsoft up $7. Netflix up $4. Sosnoff?
Give me a sec. I'm just going to re-enter some of these trades from this morning. Trades from the research team. I'm getting down. I put some in above the market, so we're just going to try to get better prices. Wow, some of these are premiums come in a lot.
Volatility in by 60 cents.
Ooh, Shopify, they hit it a little bit.
Shop.
Filled.
They hit it. It's down 450.
No, I'm saying it was down $2 a second ago. Shopify, we filled it, and you know what? This continues to be the earnings cycle that
keeps on giving. It's a gift, Sosnoff. It's a gift.
This continues to be the earnings cycle that keeps on giving. Today, both Shopify and Carvana were winners.
Don't look gift horse in the mouth. Do you know why they say that, Sosnoff?
Forgot. What's the reason again?
Because when horses were a mode of transportation, somebody would gift you a horse. You had a mode of transportation. You would look at their teeth typically to see if the horse was healthy and good. But if you got a free horse, don't look a gift horse in the mouth. Like, accept the gift graciously.
Oh, that's very nice. We got filled on our first trades from the research team. UAL.
UAL, you got filled 369 on your strangle. What's UAL doing? UAL up 96 cents. Sosnoff, Ivy rank at 33. No earnings looming.
Looks like
markets are a little bit wider than you would expect.
Looks like we only have one kind of nasty loser this morning, and that would be Microsoft.
MSFT trying to do it to you again.
I know. The stock has been so damn strong. It's like a new high.
That's why it's a 4-letter word, Sosnoff, Microsoft.
I know.
MSFT.
Microsoft is the problem child, and that's it.
What's Apple doing today? Apple. Up $1.
We need a lot more Apple.
Apple looks a little sicky, I'm not gonna lie.
I'm not. You're not lying. I think it does look like. It looks like a very sick puppy.
Mm-hmm.
Yeah, Apple doesn't look good to me either. What do you make of this market here?
It looks like it's getting exhausted.
Yeah.
But Thursday, going into a weekend, had all the numbers come out. Probably get a little backwards two-sided action, go sideways into Friday.
I mean, it just looks so strong this morning. That's all.
A big move one way or the other over the weekend. Volatility stays bid. I don't think it goes much lower than this.
Yeah, it just looks stronger early this morning. Taking a look around. Let's take a quick look at Coinbase. Do you have a position on there?
I do not have a position on there, but Sosnoff, I might for option trades today, every Tuesday and Thursday, wherever you get your podcast. So just watch it right here on Tasty Live.
Oof. When was the last time you saw a earnings in Coinbase with an IV rank of 7?
Yeah, no bueno.
What the hell?
What's the monthly implied volatility? It's 70. Yeah.
7?
Yeah, I see.
How's that possible? This is a death trade.
It's a setup for failure. And 40, 50 cent wide markets. So you don't have the liquidity that you like. You don't have the IV rank that you like. This is a no-go trade or extremely small of anything.
The truth is that Coinbase is pretty liquid, but you definitely don't have the IV rank. And here's what this trade is. This is when you look at a line in a sports game.
Yeah, there's definitely a lot of open interest.
And you're like, how could this line be this? And you're like wondering, like, how is this?
So how do you trade that? You reduce size if you trade it at all. And I think you have to go with a little bit of a directional bias. Selling premium is going to be like,
These markets are not good.
Well, I just said that, but you said there's liquidity. So I supported you by putting up the open interest in there, even though I can see with my very own eyes that markets are 60, 70 cents wide. But I don't call you an idiot. I don't do that.
I didn't say anything.
Okay.
That was yesterday.
I wanted to do something in Coinbase, but I don't think I can do it. All right, let's take a look. Let's take a quick look around, see what's happening. PLTR up $4.50 today. That's a nice little rally off their bottom.
Do you know why PLTR is up $4?
No, I don't care.
Because I did a 1-by-3 put ratio spread on Tuesday on option trades today, every Tuesday and Thursday, working out quite nicely. Need another
Google up
20 cents to close it.
$1.66, which is nice. Intel with a big move today, shockingly. And is there anything else that jumps off my...
Netflix down $1.85. That's never happened before in history.
Disney, do they have earnings already? They had earnings, was it yesterday? Yeah.
Yes, Disney
Stock's
had
still
earnings
strong.
already. Up
And
2,000
Shopify, which was only down 2, is now down 6. But we're out. All right, that's all I got.
Well, then I'm going to take a quick 90-second break, and I'm going to come back. I got an option jive. Immediately found these messages from our sponsors. We're back in 90 seconds. Even S&P only up 30.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
I'm running Snow Leopard with this.
I'm a Mac. I'm a Mac. I'm a Mac.
Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Your outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit. For lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It's options. Jive. Tomas, we are back, my friend. You know what that means? Time for a little more Tasty Live with the market measure. No, an option jive. That's right. Even the S&P's up 30.
Even the S&P's up 30?
Haven't moved since our break.
Have they moved since the opening?
Yeah, they were up around 40, 50, and down to around here. Volatility down 66 cents. Bonds down 4 ticks.
I mean, I'm not complaining. I only have one loser today. I mean, one big loser other than you is
that was too easy.
It was too easy.
That was too easy. Way too easy.
Yeah, just Microsoft kind of is my only big loser.
Present company excluded.
Yeah.
Mm-hmm. I get you.
What time is it? Oh, 8:47. You know, no Victor Jones today because he's got something. He had something he had to do. So Victor will be on tomorrow at 8 o'clock. We switched up. Hear me out with Victor Jones. So Victor will be on at 8 o'clock tomorrow for his brand of positive outlooks and
shenanigans.
And shenanigans. Would you describe Victor Jones as being positive?
Is Victor Jones positive? I would. He's informed.
He's informed.
He's informed.
That's actually really good.
He's informed.
It's really good. He's very well read.
He's very well read.
He's very much informed.
Yes. Yes.
He's definitely not positive.
If it was between positive and negative, I don't think I could choose one of those. But I would say
positive.
You're positive?
I'm a positive person.
You're a ill-informed, positive person. Yes, you are. You are.
You're a positive person.
Yes, I'm a positive.
You're ill-informed. You know,
we are two birds of the same flock.
No, we're different flocks.
No, we're the same flock.
But I think you're a positive person.
Thank you. I believe I am.
Yeah. I think you are.
I have a smile on my face 9 days out of 10.
I think the sky is falling for Victor a lot.
The sky is falling. That's a good way of putting it. The sky is falling. He is a worrier. He's a worrier. He worries about a lot of things he cannot control.
Right.
But he's informed about them.
Very informed.
Yes.
And for people like that, informed is dangerous.
For people like that, life is very hard.
Yeah. 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 It's easier to be like a happy idiot.
That's correct.
Yeah.
Like the bat.
Exactly.
I didn't put you in there.
Yeah. That's how we should have defined Tasty.
The place for happy idiots?
Yeah, the place for happy idiots. I'm okay with that.
Even the S&P is up 21, Sosno.
Yeah, it's a little bit...
Getting a little tired, as the bat said.
A little bit, as the bat said. A little bit weaker than I thought. I'm Tom Sosnoff. He's Tony Batista. And since we don't have any Victor Jones until tomorrow, we're going to do the next best thing. You know what that is?
Punt?
No.
What?
A little gamma risk.
Oh, nothing like gamma risk in the morning.
That's what I tell my wife all the time. Mm-hmm. A little gamma risk.
Mm-hmm.
You crazy?
No.
Gamma risk. You've heard, like if you remember the .com, not .com. If you remember the whole meme stock explosion.
Sure, like it was
GameStop
yesterday.
and everything else. All anybody talked about was, oh my God, it's gamma risk. It's gamma risk. It's gamma risk. If you listen to people talk about the zero DTs, they're like, it's gamma risk. It's gamma risk.
Yep.
The speed at which things move, the speed at which positions move, the speed at which options move. How does a delta neutral trade that's essentially has no risk when you put it on, all of a sudden get risky? How does it happen? There's only two things that can happen. Put a delta neutral trade on.
Market movement and volatility movement.
I was going to say something different. I mean, that's fair.
What two things are you going to say then? I'll take those two.
Market moves. Well, time goes by.
Gamma risk, time goes by?
Well,
time going by. You screwed up. You screwed up. You stuck your foot in your mouth yourself. No. I gave you the proper answer, and you had to massage it some way. Time goes by can only help a premium seller's gamma. That's it. That's it.
Time goes by, gamma gets more explosive. Gamma moves faster as you get closer to expiration.
You're going to a 0-day time frame.
I'm not going to 0 day. I'm just moving as you get closer. Everything moves.
Well, that's market movement. You're confusing the two. If we don't move and time goes by, gamma risk is a non-event. There's no even such thing. Nobody even talks about it.
Obviously, you didn't understand the question. All right, we're going to do this. We're going to show. I'm going to take you through this. Obviously. So
that's evident. That's evident. Oh man, I'm going to go back to looking at porn. Go ahead. Oh my God.
Gamma risk in neutral trades. Let's take a look and see where the boys go with this one. So we actually do. You can see gamma on our platform, but we don't. Actually, I don't use it as one of my defaults. Do you?
No.
Yeah. Because as a retail customer, our positions are relatively small. What did I just get filled?
Coin adjustment, selling some putties.
Oh, coin. I sold some puts. Coin, the markets are wide. You have to leave an order in at your price. I hope you get filled.
That's what I said from the very beginning, but you told me.
And I don't know why I'm selling out of the money puts in coin. It's probably a dumb move. So don't do this. Don't follow this trade. I'm not even bullish.
You're doing this for the challenge?
Yes. I'm actually mad at Brian Anderson. That's his name, the CEO. Even though I like him generally, I'm a little bit mad at him for recent actions.
Did he order the petite filet or something like that? What did he do that annoyed you?
If any man orders a petite filet, it annoys me. Straddles and strangles. And if you ask for a peppercorn, I will cut your throat. If you ask for a petite filet peppercorn, I will slice.
Peppercorn crusted? You mean like you don't like it like peppercorn crusted? Is that what you're talking about?
No, I don't mind steak peppercorn crusted. If you order petite filet peppercorn crusted, I will shoot you. No guy has ever done that.
Okay.
Straddles and strangles are delta neutral strategies. Large moves, therefore, are not desirable. Gamma is the change in delta. Large gamma,
moves. Not time.
A large gamma can erode the effectiveness of a delta neutral strategy. Gamma is displayed on our platform, and it changes accordingly if you choose to see it. It's not one of the defaults. On our platform, you can show a million different things if you want to. We use different defaults. One day we'll go through and take you through all the various defaults that we use. Let's go to the next slide. So the smaller the width of a short option spread, the larger the gamma. Because of this, straddles, selling the put and call at the same strike, are more likely to lose delta neutrality compared to strangles. Tighter the spread, the more the position is subject to moves in gamma. Let's go next slide. And the thing that worries the industry is that when there's a huge move, all of a sudden sometimes it kind of it snowballs. And that's what they call a gamma squeeze, is when gamma snowballs. I think that financial media uses the term is way overused.
Way over.
I don't think that that's really what happens, but that's what it means. In the IWM, which is the small cap ETF, straddles have about 25% the gamma as a 25%, have around 25% the gamma as a $10 wide strangle when the trade is at 45 DTE. But this depends on the underlying you choose. So you can see kind of here, we just laid it out for you. The gamma of a straddle, a $5 wide strangle, and a $10 wide strangle. Obviously, the wider the spread, the less gamma risk you have. Doesn't mean it's a better trade to have less gamma risk. It just means it's a different kind of risk.
It's just math. You have less gamma.
Yep, it's just math.
Yeah.
Let's go to the next slide. Oh, I didn't even realize this. Closer to expiration.
For at the money strikes. Yes, of course.
Closer
that was not the question that you asked.
It becomes exponentially larger for at the money strikes.
Lower for out of the money and in the money options. Imagine that. So one specific option of all the option change.
As foretold. Closer to expiration, gamma becomes exponentially larger.
If there's 200 option series, there's one that you were right about. The other 199 you were wrong about.
Beth, as foretold.
We're told. No need to beat this dead horse, sure.
Next slide, please.
No.
Straddles are more susceptible to small moves near expiration. So, and again, this is, as I have said, as you get closer to expiration, as time goes by, you know, the gamma of a short position, this is why we manage at 21 days. This is the whole reason. So, you know, a $10 wide strangle has less than half of the gamma risk of a straddle, or, you know, 20% less than a $5 wide strangle. It's the reason that we optimize our mechanics the way we do and manage early, just not to deal with any of this stuff. Let's go to the next slide. So some of the takeaways of this particular discussion: gamma risk is higher for short options closer to at the money. For option sellers, we're focused on a volatility crush and time decay, so the rapid change in delta should be avoided if possible. And over time, gamma will decrease for out of the money and in the money options and increase exponentially for at the money options, thus making the case to manage early. As with all trading, control the things that you can control. That's what managing early is. And don't worry as much about the things you can't control. That's what the underlying stock does.
Good job out of you. We'll take a quick 90-second break and come back. E-mini S&P's up 30. Volatility in by 70 cents. We'll be back in 90 seconds. We've got a market measure. Immediately following these messages. Back in 90 seconds.
At Tasty.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
How many positions do you currently have open? How many positions do you have open currently? How many positions do you currently have? How many positions do you have open right now in total? How many positions do you currently have?
And I've got to say,
I'm gonna say probably
probably around like 30 to 40 positions. I've got a lot of positions, a lot of put spreads, a lot of iron condors, some naked puts, some futures. I got a little bit of everything on right now, but when volatility pops like this, I'm looking for new opportunities. So I took advantage of that over the last couple weeks here.
20. 4. Yeah, I think 4.
Maybe 10, maybe like 10 or 11, something like that, yeah.
Off the top of my head, maybe about 15 to 20 positions right now. Most of them are short put spreads. Quite a few positions, and I'm just trying to take advantage of all these different moves and these big ranges we're getting in the markets.
The market doesn't stop, so why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
If you missed the live show, here's our cherry on top weekly recap.
You're making it seem I want to go.
I know you do. I know you do. Listen, there's a lot of things I want to do too.
I'll be the
night last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha.
Hold on, what did you want to do last night? I missed that.
Don't repeat that. No.
No, what did you want to do?
I do this every time I'm here.
I just want to know what
Every time I'm
what did
here,
he say
we gotta
he
go
wanted
down
to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Yeah, get in the. See you later.
Nick is going to be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
The
up.
thought of you guys is like sickening. I'm sitting here like this, like, oh God. It's hot as hell in here. I'm like sweating, like it smells.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat. Steve in Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content. And I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right. With a market measure, even the S&P's up 30. Do you see a pattern here, Stasnov? They're up 30 every time I say what the mini S&Ps are doing. They're up 30. They're up 30. They're up 30. To the end by 71 cents. That's changed. It was 70 cents a moment ago.
Not sure what to do here today. Got any ideas for me?
I think you're going to get a little sideways action here today. I don't know. I mean, I think I think it's going to be hard to find new positions with extremes. I mean, unless you want to look to get a little bit short this market.
Tomorrow we have Fast Market. So tastylive.com/Fast Market. if you are in the if you're in the fast market mood, whatever, tomorrow, send us a trade idea. We'll take it and we'll execute, and we'll see what we can come up with. I don't know. I've waited all morning. Haven't really adjusted very much. Can't tell. I don't have an opinion about today.
Well, I mean, we're up 0.5% to 1%, all day. It's kind of a inside the expected move, so not too much to do.
Yeah, Russell feels a little feels stronger.
Well, I mean, on a percentage basis, it is up the most. That's accurate.
I've adjusted. I waited until now, 9:05, before I adjusted all my indexes,
like your ETFs, like IWN, SPYs. Qs.
Yeah,
sure. You did all your personal stuff, like your Nvidias and your Carvanas.
Yes.
You got a good P&L. You got basically flat here.
Yeah, I'm basically flat.
You're not short. You're not long.
Nope.
I think that's a good position. Let the market kind of beat you today. Seems to be rudderless ship right now, even though.
Yeah, it seems to be a little rudderless.
We're sideways for the last couple of days.
We're going to do a zero DT piece in a second, talking about like kind of the best times of the day to do stuff. But before we do that, we'll give you a little just coming attraction for what's going on. The Bat and I will be the week after Memorial Day. What are you doing Memorial Day weekend?
Having you over for a pool party.
Yes. What day?
Any day of your choosing, whatever day you're available.
Not.
I figured that.
Right now, I'd be available for Memorial Day for a pool party. 2027.
2027, the year?
Yes.
Understood.
No, I'm going to be going actually to Nashville.
I know you are. Road trip. I mean, seriously. I mean, I wish I had my RV. I would give it to you.
We're driving.
I know. That's why I wish I had my RV still. I would give it to you. Because it's much better to travel in the RV with the dog than in a car. Does your dog have dog breath?
Dog breath? No. He's normal.
He's normal? So the dog doesn't have dog breath. Dog smells like peppermint. Because it gets real like
dog crap. But
it's in a car. It's in a small enclosed space to get dog.
No, we're not taking a small. We're taking a bigger car, so we'll be fine. He's good. He'll be fine. He's a good car dog, and I think it'll take like 7 hours. We're going to Franklin, Tennessee.
I've been there.
No,
great spot.
It's very nice. Very looking forward to it. I'm gonna go hiking. I'm gonna go fishing. I'm gonna go. What?
You're not going fishing.
I'm going fishing. I am going fishing.
You may have a pole in your hand at some point during
That's fishing.
the trip.
It's called fishing.
You're not staying there fishing. You won't last 30 minutes.
I'm going fishing.
And you're injured.
What?
You're injured.
I'm not injured. Fine.
Yeah, you hold the pole. Well, you don't know how to hold a pole. You have to have somebody else hold it for you. You going with a guide? There's here.
An instructor.
Instructor. An adulter. You're going with an adulter?
Somebody to put the worm on the thing.
The worm on the thing.
Yeah.
You really are a real man.
No, I am going fishing, but it's stocked.
So the lake is stocked.
Lake is stocked.
It's a man-made lake probably, and it's stocked.
Yeah.
It's fun.
Yeah, so you throw like a piece of bread in and next,
piece of bread.
Whatever. A worm. 10 fish bite. Throw it back.
It's not that easy, but yes. Catch and release is what you're saying. So,
yeah, catch and release.
Will you take some pictures? Love to see what you catch.
No. Catching big bass.
That's awesome. Bass are good.
No, I don't know what
you can. You can hold a bass. You can just put your finger right in their, their mouth. Your thumb. You hold them by the thumb. They don't have any teeth. Very thin. Very small. You can hold it and then you can take the hook out. You'll probably have somebody do that for you.
That's
like all the good women do.
That's what I pay somebody to do. Take the hook out. God, they just had to sell off 2 seconds after I just made my adjustments.
Oh, it's like poetry in motion.
Yeah, no, I'm going to do a little fishing, a little hiking.
And by hiking, you hike in your Crocs, right? I mean, so this is hardcore hiking.
Yeah.
Huh?
A little fishing, a little hiking, a little spot treatment.
You'll be giving or receiving facials. Will you be doing the facial work?
And then a lot of good Southern eating.
Very nice.
So looking forward to it.
That's a beautiful place you're going to. Can't say what it is, but if you are on my Twitter feed, I will tell you where it is.
But then the week after that, we're going to be going back down south, and we're going to Atlanta, Georgia. We'll be at the
Buckhead Theater, Sodnoff. That's right. May 30th, Friday, Sodnoff. It's a Friday. It's the first Friday. And we know we're asking you to take off from work. That's why we call it At Work by 11, because we promise we'll be done by 11. We'll get you back in the office by 11. So you just need to tell them we got it. Tell me to go take like a pee or something like that.
Doors open at 8. The market opens at 9:30. The show starts at 9. We're doing every show across the country at 9, regardless of it's East Coast, West Coast, whatever it is. But the show starts at 9. We'll obviously start trading right at 9:30 Eastern time. We might do something pre-market because the futures are open and there are other markets, so we don't have to wait until 9 a.m. I'm sorry, until 9:30 a.m. But the futures are open, futures options are open. There might be something to do pre-market. It is a fun day because Friday, May 30th, is that the last day of the quarter?
I got to do this for you again. 30 days has September, April, June, and November.
So then that's the last day of the quarter.
30 days has September, April, June, and November.
I'll repeat it. That's the last day of the quarter.
Trading day.
Yeah, it's the last day of the quarter because it's the 31st is on Saturday. Last day of the quarter.
Okay.
Anyway.
See how he makes himself right? Yeah, the last trading day of the quarter.
Last trading day.
Yeah, trading day.
Anyway, so the Bat and I will be down there.
So why would you, here, I have a question for you. How many days is the maximum in a month?
32.
Okay, even if it's 32, it would make it on a Sunday. So you asked and answered your own question. Why'd you ask me? If you're going to answer it that way.
I was trying to throw you a softball.
You were trying to get me involved in the conversation?
Questions are hard for you. Trying to throw you a softball. S&P is only up 950. Cancel
850.
Cancel the blow off to the upside.
Yeah, didn't see that.
Yeah. Cancel the upside explosion. Anyway, if you haven't signed up yet, tastylive.com/events, tastylive.com/events. And for some reason, if you can't make this one in Buckhead Theater and you want to go to London, where your dollar doesn't go as far as it did last year, but we'll be there.
Goes as far as it went 4 years ago.
We'll be at Earth in London, the UK, on June 20th. We'd love to see you there. And to all our EU customers and London and UK customers, can't wait to see you guys again. Tasty comes to Italy right after that, the following Monday on June 23rd, which is Monday night. We'll see you at Fabrique in Milan. It's our first show ever in Italy. We have a interpreter.
Yeah, but that's the B team, though. They got you and Rich McDonald and Dylan Radigan.
We have interpreters.
And an interpreter.
This? The interpreter.
Because I won't be there. You usually have to interpret what you say.
The interpreter was an Olympic figure skater.
Really?
Yes.
Oh, it's pretty cool. How do you know this?
Because Brittany told me.
I knew there was no way you knew it. How would you know that?
Dylan told me too.
Good.
And Dylan speaks partial Italian. So we're looking forward to that. When I told the guys in Italy that Dylan was going to be there and he could help us translate, they started laughing. I go, have you ever heard him talk Italian? They go,
it's speak Italian, but whatever. Talk Italian. I mean,
you know what they said to me? They go, you know how our English isn't that good? His Italian's worse.
I can see that.
Yeah, they were really funny. Anyway, Italy is going to be so much fun on June 23rd, Monday night. And June 20th, when we're in London, is Triple Witching. So we're going to be about 2 hours before the close. but it'll be fun. Getting ready for the Triple Witching close. All right.
Are we going to broadcast from London?
We are going to broadcast Tasty Live from London on Wednesday, June 18th.
Awesome.
And on June 19th, we are going to help guest host the UK version, but in the US, the markets are closed.
Got it.
For Juneteenth.
Got it.
So unfortunately, we can't do the show that day from London, but we will do the London show from London, which is at 1:30 in the morning.
Bewitching time.
Yes, so it'll be fun.
Mm-hmm.
And then Friday we'll see.
Can I come in my pajamas?
Oh yeah,
mandatory.
If you wear your pajamas on the tube there, we'll pay extra.
Okay.
All right, let's
my
go
pajamas
back.
all over Oak Street. Sure, why not?
Yeah, you can wear your pajamas.
Okay.
Hey, where did I see somebody in their pajamas? Oh, no, it was at a casino. Forget it.
You okay?
Yeah, I saw somebody walking around the casino in their pajamas. I'm like, what's wrong with you?
It was Jules.
I mean, I've walked through a hotel before in a bathrobe.
In a negligee.
No, I've had a bathrobe on going to like a pool.
Omaha.
Haven't you done that?
No, I try not to embarrass myself.
If you're going to the pool in a hotel, you've never.
I put on if I'm going to do that, I put on my bathing trunks and then I put a shirt on over it, and I don't walk down there like an ignoramus in my robe. I do not. No.
Well, I have a shirt on and I have a bathing trunks,
and a robe.
And a robe because the robe.
You don't want to scare anybody.
No, because when I get out of the pool, I want to be.
It's called a towel. I use a towel.
I like a robe. Sorry.
Okay, you can.
I like a nice robe.
You travel with your own robe. Of course, doesn't everybody?
Of course. Takes up my whole suitcase.
Has anybody ever said to you, disrobe?
No.
I think so.
No.
Okay, guys, let's bring it back.
No, usually that's me begging the other party.
You're scaring the children.
Yes, come to think of it, nobody's ever begged me to disrobe. I think they've begged me to keep my clothes on. Please don't take it off. Yeah, I think it's the other way around. I can safely say in my relationships, all the begging has been done by me. The best times for zero, look how Beth changed the slide.
Just move on.
The best times for
Please.
zero.
It's too much.
It's just getting good.
No.
What's the most disturbing part for you, Beth?
Where do I begin?
The vision of Sosnoff in a robe walking through a casino, which you don't have to walk through the casino to get to the pool in every
casino. You have
they always have a separate entrance for the pool somewhere. You don't walk through the casino. I've never seen somebody walk through the casino dripping wet ever from the pool.
Through a hotel, I said, not necessarily a casino.
No, you said
you walk through a hotel.
I just didn't see you as a robe guy.
Oh, come on, Beth, I'm a robe guy. We've been to places with pools together before.
Whoa!
Beth and I.
You're better than that, Beth. You don't need to do that for this job. You're good at it.
Beth and I were in the pool together at the. We were in the wave pool together at Mandalay Bay. Remember?
We sure were. With those trunks.
She's just getting through therapy now, like 15 years later.
Never forget.
All right. The best time. See, those are good work trips. When
of course.
When you end up.
They were the best.
When you end up in the wave pool at Mandalay Bay.
Yes, that is true.
The wave pool's cool. You know what I don't like? Those river things. What do they call them?
Lazy river?
Lazy rivers. Those I don't really like.
You were made
Why,
for a
they're too
lazy
fast?
river.
What?
They're too fast? You don't like bumping into people?
I don't like getting stuck in the tube.
It's hard for you to get out of the tube. I can understand that.
Yeah.
I can understand that.
Too much work, like you don't know, you don't know the start, the finish are, like I'm not
That's
sure.
in your wheelhouse.
I'm not sure what you're supposed to do in a lazy river though.
Relax.
Try that once in a while.
I know, but I'm not really good at just going around in circles for an hour.
You do it in life every day.
I don't get the whole lazy river thing. Seems like a waste of space. All right.
I still have the vision of Slimmy in the lazy river. It's hard to get back from that.
Slimmy in the lazy river? Naked?
In a tube.
Okay, you've done it.
That's a vision.
That's it. Move on.
That's a vision. Hard to get out of every brain. That happens.
If he wasn't in the lazy river and he was just in a pool, would that vision be better?
No, probably not.
Oh my God. The best times for 0 DT scalps. It feels so anticlimactic when you do the best times for 0 DT scalps. Let me ask you a question.
Sure.
We've looked at this every which way.
We've done a deep dive into the zero.
We've done
days.
deep dive into
Yes.
zeros.
Yes.
And we've traded a lot of them.
Yes.
When do you think is the best time for a 0 DT scalp? I can tell you yesterday.
Probably right.
Yesterday didn't work for me. I mean, it didn't. We
It ultimately worked by the end of the day. You had to hold it almost all day.
had to hold it to the end of the day.
Right. And to be fair, you went pretty far out. You were just selling a string.
Yeah.
You weren't doing the 20 delta. I saw that working better for other people on Twitter doing the research.
Yeah.
20-ish delta, 10, $20, $30 wide. Probably around 9 o'clock. I just think from our research, I would have never have said that a year ago, but from our research, it seems like that 9 o'clock-ish time, 8:50, 9:10, somewhere in that area. Markets have tightened up. This market that we have recently kind of settles in and we go a little bit sideways, which is what you need in this strategy when you're selling premium. So that 9 o'clock-ish hour.
Yeah, I like that 9 o'clock time the best too. I think 8:45 is too early. I think 9 o'clock's pretty good. 9:30 is probably pretty good.
The noon balloon thing is not.
I think 9 or 9:30 is my guess would be the best time. The best times for 0 DT scalps. I'm going to say 9 or 9:30. I haven't seen this yet, so I don't know. In the right underlyings, 0 DT option markets are amongst the most active in the world. I can tell you yesterday, they were pretty active yesterday because the Fed had a big number. A lot of people like to play it. It's almost like gambling.
Yep.
If you're buying stuff. The best aspect of 0 DT trading is the speed at which profits can be made. The worst is, of course, the speed of losses. So a scalp is closing a trade almost immediately after opening it, hoping for a profit. The fast pace of 0 DT markets makes for perfect scalping sometimes. But did they perform better or worse at different times of the day? Let's go to the next slide. These are kind of hard to really tell the difference between, it's very hard to figure out the difference between 9 and 9:30, 9:30 and 10, 10 and 12, 12 and 1. It's hard. We looked at the data every 10 minutes for the last 2 years. We opened trades from the opening till 2 p.m. in the afternoon, every single half hour. And we used 0 DT iron butterflies. Just pick a strategy. It doesn't matter. Sell the at-the-money straddle by the wings, either $10 or $30 out. Examine the P&Ls from closing these trades 30 minutes after they were put on, and all trades were assumed to exercise at mid-price. So let's do this for starters right now.
Okay.
Before we even look at this, SPX. I have to go to trade. I have to pull up my 0 days because I don't default to zero all expirations. We're going to sell the at-the-money straddle here, which is the 56.55. That's the at-the-money straddle. And we're going to buy the wings $30 out, let's just say.
Okie dokie.
So 25 and 85. Is that right? Yes. And right now that's trading for 23.30.
It moves around a lot, so
I don't know.
It's probably closer to 23.20 or 10 or something like that.
Let me see if I get a fill here. Okay, 23.20. I didn't want to. I could have left it. I didn't want to mess with it.
Sure.
23.20. It's $30 wide. So, how much is my max profit? Is obviously $23, which is ridiculous because I'm not going to make that. 23.20.
Sure.
And my max loss is 23.20 minus 30. So my max loss is $6.80. Is that correct?
That's close enough. Yes.
Okay. So I'm risking $680 to make $2,300. That's exactly what this trade is, and I just put it on. So I mean, I didn't really do a lot of price discovery. Like I could have maybe squeezed it for an extra nickel or dime, but I don't know.
Yeah, I mean, even the S&P's just rallied. This has a very small short delta of it, so maybe you can get it. Could have got filled 10 or 15 cents higher than this. If we would have gone down, it would have been a 10 or 15 cent profit. You don't know what's going on.
We'll see what happens.
Yep.
But I just want to show you that, like, you know, this is all real. We practice what we preach. If you're new to this network, we don't do anything virtually. Everything that we do at our live shows is all real money, real live. Everything we do on air, when you hear the ding, it's all live trades. And it's all with, you know, in this case, it's all with my money. So it's all real. Let's see. We're going to look at this thing. I'll go back for 1 second, Beth. Each half hour. And we examine the P&Ls from closing these trades 30 minutes after they were put on.
Gotcha.
9:26. Let's
put it on at 9:24, Sosnoff.
9:24?
Yep.
Okay. So we have 30 minutes.
9:54.
9:54. Do our own little study here.
I know. I like it.
Yeah.
And Scott will hear the ding. He'll be on the show.
Oh, he won't know what the ding means. I think he uses a different platform. I'm just kidding.
Oh my God. You're so
just
mean.
kidding. Scott, when he comes on.
Omaha.
Just so you know, he
Omaha.
Scott and I have been partners since 1988. A long time. And or whatever year. I don't know, 88, 87, 88. So let's go to the next slide. All right. So the best times for 0 DT scalps. And let's see. These are $10 wide butterflies. I did the $30 wide, so it'll be the next slide. But for the 30-minute win rate, selling at 9:30, let's see what it is. Here it's 52%, right? Average P&L, $4. 30-minute CVAR, $89. You know what that means? That means that, well, this is not the best slide for me. You know what? Can you go to the next slide, Beth? Just because this is the one I actually just did. Oh, no. Sorry.
This is butterflies.
Butterfly. Keep going to the next slide. I'll come back to these.
This is $30 wide butterfly. Keep going.
This is what we did.
Oh, yeah. So, yeah, you want to consider it a butterfly.
So this is the exact trade that I just did. I did the sold at 9.
It's an iron condor on the platform. I know it's you're saying
it's
butterfly.
An iron fly.
It's an iron fly. There's no such thing as an iron fly on our platform. It just says iron condor. So it's an iron condor on our platform. But since it's the same 2 short strikes and buying the wings, it's basically a wide butterfly.
So 100%. This is the trade that I did right in the middle where it says sold at 9:30.
Yep. 60% pop.
Yes. So the pop for the trade I just did is 60%. I mean, we did it at 9:28, but whatever, it's close enough. 60% pop. The average 30-minute P&L is $6. Now, that takes into account lots of losses.
Sure.
So my P&L is not going to be $6. This takes into account 2 years of gains and losses. So, for example, there's going to be some $336 losses in here.
Sure.
And there's going to be some wins. It all averages out to $6. So that $6 is a little bit misleading because that's not what this trade is going to be. And the 30-minute CVAR, which is the worst 5% of all cases, means that worst case for me on this trade is that I'm going to lose $335.
You only had $680 to lose.
To the close, it's $680.
Yeah. No, I get it.
But in 30 minutes, the worst case is about $335. That's doing
about half of your max loss.
Yeah, it's about half max loss. But in this case, okay, what that number represents is the worst 5% of all cases. And we do is we run thousands. This is a pure Monte Carlo simulation, like we talked about yesterday with Jacob. We run thousands of test cases to come up with that number. And that's where, that's where we derive that number from. Yep. So the pop on the trade I just made is 60%. The average win over time is 614. And that's if you average all the losses and wins together. And then the C-bar, worst case, 335. What's interesting about this slide is that the first half hour is the worst. Yeah. And the middle of the day, is a little bit better, of course, across the board. And so we'll see what happens. Now let's go back, Beth, to slide number 2. Just for a second.
It really basically just says, you know what? Try to avoid the opening.
Oh, no. Oh, hold on. This is actually, you just went back. Got it. Mm-hmm. So this was the $10 wide butterflies. And this one just says avoid the opening. Mm-hmm. That's about it. Let's go next slide. This is the $30 wide. And this one says the same thing. This, for some reason, says avoid 11:30. It doesn't really make much sense. But
well, this is in the afternoon now. 11:30, noon, 12:31, 1:32. So
the rest of the numbers seem kind
I said the noon balloon thing really isn't a thing.
Let's go next slide. If you're wondering what the difference is between $30 wide butterflies and $10 wide butterflies, ironflies, it's really just, how much capital you want to use. That's all it is. The $30 wides, you can make more money. And again, all these $30 wides have a long-term positive return. And this is, again, the one we did. Let's go next slide. And this is later on in the day. All these returns seem to be okay, except for the 11:30, which I don't know why. Maybe the markets have big moves at 11:30. Maybe. Central time. And then takeaways. So the ability to quickly open and close trades is the principal advantage of extreme liquidity in the zero DTs. There are few better feelings than taking off a winner a few minutes after opening it. Examining the profits and risk from selling premium and closing the positions 30 minutes later was overall highly encouraging for active zero DT traders as volatility tended to contract over the course of the day. The afternoon generally saw larger profits, but also had more extreme downside from carrying nearly 100 gammas. These are not trades for the faint of heart. We would also consider trading wider in the morning and using narrow wings in the afternoon. The most clear lesson from this data is it paid to finish your coffee and wait 30 minutes before selling premium.
Good job out of the team. Good job out of you. Even the S&P's up 32. We're going to take a quick 90-second break and come back. You know why, Saz? We've got your friend in mind. That's right, Mr. Scott Sheridan coming in the office from the Tasty Trade World headquarters. We'll be back in 90 seconds. Tasty Live. You're basically unchanged on your spread right now. Back in 90 seconds.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I wasn't going to call you out publicly.
Oh, no.
But I have to.
What?
So we're out yesterday afternoon. So we're driving down Ravenswood. Now, for people that don't know Chicago, which is most of you, there's a train that runs in the northwest, and then it goes up to the northern suburbs, runs right down the street. So one side of the train is heading south, the other goes north and south, but let's just say it goes north. So we're on the southbound. So Tom takes off in his new fancy electric car, which I can't keep up with. Do you know that there's actually stop signs on that street? Okay.
You blew stop signs.
No, he didn't blow through them. He went from like 40. No, he went from like 40 to 30, and then just kept going.
Oh, I don't stop for stop signs.
Because you're above the law. Above the law.
So
that's so bad.
Only for pedestrians.
There's streets.
Yeah, and you're in a bigger vehicle. You can hurt them. They
There's
can't hurt you.
streets that go east-west.
I don't go through red light, through stop.
No, just stop signs you go through, not red light.
You go through the meters getting on the ramp on the highway. You don't believe in those. You
Oh
say
no, those are bullshit. You stop at those?
Yeah, it's the law.
You stop at those red lights on the highway?
Yeah, it's the law.
Oh my God!
It's so that it's because so that
only people that stop
a-holes
at those
like
are
you,
tourists.
it's like a-holes like you,
right?
Don't make it good for people trying to get on because there's not enough room. They're synchronized for the traffic.
Oh my God! It's
the law.
It's only for tourists.
Beth, I need some help.
It's the same people that sit upstairs at restaurants. It should say that. I've got like 10 tickets.
Don't you notice that the cars around you slowing down? Like, that's what saves me, is like, I'll be up on like Ashland, because there's so many of those things on Ashland, and you notice the traffic around
No, I forgot
you
one on Ashland. I only get them
slows
on
down.
Western and
The
Irving.
same phenomenon, Mr. Pedantic. Oh,
Yeah.
Bat, how are you? Jeez Louise. You would not last 30 seconds in an improv class, because the whole premise of improv is like, instead of just shutting everything down immediately, is to be like, yes, and. So like, you know what? I'm going to agree with what you're saying, and I'm going to add on to this
You know-
to further this conversation so it doesn't grind to a halt.
You know what's funny? As much as I like comedy, improv, like Second City Improv, doesn't do it for me.
Okay, of course it doesn't. Bat, how are you?
Do you think you could name one Taiwanese food?
Yeah, Thai food, I eat it all the time. You now learned that Thai food is short for Taiwanese food. Taiwan. Yes, look at you, Sas. I'm very proud of you.
And I want to ask our producer John something.
Yes.
John, can you help me here just for a quick second? Just because I don't want him to yell at me. John, have you ever had Taiwanese food before?
I've had Thai food, yes.
Taiwanese food is not Thai food.
Where's Thai food from?
Thailand. Thailand and Taiwan are not the same country. They're not even
Taiwanese cuisine is commonly referred to as Taiwanese food or Taiwanese cuisine. What are you talking about?
Oh, hold on. Oh my God. Here he is. Jason, come here.
All right.
He is our Taiwanese source. When you say Taiwanese source, there's your Taiwanese source.
You're looking at him right here.
You're looking at him.
That's right.
I will take whatever Jason says. I will take it. If I'm wrong, I will apologize.
No,
I said to him, can you name one Taiwanese food? And he started laughing at me, thinking that it was Thai food.
You know, that's a common mistake, because the Thai part of Taiwan, people mix it up with Thai as.
Don't defend him.
Jason, just for the outtakes later this week, I stand corrected. I am man enough to admit when I'm wrong, unlike other people in this room. I am man enough to admit that I am wrong, and I'm glad you came in to clarify
No,
this.
you're not.
I owe you and your people an apology.
No, you're not. Hey, do you guys?
I appreciate it.
You want to know what we're having for lunch today?
Velvet taco.
No, they switched. We're having Thai food now.
Is that a joke? Did you write that yourself? You're so good.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, and we have special guest Steve here. Steve is now going to answer the robe story.
I don't. Can they see Steve? Beth, can you see Steve? Because I'll give him my seat.
It's best in the shadows.
So
go stand next to Steve. Go stand next to Scott.
So the question was, when I walked in, and I happened to walk into this, was Tom saying, like, who doesn't wear a robe when you go at a resort?
I'm not talking about
going to the
walking
pool.
to the casino in a robe. I'm talking about.
That's exactly what you said.
Okay,
I'm talking about going down to the pool.
Nobody. But you frequently have to go through the casino to get to the pool. But we're going to leave that alone. Now, nobody other than apparently you, and I've been with you to Vegas a lot of times, and I don't ever remember you wearing a robe to the pool because I would have made fun of you. But nobody does. So you said guaranteed Steve does. So we said Steve.
There's the robe. There's the robe in question.
That is the robe. No,
Son,
that's
how many of those
actually
you got
not
in your house that you stole?
the original golden nuggets.
Half a dozen.
By the way, that golden nugget robe, it is. I have so many.
Soft,
of those.
beautiful.
It's beautiful. It's my favorite robe.
Right.
They should have.
You're not changing the subject.
What?
Okay.
I'll walk around everywhere in that robe. Yeah.
Hold on one second.
Is this what happens?
And I'm the Italian.
Wait, is this what happens after you lose your taste buds? Then
Probably.
And the next thing
Yes,
you
yes.
start wearing a robe.
Like if I'm staying in a resort and I'm walking out to like a hot tub or something.
Yeah. Slides or motorcycle boots with the robe. Like this.
Crocs. Crocs.
Well, if I'm walking
Crocs.
outside,
Crocs. Cut off
I'll
jeans.
walk out in my robe.
To where?
To the pool, like to the hot tub.
Does nobody? Don't be that creepy guy.
Yeah.
That's
the next thing you're gonna get a white van with no windows.
Steve, say something. They think you're just
I'm
a
just taking
statue.
it all in. I mean, I don't know what to say. First of
No,
all,
what you said.
you don't own a robe like that. So
I own those robes. I love those
name one time in your life you've ever gone on a vacation and packed a robe.
He doesn't. He takes them from.
Oh
the
no, I
hotel.
don't pack a robe.
He takes it. He steals it.
Okay, so you take it from
You takes it for the road trip home.
you take it once you're there.
And then when they call us,
And
we have
then-
to charge you $80
and then you
for
save
the
it
robe
to
because
walk
he
around
left
the
his
house
steal.
until you get back.
I don't need robes. I don't
Steal them.
Oh yeah, that's okay. yeah. All right.
Robes.
No, like okay,
you
that's
take a robe and you walk out to the pool. You're not stealing a robe.
and it's not stealing it if it happens to fall in your suitcase. And you don't remember how it got there.
So how long is this segment?
We're almost done.
We got 20 minutes.
Yeah.
Would you like any other commentary? Or,
No. So
or
what you
just
did say,
what I
which we would
initially
like,
said?
what we would like to share, is that you said you would pay to see Tom.
The robe in the weekend gets comp if we're ever together in Vegas and you wear that down to the pool.
Agreed.
That's
will.
it.
Me too.
You get a free weekend in Vegas from
Okay,
us.
you guys, you're big talkers, but you're gonna be so jealous because when I'm nice and toasty warm and you're freezing after you're shaking
It's 115
you get
where we're
water.
at.
When the elevator door opens and they say no problem, I'll wait for the next one.
Like Ghostbusters. No, we'll take
I
that.
wonder why they keep doing that for
You know what?
Yeah.
We'll wait for the next one. Go ahead. My kids, don't worry about it. Just wait. We're not getting on the elevator.
I can't listen to you.
We're not getting in the elevator with that guy.
How did you guys start this discussion? What
I don't know how it happened, but it happened.
did this?
I don't know.
It was before my time. I walked into it. That's all I got. All right.
I
Thank you.
can't contribute anymore.
Goodbye.
Enjoy.
Thanks, Slappy.
Thank you for-
Slappy, everybody.
Oh. Last one. So we have confirmation because Tom did say Butchie would absolutely wear the robe. So I said to him, when
I'm gonna bet on humanity here and say that Butchie does not wear the robe.
he said
He's
no.
an embarrassing human being.
I said,
but I'm
when
gonna do it.
you go to a pool resort, do you wear a robe?
He should.
No. And then he said, why, with a wink. Okay, so
I don't know what that means. But like I said,
so
he is single, ladies and gentlemen. If you are interested,
you're 0 for 2 on
You
your
have to go to resorts that have robes. Okay.
you're 0 for 2 on your. I guarantee you, they both wear a robe. Okay, so we're gonna move on.
Okay, we'll move on.
All right. Anyway, Tony, how are you?
I'm doing great. Today's been a good day. We've had very little movement in the market. Premiums coming in a little bit. It's in by 3.5%. Sosnoff has been putting his foot in his mouth all day long. It's been a great day.
That's good. I actually have a recommendation. I don't think you for sure have not been. I'm going to say you haven't been, but where G&T Oyster was.
Yeah, it's closed now.
They
Yeah.
opened a pizza place. I've heard it.
Really?
Tavern style. I've heard it's amazing.
GT Fish and Oysters shut down?
Yeah, a couple of years ago. If it didn't happen in Sosnoff's world, it did not happen. Okay?
Giuseppe, he was on the show a couple times. Giuseppe Trattori?
Something like that.
Giuseppe.
Something like that. But anyway.
Giuseppe something.
I heard Tavern Pizza is lights out.
Tavern Pizza's lights out.
I heard.
Well,
I mean, GT Oyster was great too, so.
I mean, for a while. I mean, I'll have to go and check because.
There you go.
You really can't.
I haven't been there, so I'm not telling you.
We can't trust you. Anyway.
I am not saying it's great. I have been told.
The problem with people that grew up in Chicago.
Oh my God.
Is that you don't have the depth of pizza knowledge required to make that call. Like,
See, and I think that
You're
the
very
depth of
one-dimensional.
pizza. I think the depth of pizza knowledge for Chicagoans is way greater than New Yorkers. I'm gonna take heat for that. But there's a greater variety in Chicago.
Mean, honestly, the only people that are qualified to give pizza reviews
Are New Yorkers?
No, are people like Tony and myself because we've experienced them both. Like we're the only ones that have the.
Because I've never been to New York and had a slice of pizza in New York.
When you go when you're older and you've had like when you grow up on stuff.
Yeah.
And because when you're a kid in Brooklyn or where I grew up, whatever, you're gonna eat pizza like
Connecticut. Yeah, go ahead.
5 days a week.
Sold.
Pretty much. We're gonna eat pizza.
Sold.
This is before there was fast food, basically.
Sold.
All you do is eat.
Sold.
What else is
well,
there?
was there, Tony in Brooklyn? Maybe. You?
Same thing.
Really? In Westchester?
Yeah.
Whatever. Yeah, for sure. Tell me the pizza places you would go to.
Oh my God, I'm not getting into this.
Because you didn't eat pizza 5 days a week.
I can't listen.
Right?
I had it for lunch every day.
You may have.
I know. I'm just telling you. I had it for lunch every day.
A lot of.
I say maybe once a month.
Oh my God.
Maybe. Okay.
2 slices of Sicilian, Diet Coke, $1.50.
Diet Coke as a kid?
I believe so.
No.
Really? No kid drinks Diet.
Two Sicilian slices and a Coke, $1.50.
Thank you.
2 slices.
Yes, here it comes.
2 slices and a drink, because you could have whatever you want. 2 slices and a drink.
Yeah.
75 cents. 25, 25, 25.
Was this in 1927?
I'm just telling you. That's what it was.
Dude, okay, I'll sell that too.
Oh my God, I can't listen. I can't listen to you.
What year was a slice 25 cents and a soda?
When I was a kid, they were 25 cents a slice.
Very small slice.
So they were good size slices. I'm just telling
you. The
you.
way that you are able to replay things in your head and convince yourself that this is how it's priceless. It really is priceless.
And I've had to endure it for 14 years.
You're taking away from the purpose from kind of the gist of the discussion, which is that I am uniquely qualified
for everything. We know that.
For
everything.
For discussing pizza. You are all you know is this is canned pizza. I mean, all you know is like tavern style pizza in Chicago, along with a few tastes of deep dish. Like, I mean, when I met you, you didn't know the difference between pan and deep dish.
This is true.
What do you mean I know the difference? Pan and
You still don't, because we had this whole argument with you. Because before we got into this building, you were ordering the wrong pizza at Art of Pizza.
We've been trying to change.
I said I like pan more. I like pan more than stuffed, which you guys made fun of me, which you did on chopped brisket, and a couple of other things. I know the difference. Go ahead.
Anybody like chopped brisket can't be a pizza expert. That's all there is to it.
Can't believe I'm actually going to say this. I think I'm taking Corinne's side.
I'm with you.
I think I'm moving over to Team Corinne on this one.
I agree with you.
Oh my God, you're unbearable.
I speak the truth.
You speak the truth. Oh my
Sure
God.
you do.
I'm getting a T-shirt. Team Corinne. All right, should we do some business?
Sure. Wow, right to the nitty gritty.
Robes, pizza, business.
Robe, pizza, and what?
Robes, pizza, and business.
Okay, business.
We're going to business.
Let's do it. I'm ready for you.
Oof.
Scott Sheridan from the Scott Sheridan Studios, everybody. And I'm sorry if I didn't introduce Slappy, who was here. I didn't tell everybody who that was. That's Steve from the trade desk, affectionately known to his closest friends as Slappy. I think Sosnoff gave him that nickname. Is that correct?
What? Slappy? Mm-hmm. Yeah, but I gave him a nickname, but not for good reasons.
Oh my God.
But it was not for good reasons. But
are you going out tonight?
No, why?
Because I'm not coming on the show unless you have a good night's sleep. If you don't get a full night's sleep, we're not doing the show tomorrow.
He's got the flipper.
I think
he's got a bad flipper.
I think you are going out tonight.
He's got a bad flipper.
Oh no, I was out last night.
Where'd you go?
Jersey. You mean for dinner? Jersey Mike's.
Yeah, Jersey's Mike's.
Please tell me that you are.
You should have taken one of the research guys with you, like Gad.
Jersey Mike's was being served, and you didn't actually go.
No, he
Jersey
went.
Mike's.
I went to Jersey Mike's.
Yeah, it was probably the only thing around.
Tried the viral chicken salad sandwich.
How was it?
Quite delicious.
The TikTok.
You must have been.
You saw this on TikTok, and you actually went to Jersey Mike's.
That's my girl on TikTok.
Girl, Tony.
I know. I'm
actually now
my
getting.
son comes in the room.
I'm now getting a little concerned. Do we need an intervention?
I know.
We might need to take away your TikTok.
I mean,
you can't do that.
You can't do that.
Can't do that.
That
would hurt too much.
Life's not worth living without TikTok.
No. It's this viral thing going around, and
tell us about.
It's a viral thing going around in whose world?
Tell us about the chicken salad. I want to hear that. I like chicken salad. Tell us about it.
Really good.
Why? What was in it?
Chicken.
Oh my God!
I tell you, he should have been a mafia don. I mean, the details of his story are just amazing. He would have been great.
God. What was that? Chicken.
Yeah.
I assume mayonnaise based.
Yeah, sure, mayonnaise based.
Okay, they put like.
They serve it on like a rosemary bread with.
Did you get the pepper relish that she puts on it and stuff like that?
Here we go.
There,
is this your girl?
Oh, here's your girl. Yeah.
I'm sorry, that does not look like chicken salad.
Favorite tuna salad subs. So obviously,
That tuna or chicken?
Top-off sauce.
got mine on the rosemary parmesan bread, best
Yeah,
bread.
that's good.
My Mike's Way, which is lettuce, tomato, onion, oil, and vinegar, and I also added cherry
Mike's
pepper
Way,
relish,
you're
and
good.
I added provolone cheese.
Told you
because
gotta do
have
Mike's
to add
Way.
cheese to your
They
chicken
cut the
salad.
lettuce too
Let's dig
thin
in.
though, but whatever.
So I had to try it.
Oh, that's bomb.
This is it. This is
I
what
always
you
forget
watch.
how much of a kick that cherry pepper relish has.
Seriously,
I'm actually
what's
really
happened to
impressed
you?
because this is a lot of chicken
Honestly,
and
what
just a
has
little bit of
happened to
mayo.
you?
Probably one of the
What has
least
happened
mayo-heavy
to
chicken
you?
salads
Sometimes you
I've
should
had in
open your
a
mouth and
very
remove
long
all
time.
doubt.
You can see they diced up and chopped up the chicken really fine.
This
Like, there's
is
no
what
weird
got
sauce.
you to go to Jersey Mike's?
Yeah.
And I got to make a story about this for 4 hours. That's my job.
That's how you decide. How do you pick where you want to go? You just said you saw some restaurant open up, right?
Which
on the
one?
corner. You just talked about it, some pizzeria.
No, somebody told me they went there. They said it was
Okay,
great.
who told you?
I'm not letting you know who the person is because if I call the person out, you're going to say,
Oh,
"Listen,
yeah, he doesn't know
they're an
pizza."
idiot.
Exactly.
They don't know anything about food.
Some random person out here that doesn't know anything about anything said, "Oh, I went there. It was pretty good." Like that's not what I want. I want somebody like her to do it.
And how do you know? Like, have you been to other restaurants that she has said, "Go get the sandwich"?
Yeah, 100 of them. That's all they do is just restaurant.
Give me another one that you liked.
Well, every single I got.
You can't say it.
No, I have a whole slew of them.
A slew of them.
But these are just fast food ones. There's other ones.
Like what? Like fine dining?
They do fine dining too.
Okay, give me one in Chicago. Where do they go?
That girl only does Tampa.
Tampa. Because you
fine dining.
You frequent Tampa.
I don't. But for Chicago, I use the other guys.
Isn't there that steakhouse that has like
Burns?
Like a 20,000 or 50,000 bottle wine.
Burns.
Yeah, some crazy. I've
never been there.
I remember Mike talking about
I think it's around that Tampa area, but I've never been there. But a lot of people I know have. They like it. I mean, I've never heard it.
This is just completely.
I was in.
Oh my God.
Oh, this is Southwest other guy.
Oh, this is my guy, Wayne. Oh, I love Wayne.
Wayne?
Wayne.
Wayne Dang.
Wayne Dang.
Oh my God, you are into some kinky shit.
Oh, he's
Wait, what was he
honest
eating?
to God.
He eats everything.
See, now this guy I believe.
Yeah, this guy looks like an eater.
Right. This guy I can believe. That other young lady, I'm sorry.
Is that a rib?
Yeah.
The other one purges.
Why do they have to eat in their car? It's kind of gross.
That's the whole shtick. I agree with you 100%.
He only does
What?
Houston and Las Vegas.
Okay, and you like?
I actually refuse to eat in my car.
Yeah,
I'll stop and pull over.
Me
and
too.
Eat in a park if I.
I mean, the only thing I would eat in my car is maybe if I picked up over.
I've eaten a couple things in my car that I'm not proud of, but I mean, I would eat my. I call it dining al fresco, but it's a story for a different
Oh my God,
day.
Beth, I think I'm busy tomorrow.
So I'm 1 minute away from closing your trade. I've been watching it this whole time.
Where is it trading?
It's around 22.75, but the markets oscillate back and forth. I would probably put in a 22.80 bid and just let it sit. Don't look at what the markets are right now. Just let it sit. Markets right now, mid-price is right where you sold it or maybe 10, 15 cents below that. But the average price is only $6 or $7 profits out enough. So if you went in at $23 even, $22.95.
Exactly 30 minutes after we put it on. What price did we put it on at?
$23.20.
Oh, it's not that good.
No, you made $25. The average price is $6.
$25 on one lot. $25 per one lot.
That is correct. On $600 worth of risk, $700 worth of risk.
Well, the CVAR was 340.
That is correct.
Anyway, listen, we did the trade our research said.
Yep.
We gave it the 30 minutes exactly just to see if it worked.
And they said do it for 30 minutes?
Exactly.
Yes.
Oh, good. So it worked.
Yeah.
It did.
Now I get lunch, but you two guys don't.
You're complaining about making $25 on a one lot?
Always.
I'm not complaining.
You know how we would cut people up for a quarter back in the day, right? A quarter? You were good for a teeny at best. If you made a quarter, forget about it.
It was an accident.
It was a mistake. It wasn't an accident. I mean, you usually make $6.25. I mean, if you make $25 on a trade,
Big Tucker over there.
it was an accident.
Big Tucker.
Top 15 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Tom, for you, number 15, Goog Noel at a 31. For everybody else, PLTR at a 35. Tesla at a 28. NVIDIA at a 36. AMD at a 20. Goog with an L at a 32. Shop at a 26. Meta at a 19. MSTR at an 18. Apple at a 33. Hood at a 23. Microsoft at a 17, iBet at a 25, APP at a 43, Amazon at a 25, and number 15 for Tom Goog Noel at a 31, rounding out the next 10. GLD at a 58, HIMS at a 55, UAL at a 33, TQQQ at a 36, and Lilly at a 40.
I don't mean to interrupt your fine list, by the way, with some facts, but I'm going to give you some anyway, just to go to support Sosnoff and his 25-cent pizza. New York pizzeria sells slices from 15 cents to 25 cents, and this price persisted into the early 1960s before inflation ingredient cost drove it higher. So Sosnoff was eating these slices in his mother's womb for 25 cents.
Okay, can you do me a favor? Just for argument's sake, 1970 pizza slice, one slice of pizza.
1970.
One slice of pizza, New York City.
Pizza.
Not a quarter.
Slice.
Oh, God.
Price.
New York City, not a quarter.
NYC. In 1970.
Yes.
Now, how old are you in 1970?
13.
13 years old. Generally cost around 35 cents. Some slices also mention 50 cents. Or as low as 15 cents if you were on food stamps. We're going to take a quick 90-second break and come back.
They say 35, but
and we know you own the reservoir, so you were not on food stamps. Bat was on food stamps.
It might have been 35 cents for one slice, but two slices and a drink, 75 cents.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with a quick little break with Liz and Jenny next. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome to the Thursday edition of the Liz and Jenny Show. I'm Jenny. That beautiful blonde over there in red is Liz. Happy Red Shirt Thursday, everybody.
Happy Red Shirt Thursday to you too, Jenny Andrews. I can't. This week is flying by.
Yeah, this week is flying by. I'm just cleaning my glasses. They're a little smudgy. This week is flying by. It's already Thursday. We're getting used to our new schedule of live from the SPX pit every Tuesday and Wednesday. Every time, all the people down there, all the guys down there are always so surprised, like, you're here again?
And here's my favorite question. Every single one of them says, 2 times a week, did they double your salary? How many times have you heard it? Like a million times.
Everyone says it.
And I always have my canned answers for things. So whenever anybody asks me, how was the show? I always say best show ever. But when somebody asks me, did they double your salary? I go, no, tripled it. Just because they like.
I know. You're right. You're right. Everyone that sees us is like, you're here again. I hope they doubled your salary.
Yeah. And Jenny never busts me out for my canned lines, and I love it. So thank you very much.
No, I just go along with them. Even our train conductor now is like, let me guess, best show ever.
Yes.
We figured out we've done like 3,300 and something shows. So every show it gets better. So this is like our 3,300 and I don't know.
It was 3,384.
And so we're that much better than our first show.
Okay, I'm going to ask our viewers questions. So we see the same train conductor every 2 days a week. He's very, very nice. And if he's watching, hi. We are I was going to call you Annabelle. Jenny and I are in too deep. We're in way too deep. How do you find out someone's name?
Don't say this. He might be watching.
He's working right now. He might watch after the fact, but we're in too deep.
We're in too deep. We've been on this train for so long, and he told us his name like day one and never said it again. And we had never, it was too long, like too much time passed, and we didn't ask. And they don't have name tags on. And so now it's been a year of taking the train with him, and he told us his name once on day one, and we can't ask him now. It's tough. I am terrible with names, so this is a common problem in my life. I think for you too.
Okay, but we should have used, now thinking back, yesterday we had an ally on the train. Our friend's son was on the train. We could have been like, James could have been like, hi, James, nice to meet you.
Okay, he's a college kid. He was coming home from college for the day. I wasn't going to say like, hey, James, put yourself in a situation that the conductor has to tell you his name.
I would.
James was asleep. Sure. We talked to James for like 2 minutes. The next time I looked back, he was sound asleep.
I know. Well, I was like, does he want to come sit with us? Jenny's like, no.
He's a big guy, football player, hopes and dreams and aspirations of the NFL, but he's playing football for Roosevelt. And, going to Roosevelt in Chicago, I hesitate to call it a dorm because I don't even think it's a dorm. Where he lives, it's all glass windows and sweeping views of Lake Michigan and the skyline. It's like a corner unit. It's unbelievable.
That would be awesome.
It is.
It really would be. I would love to see that. I know a couple people that go to Roosevelt.
You do?
Yeah. Handful of kids from our school. It's a good theater program, so a lot of the theater kids went there.
Oh, right. Right.
Who knew?
Okay,
Roosevelt, theater and football.
I want to say, like, give the most genuine, heartfelt thank you to whatever viewer updated the internet for us.
Yeah, Jenny, I do too. And you know what? Honestly, we are going to get to the markets. This is the show about trading, ladies and gentlemen. Do not let this disillusion you, but we are going to jump right into Twitter if we can, John. Our super producer, John, is going to jump in. To say that I was shocked that we did not get credit for inventing the Jade Lizard was the understatement of the year. So Fauzia came in right before the close of the show yesterday and said, listen, Jenny owned the Jade Lizard, period.
But somebody went in and fixed it because you said online, now it says it.
It does. It depends on how you type it in. So let's scroll through all these. Let's give
I think one of our viewers went and did something because it was one of our viewers long ago who put it on Wikipedia.
No, so I'm just going to show this to you, Jenny. I typed it in again today. Here we go. Steve Lentz. So I think it depends on what happens.
And it depends on how you're searching. But
you're searching.
Yes, last night you had a real high energy in your voice when you were telling me you found something that said it was ours.
Well, that's amazing. You read it like that because it was a text.
In my mind, you were very happy.
I do use quite a few exclamation points. I will give you that.
My husband let me see if it's all caps and all exclamation points.
I copy and pasted it, but my husband tells me I use too many exclamation points all the time. I go, well, that's how I talk. So I put it in there.
Okay, hang on. I'm going to read this.
Jenny, just repost it and tweet it. Just take the whole thing, copy, paste, and tweet. So then you can share with the class what you're looking at.
Okay, I'm just going to read this. Already changed in Google, exclamation point. The Jade Lizard option trading strategy was developed by Liz and Jenny, Liz King, Jenny Andrews, who are also known as super traders on the Liz and Jenny show on the Tasty Trade Network. They coined the name Jade Lizard. The strategy combines two strategies, selling an out-of-the-money put, selling a vertical call spread, also out of the money. Followed up with another text with exclamation marks. Are they marks?
I love exclamation points. They're my signature move. But I wanted to show you this, Jenny, because I'm out of my SPX. Okay. So I wanted to show you this. And I will go back because lots of other people did this. But here, this is from Andrew, and he did this 18 hours ago. He asked ChatGPT who invented the Jade Lizard option strategy. And here you go. This is us.
Yeah.
So it depends on kind of how you ask it, is my guess. But I also wanted to put something else to bed, Jenny, because I asked it the exact same way I asked it yesterday and came up with that same Steve Lentz guy. Steve Lentz, sorry. But look at this. It's a strategy that combines a bear call spread and a bull put spread. That, my friend, is an iron condor, not a jade lizard. So
yeah, maybe Steve Lentz in 2006 invented the iron condor. Maybe.
Jenny, your painter is now calling me. Does he not know that I work with you?
No, nobody knows I do a show. When I have people come or I say I tell them I'm on a conference call every day from 10 to 11. He knows I'm on a conference call. He has no idea I do a show. Does he know
the conference calls with me?
No, he doesn't. I told him, I said, I gave your number to my friend Liz. I didn't say, I gave your number to my friend who's on the conference call with me every day from 10 to 11.
So don't call her then. I should have just answered, been like, you're on with Liz and Jenny. Okay, he's coming to pay my front door. I wanted to go through a lot of these lizard things were great, and I super appreciate it. I put a couple things on from Twitter too, but this is Coin. I know they have earnings today, right?
Yes. Coin's gonna either make me or break me today. I'm ready for it.
Make me or break me. I have nothing in Coin. I got to see it. But did you see Bitcoin was pushing the 100 mark today? Yeah. Okay, and then Jack Tucker, happy Fed Day. This was 19 hours ago. So Jack Tucker did a great job on Fed Day as well, because it did end almost completely unchanged.
And today, so I got in and out of my SPX trade. I put mine on. Put mine on at 8:55, and then I kind of panicked and got out for only $90. I was like, $90, I'm out. I'll take it.
So I got 15%. I took my bar up by 5%. I got in at 9:29, which was late, and I got out at 10. I got out at 10:07. I'm just looking at it right now. It's pretty good for 15%.
My nose is running again. Remember yesterday my nose was running? And it's running again.
Okay, and let's keep, I know we're going to get to earnings. Let's take a look at the account. We'll jump back and forth. I posted some stuff on Twitter too because it was kind of fun.
What if I turn my camera off to blow my nose?
Just blow your nose. There's her little head, ladies and gentlemen. I mean, I wouldn't turn the camera off. I would turn the volume off. That's what I would be doing, is turning the volume off to blow your nose.
I'm back.
Think you're going to be okay. Let's take a look. I just sorted by what we did yesterday. We only did 3 options trades yesterday, none of which were earnings trades.
No, but we still put some Marvel yesterday just for the heck of it, and they're already up 62%.
And then we're going to take this off.
We're going to take it off, I believe. It's 8 days. I don't know if we want to keep rolling Marvel or.
So Marvel, we did it in the 8-day because earnings were coming up. I don't mind rolling the 15-day. I just wanted to be above earnings. Well, was it the 52?
Then we could just sell the 52 in the 15-day.
Yeah, there you go.
That's fine.
There you go.
Yeah.
Okay, so we rolled that. We are chipping away at things. I'm actually going to go percentage open just to kind of take a look at it. Oh, good, we're filled.
Don't even open you all. That's just that downside broken.
Yeah, that's what I remember that. That's a downside thing. Here we've got 62% in lift. I'm going to close this.
And this is one of those, I think when we talked about it, someone brought it to our attention. Someone mentioned it on Twitter, and they said this is a good put selling candidate for small accounts. And so I'd keep it going, move it out in time, see if you want to move out to the next week or the next week where we could get anything.
Yeah, because this is 1 day to go.
Right.
Oh, and they have earnings.
Oh, they have earnings. Just take it off, and we'll get back in. We
can take a look and see what we want to do for earnings, but I'm taking this off.
I just take it off, and we can get back in after earnings because we made 60-something% on that. I'm not going to leave that put on for 19 cents in through earnings.
American Airlines 33%. We're going to leave that just because it was such a low price product anyway. This thing is finally going in the right direction. Intel, which we kind of talked about, stays within this little trading range. Waiting for data. Please wait. Okay, there we go. So it's got a little blip up today, just like the rest of the market. It's getting a little bit of a push.
We had that 24 put. We added the 17 put. I would take the 17 put off and still leave that 24 put. Or if we have the 17 put and we have the 24 put, you could take both the 17 and 24 put off and just sell like 2 21 puts because we're not getting much from that 24 put.
You're not. That's a synthetic covered call.
Yeah, or we leave it. I don't care.
I want to make more. I want the room to 24. I don't know why. I just do. Etsy, we've got $100 in Etsy. This is a put spread that we have rolled and rolled and rolled. Let me take a look at I just want to do something real quick on mine because I can see these here. Etsy, we're still down quite a bit.
Are we?
Yeah. So I'm going to put something in for 50% just because that'll help us.
Let me see the chart, Nancy. What happened there?
We hit send. Right here.
Oh, yeah.
It's probably earnings.
I don't know. No, I think we just had a diagonal in Etsy. I'm telling you, those diagonals, when we take a full loss, it's hard to chip away just selling puts.
Here, let's look at what we did in Etsy just to give ourselves a walk down memory lane, Jenny Andrews. So it was an iron condor, right? No.
No, that's not the first trade. You got to go back further than 60 days.
Double diagonal? Double calendar?
No, that's not the first trade either.
Oh, these are the rolls.
Yeah, those are all rolls. The first one is the diagonal that we paid $3 for, and then we changed it.
And we changed it to a put spread. Then we rolled it. Then we rolled it. Then we rolled it. So we're chipping away at it. We got 60, 90, 93. So it's not. I mean, we're chipping. Chip.
So one position that I just was going to bring to your attention because it's something that I have been in, and I decided to completely get out of it, which could be wrong. Could be wrong, could be right. The stock could rally and then I'll be mad I got totally out of it. But I need a new coffee table for the outside. And I went on Wayfair last night to order one. I'm not I'm out on Wayfair. Their prices have skyrocketed. And so this morning, I sold all my stock and got rid of all my puts and everything I have in Wayfair, got out.
I've never been really in Wayfair.
I liked it. I used to use it, but I couldn't find a coffee table for my back patio for under $1,000 that I liked.
It's so
on Wayfair.
funny. I looked on Wayfair the other day to get outside patio furniture, found what I wanted on Wayfair, then went to Amazon and it was half the price. Same brand.
So I'm just going to go to an actual patio furniture store and forget Wayfair.
Yeah, I agree with you. Okay, so this is good. All this stuff seems to be managed. I want to make sure we get to today's earnings trades, and then I have some things that I wanted to show you. Oh, this was super cute. I don't know if you were watching this morning. I put the hashtag on here. I'm actually going to hit it so we can see everything. So the SIBO posted this. It was our interview with
Ed.
With Ed Berry, and he's a wonderful, wonderful guy. It's so cute. So then they have a very nice special guest, Ed Berry, head of trading floor operations, after reflects on his remarkable career after 47 years. Then this is what our crew did, and I loved it. Ed is delightful and a true athlete. How do we swap out Tom? I love our marketing team.
True athlete because he said he was better than Tom and Tony at softball.
Well, he also is an athlete. Remember his interview? What they said was, and he played college football.
Oh, that's right. That's right.
Yeah, so he is a true athlete, but he is good at softball. But he did say he was better at Tom and Tony. And so Vanetta was teasing them this morning, saying that Ed Berry says he's better at softball than you. It was
funny.
Pretty cute.
Funny.
Yeah. So I put the hashtag on so everybody could see it. I kind of wish Tasty Live would start putting the hashtag on our stuff so that it comes up during our live show. So if somebody's watching from Tasty Live, if you want to put us in something, throw the hashtag LIZJNY. That'll come up during the live show.
Any chance you could do me a favor and two finger make this a little bit bigger?
Sure.
You know how you could make this Twitter a little bigger? Thank you. Oh, excellent. Now I can see it.
Yeah, there you go. You just wanted to see this. Jenny, love the new hairstyle.
Can you just zoom in on Hell of a Stella?
And she wants a trick. Ed at the end gave me a deck with the instructions. I'm practicing. So one day I'll be able to do it.
Yeah.
I've been practicing.
I'm waiting for you to. Thank you, Stella. Thank you, Stella.
And then I posted this 8 years ago today.
That was in Texas.
Yep. What's the dead giveaway? What's the dead giveaway?
The cowboy hat and the cowboy boots. Hey, I almost put that outfit on today for the show.
Oh, that would have been great. Flashback, throwback. It's eight years, 8 year outfit. But yeah, this was 8 years ago. The He Said, She Said tour, 2017. Crazy, right?
Mm-hmm. Hey, not speaking of Texas, but then I started singing the Beyonce song. Got me thinking. Guess what I bought yesterday?
What?
Tickets to see Benson Boone.
You're gonna have to bear with me. Who the hell is that?
All right, forget it. Just keep scrolling.
No, I mean you can't just say Benson Boone.
He's like the hottest singer around, not right now.
I'm going to Katy Perry on Monday.
Benson Boone's coming to United Center August 23rd. Just get some tickets.
Benson Boone. Please tell me one thing he sings.
Okay, he's the guy who is always in a leotard, like a one-piece unitard outfit that's showing his chest, and he does flips on the stage.
He's not a singer. He's like an acrobat.
Yeah, no, he's a he's a singer. He's a singer. I'll send you some videos after, or if someone wants to share with Liz who Benson Boone is. But he's been on every, I don't know, he's been on every show lately, any kind of music show. He's he's new and up and coming, but he's very hot right now.
May I please
anyway,
hear
I was so happy with my ticket.
Hum one bar of one song he sings. Hit it.
I'm telling you, I can't come up with it right now. But to say I was pleased and impressed with my third row tickets for the price I paid compared to the last concert and Beyonce made me think of it because they're selling tickets for Beyonce right now too. She's on tour right now too. So to say I couldn't believe what I paid for these tickets compared to what I paid for Taylor Swift tickets, I felt like they were just giving them to me.
So okay. I'm sure I'm going to regret talking about this. But when we were in Europe, we were talking about, as a family, who's the most worldwide, who do you think the most well-known person is worldwide? Okay. And I said Taylor Swift.
Yeah,
my husband said the Pope on the very same day he died. So I was like, well, you can't compare Taylor Swift to the Pope.
Right.
But I think it's Taylor Swift.
Yeah, I agree with you, Taylor Swift. And that's not like apples to apples.
And that's what I said. Okay, but I wanted to show you this. And this is from Hamilton, S. Smith Berger. Thank you very, very much. Who invented the Jade Lizard trading strategy? And this is a deep search by Grok. I don't know what this is, but I like it. Research suggests Liz Deerking and Jenny Andrews popularized the Jade Lizard strategy. Some sources credit them with creating it, while others mention Steve Lenz introducing a similar strategy earlier. Steve Lenz, he invented the iron condor. We're the Jade Lizard. And Steve, there's no way Steve called it a Jade Lizard.
But you can see there's controversy over the exact inventor with evidence leaning toward Liz and Jenny.
That's right. Loving this.
Now, here's what I want to learn, because we're old and I'm not that internet savvy. So he's searching on Grok. Other people are searching on Chat GPT. Other people are searching, I don't know what is the best search tool. I don't know how to search on anything other than Google.
All I know is that I want to get the answers that I'm looking for, so I'm going to go to Grok because I feel like.
Where do you go to Grok? Grok.com?
Yeah, here. Try a deep search yourself. Just click that button, Jenny. You too can search on Grok. Okay, so this is a Jack Tucker coming in as my guess, right? Jack Tucker, one tranche, collected $5,450 earlier than normal. What time is it today? Yeah, 8:45.
45, 10 minutes before me. I put mine on at 8:55.
Yeah.
So Tucker, and I did Jack Tucker. I did $25 wide. I was channeling. Let me see his strikes. I'm going to see if they're the same as mine. I did $25 wide. I've decided to narrow mine to $25 wide. His were 56.05, 57.15.
I'll look at his. You tell me what you have.
All right. I sold the 56.25, 5600.
So he's narrower than you.
And the 56.85, 57.10.
Yeah,
and
so
that
his shorts are narrower.
That was at 8:55. And I took he took in 5.95. I took in like 11.30 or something. Yeah.
Yeah.
I brought mine. Mine were much more in.
Yeah, he's narrow. His short strikes are more narrow than yours.
Mm-hmm.
But he's big by big. Love it, Jack. Okay, and then here's a Jack Tucker inspired Iron Condor for the day, collecting 6:35. This is what I love, is everybody's kind of, this one was done at 6:30 a.m., which is 8:30 a.m. is my guess. And so this is a $30 wide, a little bit narrower, but I love that everybody's taking it and making it their own. Like Jenny narrowed hers and made it $25 wide instead of 30. Like, you know what I mean?
On that last, just springboarding off that last SPX trade. So we didn't do Jacob's study this week on the floor of the SIBO because it was a little delayed. Tom and Tony did it today. If you want to see it, you can find it. There was market measures. You can find it in today's archives. It was right before the end of their show. So, and I don't know if it's up yet or if the slides are up yet, but they will be. But I'm going to give you the takeaway. Don't put these on at 8:30. Wait till 9.
Oh, yeah. I kind of agree. I think the market needs to shake out a little bit. And honestly, though, that's fine. Everybody's doing their own thing. There was lots of studies that say put them on at the open, but take them off really quick.
So their study showed putting them on, and it wasn't looking at iron condors. It was looking at iron flies, but it showed putting them at 8:30, putting them on at 8:30, taking them off at 9, putting them at 9, taking them off at 9:30. It was looking at iron flies where you're starting with that straddle. Like
I will show what an iron fly is, so we know what we're talking about here. So, and we're not going to put it on just because it's not the right time, but just kind of walking through what I'm going to assume the study was, right? So it's an iron fly, so we're going to go with the 70 level, and then I'm going to go with
they weren't that wide, maybe $15 wide.
$15. Wow. Okay.
Right.
So here you're taking it. I mean, this is they're
wider than that. Sorry, but the risk was only $600. So the risk was only about $600. So that's why
I'm just gonna go to. Did I make this symmetrical? That's.
You got to buy that one.
Oh, sorry, yeah, but I'm just looking at the strikes. So $30 up, $30 down. This is symmetrical. You've got about.
That's probably fair. Yeah. That's about right. So. Ironfly, that sounds right. Ironfly at $30 wide. In the morning when Tom and Tony put it on, the risk was only like $670. But it was putting this on and taking it off in half an hour, putting it on and taking it off in half an hour. And if putting it on at 8:30 and taking it off in a half an hour seemed to always be, it was a negative P&L for over the time period of the study.
So, I mean, it's pretty interesting too, because the SPX, I think it does, it kind of needs its time to settle out, right? And it's and I'm not saying this because I don't have any research backing this, but when you look at the morning settlement prices, I mean, sometimes it takes a while for those things to open. So things shake out as products open in the SPX.
Right. So I agree. So my takeaway was just wait a little bit. And we've been kind of learning that from doing, just wait a little bit for it to settle down. But also my takeaway from this is I like the iron condors more than these iron flies. The net P&L or the average P&L on these trades was low, like maybe like $9, or I saw one if it was narrow or $4. It wasn't, to me, it wasn't enough to offset the commissions. I'd rather do the iron condors. I felt like the iron fly strategy, but then again, those are just on for a half an hour. It's not a trade I'm going to do from looking at the results.
I just wanted to look real quick. So taking a look at this, to Jenny's point. So, our fees are very, 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 very small, and they are free to close. But the SPX is a different animal. Here you've got $1 in, and then these are the additional fees that go with it. So to your point, if you're not making over this, you got to keep that in mind.
Yeah, if the net P&L over 2 years, the average $9, well, at 4, 5, 6, 7, you're paying that much in fees.
Yeah.
So you need to have a better results than that.
Right. But I love the studies. Keep them coming, and everybody can kind of adjust to their own liking on these things, which is kind of cool.
50. I'm glad I closed out of my SPX for less, just because
I got out of mine, which was amazing.
Yeah. No. And some people might still be in them, and who knows where we'll end. But this is where we were this morning when I woke up. We were up 50. So I was surprised that the market looked kind of weak today. After I expected more of a bullish day.
You know what? Just kind of thinking about, and I should probably open this up for random thoughts by Liz Deerking, but that Jacob study, it said on at 9, off at 10:30 was like the ideal. It was on at 9, off at 10:30, or 25%.
Right.
You can't get to 25% in an hour. Even if it sits right there, you're not going to get 25% in an hour and a half. It should just say off at 10:30.
Or then it said or off at noon.
Or off at noon. Well, they were like different buckets. Do you know what I'm saying? So no, I've never gotten to the point
environment. So like in this environment, we're not getting 25% in an hour and a half. But but that study goes back 2 years. So who knows in like the doldrums of summer when the VIX is like a 13, are you getting 25% by 10:30? Maybe.
No, that's true. Okay, I'll give you that. You get a gold star for that thought process. But I was just, in my mind, I was like, you've got to lower your bar if you want to be out by 10:30.
Yeah. Hey, my bar was really low. I want Jacob to do a study on that, just taking 10%. That's all I've been doing, taking 10%. And I know I'm the one who says, like, you have to make enough to cover one loss. If I did the $25 wide for 11, so I was risking like 1,300, 1,400, 1,350 or something like that. So if I have one wipe me out for 1,300, I can't just make 100. I have to win 13 times to cover the one loss. But maybe with these, you do win that often.
No, but the game changer there is you're not letting it go till expiration. You're closing it at 10:30, and you might take a little bit of a loss. I just want to show you our SoFi GTC just hit.
Woohoo! 45. We made 45.
Do you know what I'm gonna do? Watch this, and then you're gonna do the other side so that we can get these out real time.
All right, I'm getting to work. Pushing everything.
Yeah, check this out. I mean, people know what we're doing. It's not like we're hiding anything, and so they can see
it out to the follow page. Pushing it out to the follow page.
So
Marvell, Lyft,
Intel, and
SoFi. They're all out. Thank you very much.
I'm gonna check your work.
I did it. There they
Yay!
are.
Good job, Jenny. Good job. Okay,
MCL. Okay, MCL. I want to get back in. This trade has been working. Knock on wood. It has been working. I put it on again today, selling tomorrow's MCL.
No, you're selling tomorrow's CL.
Today. Oh yeah, CL, the CL.
So we were
in
MCL.
Yours on this morning?
I put mine on yesterday at the close.
I put mine on this morning. So so far Monday, Wednesday, hopefully Friday.
I think you're in better shape because mine, when I looked at it this morning, was an exact scratch. I would have moved my strikes quite a bit. I think you're better off doing it the day before expiration.
So mine right now is a $10 loser. So in the one day, in tomorrow's, this is what I have. I sold the 58.57 put spread.
Okay.
And then
so
we can see what you have.
No,
So
mine's
it's
pretty. No, mine's a huge loser right now. You don't even want to see mine.
But look how far, 58, 57 put spread.
Okay, but hopefully you sold it for more than 7 cents.
And then the 60 and a half, 61 and a half, 60 and a half, 61 and a half.
Yeah, there you go.
So I took in $200. This is exact. It's saying 21. I took in 20, so that's why it's a $10 loser right now.
Yeah, it's bouncing around between 19 and.
That's what I put on this morning, and I'm going to leave it till tomorrow.
Okay. But we're going to take a look for this.
We could afford to do these. We could afford to do those the CLs. $800 in a trade, we can.
Yeah, it is $800 in risk. Let me just show you this, Jenny. It's $800 in risk. I'm just going to do the strikes again. So this is 11 cents. I'm going to actually take it down.
Yeah, what did I have? The 58.57.
So 58.57. You're getting 6 cents in that trade, which is not a lot. And then you're going to get. Oh, I'm an MCL. Hold on.
We could, if we do trades for $800 or $1,000, we could certainly afford to do it.
Oh, I know. I just wanted to show you something real quick. It doesn't, it's the risk. The risk is the risk, but watch this. The risk is the risk. $870 in risk. Agreed. And that's very doable for this size account. Your buying power effect is 18.46. It's because it's the 0 DTE. You and I both know that you can't lose more than what the width of the strikes is. It is holding up a little bit of buying power. We've got it. It's not the end of the world, but it will be a consistent $2,000 in buying power because we're always going to be at this.
When I put these on, I like to collect about 200. I like to collect about 200, so my risk is, and I know you changed the strikes a little. We're only collecting 140, but I don't know. So your strikes, are you still out of the money?
Barely.
On the upside?
No. My strikes are this is my strikes.
Yeah.
Barely.
So it's just out of the money.
Just out of the money.
Mm-hmm.
By doing it the night before. Yeah, by doing it the night before. And there's still a 0 DTE tomorrow with this. So you can put it on today. I actually think that's the better time to put it on.
I kind of like putting them on Thursday morning for Friday, Tuesday morning for Wednesday.
Yeah, I do too. Now, in this account, we were in MCL. Do we want to do anything else in MCL? I know we were just selling puts in it.
No, we just took off puts and it's up again today. If we're going to get back in with puts, I'd wait till we're down.
Yeah. Yeah, you would want to wait until they were down. Okay, Jenny, time is flying. Time is absolutely flying. We've got a lot of stuff to do today. What is happening? Oh, there we go, because it's so zoomed in. Coin is the big one, and DraftKings is a big one for me. I've got a big DraftKings position. A coin, I don't have a coin position in, but I would like to put one in. So what is a new trader to do, and what do you have in?
Oh, I'm just long coin, just long. And I'm still...
So you just bought shares.
I'm just long. I have actually long in the money calls. And I have long in the money calls and I've had them on and I've made my bed and I said, I'm just holding these through earnings because that's just what I did. It's just what I did.
Okay. And how much are your calls? Are you better off to switch to a diagonal?
Let me tell you where mine are right now.
So here, I'm just going to walk through scenarios because I know what happens. Sometimes you do calendars, sometimes you do things like that, and you're left with in the money call. Now, that's great to hold.
I have adjusted it. Like I'll roll them up, and I'll give up extrinsic value just to keep my position going, but take some risk off the table. Right now, you can tell me what to do. I've got the 195 calls in the one day.
195 calls in the one day. Okay, so that's not a lot of extrinsic value. You only have $2 in extrinsic value. That's not bad. So, but your option is $14.85. Now you can make unlimited profit potential if it goes up $2.41 so anything over 210 is unlimited profit potential for you. How about that?
That's what I said. Coin's going to make me or break me tonight. And it's not really going to break me, but I'll lose 15. If it's down, I can lose 1,500 on the calls.
Okay. So here I actually don't think, please just bear with me.
I know nothing. Like I know.
No, I know. I'm just talking. I'm just talking. But if you wanted to, you can flip the script and take risk off the table by, I'm actually going to go through exactly what you'd be doing. You'd be buying this back. Okay. And selling the one in the one day. You're taking in $2.20.
Oh, you mean selling out, like selling out my long instead of buying it, selling it.
Oh, that's what you have, right? So let me begin for a sell it. So you'd sell out your long, and then you'd sell in the 2 day. I don't know if this is right or wrong. In the 1 day, you can go out to the 8 day and buy the 2. So this will give you profit potential from legit profit potential from 207 all the way to 222.
Yeah.
And you're taking $7 in risk off the table.
Right. And I could do that. And I flipped the cards. Like if you go to the chart, I had been selling puts in coin. I've been selling puts in coin, but then just in the last few weeks, it's had that rally. So I kind of didn't want the unlimited risk of the naked puts in coin, which is why I switched to just a long in the money call. But I don't know. I don't know what I'm going to do, but I don't have a huge crypto position. Like I have a lot of Ethereum, but I don't have a lot of Bitcoin, which is why I have more. I don't mind putting more into coin.
Yeah, no, I get it. So now what do you want to do with this account?
It could plummet tomorrow. And honestly, I said to myself, like if I lose the money on these calls and coin and it plummets tomorrow, then I'm right back in with selling puts. And I can make that money back on selling puts because then the puts will be really juicy again. They're not anymore. The rank's only a 3. So I flipped the switch from selling puts to just having long calls because I don't think the puts have enough juice in them anymore. But if coin falls tomorrow, they will again.
It will again for sure. It's interesting time with coin being up as high as it with coin because it's got a very, 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 very low rank, right? But keep in mind that this has had a very inflated rank. So a rank means implied volatility versus itself. So coin has had a crazy implied volatility, which is why the rank is 3, right? So is it low? I don't know. I mean, you got to keep everything. You got to take everything with a grain of salt. Right?
$12 expected move for coin, I think, is low. I think we could see a $20 move on earnings, one way or the other.
You could. Yeah, you could.
I think $12 expected move is low for coin. I mean,
I do too. Now, I know, let's talk through this because I would like to have something in this account. And if you are bullish, I would like to be bullish too, just because. I mean, I'm probably going to do the diagonal in mine, but we're not going to spend $700 on a diagonal here. But what if we just did, so I'm going to buy we're going to make $500 here. I'm going to buy a $5 wide call spread, and then I'm going to sell, what am I, 230?
But with the low rank, Liz, maybe we just buy a call spread and forget about financing it.
It's not a bad plan, just because then if it goes down, you lose 220.
Yeah, like then we only have 220 at risk. We don't have 500 at risk. If it goes up, we make money. If it doesn't go up, we only lose 220. Whereas, if I
was just going to do one side bullish, I would much prefer doing this. I would risk 300 because then it can come down a little bit.
Yeah,
it's just another put spread.
Then just do that. It's just so tough with the 3 rank. I feel like $12 expected move is not enough. I think it should move.
You know what? You're right. The move is. Oh, I'm in the 8 day though. I'm going to go into the 1 day. I'm going to go baby. Here's what we're going to do. I'm going to go baby small. I'm going to pay 138. If it goes up at all, if it goes up at all, we make 117. Great.
And honestly, if it falls, then there's a lot more. Then vol gets a little more pumped, and those options get a little more because those coin puts were nice, and they're not as appealing anymore.
They are.
Yeah.
Look at this. SPOO's up almost 1%.
53.
What are all the chip makers doing? I mean, I don't know what he said.
The video was down last time I looked, but now it's up 49 cents. Not much. Not much.
But Intel's up.
Intel's up. Yeah. Micron is another one. Like this morning, there were some positions I just got rid of, and Micron was one of my positions I got rid of this morning.
Micron, because I've been selling puts in there. I closed mine as well because you sell puts and then you get this little pop. I was like, I don't need the risk. I'm not going to stay back in it.
Right. And so that's exactly what I thought. It's had a nice pop up. We've been selling puts. I don't have them anymore. I'll wait for a down move. If a down move never comes, well,
So, I mean, you're right. If a down move never comes, it's fine. Like, so be it. So all these positions with all these different underlyings, I want to start leaning more towards, doing my CL every day and doing my SPX every day and doing those where the risk is off the table every couple of days instead of like longer term positions where you have to keep riding it up.
Right. Yeah. So, and look at Disney. Disney just, it doesn't stop. And I know when Disney was down to this level before, we were like, oh, sweet, we can sell the 100 puts in Disney, and that looks great. And now at 105, it's like, I don't know what to do in Disney.
I don't know. I still think I would sell the 100 puts for that. For a durational trade.
I know. It's just bounced up so much.
There's the 18 rank is what throws me off. These ranks, I mean, we do have to follow it, but are all the ranks down across the board? What is
like what's SPY rank right now?
I think it's higher than Disney. 25.
25.
Yeah.
Yeah. How much? Take a look at the chart. I'm just curious. How high are we now? How much?
We're right where I got on where you went on vacation.
So this is right around the level on Qs where I put my downside diagonal on. And that one I put on, Monday, took it off Tuesday.
Yeah.
Right? Put it on Monday, took it off Tuesday. I might put that on again today.
Especially when you're getting the two-way action of like up, down, up, down, up, down.
Yeah. And then we have a lot of short puts. I don't know if you'd be interested in a downside diagonal anywhere, really. I don't care what product it's in, if it's SPY, Qs, or a smaller XSP or something like that.
I want to look at XSP just because it's a lower price product than what your SPY is. And for a downside diagonal, let's do 16 day.
8-day, 16 day?
Yeah, 8-day, 16 days. So I'm going to go 255, closest to 16. So we'll go 15 day, right?
Sure.
Or I can go 19 day.
Well, that'll be more expensive. See how much it is.
So it's $6, which is a lot, but it's not that crazy. Let me delete this.
So you're 55, basically 55. You're $15 wide, $14 wide. There's $15 wide. That's not bad. A third. You're paying a third for a $15 wide. $6.
The price isn't that different between the 15 and the 19. Watch this. So it's $6.30 for the 15, okay, or it is $6.74 for the 19. I'm going 19.
Yeah, do the 19 because then we have some rolls in, and I don't think this is bad paying $6.74 for a $15 wide.
No, and we're going to take this off pretty quickly, right? So if we get a down day, we're going to take this off.
So you saw Monday I put on my triple Qs. I paid $1,600 for it. I took it off on Tuesday for $1,800. So that made, I don't know, like 15%. So if we paid $600, 15% would be like $80.
Yeah,
$90.
You're not holding that for a hedge.
No, just on a down move, take it off. On an up move, put it back on.
Yeah, you're not holding that for a hedge. Okay, so we have something in coin. Oh, do we have anything in DraftKings? So this is DKNG. This is you tell me what to do here.
Yeah, I know you've got a bigger position in DraftKings than I do.
Yeah, and so
but
I've been sitting on it. So like I sell things around it, and now I've just been sitting on my DraftKings waiting for earnings, waiting and plotting. I might just sit on it. Who am I kidding? I'm gonna sell
you just have stock in DraftKings.
Yeah. So I'm just gonna sell strangles around it. But when I look at this and open it up, I don't need 36 cents that way.
I mean, that's just it. I'll tell you what I did in DraftKings for earnings because I don't have a big position like you.
Yeah. Well, what are we gonna do in here? Let's talk about what we would do in here too.
Yeah. No, it would be what we would do in here. This is what I did. In the one day.
Okay, May 9th.
And I just did a diagonal. And then one day I sold the 38 call. And I did it yesterday. So maybe today, 38.5 call. And then in the 8-day, I bought the 34 call. And today maybe higher, 35.5. So 35, 36, 37. So you've got $3 wide for $1.50. You could adjust it. I adjusted mine where I bought a call a little bit more in the money. So I was not paying so much extrinsic value in the 8-day. I've been kind of liking that with the diagonals. And it doesn't even have to be that much, but just giving myself more profit potential, but still not paying too much. So 34, then you've got 450 wide.
I just want to see something. You can't watch extrinsic value. You do a 450 wide. The other way to thwart that, Jenny, is to go out one day, right? So you can delete this and then go out to the 16-day or the 15-day and buy something too, because this does smooth it out. This 15-day, no matter what happens, will maintain some value. So I kind of do like this though, Jenny, too, because let's say wheels fall off scenario and DraftKings goes down to 34. Then you've got the at the monies where you've got more extrinsic value in it.
Yeah, and that 34, if you pay $250 and you drop down to 34, that'll probably still be worth at least $2.
Yeah.
Yeah, so I did a diagonal in DraftKings, and I just did multiples of diagonals thinking, if I lose this, I lose this. I don't have any stock position in DraftKings right now.
I mean, didn't we just get off the Derby? How can DraftKings not go to the moon?
It always bugs me that DraftKings is still not profitable. Like if you go to the overview and look at the earnings, that the earnings are still negative. And I think that'll be a huge game changer for DraftKings once they start having, if you go to overview and click down, like earnings per share is still negative. That boggles my mind. Like, why aren't they making money?
Well, they're giving away money right now. They kind of have like the Tom model. I'm not saying that, but you know how Tom would be like, okay, we'll draw these customers in, then eventually their lifetime worth is going to be worth more than that. You go to DraftKings, they'll give you $50.
Yeah, but like I joined DraftKings years and years ago, got my $50, and I've been using it for years. Like and most gamblers or sports bettors have been using DraftKings for years. Why? I don't see how they're not profitable yet.
How old is DraftKings? It's not that old, is it?
I mean, I don't know if there's a history on when I got my account, but when DraftKings came out public.
So it came out in 2020. So it's been around for 5 years.
And that's probably when I got my account, when we started trading it, when it went public.
Because I've got a 20-year chart on it. It'll only let me go back 5 years. That sounds about right. Right? Mm-hmm. 5 years. And so where did it IPO? It IPO'd. It isn't too much higher than. I mean, it is.
I thought it was like in the 18, 17, something like that.
Yeah, it is. It's right there, and it's only trading 36 right now.
I just don't know why they're not profitable. Why they're still losing money. Yeah. If they have earnings per share positive, I think then we can get a big move up.
You could,
but if they're negative again, like how long do they have to be in business before they can start turning a profit?
Yeah, but you know what? It doesn't matter whether they're negative or positive. It matters on what they say they were going to beat, if they beat or if they don't beat, because they're giving you guidance. That's what's going to
they've been around for so long. They've been around for so long now, and they've got so many people using it. What is it going to take for them to start making money?
Well, are any of them profitable? This is negative too. Penn Gaming.
Yeah, I don't trade Penn anymore. I used to, but I don't anymore.
So, like, what other gambling sites are there?
I don't know. I mean, I hope DraftKings goes up tomorrow. I've got a bullish position on. We just put a bullish position on. I hope it goes up. I just don't trust having too big of a stock position in there because spoons are up
80.
That's crazy.
That is crazy.
Was there any news? Let me check my true social.
Oh, yeah. No, it's for sure. It's Trump. He's talking. You know that, right?
Oh, well, spoons up 80.
Yeah, he's talking. He was saying there was going to be a huge deal with the UK, not the EU, the UK tariff deal. No, I don't know what it is, but he's talking.
13 minutes ago. Good deal. President Trump announces trade deal between America and the UK.
Yeah. He pre-announced saying that there was going to be a trade deal between the UK. UK, not EU. I want to make sure that's very, very clear because I think the EU would be a bigger deal.
Yeah. Okay. So spoons up 80.
Yeah. He's talking. He was supposed to talk at 9 and he didn't. And you know how long-winded he is. He's probably still talking. Okay, we only have 10 minutes left to go. I want to put something in DraftKings.
Oh, I thought you put in that diagonal.
No, we were just pricing it out. I
like your idea of going out further, like going out to the 15-day.
Yeah, so I'm gonna buy the 34.5 and the 15-day. We're spending 227. Do you remember that show 227?
Yeah, right. Where they're sitting on the porch on the front.
They would all sit on the porch.
Wait, so this is $4 wide. Fine. Yeah. We don't have a ton of profit potential here, but we have to trade in one lots. So we can't get too crazy.
No, but I'm going to make sure I'll pay $230.
And when I say we have to trade in one lots, there really isn't anyone monitoring us saying like, you have to trade in one lots. We just only trade in one lots for this account.
No, we were told with this account, only trade in one lots. We were literally told that.
Yeah, because and honestly, to be fair, we don't really watch this or manage this outside of the 1 hour of our show.
Well, and the reason we don't is because I think that's a realistic approach to trading. People have jobs, people have lives, people have kids, people have vacations. And if you want to, we are realistic portrayals of saying, now granted, you and I are junkies. Hi, my name is Liz and I'm a trading junkie. But as a realistic portrayal of somebody who isn't, trading 1 hour a day is very, very normal. Like it all comes out in the wash. Like this morning, spoos weren't up 78, but now they are. So if you always trade between 10 and 11 or between, 2 and 3 or 8 and 9, it'll all come out in the wash. Sometimes it's better.
Yeah, but I think that the topic topic wasn't only trading between 10 and 11. The topic was we trade only in one lots, like, which that's not realistic. You can't say, oh, I'm going to sell. I'm going to sell a 100 put in Disney, and then I'm going to sell 1 put in SoFi or 1 put in Lyft. Like, that's not realistic. I have all my positions where it's notional value to notional value, pretty equal among products.
Correct, but this isn't scalable, and that's not what this account was for. And you said we don't care. I was thwarting the fact that you said we don't care about this account. I was like, yes, we do. We just trade it during the time.
No, we don't monitor it. We don't monitor it outside of our 10 to 11. Like, if someone could only trade from 10 to 11,
I keep an eye. It's linked to my account, so I can always see it.
But we're not in it. We're not making trades. Like, if someone only trades from 10 to 11, but then like the market's crashing, they'd probably find a way into their account to start doing stuff.
Oh, for sure. Wait, hold on. I want to show you this. ETH is up 14%.
Oh, I thought of you today. I thought of you because yesterday we were talking about ETH, how like we have bigger positions in ETH than Bitcoin, and we were like, geez, if it could only catch a bid. Finally, it started.
Well, my Bitcoin position is double my ETH position.
Oh, it is now.
Yeah, double. And this is only up 5%, and ETH is finally catching a big. 14% is pretty good.
Yeah, but Bitcoin back to 100,000 is pretty good.
Yeah, it's not bad. I mean, it's right here.
Today was like the first day I was back to selling the 60 calls in IBIT against my IBIT. Like now I'm back to selling strangles. For a while when it was down, I was not selling any calls. Now I'm back to adding on calls. So this morning I sold 60 calls on top of my puts.
60 calls on top of your puts. Hold on, let me see.
But I'm just 8 day. I do weekly. So I'm in the 8 day.
60 calls is pretty good. You're getting 68 cents.
So I've got the 55 puts and the 60 calls. Yeah. But I do weekly, and it's actually been working out.
Yeah, that sounds good.
But I haven't been selling calls until we finally got this bounce up. If you go to the chart, it'll look similar to the Bitcoin chart, where we're finally getting a move back up to where we were earlier this year.
Yeah, it is. This is IBIT, but I'll go to Bitcoin. They were saying since February, Bitcoin hasn't hit 100. So like right about there, February was the last time we were at 100, which isn't that long ago. It's only May. You know what I mean?
Right. Yeah. So that's good. I mean, good for the cryptos.
So we have the 2 earnings trades in that we care about. I'm going to keep going because I know there's other tweets coming in. Wait, what is this?
That's look at Saturday.
Oh my God, 77.
And Sunday, 78.
78 and sunny. It's going to be beautiful. I'm going to be at Annie all weekend.
Oh, so I'll be having that pool party at your house without you?
Yes, you will. I was like, what? Who put the weather up here? This is awesome. Okay, so Jack ask him how old he. Wait, what? Let's go like this.
You could.
Oh, yes. Excellent.
Oh.
Yes. Be like, you're not that old. Give me your driver's license. Excellent. I love it.
Oh, wait. Ask him how old he is and ask for proof by his driver's license. Okay, Frank, that's clever. But Jeff, also ask their name, and if they give you the name, be like, oh no, I meant your last name. I know you.
That's a good one too.
And I thought I had this all figured out because Liz got in a square pool with him. So I'm like, we're going to find him on the square pool. We're going to ask him what his numbers are, and we're going to find him on the square pool. But he put something goofy on the square pool.
Okay. Yeah, he did put something goofy. He had like a nickname on the square pool. Okay. And so then Steve Jones, you've got it. When someone new to the conductor is with you, like Lily, get her to say to the conductor, hi, my name is X. What's your name? Oh yeah, for sure. As soon as we get somebody new, I will.
As soon as we drag someone on the train with us.
Well, my son wants to come pretty quickly. And so I think, because he's interested in trading and he's got those 3 kids that scalp more than we scalp. So they want to see the trading floor. So I'm going to bring them down pretty quickly. And those 3 boys will get the name out of him no matter what.
That's perfect. So perfect idea. We'll coach the guys ahead of time. And speaking of those boys who are trading, I did get, now you've talked about this. They're in high school. They've been using Webull, and that, did we sell puts in there? I've been selling puts in Webull. I know we looked at it because of those boys.
No, but they're switching to Tasty.
And good for them. It's a, I think they should, but I had never heard of this until you said those boys were using this.
Yeah, and it just went public, and take a look at how big it is. It's billions of dollars.
7 billion.
Yeah.
7 billion. But that you can sell puts in there, and they're not bad. Like even look at the 8 day.
It's a lot of cash though, and they're wide markets.
Is it a lot of capital?
Yeah, it should still be cash secured. It is.
But it's still not that. I mean, I know
It's because it's new. Like it just IPO'd. You know what I mean?
Right.
So that's why it takes a little bit of time for that to shake out. But the markets are a little wide. So take a look at the open interest in the 8 days. You're in very, very low digits. I like Webull. I don't mind selling puts in it. You just got to thwart it with the.
Just look at the monthly and see how wide the markets are in the regular monthly, because this is a weekly. Although I guess that's the monthly.
That is the monthly.
But for as far as premium goes, I like these. I like when they're new and you're looking at June, a $15 product where you're getting, you can get pretty far down and get a hefty premium.
Yeah, you can. It's pretty good. Okay, Jenny.
Take a look at. Are we out of time?
Yeah, only because I want to make sure. I know we got lots of tweets coming in. So, and I know we zoomed in. That's the reason.
Oh, there's Benson Boone. There's Benson Boone. I'll be there.
Wait, hold on. So this is Andrew Cortado. Hey, what do you think about a Jade Lizard on McDonald's for a 305 short put and a 335 call side June contract? Okay, let's look.
I never sell naked puts in McDonald's. It's my nemesis. I only put on short calls.
We're just going to take a look for them. So 305, and then they were up here, 335. I mean, this is your stereotypical Jade Lizard. You got a third of the width of the strikes in the top side to the downside. You're covering your width. As far as it goes, I think it's fine. I will tell you that it's a little bit of capital for us, but as far as Jade Lizards go, I like it.
I do. I just feel like McDonald's. I'll start trading it when it's back in like the 100 handle.
Okay, and then look at this. 2 adjustments, but closed for
good.
After commissions and fees today. Good job. Love that.
Good.
Then, what is he singing? Give me a song he sings.
Oh, it's called like Beautiful Something. You can just go watch him. Go watch him on I don't know what, a reel or TikTok or YouTube. He performs all over the place.
So, Steve, I've never heard of him either. Jenny's a gymnast and likes to go see gymnasts flip around on the stage. I've never heard of him. I would like to know one song he sings. I'm going to go look. Oh, look at this. And you go here. It's on Twitter. And here's Grok. Thank you, Hamilton.
Okay. And I could use that for searching.
Yes, you can.
Excellent.
You too can use that.
So that concerns me too, because I have some Reddit positions, some long Reddit positions, and with all these other sources for information, it concerns me about Reddit. I don't know. What are people's thoughts? Bullish or bearish on Reddit?
I mean, there are a lot of sites to search, but I don't think Reddit is the same thing as searching, a search engine.
No, but it's like now if someone wants information, they can just get it through AI and not necessarily have to go through Reddit, right?
Yeah. I mean, you can go through AI, but Reddit is a public forum where AI is just grabbing. You know what I mean? I don't know. I mean, I'm sure there's nuances between the two. I just want to make sure we get to these 3 tweets within the next 2 minutes. Okay, Liz and Jenny forever. What's the best expiration to use if you are day trading SPY zebras?
Oh, we don't like zebras short term, because then you're better off just using single options. Like if you're trying to get a quick scalp and you want to get a long position, I'd do an in the money call or an in the money put for a short position. I would not use zebras as a short term scalp.
If you're day trading SPY, I would legitimately use XSP, and their markets are a little bit wide, but you can just use a single option, to Jenny's point.
And you could give up a little if you want to. If you get a move quick, it's not going to decay so fast. So, but a zebra is more of a longer term trade. I mean, I would say at least 20 days. At least 20 days.
Yeah, we put them on 45 days typically is what we like, and then we want them off when it gets down to 12.
Right. Because if you think about it, you're long 2, short 1 to wash extrinsic value. But because you're long 2, short 1, you're only getting the benefit to the upside of 100 shares, but you've got the risk to the downside of 200 shares. So I wouldn't use it for a short-term scalp.
Yeah, we typically don't use it for a short-term scalp, so thank you very much. And then Cupcake, this fella comes in. Google Iron Condor with a slight bullish slant, $5 wide, selling 170 call and 145 put, collecting 156, nearly 1/3 the width, and a 43 DTE. Looks like a small trade account. Let's do it.
Yeah, I like that.
And then Punish Pixels, this will be our last trade. We're going to put that in Google, but you keep the strikes up when we go in there. But happy Red Shirt Thursday, ladies. SPY Iron Condor, open at market open and closed in about 90 minutes. I love it, Punish Pixels.
Oh, good.
Okay, so then we are going to go into Google. What is it? It's the 43-day 170, 145.
Selling 170, selling 170 call and a 145 put.
170 call, 145 put, $5 wide iron condor. It's slightly bullish. Sure.
Yeah, sure. I don't, with the fall in Google, like I'm leaning a little more bullish in Google. So I don't know. I have no problem like skewing it, maybe wider put spread, narrow call spread, or moving the call spread even higher. Like did you see the fall this week in Google, Liz? I sold puts in Google yesterday because it had such a fall.
It did. It had a big fall.
Yeah.
I've been selling downside ratio spreads trying to catch the falling knife, and I don't think I caught it.
Yesterday it might have blown through it.
It might have blown through it. I got to take a look at that. Okay, so let's do what we did today, and then we are done for today. So I think you could. They're all pushed out, all of them. I've been doing it as we were talking. So DraftKings, XSP, and Coin are the top three. And then SoFi, our GTC hit. Intel, we closed half of the puts. Then Lyft, we closed. Marvel, we closed. And reopened one in the 15 days. So we did quite a bit today.
We did. Oh, yeah, we did. Everything's pushed out on the follow page, too. 11 o'clock. Happy Retro Thursday, everyone. Liz, good luck to Annabelle tonight in her play.
Oh, thank you very much. It's 4 nights of it, so I'll be every night. But everybody have a wonderful afternoon, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that, and I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on tastylive with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from tastylive to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batiste. I got my man, Mikey Butler, and of course, Katie McGargle in the house with me today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show, whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend it with my buddies, Mike and Katie. Katie, how are you?
Good.
That's it?
That's it.
Okay.
No,
Good.
I'm fine. How are you?
Pretty good.
Good.
Pretty good.
How was Arizona?
It was nice. It was
How'd you
nice.
golf?
I played 3 rounds in a row, 3 days in a row. Okay. It went okay, good, not so good.
Little
So
bell curve action.
It was a bell curve. Yeah. So I got like warmed up and then too much at the end. Too much.
I'm sure your core strength is just popping off though right now.
Oh yes. All those midnight crunches I do. No.
Well, I feel like, when you're at rotation.
Oh yeah. Oh.
Good for the obliques.
Yes.
Right?
No doubt.
It is. It's actually really good for your calves and your quads.
Really?
Yeah. Wow.
I wouldn't have thought quads.
Yeah. Well, it's all just like a slight twitch movement. It's like pulsing hundreds of times. But yeah, definitely calves. For sure.
Happy PGA Thursday. Speaking of golf.
Ooh.
Yeah, thank you.
What do we got going on?
Yeah. What's the play?
Just started. It's just one of those like no cut events, only 70 guys, whatever. But next week is PGA Championship. It's the next major of the year. So next week's gonna be a big one.
Ooh.
Okay.
Who's
Keep an eye out.
Is it Hovland?
It's an absolute Bryson.
Oh.
They have over 600-yard par 5s, and the par 4s are all over 200 yards. One of them's 280 yards. Par 3, sorry.
Par 3s, yeah. 280 yards?
It's just Bryson. He's going to win for sure.
Okay. And then a couple weeks after that, we have a very special birthday.
True.
Whose would that be?
Don't know. Your guess is as good as mine.
It's mine.
Like half my friends have birthdays.
I know. Today's my half birthday.
Oh, happy birthday.
Thank you. Patting
Very
myself
nice.
on the back.
Very nice.
How's it feel being half a year older?
Yeah.
Pretty not great.
Hey,
Yeah.
You're almost 25. It's wild.
I know. It's so
Crazy. Crazy.
Yeah. See, and he knows what he's doing.
Time flies.
Yeah. No, it is kind of like an inside joke in my family, though, because my dad's half birthday is St. Patrick's Day. My brother's half birthday is April Fool's Day. And then mine's just kind of like a regular day. So I'm waiting to see if they'll send me the happy half birthday text because we always have to acknowledge it. But because mine's kind of like a no-name day, I never really get the shout out. So we'll see if they remember.
It's harder to remember, I guess,
Yeah.
than the April Fool's Day.
Exactly.
Yeah.
Yeah. So we'll see. What else is happening in your universes? I've only covered one trade today. I covered my GM short put. Nice little winner.
Very nice.
Sold it for like $1.58. Covered it for like 30 cents.
Very nice. What'd you give us last week that was a quick winner?
You guys got out of wheat. I'm still in it.
Oh, we got back into wheat too.
Oh, you did?
I think
that's what I gave you
Was
last
that it? Yeah.
Yeah, I'm
Was
still
wheat.
long because I think my strikes were slightly different than yours, or my
Mhm.
timing was a little different. So I'm under water $50. I did try to cover it the day we had the rally, like right after we put it on, but didn't hit my order.
Damn.
Dang nabbit.
Dang nabbit.
Yeah, I covered that Google call diagonal spread. So I did the 1 day, wasn't a 1 day, but it was a long July, short June, longer term diagonal spread into yesterday's sell off in Google. Just playing for a 2 or 3 point reversal. Got it this morning, closed it.
$10 basically from the low yesterday.
Yeah.
It's a big move.
Yeah. And then AMD, I had the AMD earnings trade. I rolled the short call from the 1 day into June, and then we got the rally in AMD, so I closed that for I think $175.
Nice. I like it. Yeah, I did some cleanup as well this morning with my Uber position. You got it. I mean, you got the market rallying bigly on the big trade news.
Yeah.
And volatility contracting as well. The volatility futures at 22 right now. So a lot of stuff. If you've been leaning long / short volatility, you are certainly getting paid today. Today is like the payday. So I took advantage of some of those. Marvell put that I sold yesterday. I closed out of a Palantir leftover call spread that I wish I held because now it's $5 higher. Would have been right at the money. I closed out of an Uber trade that I had that was part of a earnings trade. It was a call ratio. Then I sold the put against it, rolled it, did all sorts of stuff there. I took advantage of the move in oil and closed out of a deep in the money put spread with only a couple days to go till expiration. I closed out my ETH-A position, which is the Ethereum ETF that I wanted to see how liquid it was. It's not super liquid, but I did a covered call there, took a couple bucks out of that. Took off a Coinbase position that goes into earnings at the close today. So I just took 80, 90, 82 cents overnight. But yeah, it's been a cleanup day, a cleanup couple of days here for the week, I would say.
Good stuff.
Yes.
I am flat again on my Micron short put.
Ooh.
Thankfully.
Well, maybe you get out of that bad boy.
I know. Well, I'm not sure. Now that I said that, we're going back below 80.
I know. Some of these things, like it's a tough decision. You got Micron base. I mean, it's like what, $10 off the lows, but
Yeah.
The 52-week high here in Micron, 157. You're at 85. You lean a little bullish. That's fine, but you're getting bailed out today
I know. We'll see.
and yesterday.
We shall see. What did you cover, Mikey?
Just that Google and AMD trade.
Got it.
And then yesterday, I turned my gold broken butterfly with calls into a free broken butterfly. So I routed that into that big rally and then covered it or removed the risk and retained a 50-cent credit. So I've got the 35.40, 35.60, 35.80, 20-point wide free fly on now.
Okay.
And if you didn't do it yesterday, you can now do it and secure a much bigger profit with this big hemorrhage sell in gold.
Hemorrhage.
In other news, we have officially announced all of our live events to the public. I think Tasty Nation has known for a while, but
Yes.
to those not in the know, now they know. tastylive.com/events. Lots of us going on the road this year, lots of different cities.
It's gonna be great.
Come hang, sign up.
Yeah.
Should be a gas.
Yeah.
First one coming up about a month.
Yeah, DC about a month away.
See it?
We've also got Seattle, thank you, Dallas, and San Diego.
Love it.
And then I
BTS.
guess Tom and Tony are going out too, and I guess
Yeah, they do now. They're so cool.
They're going on a world tour.
Yes.
Starting with Atlanta, then London, then Milan.
Yes.
Denver, Chicago. We'll probably show up. I guess we'll see. Talia Hall? Yeah, maybe I'll show up there.
Yeah. Better.
right next, on Morisco's San Pedro, which if you guys haven't checked out, since they closed Deus Ex and then turned it into Morisco's.
Good.
Yeah, if you're going to the Chicago show, August 15th at Talia Hall, there are many amazing Mexican places around there.
Yep.
Five Rabanitos,
Yeah.
Milagro,
Yep.
the chips, the green chip bag. Oh, Milagro, that's another spot.
La Vaca's got great micheladas.
Yeah. So
It's during the day, though. Are we going to be able to?
Party and booze?
To go.
Yeah.
Well.
Oh, you mean it's during the trading day?
Yeah. So
We'll play hooky, senior ditch day.
Yeah.
We'll call it.
But yes, lots of live events across the globe. Of course, Dr. Jim's going to Boston.
Naturally.
Big Red Sox guy. But yeah, hopefully we can see you there. At least one of us.
Yeah.
And tastylive.com/events. You can sign up. Sign up sooner than later if you plan on going, because a lot of these venues are smaller, more intimate.
Yes.
Yeah.
You want to make sure you get a ticket.
Yeah. Bring a friend. Bring a friend that doesn't know about us too.
Mm-hmm.
Yeah.
That's kind of the fun, is like seeing the shock and the confusion on the
And
faces.
they're like, who are these crazy people?
Yeah,
It's fair.
it's gonna be good. I'm excited.
I would like to announce vol futures are out of contango or out of backwardation.
Ooh.
First time.
They were a little bit yesterday.
Were they?
Like a tiny bit. It was basically flat.
Yeah.
Vecchio was eyeing that.
This one's pretty flat too.
It's done. The fear is over.
Yeah,
Back to all-time
if we stay
highs.
out of this, if we get back to a point of contango, as Mr. Trump says, better get your stocks now.
Better buy them now.
It's just so insane. We just live in a virtual reality world.
Tis true.
Quick little market update. Then we get into it. E-minis up 78. We're basically at the highs of the session here. 700,000 contracts traded. A pretty active day after what has been a couple of slow sessions. NASDAQ up 344. You got the Dow up 575 and the Russell up 45. So the Russell, the strongest of the group here, up over 2%. But everything moving to the upside, including oil, 59.79 up $1.71. As Mike was explaining, volatility futures getting smacked today, down $1.46 to 22. You got the VIX itself at 22 and change. Bonds down 17 ticks. Gold and silver both getting whacked here. Gold down $75. Silver down 19 cents. Lows of the session. And Bitcoin has a 100 handle, 100,750 on the spot. The futures at 101. Even Ethereum is catching up.
Up 2,000.
Up to 2,000. Shout out to Ryan for his solidarity in his fervor.
Yeah.
He has made it once again. Congrats on your wealth, my friend.
Yeah.
Yes.
Yeah.
tastycrypto.com.
Shout out to Tasty Crypto. Yeah, there is a wallet.
Yes.
You can download it. It also connects to your Tasty Trade brokerage. So that's another way for you to be able to, buy and sell some of the larger coins. But also then you can use the wallet to participate in other, smaller coins. And there's some really cool stuff coming very, very soon.
Yes.
That's going to appeal to the Tasty audience quite a bit. So if I were you, I'd download it.
Yes. And sign up for the newsletter too, because he gives us some fantastic alpha in the space. His Tau that he was talking about Monday, it's up like 15% today. So
He just knows how to call them.
he knows the stuff. He nailed the AI one.
Oh, the AI 16Z bot.
Yeah, he nailed that like a week before that happened. So
I know.
he's
His
in the
brain
know.
might actually be a blockchain.
It might
Maybe.
actually be a blockchain.
Might actually be a blockchain.
Yeah, he also started to dive back into Ethereum. Like literally, he's like, it dipped under 1,800. I'm gonna nibble on a little more.
As foretold.
As foretold.
Yes, he is the master.
And we are also working on getting him back live on the follow feed.
Yes.
His face is back up there. We're just working through a couple of technical things. So
Yes.
soon you will also be able to see what he is trading again. So big ups to our boy, Rain, as I like to call him.
Rain.
The most crunchy guy at Tasty. No, I'm kidding.
He's not crunchy.
I know, that's kind
He's
of why.
swaggy.
That's why I call him Rain, because he's like not a hippie. Yeah. But it's kind of just like an oxymoron type.
Come see him with us.
Yes.
On the tour.
It's gonna be great.
Yeah. Stock options, futures, crypto. We're going to cover it all.
Yeah. Both
Quite
like
literally.
the trading stuff as well as the management bit.
Yes.
So if you went to the show last year and you're worried about seeing the same information, it's
No.
not going to be the same.
Never.
Never.
Not once, not never.
Could talk to a brick wall about trading, all of us.
My God. Yeah, that is true. All right. If you want to join us on the YouTube channel, please do.
Yes.
Hop over to Tasty Live. I've got the Cherry Picks newsletter pinned to the top of the chat. I also have a link to the DraftKings earnings preview. We've got on the News and Insights tab, DraftKings after the close today.
Oh.
We are both, I believe we're
Wow.
both just naturally bullish with
Yeah.
our remaining positions.
Yes.
Have you been getting any fun little DraftKings perks lately?
I have. I text Nick about it almost every other day.
Yeah, I just
Like his invites to the celebrity parties and
Oh,
such?
none of that yet.
Okay.
But,
they're just like funding bonuses and stuff.
Yeah, so they're pumping the best ball. We've talked about best ball, NFL stuff, but they're just pumping it right now. Where like within a 4-hour window, if you deposit $20, you get a $20 ticket. So anytime I see it, I text him because it's just free. He's gonna do them anyways.
He's a whale though. He gets like
he gets the inside scoop.
Yeah, I'm like little Johnny. I'm a
He's
little
just-
Johnny DraftKings guy. He's the master.
Dare to dream, Nick.
I know. One
Dare to
day.
dream.
One day. We're working our way up.
Nice.
So yeah, DraftKings earnings after the close today.
Expected move?
Expected move, pretty huge. 3 points on a $35 stock, so almost 10%.
Oh, wow.
I need it to be between 37 and 42. So right there. We're right there.
Okay.
But yeah.
Lovely.
Yep. But it is Trade Ideas Thursday. So if we want to pop over to the slides, we can get through them real quick, and then we'll get to the YouTube chat. I see some people with some questions already.
Yeah.
I got lots of capital on the sidelines, ready to rock.
Rock.
So throw me some trade ideas.
Yeah, I'm semi-light. I've got a lot of just like dead out of the money calls that are rolling off in the next week or so. So yeah, I could look to redeploy some capital myself.
White smoke appears from the chimney of the Sistine Chapel.
Oh.
Wow, big news.
Got big Pope action happening?
Yes, I guess so.
Okay. That's exciting to some.
Yes, yes.
To actually a large amount of the world, actually, I should say. I don't
There are
mean to
probably people
downplay.
like that are just like
Yeah.
staked out there waiting for the smoke.
Yeah.
And now maybe they might
So
be weeping.
I can look at the Kalshi markets. Just to
Go
tell you,
straight to the
this will probably
markets.
tell us who it is.
Yeah.
Let's see. Pietro Parolin,
Where?
Italy. He's at 70%. He just surged 38.
Okay, yeah.
So he's in.
definitely him.
Yeah.
All right. Well, congrats to you, new Pope.
Yes.
Can always look to the betting markets to see who the next pope is.
Markets, man.
Not always. Up until very recently, you could not do that.
Yes, that's true. But it is a testament to markets and the efficiency of markets.
Yeah, that's true.
It's beautiful. It's a beautiful thing.
It really is.
Yes.
It really is. All right, let's get to the slides real quick, and we'll get back to the chat. So I'm going into Expedia.
.com.
Yes. I tried to do Priceline, but Priceline is booking.yeah. And booking.yeah.
Are we doing like an advert? Are we
Yeah.
getting paid for this?
Yeah.
Hopefully.
What the hell was this?
Well, first
Grease
of all,
my palms, please.
First of all, before we even get into this trade, if you go to a city and you're not using Priceline to book your hotel, you're wasting hundreds of dollars.
What about if you have loyalty points and
Who
you're
cares?
staying at a
Well, yeah, if you're booking it through like a
Envoy?
business or a company thing, then fine. But if you're going for personal fun and you're not using points, you literally get 50% off deals because I like to call it the roulette wheel. But you can specify a neighborhood, right? You can say, I want to stay in this neighborhood, king size bed with a 4-star rating hotel. And it gives you 3 options, and you don't know which one it's going to be, but you can see which ones it is like between the 3.
Yeah.
And then you pay, and they immediately assign you the room right after you pay. So then you know. But because you're not going to the website saying, I want to stay at this hotel where they jack up the premium because it's demand premium, because you're at their website, you're clicking the buttons, you do the give me the best deal I can get, and because it's a more of like an overstock thing, you get 50% off. So I stayed at the Kimpton in Brooklyn last year, which is like a $450 a night stay. I got it for $250 a night, just doing that. So
I have to look into that.
Whatever they're paying you, I want half.
Yeah.
Because I'm here. I'm
Yeah.
part of this advertisement we
Yeah.
have
I might have to recruit you because I'm still trying to figure out where I'm staying for the wedding
DC.
situation. So
Oh.
Yeah.
Yes.
Yeah. Priceline it.
I know. Okay. Well, we'll talk. We'll
Yes.
talk.
Yes.
So Expedia.
The whole idea is people are pinching pennies. We've got inflation worries. We've got, people drawing on their retirement accounts at all-time highs because of
We're
X,
going to
Y,
say
and Z.
walls
Yeah.
because they're going crazy.
Everyone's going crazy, but people still got to travel. So I think you're going to see some of these like discount travel companies do okay. I think it aligns with like the invest in McDonald's when we're in recession thing. So yeah, I think these companies that give people the ability to get cheaper stuff, cheaper stays, cheaper flights, I think they're gonna be just fine. Now, with that said, I'm still defining risk here.
Okay.
And I'm just playing into the really high implied volatility. So this weekly cycle, 16-point expected move, $170 stock, that's very high. And then I'm going out to July and buying some delta. So I bought the 175 call and I sold the 185 against it in the 1 day. It's literally trading for $3 1 day. So
beautiful.
If this doesn't work out and Expedia drops, I'll just roll the 1 day into June and reduce basis quite a bit. But if it does work out, this will be a $400 or $500 winner overnight. So I'm just bullish on the whole discount space when it comes to travel.
Okay.
Because the rant I just went on, I've
Fanboy.
gone with that. I've done that same rant 20 times with different people. So
Oh, I always look to you for advice.
this is one of the big ones.
Right.
Yeah.
This is
Price line.
This is one of your core
That's
pillars.
That's my price line guarantee.
I'm drawing a blank.
Whiskey recommend.
I could give you whiskey.
Honestly, laughs, like anecdotes.
Thank you.
You're a good storyteller.
Wisdom.
Sage advice.
Sage advice.
Yes.
By years of experience, can't you see?
Yeah. See, like Mikey's got the life coach thing going, and you just bring a little bit of lightheartedness to the situation. So there's got to be room for both.
Yes.
The yin and a yang.
Yes.
So what do I bring?
Just-
Nothing. Pain, suffering,
My God.
darkness.
Pain and suffering.
No.
I'm joking.
You are the glue.
You're the
Oh,
glue.
thank you.
You're the glue lady.
Glue.
I hear that a lot.
Yes.
But anyways, okay, so that is tomorrow and July. Is that one on your follow feed yet? I was gonna replicate it through there. I'm not trying to call you out.
Oh, Mikey.
Might not be.
Definitely not.
That's okay.
I'll do it right now.
The world is an imperfect place.
I know. We were busy. We got Chinese food out there. There's a lot of distractions.
Yeah, once the Chinese food hit my
You
nose, I
smell
couldn't
that
focus
in
anymore.
Yeah.
I haven't. Did you guys get some before we got in here?
I did. I had to.
Fair enough.
Yeah.
Okay, selling the 185, buying the 175 in July.
There you go.
Or, all right, I'm gonna just work it actually a little bit lower. We'll see what I can do. I might run it up if, oh, okay. I guess I got filled a lot better than I thought I would. I got filled at 960.
There you go.
All right, I'm in with ya.
Beautiful.
Cool.
Cool.
Yeah, I just posted it, so there you go.
All right.
It's on the follow fade now.
I wasn't trying to be a stinker.
No, it's okay. I should have done it.
All right, Nick, what is on your radar?
So I went into AMD. It's had a nice little rally over the last couple sessions here, going from, let's call it, the mid 80s up to 100 and change here. It already reported earnings. Volatility is not very high here, but I figure it's had a nice little bounce here, and I've been kind of trying to look for some short delta. I've taken off a lot of long delta into this rally, which is great, but I'm still net long. So I'm looking at something that's kind of like neutral-ish to slightly bearish, that I could sell some premium in, only uses $1,000 or $1,400 here. So I'm going with the crab trade. I'm going out to July. I'm buying the 100 strike put. I'm selling 2 of the June 90 strike puts against it. So you have a 10-point wide, spot to hit to the downside if AMD kind of churns lower from here. it gives you a break even down, just below or just around 80-ish, because you have the $2 and change debit. It's $2.66 debit, and you're naked on the downside. So you have a little bit extra risk to the downside, but your upside risk is pretty minimal, assuming we kind of chop around here, maybe go slightly higher. You're probably still at like a scratch trade. This is kind of a short play a month out from now, with a little bit of short vol and time decay in your favor until that.
Sure.
So it's kind of a sideways / churn lower type trade. Max profit on this is variable, obviously, because you have two different expirations, but you're selling almost $4 of extrinsic value in June. Plus, you have that $10 wide embedded long put spread, so you have a lot of upside there. I would probably target like $300 on this, maybe $500 if you were trying to hold for a home run.
Yeah.
Depending on how long long you've been in the trade. But for me, it's just a kind of a neutral-ish to slightly bearish trade into what has been a nice little rally recently, and it really doesn't have much risk to the upside.
Okay, I joined you.
Cool.
I got filled at 263.
Cool. So you got a little better price than me.
So we in.
Nice.
Together.
Nice.
Together. Dope.
Together forever. Fievel Goes West.
I was just talking about The Rescuers with Gracer and Kev.
The guy, the little mouse.
The little mouse,
Little mouse detective. Is
Bernard,
that's different?
Bernard and whatever the girl's mouse name is, Bianca maybe.
But
the skull, when the diamond is in the skull, that's how that came up in conversation. And Kev was like, "Oh my gosh, you just unlocked a memory." Blah blah blah. Great movie.
The Great Mouse Detective used to be my favorite.
That's a good one.
With the bad mouse, the bad rat.
Yeah, Ratigan or whatever.
Yeah.
Oop.
My God.
I think his name is Ratigan. Maybe that was a Freudian slip. Check it out. I think it's Ratigan. I hope so. Otherwise, I'm gonna feel like a real jerk. Yeah. Why were there
Professor Ratigan?
Thank you.
Wow.
Okay.
There you go.
Why were there so many mouse movies when we were a kid? Because remember, there was also the Secret of Nim or the Rats of Nim. That one was scary too.
I don't remember any of these.
The Rats of Nim or the Secrets of Nim had a female mouse, and then there were these big scary rats too, and a crow.
Yeah.
That would I don't know.
My top three were Great Mouse Detective, Fievel Goes West, and Brave Little Toaster.
Brave Little Toaster is also very scary.
Yeah.
That one was The junkyard scene with the magnet.
Yeah.
Terrifying.
Nick was watching Casino and Godfather on repeat as a 10-year-old.
I don't remember any.
Any of them?
Yeah. No.
Did you ever also watch, I think it was called Little Nemo? Yeah. That one was also an interesting one. But Mikey and I were on the same brainwave.
Yeah.
For sure.
Well, you guys were a little bit older than I was, so.
Yeah.
So maybe we had different shows. Who knows?
Yeah.
Not Katie, Mikey.
Nick is watching what was My Little Brothers? Blue's Clues or
Yeah, probably. No, my dad said cat dog.
Oh, cat dog. That was My Little Brother liked that.
Yeah.
Angry Beavers, Rocket Power, all those ones.
Yeah.
Yeah. But those movies were great. I also really liked Wizard of Oz as a child, and that one's pretty scary. And we've talked about this on the show before, so we don't need to go down that road again. But yeah, good times.
Great times.
People else in the chat. Chip and Dale Rescue Rangers.
VeggieTales, oh my God.
VeggieTales was definitely after my time. What was
broccoli, celery, gotta be VeggieTales.
Yeah. Or what was that other song that they had? I don't know. Now I'm mixing them with the Wiggles. Who knows? There's now Kitty Ravers too. I think we've talked about this a little bit. There's a music artist that makes classic kid songs into rave songs, and they're actually really good.
You'll have to send me some.
Yeah.
After this.
Yeah, I was showing them to some of my girlfriends that have kids, and I was like, "You should go do this."
Well, I don't know if you saw, but Riot Fest released their
Their lineup.
lineup.
Yeah,
Hanson
I know. I saw Hanson.
is on the list,
Yeah.
so we could go relive that.
Now you can go
little
listen to
bump.
Blink too.
Yeah, Blink-182, Weezer.
Yeah, into that.
Yeah.
All right. Well, now to bring it back down to earth again with my final trade idea, I am doing a little bit of bearish exposure as well, Nick, but a little bit more actual, like straight up just short negative delta, with a zebra in EEM. So EEM, the emerging markets ETF, has kind of floated between this like, 38 to 45, $50 range, more or less, over the last 6, 7, 8 months. And we are kind of just off of that, trading just below 45 at the moment. So I am long 2 of the 46 puts, short 1 of the 44 and a halves. I got filled at 291 here. So a pretty small trade. The most you can lose is the debit that you're paying for this trade. And just kind of looking for a pullback back into the range that it's sort of been floating within. But kind of in a very small way, and in a way that does give me a little bit of short delta when a lot of my other trades actually are, kind of longer delta trades. So pretty simple. Would be happy to squeeze out $100 from this thing. It's a $45 stock, so I'm not trying to expect this thing to go to zero by any means. I'd be happy with $100.
I like it. I followed you.
Cool.
Same.
Yeah.
Love it.
Couple strikes in the money. First strike right at the money as the one I'm selling. Markets are 7 or 8 cents wide, so for a $44 underlying, you do want to be thoughtful about your price, but the liquidity isn't so poor that it's untradeable.
Yes. I like that. I don't think I remember the last time I traded EEM. It's been a little while. It's not like one of the super high volatility underlyings. It's not super liquid. It's kind of the one-off trade. I like the story that you build in here because it's had such a nice move. I think it's an interesting one.
Yeah.
Glad you brought it to my attention.
It's got a strong positive correlation to SPY at 0.81. So keep that in mind. But again, this is small in terms of the size for my trading. So I don't mind kind of a little participation trade that also gives me what I would consider some more global exposure than some of the other names in my account. With that, though, and to your point about earlier saying I have capital to deploy, I am interested in throwing on some possible long or short micro futures.
Ooh.
So if anybody has them in the chat, sound off.
Okay.
Pick up a part in the next 24 minutes.
Beautiful.
Lovely. Love to see it.
Yeah. Interesting. You got dollar moving higher.
Yeah, so I've still got on my my
Euro?
long put spread in euro.
Okay.
I did that back on the 3rd of April. So I'm still, underwater about $275 or so, to your point about where the dollar's kind of been. But still 29 days left in that one. It's just out of the money at this point, so it's a lottery ticket.
Okay. Yeah. Very nice.
And then I have a free butterfly in gold. I've got that wheat. That's about it. So curious to hear more thoughts.
Thomas gave us the bullish wheat thesis. Was that
Justification?
yesterday?
Tuesday.
Yes.
Yeah. So yeah, we are long the wheat, but longer term.
Yeah. 43 days.
Yeah. Love it. Beautiful.
All right, let's get to the chat.
Yeah.
I think we've got Justin looking at Microsoft. We've also got Weiss looking at Mikey, your SPX Iron Condor.
Yes. So SPX, have I managed it? I have not. It is set and forget. So SPX, I had the 5,500, 5,700 shorts, only 5 points wide though. So the 5,700, 5,705 is in the money, very slightly. But tomorrow, if we get a 10 or 20 point sell off, it'll be out of the money. So I'm going to hold on to this and see what happens. But I'm pretty much near max loss right now.
You still have 1 day.
Still have 1 day, yeah.
75. No, the 5,757.05.
Yeah.
No, you got $200. It's right at the money.
Yeah.
You're not max loss.
I mean, yeah, I'm not a max loss, but I'm not going to do anything with this. I'm not going to roll the puts up. I'm just going to leave it. If we don't get a sell off tomorrow, what I will do is I will take on some more risk and I'll roll this out a week and roll it out to the 5,700, 5,710. So I'll widen out the call spread a little bit, get a bigger credit, and then just lean short with that. But yeah, we'll see what happens tomorrow. But nothing else to do there.
50-50 shot. You're right at the money. No big deal.
Yeah. Yep. Something I am going to do right now, though, is I'm going to move. So I have the 80-90 UAL inversion, but I only have a $10 and change credit. And we're right at 80 right now. So I need to make an emergency adjustment here.
You may?
June. So I got to go. I'm pushing this out. The 80-90.
Short the 80 call.
Yeah.
And the 90 put.
So I'm going to buy this back and roll it to July and make it a 5-point wide inversion for a credit. 85.90.
A lot of time.
It is a lot of time. But right now, as it stands, if UAL keeps rallying, I'm going to have short delta. And for me to make a profit on this trade, I have to hold it all the way to expiration. So I'm already we got the move we needed, but this trade is no longer something I want because I basically just am holding risk with little profit potential because UAL has had such a strong rally over the last couple of weeks.
Mm-hmm.
So I'm going to move it to July, reduce the inversion, and still pick up more credit. So I'm going to go to the 85.90 and I will be left with basically a $1,200 credit on a 5-point wide inversion. So a much better situation if UAL keeps rallying. Just filled at $1.20.
Okay.
So yeah, now I have a $1,900 inversion. No, $1,900 credit. Is that right? No.
I love that you called it an emergency adjustment, even though like this was the move that you needed. This was a perfect move for you. Yeah, I was like, when you said emergency, I was like, oh no, what's happening?
Everything's coming up, Mikey.
Yeah.
What a surprise.
Emergency adjustment so that I can still benefit from a continued rally higher. Yeah.
Okay. That's fair enough.
Yeah.
So yeah, that's my story.
Sticking to
it. Indeed. Yeah, 650. Yeah. Cool.
Sweet.
Anything else here? I did Microsoft for earnings, a 324.50 strangle. I've rolled the put 3 times. Now I have the 424.50 with a $1,500 credit. Give me a game plan from here if you can.
You in June?
I do not know. I assume so.
I would guess so. I mean, you're basically a scratch, so could close it, or if you're worried about, the risk, you can buy in the wings. You've had volatility come in significantly. IV rank at 15. You've had a nice rally here. You could buy 25-point wings and just cap your risk if you wanted to.
He's in June.
Yeah. So it's marked at 1530. You're golden. This is a scratch. You buy the wings here if you wanted to. It costs you about $5, but you'll have, $10 in credit to a $15 wide in risk. If you go like 25 points wide, I think that is an option just because volatility has come in so substantially here. Or you just hold. You got slightly short delta. I mean, you're right there.
Yep.
Nice trade.
GE Iron Condor, June. The 160, 170, 220, 230. Do I defend this by rolling up the putties? From Scott S.
Tough.
Maybe it's Scott Sheridan.
Ooh, maybe.
Could be.
He does need help. He stinks at trading. This is a tough one. I think with $10 wide spreads, I typically would be less aggressive, especially into this move. I mean, you've seen the stock. You know, we're at new highs here, so I would probably just leg out of the put spread and lean a little directional. If you're worried about the position, maybe if you do get that downside move, you just kind of scratch the trade. That's the sort of, like buying in the risk on that put spread. And then if you get a little bit of a pullback, you just close the position. That might be, your route here. It can't be that big of a loser. Assuming you did this at 1/3 the width of the strikes or close to it, your put spread's basically worthless. Your call spread's now trading at like $4. So you might be out $100 on this trade if you did this at 1/3 the width of the strikes.
Beauteous.
Aerospace.
They broke up all the companies.
Split. Okay, that's right. They split into different entities.
Yeah.
Got it.
Yes.
James Bond, happy post hump day indeed. Was looking at a put spread or a naked put in 6E 29 days out. What would you do?
6E. Big move today, 112. I do have an iron condor in my Johnny account.
I'm on the other side of you. But you could, 29 days. Let's see here.
I mean, the problem with these currencies is just that their IV is so low.
Yeah. You have to go like at the money to do like the 1/3 the width practically, or like the 112, 111.
Relative to buying power.
Yeah.
So yeah, I mean, 9%ers. I would almost rather just do like a debit.
Oh, or buy a call spread?
Yeah, like a vertical spread just to find the risk. Because the risk, like selling a put, even at the money for $1,000, you still have $140,000 of max loss. 60 is not going to zero, but the buying
that would
power
be a problem.
Yeah.
Yeah.
But yeah, these low IV stocks, like we're seeing a pretty decent move today, and like it's just hard to get paid to take the risk in here without defining risk.
Yeah, my thoughts would be if you're bullish, I mean, you could do like the 112, 111, pick up 1/3 the width, max profit of $450 or something like that. Maybe you have a larger risk tolerance and you want to widen out that wing. You buy the call spread, or you nibble on like a micro.
I did a slightly long delta skewed iron condor. And by slightly, I mean like a couple deltas.
Yeah.
I did the 111, 110 short put spread, 115, 116 short call spread. So you have more price movement to the upside. The deltas aren't exactly that much of a difference, but it's skewed to the upside. Okay. So I'm with you on that. I don't know if I could get just straight long.
Sunflower, how would you progress a small account? Started with $500, double to 2,000, trading 1-day SPX 5-point wide iron condors at 25 delta. Blew up a 6K account with 2 MES contracts during the crash.
Yeah.
Yeah. I mean, if you're blowing up on a move that's 20%, the trade size is too big. And also, good, like it's good that you doubled your account, but if you've doubled your account in the last month by doing 1-day SPX 5-point wide iron condors, you're using half your account.
Yeah.
So you have to be okay with losing half your account, because again, you're going to see these moves again. Like you're going to see a 20% sell off or 20% rally into your iron condor again. So that's why with the near term trades, we like to do them smaller. Just so that if you do have a loser, it's not a 50% drawdown. So if that's the strategy you want to do, just like consistent 1-day stuff, I would just make it smaller so you can withstand a couple of losers instead of 1 or 2.
Yeah, there's explicitly an ask about like keeping with one contract. And to your point, like it's almost moot, like absolutely probably still like one contract.
Yeah.
Like even those of us that have been trading forever, oftentimes I'm still just doing like one contract.
Yeah.
And my account size is not $1,000. So, you know, like you're saying, stay small so that you can weather a couple of bad scenarios rather than just one starting you at scratch again.
Yeah. And we talked about these yesterday. Like I did the Fed announcement 1 day or 2 day Iron Condor and SPX, but I only did it 5 points wide because it's 1 day and it's so binary. If I would have done a June or July, I would have made it 10 or 15 points wide because you have much more time for the thing to work out and you can manage it more easily. So time also gives you the ability to do something that's wider in that sense as well.
You got to keep expectations in check. You're not going to consistently double the account over and over.
Not going to 100
No.
week over week.
In that size account, you got to have, you got to look at it as an experience more so than a career. Like get a couple trades on, learn how the options move, how spreads work, bid-ask spreads, getting filled, exiting. That's really the more important part. I would say, be a little less risk than 0 day with the whole account balance.
Yeah.
Yep.
E-mini's up 85. Everything up.
Everything up.
Yes.
What is the risk in using a zebra in lieu of long stock? So some people in the YouTube chat outlined it nicely, but in short, you can lose your max debit which is your max loss. So the debit paid is your max loss. So your time frame is your risk, where if the stock drops and then your zebra goes and expires worthless and then the stock recovers, if you owned the stock instead, you'd be at a scratch where you're at a full loss with the zebra. With that said, if you buy a zebra that's a near-term one and you're getting a lot of leverage by paying less to get that 100 delta, if there's a huge drop like the 20%, 30% sell-off we just saw, you're going to lose way less than if you own the shares. So I like to use near-term zebras for that reason. The longer term you go, like if you're using leaps to get a zebra, you might as well just own the stock.
Yeah.
Right.
Yeah. It's all leverage play. You get, the one that Katie did in EM, for me to be short the shares, 100 shares, 100 deltas, $2,200. For 1/10 of that, I get that same position.
Right.
And so that's kind of the most important part for us is just, it's so much more capital efficient when you're using it as a trade.
Right.
If you're using this as like a core position, you want to be long XYZ stock for a year, you got to just buy the stock. I mean, you want that kind of static delta. You don't want to deal with bid-ask spreads widening out. You don't want to deal with, missing dividends, et cetera.
XYZ now block.
Now is a stock.
Yeah. Don't know
Up
how I feel
$2.
about that one. Oh, yeah.
Had a nice little bounce. At lows, though.
At lows.
Larry asking about my adjustment. I want out of the trade, but I'm rolling out in time. Yeah, I mean, it's just a matter of
Which one?
my UAL trade.
Oh.
So I had a credit of $10.60 on a 10-point wide inversion. So that trade is, for me to be profitable on that trade or get to a scratch, I'd have to hold that all the way to the June expiration. By rolling to July and making the inversion smaller to 5 points wide, while piling on another credit, so I'm up to almost $1,200 in credit on a 5-point wide inversion. So now if UAL rallies up to 85, I'll be in a much better position than the previous one. That was already basically at my max capacity for getting value back. Now I have a 5-point wide inversion. So if UAL rallies up to 85, I'm going to make back intrinsic value on the 90 put and get a couple more $100 out of it. So just made an adjustment to give myself a better chance of getting out prior to expiration. That's it.
Lots of time, though. 71 days.
Light years.
Yes.
Hopefully by then we'll have some warm weather because I am sick of this.
I know. It's annoying. At least the sun's been out a couple days this week. Feels good.
But I'm just, the wind,
I know.
and when you compound it with all the construction in the West Loop,
Oh,
dust gets in
construction
your
everywhere.
eyes.
It's hell. Yes.
Larry has a covered call in meta, 600 strike, 22 days out. Today when meta was at 600, added a zebra to the upside.
Nice. So you got an extra call to sell is probably what he's caught the move.
Yeah.
So now you got 100 shares in a zebra.
So you're just doubling
one
up,
call.
pretty much.
You can sell another call against it if you wanted to into this move.
Yeah.
Because you have the zebra, you know, if you're not taking the profits and running, which maybe you do because it's a nice move.
Yeah. So you have 2 calls and 100 shares and only 2 short calls against it. So you have the ability to sell one more call.
Yes.
And you'll basically verticalize the spread.
Yes. Won't use any additional buying power. I like it. Nice move. Yeah, for real. Nice trade.
When looking for a strangle inversion, do we need to pay attention only to have more premium collected?
I mean, if you have an inversion and you want to get out of the trade for a scratch or a profit, you need to have a credit over the width of your inversion. It's not always the case. Like sometimes the stock moves aggressively and we're just trying to get out for a lesser loss, in which case maybe we have less credit than the inversion. But when you have a couple dollars over the width of your inversion, you don't have to hold that all the way to expiration to get out for a scratch. When you only have 20 cents or 30 cents over the width of your inversion, you do, because for you to get down to that value, the stock has to be between your spread and there has to be no extrinsic value left. Where if you have $300 or $400 or $500 over the width of the inversion, the stock can be between your spread and you could be 20 days out, 30 days out to go to a scratch. So that's why I made that adjustment in UAL. But yeah, that's pretty much it.
I would also, though, say, the majority of what you're saying is actually, is true, but there is also a consideration of more than just the premium in the sense of, look at the delta that you're trying to adjust to. So if you're trying to exit everything you're saying, absolutely. But also if you're going, either further inverted or if maybe this strangle is part of, a larger core position, you may also need to consider the delta that you're either trying to, reduce or add to based on whatever else you might have going on, either in that trade or in your portfolio.
It applies to the portfolio as well. You might not want to, take off that short or long delta, just given that, it might be a bigger piece of your portfolio, or maybe you're leaning long and, you might have a little short delta in one stock. You might want to just hold that.
Yeah, precisely. All right, last one. I have a $5,000 account and want to trade futures options.
Ooh.
Welcome to the dark side.
Yes.
It's not the dark side.
No.
Welcome to Andor.
I've been watching that. Somebody said that to me on the podcast that we do. They were like, the dark side of futures options. And I was like, I don't want it spun that way. But, okay, so they said, which futures options should I not consider trading? So one, liquidity is king.
Yes.
Above and beyond anything else. So I would definitely do a little bit of time, or take a little bit of time to just get familiar with the bid-ask spreads in the futures options space. If you want to see a great example of liquidity, thank you for pulling that up, Nick. You'll see something like crude oil futures options have really tight markets, 2 ticks wide in a lot of scenarios, maybe 3. But again, if you're doing defined risk spreads, you need to consider that even more, because as you add more legs, the difference between the natural price and the mid price could, in fact, get wider. So stick to the most liquid ones. The ones we tend to see a lot of liquidity in are crude oil, gold, even the S&P futures options. I would say some of the other ones that maybe are less liquid would be something like a silver /SI. Sometimes the markets in there can get a bit wide. Natural gas during regular trading hours tends to have some pretty strong liquidity, but during overnight sessions or larger, geopolitical events, you might see liquidity kind of fall out of there. So just kind of keep an eye on it, and especially with the contract multipliers of the futures options being different, I personally get gratification out of the exercise of okay, maybe I'm going to Russell futures options or something like that. But I don't know the actual like differences in the price between the bid and the ask. I will just like look at a naked put and look at the price of like where the bid is and look at the price of the ask and then be like, wow, that's $25 in difference or something like that. Like maybe if I'm doing defined risk spreads and now I have like a $60, $50 difference between my mid price and net price, maybe that's not one I would consider doing. So, sorry, that was kind of a rambly answer, but like stick to the liquid ones. And you'll kind of tend to see that like the most liquid are crude oil, gold, even the S&P kind of are like the ones that we tend to see the most volume and the tightest bid-ask spreads.
Beautifully said.
Thank you.
And the beautiful thing about the Tasty platform is even if you're looking at something like 6J, love Japan, but I don't know what I'm seeing on this options chain. You can just look at your max profit and max loss in the bottom right corner of your toolbar. If you throw up a spread, and that will help you make sure that you are in line with your trade size.
Yep.
Yeah.
And like what would you even call this? A 0.0005 spread is $500 pretty much, $600. So
yeah,
just keep your eye on the max profit, max loss, and that will keep you in line with your trade size.
Yep. Good stuff. Love having people join us in futures options.
Yes. Yes.
And also too, I think the thing that's interesting about Tasty Trade as well is the options chains, like that tracker, also applies to the futures options world. So if you are also like rolling your trades out in time or trying to defend them, the Tasty Trade platform will kind of keep track of that math for you, which comes in handy, you know, for any trade that you're doing to quickly see, okay, well, I've been tested on this crude oil iron condor. I peeled off one side. I'm rolling out one side in time. What's my total credit? Where am I at relative to where that total credit is? So don't forget about the options chain feature as well. And with that, we're going to wrap it up. I'm going to go eat some Chinese.
Yes.
All right. If you want to see anything in future episodes, just tweet at us. I'm at Trader Katie. Mike is at Trader Mikey B. Nick is at Trader Nicky Bat. We need to get some new pictures. We're looking real young.
Too young.
That's young.
We need to age ourselves.
That's
I don't
baby.
think so, KT.
All right. Never mind. All right. Good luck. Good trading. Go golf. Peace.
Go golf.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We are back. It is Thursday, May 8th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, bing bong.
Yeah, bing bong is right. Pretty crazy here. I'm still kind of catching up. I was gone, obviously missed Futures Power on Tuesday. I was in Florida at the OIC conference, which was a great conference, by the way, well hosted and well attended. It was a lot of fun. I was on a panel. It was great. Been trying to play catch up. Obviously, the Fed was yesterday. My panel was actually during that, so we were literally competing with Jay Powell. But this move has nothing to do with that, right? I mean, it's just news, and it's you know what's beginning to seem like the constant the discussions that he has seemingly every morning. I know there was news that there was going to be a press conference this morning about trade deal, but I feel like most mornings there is a conference, and those seem to be market moving, and this one certainly today is market moving.
The concepts of a deal are enough. We hear from President Trump and UK Prime Minister Keir Starmer in a phone call at the White House that ultimately we will have a memorandum of understanding. The details are yet to come, but it's enough. Jamal, we have a president of the United States saying that it's a good time to buy stocks as well. I checked my memory. That's only the third time in history we've ever heard that happen before. Correct me if I'm wrong. Obama, Trump 2 weeks ago, 3 weeks ago, and then just again here today. So stocks are up today. Bonds are struggling. Gold's getting hammered. It's a buy America kind of day in a sense where people are thinking the tariff talk is in full recede.
Well, you know what? I mean, even I'll take it a step further as far as, he's saying third time in history you've heard that. This is the first time in history where you really see constantly a sitting U.S. president say things that literally move markets. I mean, not just stocks, but you mentioned bonds. I mean, look at bonds. Bonds, it should be a Buy America Day, and bonds should be up. But because he's saying that rates should be lower, I mean, that's the only reason I can assume they're down as much as they are. It's amazing. It's shocking even.
It's an interesting session, and there's a long way to go, but certainly it's a green kind of day. One thing that I do want to check in here with Jamal as we turn to the slides is look at what happened with Fed rate cut odds around the meeting yesterday. Of course, yesterday's meeting only had about a 2% chance of there being a cut, but there was a 30% chance of a 25 basis point rate cut in June. I suppose the news, Jamal, that we're getting a trade deal and the beginning of this process where maybe the tariff rates aren't going to come down all the way to zero. They'll still be there a bit, but you're not going to get the huge economic disruption. And for GDP on the other end, short-term, higher inflation pressures. Fed can't do much. So today, in the wake of the announcement, not the Fed meeting, we see that Fed cut odds for June drop down to 17%. The July cut odds which were up near 98% a few days ago, are now at 71, we'll call it. The market's getting less certain that we're going to get that cut that we've been looking for over the next few months. And that's something that just sticks in the back of my head.
That's the interesting thing about it, Chris. And I don't want to get too head bonds early, but obviously this is a bond-related discussion. I mean, Powell was pretty clear about not necessarily having to cut rates. We don't need to rescue the economy. Obviously, this is reflecting that, which you have up on the screen. But what I see here with bonds just doesn't even jive with that. That's the real confusing part for me.
That's the confusing part for me as well, Mr. Chandler.
I mean, it's wild, man. I mean, one of them's wrong, and I guess we'll eventually find out which one.
Someone is wrong here, and I think that's really what's important. Remember, the line in the sand is 55%. Going back to the late 1990s, anytime the market's priced in at least 55%, one way or the other, the Fed's delivered in that direction 100% of the time, the day of the Fed meeting. So at 71%, this really doesn't mean anything that it's guaranteed. But you're starting to see that downshift where the market's saying, if we don't get a cut in July, maybe we get one in September, maybe we get two, but we'll get one by October. I mean, the market's so uncertain right now. No one knows anything, I think, is the bigger takeaway. And that, quite frankly, yields a lot of opportunity because people are going to be constantly off sides for the foreseeable future.
Yeah, constantly off sides is definitely the phrase to use there, because there's clearly a lack of uncertainty, or I should say a large amount of uncertainty here, looking at the FedWatch tool. And it's, this thing can be all over the place. But you're right. It really what it comes down to is, as we get closer to the meeting, what's the situation? And I don't think there's anything we can determine at this point, 2 and 3 months out.
Not determine that 2 and 3 months out. We're going to have an opportunity to hear from Fed speakers tomorrow. You'll see that on the calendar towards the end of the show. There's too many.
Yeah. Yeah.
And unless it's Powell, do we really care? Stocks here today, though. It's been a really interesting 24 hours. We'll call it 25 hours here. The Fed meeting yesterday afternoon sent stocks a little bit lower. During the press conference, not much of anything happens. But then we get the announcement that there's a trade deal going to come today at 10 a.m. And stocks pump into the close a little bit. We get more of that news last night. We get a report from Bloomberg's, from Financial Times. It's going to be the UK. This morning, we get the press conference starting right around 10:30, and we sell off during it. But President Trump comes out and says, now's a good time to buy stocks, Jamal. So here we are, 57.30. The last 100 points in the market or so have really been built upon this tariff hope, because when we settled that after the Fed, we were sitting closer to 56.30 or so. I don't see enough here, and I'm currently leaning short in this market right now, so I'm not pleased with the price action.
Same.
So it's actually, before I go any further, walk me through why you're short at these levels.
I mean, I just thought today was stupid. I mean, that's how I really feel. But I'm
over here thinking, like, what ticker am I going to have to punch in for him?
Gosh, what's today? It's been a whirlwind week. Last Friday, I closed a bunch of different things. Some of them longer deltas. Obviously, I had a bunch of the shorter put spreads. And like over the previous week, I had begun to close things. I do have a few short deltas in the form of a few names. And a lot of them, honestly, like 4 or 5 of them, they're $5 wide, like call spreads. So nothing to be because of this type of move that I just really wasn't sure. Look, we've been saying how much of this rally, how much of the downturn and the rally, if you will, have been predicated off of a lot of the news. It's been a huge news cycle, and this is still currently the situation. So while I was not interested really in getting short to a really measured degree, like I said, it was mostly $5 wide call spreads and a few larger names that track S&P 500. But today, just during this move, I just looked at the heights of May 2nd of that last Friday, obviously post jobs report, and figured if we'd eclipse that a little bit, at some point we'd probably have a turnaround, and maybe I do want to see if I can scalp some here. So that's literally it. Again, a lot of this, if we're up 80 points, right? I mean, a lot of the last 50 of those points have come as the conference started, and there was this discussion. So it's just more of I can't say it's a lean how I feel about for the next 6 months, but how I feel about right now. I just feel like this rally has happened a little bit fast and a little bit too much news surrounding it. So just trying to see if I can scalp.
Yeah, yesterday ahead of the Fed meeting, I tried putting on a short call spread, which unfortunately couldn't be filled prior to the meeting itself, but it was able to be levied once we got that initial tariff bump. So I established the position in the ESU5 contracts, effectively when the market was trading equivalent to 56.70 here in ESM5. I'm holding out until we see a close through the April 2nd high, 57.73 1/4. This area that the market's been pausing in.
What's so funny about that is I was just looking at the 200-day moving average from my view of the SMA, and I see that's 57.80. So yeah, I mean that range is definitely something we're gonna have to watch.
You're reading my mind. You weren't here on Tuesday, but this is something that we actually pulled up on the chart. If we look at the 100 and 200-day moving averages, they're kind of residing right above the confluence here where you have the Liberation Day swing high. Let me pull this back a little bit more so this chart can backfill. But yeah, that's your 100 and 200 right up here. The 57.73 1/4 lines up neatly with the 57.80 level, and 57.80 is the 200-day. So I think I'm going to stay short against those levels. We got to break through them. If we break through them, then I'm wrong. Bad trade, move on.
Yeah, I agree with that.
Volatility isn't that high right now.
Wait, what do we do if it works? And where does it work to? Does it work back down to 5,700? Does it work much lower?
I don't think that we're going to be heading back to 48, 4,900. I think that we could probably get to 5,400 here. 5%. A little bit more than that.
Yeah, I mean, and this is the first time that I've kind of felt, I would say the first time in a couple of weeks, I felt kind of convicted of, and I even say kind of convicted about a trade that I'm going to hold on to for a little bit. Because other than that, I really don't have much on right now. Like I said, a few short call spreads, but I mean, I've been mostly like 60% cash over the last week, which is saying a lot for me. I'm usually somewhere a little more over 50, almost regardless of the environment. But I don't know. In this environment of all this newsworthy stuff, I think you can almost afford to wait for something that looks really juicy, for the juicy fat pitch. You know what I mean? Like they always talk about. I feel like you can wait for vol to climb up. I think that probably happens again. Something with, a lot of these other instruments and things that we're going to run through and talk about. I think we're seeing a lot of big dislocations, and I'm just going to try and wait out for some better type of trades, which I think those opportunities present themselves more often now than we have seen in the past.
I mean, yeah, that's keeping powder dry is important to deploy in the future. If you're levered to the hilt, right, and the market moves against you, you could get margin called, of course, which is a nightmare. But then when the opportunity arises, you won't have anything to do. You might be having to nurse some losing positions. At 57.30, I mean, the risk to reward here is basically you're risking 45, 50 S&P 500 points to be wrong. Versus if you're right, then the swing to the downside could be several hundred. I don't know. A Federal Reserve that's backing off, that raises concerns about stagflation effectively. In their policy statement, they talk about the risk to both higher inflation and higher unemployment. That's not a Fed that's telling you they can move anytime soon. And while the hard data have been holding up, admittedly, a little bit better than I thought they would through this point in time, the ports data is still very alarming. And the slowdown looks like it's still in the pipeline. So there is some good sentiment here, obviously. Market's up over 1.5% of the NASDAQ, 1.4% in here, yes. But 57.73 1/4, that April 2nd high, the 200-day moving average, 57.80. Get on the other side of them, and then I'll admit I'm wrong.
Yeah, I agree, and that's exactly what I'm willing to do at this point. And as you mentioned it, just to put numbers to it, I mean, 50 points for this, and again, I'm using MES. I mean, that's times 5 to $250, right? I'm willing to risk that just to see if we're going to pull back at some point, and the positive news flow dies down, which we've seen quite a bit in both directions. Obviously, positive news dying down, positive news becoming a thing again. Obviously, that's what we're currently experiencing. So I think this is the trade for now.
Jamal, talk to me about the Russell. It seems to be making a little bit better progress today than everything else, up 2.4%. Banks are near the top of the heap for what it's worth. When I check out the sector performance, only 3 sectors are in the red of the 25 that I track here. And the top performers are banks and energy, regional banks in particular, 2.76% to the upside. Banks are not something that lead the pack if you're thinking about recession. Right?
Typically not. Typically not. And, you know, that's such a hard thing, right? I mean, you know, away from the chart in an indirect way, that's a tough thing because, yeah, there are a lot of potential signals that could be flashing whether we're heading for that. Who knows whether we're going to find out if we're in for that in 6 months. And I mean, that's a hard one, right? Certainly things don't seem to be trading like we're in a recession, I would say. So, but the Russell, sure. I mean, it's getting swept up along with the rest of the bullishness right now, as it should be. Does it have staying power? Is it going? I mean, it's quite a ways away from its 200-day moving average, unlike some of these other indices. So, I don't know if. I mean, I don't know. Again, feeling how I feel, like a lot of this is just based off of the bullishness from the feeling that we're going to work on some of these trade deals. And so that being the case, I don't mind being short ES right now because, again, I want to see if this thing is for real and it actually goes to the 200-day moving average. But as good as the Russell looks, I think it's just more of getting swept up in everything else. I don't really... You know, you mentioned the banks, you mentioned the oil. Obviously, those are big components of it. But I don't really feel. There's no trade I had that I'm interested in the Russell for right now. You know, like it's really just getting swept up in this. That being the case, I should feel like I would want to short this too, but I don't necessarily think I would want to short this because it just has that much higher decline versus the rest, I believe.
Not that this is market related, but the white smoke coming from the Vatican City. A Chicago-born man was just picked as the next pope.
Is it the Prisbilla guy? No? Oh.
No, Robert Prevost.
That other guy had an interesting name.
Pizza Balla?
Yeah, that one.
That's like the simulation that's the most stereotypical Italian-American thing I've ever heard. Are you kidding me? It's like so on the nose.
Chicago guys, new pope, huh? Okay.
Yeah, Chicago guy. You Chicago guys. Look at you, making your way up in the world. Good for you. XLF, 5026 here. Jamal, this is one of the more confusing charts for everything that I think looking at the news flow and causes me a great deal of consternation with embracing any sort of bearish view. If you knocked me out in November and I woke up today and you said, Chris, this is the only chart I'm allowed to show you, what do you think's going on in the world? Say, well, the American banking system's holding up pretty well. Economy must be doing fine. No better or no worse than it was in the fall. How do we square something like the big banks doing well with our temporary, perhaps, bearish bias in stocks?
I mean, that's the hard part, right? Again, these dislocations, a lot of these things don't make sense. And honestly, if you saw this chart, you'd probably be looking at this and say, okay, as soon as it eclipses 5090, which is not that far away, I'm interested in getting long this thing. I mean, this is coming out of basically a hard double bottom. I'm all in. But again, I mean, the story surrounding it, like, I just, recessions, is that possible? Is this something that we're going to have to worry about? But most of them seem to be unfazed on their reports, right? Their earnings reports, most of these banks. Matter of fact, they were the ones who's kind of started this rally. So, I mean, therein lies the conundrum with markets in general right now. Like, will they, won't they? How do you feel? What do you want to be bullish on? What do you not? Some of these you almost have to, dare I say, close your eyes and trade your bias.
Close your eyes and trade your bias. We haven't really moved much here during the show, Jamal. 5730 here in the S&P. The performance that you're seeing in the Russell today is obviously noteworthy. The Russell has been struggling a great deal compared to its counterparts, and yet we're starting to make the turn through perhaps those pre-Liberation Day levels again, here, it's a strong day. We're back in the uptrend. That's all good. You have to like it. We're not through the April 2nd high of 2092.80. So 50 Russell points, if you're willing to give up 2.5% to trade against the high here on the short side, you have something to work with. Otherwise, I have to say bears have probably, this is the window closing. This is the last shot that you're going to have. The market starts to break through these key levels. We break through the April 2nd high. We've made a collective vote that we're on the off ramp, and there may be bumps and bruises along the way, but the worst is clearly, definitively behind us, at least from this particular trader's perspective.
No, I think that's 100% accurate. I mean, I don't see any possible chance of us going back down to 4,800 again. A lot of the fear was the uncertainty, and not that there's any much more certainty, but there seems to be, the smoke seems to be clearing. Using the smoke reference for today, of course, smoke seems to be clearing a little bit from a lot of the worries about what's going on with tariffs. And everybody's made their point. Everybody's kind of made their point. I think Trump has made his point as far as like these tariffs are not necessarily here to stay. They, even today he was saying we can't go any higher than China, 145%. All the rhetoric seems to be suggesting that you can make a deal and we'll get to where we want to be. Powell's also been clear about the fact that we're not going to just move these rates around like crazy. We feel like the economy is good. We've done our due diligence, and we don't want to put ourselves in a position where we don't have any ammo or bullets. So that's everything that you need to know about where we are in the market.
Jamal, you've been seemingly itching to talk about bonds, so let's move off of stocks, which are just hovering for the past 20 minutes or so. Swing our attention over to the bonds that are swinging lower here today. We talk about the Buy America movement. Stocks up, dollar up, gold down, bonds and notes off. The retrenchment in those Fed cut odds having some sort of impact here, coupled with, again, we think about now a reorientation of our understanding around the trade war here, Jamal. If we're going to have these deals where 10% tariffs remain in place, and again, a country like the UK, we run surplus with, and so we're still keeping the 10% tariff on. That is a floor. But if that's a floor that we're willing to work with and we can get everyone down there, will we still have inflation? Yes, we'll have a little bit more inflation than we did previously. Will we have a economy altering recession that, oops, this is a mistake, now we can't climb out of it? No, we won't. Again, the GDP report last week, you strip away the inventories, the trade, the government spending, core GDP was still plus 3% annualized, as we covered on the GDP release day. So there's something there in underlying momentum that if this situation ends, maybe there's not damage. And it's like a 22 or 23, where we have all this bad stuff going on and everyone's saying we're going to go into a recession, it's going to happen, it's going to happen. And then it never happens and we just muddle through. The muddle through is possible, but today, rate cut odds down, inflation expectations stickier, growth expectations back up now. We got a problem here with our positioning in bonds and notes moving forward. The sideways chop is probably right, but having a sweetener in there for an upside kicker, that's perhaps wrong.
Yeah, it's clearly, I mean, bonds are doing what they're doing because the Fed obviously made the decision to say that they're not going to. There's no need to rescue the economy with any cutting rates. There's no need for us to even act. And so, it is a little weird given how much we've been seeing this one trade work, right? The Buy America, the Sell America. Obviously, stocks and dollar up pretty big today, and these being down. You wouldn't have expected this to happen, but this is the current market we find ourselves in. So, I think this is why it's been best to be directionally neutral on bonds because there's obviously a lot going on here, and there's a big battle, obviously, a meet at the summit, if you will. And as of right now, Powell's winning that battle. But I don't know. I mean, the interesting thing is like even though they're making a big move today, bonds are, the vol is kind of coming in some compared to recent weeks. I don't know if that I guess vol is really coming in across the board. By the way, I just realized. Back to just equities real quick. VIX futures are not in backwardation anymore. They are slightly out of it. And so all the news that we've gotten particularly just today, has really started to see things calm down, and bonds are no stranger to that. I guess, balls coming in there, even though we're seeing this adverse price reaction compared to what we're seeing in stocks and the dollar. So I'm still directionally neutral, man. I've looked at this thing. It's actually making money. Both my positions, ZN and ZB, I'm still not closing it. I don't see how, well, I shouldn't say that, but I am short at the 110 strike in ZB. If for whatever reason we get down to that, there's a lot going on, I'm sure. Similar deal in ZN. My short put spread starts with the 108 strike. So if we're going to get those type of moves back to those areas in bonds, I'd be interested to see if we're still as bullish as we are in equities and the dollar, for that matter.
Well, here's the thing, right? Like, we're at the levels we were on Tuesday. Tuesday was I find being directionally neutral. Yes. I think that's still very much the case here. The administration has likewise showed sensitivity to the 4.5% level in the 10s and the 5% level in the 30s. That has not changed either. So, if we're going to get an opportunity to be directionally long, you're probably going to need to be a little bit more patient. Might see a little bit of a drawdown first. Volatility, likewise, if that expands here, that's when you want to have a little bit more opportunity in front of you. I'm comfortable enough holding what I'm holding right now because I think today is, concepts of a plan, a trade deal with a country where we don't have a significant deficit. It's not the EU or China. Even more over this, the UK is a country that's a single unit, right? The EU, any deal that we strike with them has to be approved by every single country's parliament. Mm-hmm. It's not going to come together quickly. And so the UK, who we're allies with, who we have a surplus with, this is the lowest hanging fruit. Hopefully it's a template for what happens moving forward. But the cut odds coming in, if June gets eliminated as a potential cut option, we're probably looking at notes and bonds trading closer. We'll see ZB closer to 113 and ZN probably back down to 110 or so. And then at that point, swinging directionally long again would be the better thing to do.
And as you say, that makes me think about 4.5% and 10-year again, which honestly, a lot of times now, every time we've gotten close to that level, markets really get freaked out. So, this is really interesting when you think about it, how different things have become. A year ago this time, if we saw this type of day and we saw 10-year yield up 2%, we saw the dollar up like that, we'd be getting rocked. And it just shows you what a difference a year and an administration makes. Things are very different now.
It's still the chop, still the range. You and I played that game last week. Like, let's pretend that we didn't have that early April flash outside of this. We would say that nothing's going on. And quite frankly, between where we were back at the start of the year and where we were at the lows in April, you're sitting near the midpoint of the range again. So directionally neutral, I'm very comfortable with. And you can see how we're ping-ponging between the 100 and 200-day SMAs right now. These aren't the sexiest trades, Jamal. Directionally neutral in notes and bonds isn't anyone is going to, get out of bed for. You're never going to have CNBC pull us up on TV to say, Chris, Jamal, what's your big trade idea? This isn't going to put butts in seats. But yeah, it's worked. It's working. Today's a little bit uncomfortable, but it's been working. And we're looking just for the chop to continue for the foreseeable future.
Absolutely. I'm not changing my bond positions as of now. They're working. Again, these are, I think I've been saying this for a week. These are the best positions I got on, most ones I feel most confident about.
A position that's not working for me today is gold. It was a fun week earlier this week. Yesterday was a little less fun. Now it's getting a little worse, but gold down is good news. It's off 2.25% right now, 2.58% right now, excuse me. Silver's up by 0.66, copper's down 1.47. The gains that we saw coming out of Monday have effectively been erased. We're still holding up technically right now, but again, if this is a market that breaks down from here and you lose $3,200 an ounce, I would suggest that we put in the top and that the trade deal hijinks need not worry about it anymore. Clear double top coming into play then. 1, 2, right near 34.50. And I would trade it as a double top, looking for a move back under $3,000 an ounce. But we're not there yet. So I'm still going to hold my long gold position here. Not happy with how this has turned out, but we can't anticipate a double top before a potential neckline break. So we're not going to trade it like that just yet.
Yes, Tom, I am on air. I mean, Jesus, he's asking me questions. The nice thing about a trade is when it follows, technically it works, and the storyline works as well. And yeah, like you said, while it may suck for you, it doesn't suck for me today, actually, for my trade. Oh, but nevertheless, while gold may be down today, at least the story makes sense, right? Like, again, we just came from a story that doesn't exactly make sense to us given what we've been seeing more recently in bonds. But gold, the story makes sense, at least. Markets are up big. Of course, gold is going to fall because a lot of the reason for gold being up has been the fear of or the unknown of what's going on with tariffs, et cetera. So I still have an iron condor in here. My upside, the upside of my iron condor was really close to getting breached. But it's the 3450, 3470. So I'm back in a pretty kind of sweet zone now when you look at it. I'm short that call spread, and the downside is 3150, 3130. That's holding up. Again, I think the last time we talked, I was a little annoyed at myself for having rolled my puts up, and it was almost getting breached, but I'm in a pretty sweet zone. Actually, I probably need to. I keep forgetting. I got 19 days on this. I need to do something about this. I don't know if I want to keep the same strikes or I want to roll further out. I'm not entirely sure. I mean, this has been such a seesaw. I don't know if this has not been an enjoyable trade, by the way, Chris, this iron condor and gold. Like I don't, it hasn't been fun. And I'm really like, as of today, I'm only down $20 on the situation now. So I'm basically flat. I'm going to have to make a decision today whether to close this all together or keep it on. I don't know if I will. I think I like it. I think I like gold more when I'm directionally making a trade on it. I do.
The one thing that we pointed out at the start of this week, Jamal, about how it felt kind of like deja vu, where the two boxes highlighted on the screen, the Morningstar candlestick clusters popping up above the 1 week and 1 month moving averages in unison, reminded me of what happened at the start of April. What's happening the past 2 days is not what happened at the start of April. There's a glaring lack of follow through. And so if my confidence in this position the past few days was predicated on that Morningstar candlestick cluster holding up, if we don't see an immediate rebound tomorrow, we're closing below the 1 month. The 3,200 looks real vulnerable. I'm going to get out. And we'll just wait again. Gold will have its time in the sun sometime soon, but, maybe it's nighttime for a little while.
Yeah, this has been a great momentum trade, man, because like you said, we'll just wait again. I mean, that has paid off, really, when you see these dips 3-4 days in a row and then, boom, starts going back up. So, I mean, I think for me, I would love to see the pullback, and I might just end up closing my trade today. Small loss, just call it a wash, and wait to see if 3,200 is breached and we see those big bars a couple of days in a row, because the narrative has flipped quite a bit, right? I mean, and I guess in my case, it would be, is this story kind of over? Right now that we're seeing this lightening up in volatility and equity volatility, we're seeing this move in equities itself. That would be the one thing I need to think about, because again, I'm already short equities. If this, it's basically the same trade, right? Getting short these equities, also getting long this gold. Given everything that we've been seeing more recently, does that trend continue? Do markets keep going? Are people not as afraid of tariffs anymore? That's the one thing I would have to consider.
Silver price is back in a little bit today. Again, this is part of the confusion that I have about stocks. You look at the commodities market here, it's not exactly a clean sweep for a growth or degrowth type of environment. Silver's off by 0.58%, copper's off by 1.49%. Stocks are rallying, though. You have oil that's surged by 3%, which supposes one of the only things that I have going well for me today. But this is increasingly looking like a chart, very much like gold now, where you're starting to see it behave in a manner that does not suggest it has the bullish momentum follow through in it that it did during previous thrusts to the upside. I pointed out because we just tried to get out of the downtrend from the March-April swing highs here. We failed yesterday. We're back below the 1 week and the 1 month moving averages today. We closed below them both yesterday. There's a negative rate of change here. We're holding on the 100 and the 200. I don't want to dismiss that. That is catching right now. But if we lose the 100, 200, and the short-term moving averages are pointing lower, momentum's already deteriorating, and vol is starting to come back in. Lower vol has preceded moves lower in precious metals a lot of the time over the past year, Jamal. So I'm not feeling too hot under the collar. There are days when the market doesn't work for you and you're like, well, the foundation's still in place, right? The trade still has its reasons where if I were to put it back on now, I'd feel comfortable, even if it's a bad day. This is increasingly less and less a position that if I looked at this with fresh eyes, I'd say, yeah, today's a good day to put it on.
Yeah, I could see that. I mean, there's a lot of noise in this chart here, and it doesn't necessarily. I mean, you know, on the one hand, it is obviously going through some consolidation. You're not seeing as many of the big down bar days. I mean, you know, save for the one obviously that's glaring on the screen. You're not seeing as much of the pullback that you see in gold and then the bounce higher. This one has had a big pullback. It's bounced, and then now it seems to be consolidating. For what move and where next is uncertain. But yeah, I have to agree with you. I really don't think I would put on a long position here right now. I would just wait.
Copper is the other one, which clean sweep for me in metals today, Jamal. Oh boy.
At least these two look exactly the same, though, the chart, silver and copper, right now.
Yeah, and I'm exactly long in the same manner in both. I hate losing money. Yesterday, we offered the perspective that, and tried to get out yesterday, couldn't get filled, trying to get out right now. We do see that the market puts in this attempt to climb back above its 1 month and 1 week moving averages, very much like silver. Yesterday, it closes below both. Unlike silver, it puts in a bearish engulfing bar, move above the Tuesday high, close below the Tuesday low. A bearish engulfing bar or key reversal where you fall back below both of your 1 week and 1 month averages, which already have a negative rate of change, right? Negative slope. That's a bearish technical signal if there ever is one, which is why yesterday on the show I was talking with Thomas saying how I want to get out of this. So I don't feel great here either. And it's a doji, sure, and we're holding up against 4.5, 4.6 or so. That's nice. But any more from here, again, you really start to lose that 100-day, the 200-day, the most recent swing low. The technicals just look like garbage, and it comports with that view that the tariffs are still going to have a negative impact globally. It's going to hurt trade. It's going to hurt growth. It may not be the severe scenario, but it's still going to be a bad one.
Yeah, the metal situation, I mean, really a lot of it has been dependent upon what's going on with tariffs more recently. And they've been the flexibility, right? Again, with a term that you coined a while ago, that narrative flexibility, that's been the thing that has propelled them more recently on the days that they've really moved. So again, you do, on the one hand, you wonder if the fear is, you know, do I want to get long metals if this story is coming close to over? But I would say the real truth of the matter is I don't know when this story is over as far as tariffs. So you just wait for better levels if you want to get long, right? And this one is closer to being better levels than what we saw in silver, but I think you can probably wait for better levels. I think we're going to get a very tradable market on a lot of our different assets that we trade, and this is no different.
Let's take a brief reprieve over to the other safe haven metals, the digital ones. What do you make of what's going on here with Bitcoin back above 100K?
Yeah, honestly, I'm a little surprised. Unless I missed some news, I haven't seen anything. I don't know if this is just a situation where we're going back to, oh yeah, the Trump administration is very crypto friendly, and this is the thing to buy. I mean, I don't know. What are you seeing? I actually hadn't seen any specific news. I just knew it was moving.
Is it India, Pakistan?
Is it?
You know, if we're in this world with these trade deals, as we've argued over the past few weeks, maybe Bitcoin looks pretty good now as a safe haven. But it's back above 100K. To suggest that new all-time highs are going to come in soon is not something that is a new observation around here. We've been saying this for the past few weeks in First Call and Overtime with Futures Power, blah, blah, blah. But right now in this market, the fact that Bitcoin is charging to the upside, there is a clear desire to hold risk. Maybe Bitcoin has the baton instead of gold for the short term if stocks are going up. And when stocks go down, gold takes it back from Bitcoin. But Bitcoin has that narrative flexibility that gold has had for such a long time right now. If it's because it's a high beta thing, if it's because it's an alternative to the US dollar as a store of value for retail traders, it's something good's going on. Maybe it's because we now have an American Pope for the first time in history.
Yeah. Yeah, that's, oh boy, we could really go somewhere with that one. Pope, money.
Like I've told you before,
Catholic Church.
I've been thinking, I've been doing my reread of American history, and so just like thinking the last 20 minutes, what would the founding fathers say that an American is the head of the Catholic Church?
Do something else.
They'd probably find it interesting.
They'd have a lot to say. You know, I mean, look, there has been this correlation between Bitcoin and equities for some time, but this is a massive move today. This is saying something other than just we're correlated to equities. I'm not exactly sure what it is yet, and I really haven't heard much mention about. Obviously, there's a lot of mention that Bitcoin going back over 100K again, but I really haven't heard anything about legislation or what's going on. I know that was always something that we've been sort of waiting to hear more from with regard to the Trump administration, because he made it real clear during the election how much they favored crypto. But I hadn't heard anything. But it's a strong move today. It's telling you something.
Even Ethereum's up, man.
Yeah, big.
14.1%.
That's a bar that
when
stands
Ethereum's up, it's been such a dog.
Yeah. Ethereum trading higher than Russell 2000 today. I don't think you've been able to say that for a while.
Okay, so on April 9th, didn't Trump tweet out that we needed to be mindful of it being a potentially good time to buy stocks? And then they made their announcements.
Correct.
The excessive moves in crypto makes me think maybe something's coming. 14% for Ethereum makes no sense on a day like today.
I know, right? I mean, that's a statement.
Just going to put that out there. Not that I have any exposure one way or the other, but why today of all days?
I don't know. Yeah, you're right. I mean, it seems as though there's something around the corner that we just don't know about yet.
Market's always pricing and things. It's clever like that. Let's talk about what's going on in energy. Oil up, nat gas down. I did see today that Trump said that he will be sanctioning Chinese firms that deal with Iranian oil. Perhaps that's a sign that the negotiations with Iran aren't going well for the nuclear deal because they're applying more pressure. Then again, maybe it's a strong motivator. Either way, Jamal, we had the wipeout earlier this week. We get that OPEC Plus announcement. We crashed 4% Sunday night. It's like it never happened.
Yeah.
What does that tell you? That we shrugged all that off?
It tells me that I should have bought 55s is what it tells me, and on oil, and I didn't. And besides that, what it tells you is that news is really moving around very fast. Is really what it tells me. And again, we could go through a bunch of different assets, and it's the same thing. It's the same thing we mentioned about bonds earlier, similar to gold. I mean, the news is traveling very quickly, and whatever makes sense 3 days ago doesn't necessarily make sense today. That's the biggest thing I get from it. So what are you going to do in the absence of that? Well, often what we talk about, trading volatility, trading direction is a little bit harder right now for sure. You just try to wait for outsized moves and have be well capitalized to be able to take advantage of it. So I didn't buy 55s the other night, even though I thought about it. I didn't. I don't know why I didn't. I probably should have. I actually already had capital. I just didn't. I just thought maybe it was going to move more. The main reason why I didn't is because of my Iron Condor and crude. That's exactly why I didn't, because I was already short the 56, 54 put spread as part of an Iron Condor, and I didn't really feel the need to double down. So I said, that's basically my effect of me being long, me trying to be smarter trader too, and so that's why I didn't. But I'm still short that Iron Condor, and I'm just waiting for a reasonable move above 60 to 62, so that this is another one where eventually I'll probably be able to close it. Oil vol has been a little bit pumped. It's coming in a little bit, but that's still fairly elevated. So that's why I didn't. But again, the news, it's traveling far and fast.
Yesterday, we were looking at the potential for this to be an inverse head and shoulders pattern. Quite frankly, the market is holding up. It's basically a $10 range from 54 and change up to about 64 and change, 65. We're sitting at the halfway mark, pretty much at 60. It's a 55.1 IVR. So if people are willing to do very, very, very short-term trading, 45 in, 21 out for $5 wide on either side, and the way oil's been moving recently, I don't know. I think pretty likely seeing the short strikes tested on either end. But if you wanted to do like a week long, short iron condor thing in here, you can trade it right off around the range high lows, 64, 65 on the call side, and you go down to like 56, 55, 74% probability of profit. It's not huge, but trading around the short-term range here is something one can do. I'm currently short a put spread. I think the market is not going to get under 55. We see U.S. production shut down. We don't want to shut down U.S. production. That's not an administration stated goal. Trump talks frequently about drill, baby, drill. Even if what we see on the outside of policies and actions that are inconsistent with that, he does not want to see U.S. production shut down. And U.S. production hit all-time highs last year for both natural gas and for oil. So this is basically the floor. This has got to be the floor, unless you want to see the industry suffer. I'm going to place a bet in the short term that with the tariff news, this is a way to hedge against my gold wrongness. Right? If the tariff news is good, ultimately, then oil should be going up because we're going to see global trade not die. Above 60, you have a inverse head and shoulders pattern that points for a return above 64, which just brings you to the top side of the recent range in the April 23rd highs. We can play ping pong in here. Right now, directionally neutral. If you break above 60 into 65, up at 65, you look short on a risk to reward basis. If you're through 65, you trade it long as you look like you have a major double bottom established.
I like that. You're playing this off of gold. I think that's exactly how we have to think in this market. How can we play a lot of these things off of one another? I think some people are a little bit annoyed about that with regard to how bonds are moving today compared to equities, but I think that's how you have to think in this market. Look at some of the moves, look what's moving adverse to one another, and find ways to play those off of each other because we're going to get the moves, I think, either way, which is really nice. You're able to trade in and out of things. Again, despite what some of the tone may be sounding like today from both of us, I think it's a very tradable market. I think there's plenty of opportunities, a lot of things to do. The frustrating part is sometimes the narratives don't jibe with what we're seeing. This is kind of a little bit of one of those days a little bit, but there's plenty of opportunities. There's still some volatility in these options that we're seeing, and specifically in commodity options. And there's a lot of moves happening. I think you're able to capitalize.
Hopefully it keeps going. It's the only thing that's working for me today right now is true ball. Natural gas is off again by 1.85% here. On the 4-hour time frame, I want to point out that we do have this bearish engulfing bar right now up near the swing highs that we had back just 3 days ago on May 5th. It looks like on a short-term basis there could be a little bit of a top in play. I would note there's another long wick from this area back on April 14th, so something around that 3.7, 3.75 range. It's causing somewhat of a resistance area. Natural gas, likewise, has been a little bit trickier to trade from a technical perspective. It doesn't always follow the rules, but you know what? It has a 57.5 IVR. It's pretty darn high. Depending upon how this shakes out, maybe we're looking at consolidation before a true break upside. Maybe this is preceding another swing lower back down towards 3. I wouldn't put anything on right now, but I feel like we're getting close to spring uncoiling here, and I'm going to want to trade that. It's better IVR than at least bonds, and it's so uncorrelated to everything else in the market that maybe it just brings beta weighted deltas and serves a purpose in that aspect.
Weren't you kind of interested in this thing at around 3 or something like that? I remember you looking at it. It never quite breached it, so I thought you kind of didn't do anything.
No, I wanted to see it move down to like 288.
That's what it was.
287, and it just never got below 3. So I've just been watching and waiting it, unfortunately.
Yeah, no, I mean, again, this is an environment where things move, pretty strongly sometimes without us realizing it. So I think you got to be, smart, stick to your levels. Again, backtracking on oil. I mean, I probably could have, should have bought at 55, but I also had to realize that I do have this short put spread that's essentially long deltas anyway. So I didn't want to get too carried away. And I think that's kind of how you got to be in this environment.
I'm with you very much. Let's head over to the currency market, which again, buy America in FX. So not everything in agreement or disagreement today, but stocks, gold, and currency certainly are, if bonds are not participating. The British pound here of interest, if only because we did have a BOE rate decision today, and they are struggling to figure out what to do, for lack of a better way to put it. Ultimately, they do keep rates down by 25 basis points, which is what was expected. How much more you're going to get from here, who knows? I would point out two things, though. Again, thinking about a potential dollar turn coming in this market below 132.5. Maybe this is a head and shoulders here in the pound. Similar situation for the euro, where we just break below neckline near 113 today, and we start to challenge the uptrend from the lows that have carried us here throughout this entire tariff ordeal, including the 1-month moving average. So the broader dollar index at this level looks like it's putting in that turn. The turn against the September 24 lows that we have struggled against since Liberation Day. A dollar turning here is going to be bad for gold. If the dollar turns here, you may look to the bond market and say, well, the yield differentials are certainly favorable for the greenback right now. And if the dollar's not selling off, then what happens to stocks? Will people who sold all their stocks a few months ago say, you know what, that was bad? Dollar's going back up? Can't dismiss this. The biggest ships in the global trading system, right? FX is 7 trillion turnover per day. It's turning the corner. And if this turns the corner, then the implications about how the market collectively views the trade war, we need to reassess all of them. And we are certainly not optimistic enough, I would suggest.
You often talk about how big the currency market is, and this is definitely one of the more important things that's going on right now. What's going on with the dollar in relation to a lot of the other currencies. Again, big moves. I mean, these are big moves that you typically just don't see in currency markets, but big things are happening. And I remember looking at this 2 days ago, looking at the yen, and I'm like, oh man, the 007 trade. I'm sure Chris is pretty. I assume you still have that on, right? I can't remember. But it's and then again, just a complete reversal 2 days later. Like I just said, what mattered 2 or 3 days ago, what might be true 2 or 3 days ago might not necessarily be true today. So that's the kind of market we're in. Just get used to it. I don't know if it's going away anytime soon.
We talk about lines in the sand here. Currency markets, December 24 in the yen. We hit about 0069, stop. We hit there again in March. Again, stop. We only break through after Liberation Day. Where are we right now? Testing it. So we can think about these levels as sentiment checkpoints. If we're above 100 in DXY, if we're below 113 in the euro, if you're below 0069 in the yen, you're probably out of the panic phase of all this. And then you're maybe in a window where you see some reversal and some retracement, and people are scrambling to cover positions. I still have some long yen exposure, which again was done out of the money calls. So right now it's not working, but the risk is exceptionally limited. It'd be doing a lot worse if I was simply selling put spreads in this. But that's not the case. So we'll see where we end up, but there may be a dramatic change in view, broadly speaking, because of what's happening in this cross-asset mix here today. Bonds down, yes, not great, but gold, stocks, and the dollar all in agreement, which is important to recognize.
Yeah, I mean, again, who knows? Who knows what tomorrow looks like? Who knows what Monday looks like? We got CPI next week, right? Next Tuesday, I think. PPI on Thursday. So I mean, you know, I was of the opinion that those inflation reports weren't going to matter that much at the beginning of this year, but maybe they will. Maybe, you know, again, everybody's worried about tariffs being inflationary. If we actually end up having tariffs, we do need to know. We need to keep track of what's going on with inflation all over again. So there's no telling, man. Who knows what next week looks like?
Who knows what next week looks like? But I can tell you what tomorrow looks like, Jamal. It's a day of Fed speakers. Do you like Fed speakers? I got a Fed speaker for you all day long. Starting at 6:15 a.m. New York Fed President's talks, and then all day long up through lunchtime, we're going to hear from them. That's 1, 2, 3, 4, 5, 6 different speeches.
Are they all at the same place or something?
That's a good question. I don't think so.
No?
No, I think Williams and Barr are somewhere together. but I think everyone else is just talking on their own accord, if I read that correctly yesterday after the Fed meeting. Either way, though, none of them are Fed Chair Powell. So do we really? I think we got to downgrade these on the calendar, Jamal. They should not be medium-ranked events. Unfortunately, if you're not Powell, who cares?
Right. Agree.
What a difference from a few years ago. Remember when was it St. Louis Fed President James Bullard would come out, and every time he spoke, the 2-year yield would go nuts.
Mm-hmm.
It's like, oh, come on, Jimmy, stop talking.
Yeah, or Kashkari, he'd come out, he'd say something, right? Things would move. Yeah, for sure.
That's not where we are. Jamal, you and I are going to be back in a little bit. We're taking a brief break here on Tasty Live. We have Dr. J coming up next with From Theory to Practice. You'll be around afterwards with Engineering the Trade. I'll be back later on with Ilya and Radigan for overtime, so plenty more to come. Who knows where we'll be, though, by the time you and I start our shows. This market's moving fast.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right. With a market measure, even the S&P's up 30. Do you see a pattern here, Stasnov? They're up 30 every time I say what the mini S&Ps are doing. They're up 30. They're up 30. They're up 30. To the end by 71 cents. That's changed. It was 70 cents a moment ago.
Not sure what to do here today. Got any ideas for me?
I think you're going to get a little sideways action here today. I don't know. I mean, I think I think it's going to be hard to find new positions with extremes. I mean, unless you want to look to get a little bit short this market.
Tomorrow we have Fast Market. So tastylive.com/Fast Market. If you are in the if you're in the fast market mood, whatever, tomorrow, send us a trade idea. We'll take it and we'll execute, and we'll see what we can come up with. I don't know. I've waited all morning. Haven't really adjusted very much. Can't tell. I don't have an opinion about today.
Well, I mean, we're up 0.5% to 1%, all day. It's kind of a inside the expected move, so not too much to do.
Yeah, Russell feels stronger. Relative.
Well, I mean, on a percentage basis, it is up the most. That's accurate.
I've adjusted. I waited until now, 9:05, before I adjusted all my indexes,
like your ETFs, like IWN, SPYs.
Yeah,
sure. You did all your personal stuff, like your Nvidias and your Carvanas.
Yes.
You got a good P&L. You got basically flat here.
Yeah, I'm basically flat.
You're not short. You're not long.
Nope.
I think that's a good position. Let the market kind of beat you today. It seems to be rudderless ship right now, even though.
Yeah, it seems to be a little rudderless.
We're sideways for the last couple of days.
We're going to do a zero DT piece in a second, talking about like kind of the best times of the day to do stuff. But before we do that, we'll give you a little just coming attraction for what's going on. The Bat and I will be the week after Memorial Day. What are you doing Memorial Day weekend?
Having you over for a pool party.
Yes. What day?
Any day of your choosing, whatever day you're available.
Not.
I figured that.
Right now, I'd be available for Memorial Day for a pool party. 2027.
2027, the year?
Yes.
Understood.
No, I'm going to be going actually to Nashville.
I know you are. Road trip. I mean, seriously. I mean, I wish I had my RV. I would give it to you.
We're driving.
I know. That's why I wish I had my RV still. I would give it to you. Because it's much better to travel in the RV with the dog than in a car. Does your dog have dog breath?
Dog breath? No. He's normal.
He's normal? So the dog doesn't have dog breath. Dog smells like peppermint. Because it gets real, like
it's dog crap.
It's in a car. It's in a small enclosed space to get dog.
No, we're not taking a small. We're taking a bigger car, so we'll be fine. He's good. He'll be fine. He's a good car dog. And I think it'll take like 7 hours. We're going to Franklin, Tennessee.
I've been there.
I know.
Great spot.
It's very nice. Very looking forward to it. I'm going to go hiking. I'm going to go fishing. I'm going to go. What?
You're not going fishing.
I'm going fishing. I am going fishing.
You may have a pole in your hand at some point during
That's fishing.
the trip.
It's called fishing.
You're not staying there fishing. You won't last 30 minutes.
I'm going fishing.
And you're injured.
What?
You're injured.
I'm not injured. Fine.
Yeah, you hold the pole. Well, you don't know how to hold a pole. You have to have somebody else hold it for you. You going with a guide? There's here.
An instructor.
Instructor. An adulter. You're going with an adulter?
Somebody to put the worm on the thing.
The worm on the thing.
Yeah.
You really are a real man.
No, I am going fishing, but it's stocked.
So the lake is stocked.
Lake is stocked.
It's a man-made lake probably, and it's stocked.
Yeah.
It's fun.
Yeah, so you throw like a piece of bread in and next,
Piece of bread.
Whatever. A worm. 10 fish bite. Throw it back.
It's not that easy, but yes, catch and release is what you're saying.
Yeah, catch and release.
Will you take some pictures? Love to see what you catch.
No. Catching big bass.
That's awesome. Bass are good.
No, I don't know what it
is. You can hold a bass. You can just put your finger right in their mouth, your thumb. You hold them by the thumb. They don't have any teeth. Very thin, very small. You can hold it and then you can take the hook out. You'll probably have somebody do that for you.
Oh, that's
like all the good women do.
That's what I pay somebody to do. Take the hook out. God, they just had to sell off 2 seconds after I just made my adjustments.
Oh, it's like poetry in motion.
Yeah, no, I'm going to do a little fishing, a little hiking.
And by hiking, you hike in your Crocs, right? I mean, so this is hardcore hiking.
Yeah.
Huh?
A little fishing, a little hiking, a little spot treatment.
You'll be giving or receiving facials. Will you be doing the facial work?
And then a lot of good Southern eating.
Very nice.
So looking forward to it.
That's a beautiful place you're going to. Can't say what it is, but if you are my Twitter feed, I will tell you where he is.
Then the week after that, we're going to be going back down south, and we're going to Atlanta, Georgia. We'll be at the
Buckhead Theater, Sosnoff. That's right. May 30th, Friday, Sosnoff. It's a Friday. It's the first Friday. And we know we're asking you to take off from work. That's why we call it At Work by 11, because we promise we'll be done by 11. We'll get you back in the office by 11. So you just need to tell them you got it. Tell me to go take like a pee or something like that.
Doors open at 8. The market opens at 9:30. The show starts at 9. We're doing every show across the country at 9, regardless of it's East Coast, West Coast, whatever it is. But the show starts at 9. We'll obviously start trading right at 9:30 Eastern time. We might do something pre-market because the futures are open and there are other markets, so we don't have to wait until 9 a.m. I'm sorry, until 9:30 a.m. But the futures are open, futures options are open. There might be something to do pre-market. It is a fun day because Friday, May 30th, is that the last day of the quarter?
I got to do this for you again. 30 days has September, April, June, and November.
So then that's the last day of the quarter.
30 days has September, April, June, and November.
I'll repeat it. That's the last day of the quarter.
Trading day.
Yeah, it's the last day of the quarter because it's the 31st is on Saturday. Last day of the quarter.
Okay.
Anyway.
See how he makes himself right? Yeah, the last trading day of the quarter.
Last trading day.
Yeah, trading day.
Anyway, so the Bat and I will be down there.
So why would you, here, I have a question for you. How many days is the maximum in a month?
32.
Okay, even if it's 32, it would make it on a Sunday. So you asked and answered your own question. Why'd you ask me? If you're going to answer it that way.
I was trying to throw you a softball. Question.
You were trying to get me involved in the conversation?
Questions are hard for you. Trying to throw you a softball. S&P is only up 950. Cancel
850.
Cancel the blow off to the upside.
Yeah, didn't see that.
Yeah. Cancel the upside explosion. Anyway, if you haven't signed up yet, tastylive.com/events, tastylive.com/events. And if for some reason, if you can't make this one in Buckhead Theater and you want to go to London, where your dollar doesn't go as far as it did last year, but we'll be there.
Goes as far as it went 4 years ago.
We'll be at Earth in London, the UK, on June 20th. We'd love to see you there. And to all our EU customers and London and UK customers, can't wait to see you guys again. Tasty comes to Italy right after that, the following Monday on June 23rd, which is Monday night. We'll see you at Fabrique in Milan. It's our first show ever in Italy. We have a interpreter.
Yeah, but that's the B team, though. They got you and Rich McDonald and Dylan Radigan.
We have interpreters.
And an interpreter.
This? The interpreter.
Because I won't be there. You usually have to interpret what you say.
The interpreter was an Olympic figure skater.
Really?
Yes.
Oh, it's pretty cool. How do you know this?
Because Brittany told me.
I knew there was no way you knew it. How would you know that?
Dylan told me too.
Good.
And Dylan speaks partial Italian. So we're looking forward to that. When I told the guys in Italy that Dylan was going to be there and he could help us translate, they started laughing. I go, have you ever heard him talk Italian? I go.
It's speak Italian, but whatever. Talk Italian. I mean,
you know what they said to me? They go, you know how our English isn't that good? His Italian's worse.
I can see that.
Yeah, they were really funny. Anyway, Italy is going to be so much fun on June 23rd, Monday night. And June 20th, when we're in London, is Triple Witching. So we're going to be about 2 hours before the close, but it'll be fun. Getting ready for the Triple Witching close. All right.
Are we going to broadcast from London?
We are going to broadcast Tasty Live from London on Wednesday, June 18th.
Awesome.
And on June 19th, we are going to help guest host the UK version, but in the US, the markets are closed.
Got it.
For Juneteenth.
Got it.
So unfortunately, we can't do the show that day from London, but we will do the London show from London, which is at 1:30 in the morning.
Bewitching time.
Yes, so it'll be fun.
Mm-hmm.
And then Friday we'll see.
Can I come in my pajamas?
Oh yeah,
mandatory.
If you wear your pajamas on the tube there, we'll pay extra.
Okay.
All right, let's
my
go back.
pajamas all over Oak Street. Sure, why not?
Yeah, you can wear your pajamas.
Okay.
Hey, where did I see somebody in their pajamas? Oh no, it was at a casino. Forget it.
You okay?
Yeah, I saw somebody walking around the casino in their pajamas. I'm like, what's wrong with you?
It was Jules.
I mean, I've walked through a hotel before in a
negligee.
No, I've had a bathrobe on going to like a pool.
Omaha.
Haven't you done that?
No, I try not to embarrass myself. Though.
If you're going to the pool in a hotel, you've never.
I put on if I'm going to do that, I put on my bathing trunks and then I put a shirt on over it, and I don't walk down there like an ignoramus in my robe. I do not. No.
Well, I have a shirt on and I have the bathing trunks.
And a robe?
And a robe, because the robe.
You don't want to scare anybody?
No, because when I get out of the pool, I want to be.
It's called a towel. I use a towel.
I like a robe. Sorry.
Okay, you can.
I like a nice robe.
You travel with your own robe. Of course, doesn't everybody?
Of course. Takes up my whole suitcase.
Has anybody ever said to you, disrobe?
No.
I think so.
No.
Okay, guys, let's bring it back.
No, usually that's me begging the other party.
You're scaring the children.
Yes, come to think of it, nobody's ever begged me to disrobe. I think they've begged me to keep my clothes on. Please don't take it off. Yeah, I think it's the other way around. I can safely say in my relationships, all the begging has been done by me. The best times for zero D. Look how Beth changed the slide.
Just move on.
The best times for zero.
It's too much.
It's just getting good.
No.
What's the most disturbing part for you, Beth?
Where do I begin?
The vision of Sosnoff in a robe walking through a casino, which you don't have to walk through the casino to get to the pool in every
casino. You have
they always have a separate entrance for the pool somewhere. You don't walk through the casino. I've never seen somebody walk through the casino dripping wet ever, okay, ever from the pool.
Through a hotel, I said, not necessarily a casino. No, you said you walk through a hotel?
I just didn't see you as a robe guy.
Oh, come on, Beth, I'm a robe guy. We've been to places with pools together before.
Whoa!
Beth and I.
You're better than that, Beth. You don't need to do that for this job. You're good at it.
Beth and I were in the pool together at the. We were in the wave pool together at Mandalay Bay. Remember?
We sure were. With those trunks.
She's just getting through therapy now, like 15 years later.
Never forget.
All right. The best time. See, those are good work trips. When you end up,
they were the best.
When you end up in the wave pool at Mandalay Bay.
Yes, that is true.
The wave pool's cool. You know what I don't like? Those river things. What do they call them?
Lazy river?
Lazy rivers. Those I don't really like.
You were made
Why,
for
they're
a
too
lazy
fast?
river.
What?
They're too fast? You don't like bumping into people?
I don't like getting stuck in the tube.
It's hard for you to get out of the tube. I can understand that.
Yeah.
I can understand that.
Too much work, like you don't know, I don't know the start, the finish are, Like I'm not sure.
Your wheelhouse.
I'm not sure what you're supposed to do in a lazy river, though.
Relax.
Try that once in a while.
I know, but I'm not really good at just going around in circles for like an hour. Like
you do it in life every day.
I don't get the whole lazy river thing. Seems like a waste of space. All right.
I still have the vision of Slimmy in the lazy river. It's hard to get back from that.
Slimmy in the lazy river? Naked?
In a tube.
Okay, you've done it.
That's a vision.
That's it. Move on.
That's a vision. Hard to get out of every brain. That happens.
If he wasn't in the lazy river and he was just in a pool, would that vision be better?
No, probably not.
Oh my God. The best times for zero DT scalps. This feels so anticlimactic when you do the best times for zero DT scalps. Let me ask you a question.
Sure.
We've looked at this like every which way.
We've done a deep dive into the zero.
We've done
days.
deep dive into
Yes.
zeros.
Yes.
And we've traded a lot of them.
Yes.
When do you think is the best time for a zero DT scalp? I can tell you yesterday
probably right.
Yesterday didn't work for me. I mean, it didn't.
It ultimately worked by the end of the day. You had to hold it almost all day.
You had to hold it to the end of the day.
Right. And to be fair, you went pretty far out. You were just selling a strength.
Yeah.
You weren't doing the 20 delta. I saw that working better for other people on Twitter doing the research.
Yeah.
20-ish delta, $10, $20, $30 wide. Probably around 9 o'clock. I just think from our research, I would have never have said that a year ago, but from our research, it seems like that 9 o'clock-ish time, 8:50, 9:10, somewhere in that area, markets have tightened up. This market that we have recently kind of settles in and we go a little bit sideways, which is what you need in this strategy when you're selling premium. So that 9 o'clock-ish hour.
Yeah, I like that 9 o'clock time the best too. I think 8:45 is too early. I think 9 o'clock's pretty good. 9:30 is probably pretty good.
The noon balloon thing is not
I think like 9 or 9:30 is my guess would be the best time. The best times for zero DT scalps. I'm going to say 9 or 9:30. I haven't seen this yet, so I don't know. In the right underlyings, zero DT option markets are amongst the most active in the world. I can tell you yesterday, I mean, they were pretty active yesterday because the Fed had a big number. A lot of people like to play it. It's almost like gambling.
Yep.
If you're buying stuff. The best aspect of zero DT trading is the speed at which profits can be made. The worst is, of course, the speed of losses. So a scalp is closing a trade almost immediately after opening it, hoping for a profit. The fast pace of zero DT markets makes for perfect scalping sometimes. But did they perform better or worse at different times of the day? Let's go to the next slide. These are kind of hard to really tell the difference between, it's very hard to figure out the difference between 9 and 9:30, 9:30 and 10, 10 and 12, 12 and 1. It's hard. We looked at the data every 10 minutes for the last 2 years. We opened trades from the opening till 2 p.m. in the afternoon, every single half hour. And we used zero DT iron butterflies. Just pick a strategy, it doesn't matter. Sell the at-the-money straddle by the wings, either $10 or $30 out. Examine the P&Ls from closing these trades 30 minutes after they were put on, and all trades were assumed to exercise at mid-price. So let's do this for starters right now.
Okay,
before we even look at this, SPX. I have to go to trade. I have to pull up my 0 days because I don't default to zero all expirations. We're going to sell the at-the-money straddle here, which is the 56.55. That's the at-the-money straddle. And we're going to buy the wings $3 out, let's just say. So 25 and 85. Is that right? Yes. And right now that's trading for 23.30.
It moves around a lot, so
I don't know.
It's probably closer to 23.20 or 10 or something like that.
Let me see if I get a fill here. Okay, 23.20. I didn't want to. I left it. I didn't want to mess with it.
Sure.
23.20. It's $30 wide. So, how much is my max profit? Is obviously $23, which is ridiculous because I'm not going to make that. 23.20.
Sure.
And my max loss is 23.20 minus 30. So my max loss is $6.80. Is that correct?
That's close enough. Yes.
Okay. So I'm risking $680 to make $2,300. That's exactly what this trade is, and I just put it on. So I mean, I didn't really do a lot of price discovery. Like I could have maybe squeezed it for an extra nickel or dime, but I don't know.
Yeah, I mean, even the S&P's just rallied. This has a very small short delta of it, so maybe you can get it. Could have got filled 10 or 15 cents higher than this. If we would have gone down, it would have been a 10 or 15 cent profit. You don't know what's going on.
We'll see what happens.
Yep.
But I just want to show you that, like, this is all real. We practice what we preach. If you're new to this network, we don't do anything virtually. Everything that we do at our live shows is all real money, real live. Everything we do on air, when you hear the ding, it's all live trades. And it's all with, in this case, it's all with my money. So it's all real. Let's see. We're going to look at this thing. I'll go back for 1 second, Beth. Each half hour. And we examine the P&Ls from closing these trades 30 minutes after they were put on.
Gotcha.
9:26. Let's
put it on at 9:24. Sounds enough.
9:24.
Yep.
Okay. So we have 30 minutes.
9:54.
9:54. Do our own little study here.
I know. I like it.
Yeah.
And Scott will hear the ding. He'll be on the show.
Oh, he won't know what the ding means. I think he uses a different platform. I'm just kidding.
Oh my God. You're so
just
mean.
Kidding. Scott, when he comes on.
Omaha.
Just so you know, he
Omaha.
Scott and I have been partners since 1988. A long time. And or whatever year. I don't know, 88, 87, 88. So let's go to the next slide. All right. So the best times for zero DT scalps. And let's see. These are $10 wide butterflies. I did the $30 wide, so they'll be the next slide. But for the 30-minute win rate, selling at 9:30, let's see what it is. Here it's 52%, right? Average P&L, $4. 30 minutes CVAR, $89. You know what that means? That means that, well, this is not the best slide for me. You know what? Can you go to the next slide, Beth? Just because this is the one I actually just did. Oh, no. Sorry.
This is butterflies.
Butterfly. Keep going to the next slide. I'll come back to these.
This is $30 wide butterfly. Keep going.
This is what we did.
Oh, yeah. So, yeah, you want to consider it a butterfly.
So this is the exact trade that I just did. I did the sold at 9.
It's an iron condor on the platform. I know it's you're saying
It's an
butterfly.
iron fly.
It's an iron fly. There's no such thing as an iron fly on our platform. It just says iron condor. So it's an iron condor on our platform. But since it's the same 2 short strikes and buying the wings, it's basically a wide butterfly.
So
100%.
this is the trade that I did right in the middle where it says sold at 9:30.
Yep, 60% pop.
Yes. So the pop for the trade I just did is 60%. I mean, we did it at 9:28, but whatever, it's close enough. 60% pop. The average 30-minute P&L is $6. Now that takes into account lots of losses.
Sure.
So my P&L is not going to be $6. This takes into account 2 years of gains and losses. So for example, there's going to be some $336 losses in here.
Sure.
And there's going to be some wins. It all averages out to $6. So that $6 is a little bit misleading because that's not what this trade is going to be. And the 30-minute CVAR, which is the worst 5% of all cases, means that worst case for me on this trade is that I'm going to lose $335.
You only had $680 to lose.
To the close, it's $680.
Yeah. No, I get it.
But in 30 minutes, the worst case is about $335. That's doing
about half of your max loss.
Yeah, it's about half max loss. But in this case, okay, what that number represents is the worst 5% of all cases. And we do is we run thousands. This is a pure Monte Carlo simulation, like we talked about yesterday with Jacob. We run thousands of test cases to come up with that number. And that's where we derive that number from.
Yep.
So the pop on the trade I just made is 60%. The average win over time is 614. And that's if you average all the losses and wins together. And then the CVAR, worst case, 335. What's interesting about this slide is that the first half hour is the worst.
Yeah.
And the middle of the day, is a little bit better, of course, across the board. And so we'll see what happens. Now let's go back, Beth, to slide number 2, just for a second.
It really basically just says, you know what? Try to avoid the opening.
Oh, no. Oh, hold on. This is actually, you just went back. Got it. So this was the $10 wide butterflies. And just this one just says avoid the opening. That's about it. Let's go next slide. This is the $30 wide. And this one says the same thing. This, for some reason, says avoid 11:30. Doesn't really make much sense, but
well, this is in the afternoon now. 11:30, noon, 12:31, 1:32. So
the rest of the numbers seem.
I said the noon balloon thing really isn't a thing.
Let's go next slide. If you're wondering what the difference is between $30 wide butterflies and $10 wide butterflies, iron flies, it's really just how much capital you want to use. That's all it is. The $30 wides you can make more money. And again, all these $30 wides have a long-term positive return. And this is, again, the one we did. Let's go next slide. And this is later on in the day. All these returns seem to be okay, except for the 11:30, which I don't know why. Maybe the markets have big moves at 11:30. Maybe. Central time. And then takeaways. So the ability to quickly open and close trades is the principal advantage of extreme liquidity in the zero DTs. There are few better feelings than taking off a winner a few minutes after opening it. Examining the profits and risk from selling premium and closing the positions 30 minutes later was overall highly encouraging for active zero DT traders as volatility tended to contract over the course of the day. The afternoon generally saw larger profits, but also had more extreme downside from carrying nearly 100 gammas. These are not trades for the faint of heart. We would also consider trading wider in the morning and using narrow wings in the afternoon. The most clear lesson from this data is it paid to finish your coffee and wait 30 minutes before selling premium.
Good job out of the team. Good job out of you. Even the S&P's up 32. We're going to take a quick 90-second break and come back. You know why, Saz? We've got your friend in mind. That's right, Mr. Scott Sheridan coming in the office from the Tasty Trade World headquarters. We'll be back in 90 seconds. It's Tasty Live. You're basically unchanged on your spread right now. Back in 90 seconds.
It's option. Jive.
Tomas, we are back, my friend. You know what that means? Time for a little more Tasty Live with the market measure. No, an option jive. That's right. Even the S&P's up 30.
Even the S&P's up 30?
Haven't moved since our break.
Have they moved since the opening?
Yeah, they were up around 40, 50, and down to around here. Volatility down 66 cents. Bonds down 4 ticks.
I mean, I'm not complaining. I only have one loser today. I mean, one big loser other than you. Is
that was too easy.
It was too easy.
That was too easy. Way too easy.
Yeah, just Microsoft kind of is my only big loser.
Present company excluded.
Yeah.
Mm-hmm. I get you.
What time is it? Oh, 8:47. You know, no Victor Jones today because he's got something. He had something he had to do. So Victor will be on tomorrow, 8 o'clock. We switched up. Hear me out with Victor Jones. So Victor will be on at 8 o'clock tomorrow for his brand of positive outlooks and
shenanigans.
And shenanigans. Would you describe Victor Jones as being positive?
Is Victor Jones positive? I would. He's informed.
He's informed.
He's informed.
That's actually really good.
He's informed.
That's really good. He's very well read.
He's very well read.
He's very much informed.
Yes. Yes.
He's definitely not positive.
If it was between positive and negative, I don't think I could choose one of those. But I would say
positive.
You're positive?
I'm a positive person.
You're a ill-informed, positive person. Yes, you are. You are.
You're a positive person.
Yes, I'm a positive.
You're ill-informed. You know,
we are two birds of the same flock.
No, we're different flocks.
No, we're the same flock.
But I think you're a positive person.
Thank you. I believe I am.
Yeah. I think you are.
I have a smile on my face 9 days out of 10.
I think the sky is falling for Victor a lot.
The sky is falling. That's a good way of putting it. The sky is falling. He is a worrier. He's a worrier. He worries about a lot of things he cannot control.
Right.
But he's informed about them.
Very informed.
Yes. Yes.
And for people like that, informed is dangerous.
For people like that, life is very hard.
Yeah. Mm-hmm. Yeah. Yeah. It's easier to be like a happy idiot.
That's correct.
Yeah.
Like the bat.
Exactly. Exactly.
I didn't put you in there.
Yeah. That's how we should have defined Tasty.
The place for happy idiots?
Yeah, the place for happy idiots. I'm okay with that.
Even the S&P is up 21, Sazno.
Yeah, it's a little bit...
Getting a little tired, as the bat said.
A little bit, as the bat said. A little bit weaker than I thought. I'm Tom Sosnoff. He's Tony Batista. And since we don't have any Victor Jones until tomorrow, we're going to do the next best thing. You know what that is?
Punt?
No.
What?
A little gamma risk.
Oh, nothing like gamma risk in the morning.
That's what I tell my wife all the time.
Mm-hmm.
A little gamma risk.
Mm-hmm.
You crazy?
No.
Gamma risk. You've heard, like if you remember the .com, not .com. If you remember the whole meme stock explosion.
Sure, like it was
GameStop
yesterday.
And everything else. All anybody talked about was, oh my God, it's gamma risk. It's gamma risk.
Mm-hmm.
It's gamma risk. Have you heard? Listen to people talk about the zero DTs? They're like, it's gamma risk. It's gamma risk.
Yep.
The speed at which things move, the speed at which positions move, the speed at which options move. How does a delta neutral trade that's essentially has no risk when you put it on, all of a sudden get risky? How does it happen? There's only two things that can happen. Put a delta neutral trade on.
Market movement and volatility movement.
I was going to say something different. I mean, that's fair.
What two things are you going to say then? I'll take those two.
Market moves. Well, time goes by.
Gamma risk, time goes by.
Well,
time going by. You screwed up. You screwed up. You stuck your foot in your mouth yourself. I gave you the proper answer, and you had to massage it some way. Time goes by can only help a premium seller's gamma. That's it. That's it.
Time goes by, gamma gets more explosive. Gamma moves faster as you get closer to expiration.
You're going to a 0-day time frame.
I'm not going to 0 day. I'm just moving as you get closer. Everything moves.
Well, that's market movement. You're confusing the two. If we don't move and time goes by, gamma risk is a non-event. There's no even such thing. Nobody even talks about it.
Obviously, you didn't understand the question. All right, we're going to do this. We're going to show. I'm going to take you through this. Obviously. So
that's evident. That's evident. Oh man, I'm going to go back to looking at porn. Go ahead. Oh my God.
Gamma risk in neutral trades. Let's take a look and see where the boys go with this one. So we actually do. You can see gamma on our platform, but we don't. Actually, I don't use it as one of my defaults. Do you?
No.
Yeah. Because as a retail customer, our positions are relatively small. What did I just get filled?
Coin adjustment, selling some putties.
Oh, coin. I sold some puts. Coin, the markets are wide. You have to leave an order in at your price. I hope you get filled.
That's what I said from the very beginning, but you told me.
And I don't know why I'm selling out of the money puts in coin. It's probably a dumb move. So don't do this. Don't follow this trade. I'm not even bullish.
You're doing this for the challenge?
Yes. I'm actually mad at Brian Anderson. That's his name, the CEO. Even though I like him generally, I'm a little bit mad at him for recent actions.
Did he order the petite fillet or something like that? What did he do that annoyed you?
If any man orders a petite fillet, it annoys me. Straddles and strangles. And if you ask for a peppercorn, I will cut your throat. If you ask for a petite fillet peppercorn, I will slice.
Peppercorn crusted? You mean like you don't like it like peppercorn crusted? Is that what you're talking about?
No, I don't mind steak peppercorn crusted. If you order petite fillet peppercorn crusted, I will shoot you. No guy has ever done that.
Okay.
Straddles and strangles are delta neutral strategies. Large moves, therefore, are not desirable. Gamma is the change in delta. Large gamma,
moves. Not time.
Large gamma can erode the effectiveness of a delta neutral strategy. Gamma is displayed on our platform and it changes accordingly if you choose to see it. It's not one of the defaults. On our platform, you can show a million different things if you want to. We use different defaults. One day we'll go through and take you through all the various defaults that we use. Let's go to the next slide. So the smaller the width of a short option spread, the larger the gamma. Because of this, straddles, selling the put and call at the same strike, are more likely to lose delta neutrality compared to strangles. Tighter the spread, the more the position is subject to moves in gamma. Let's go next slide. And the thing that worries the industry is that when there's a huge move, all of a sudden sometimes it kind of it snowballs. And that's what they call a gamma squeeze, is when gamma snowballs. I think that financial media uses the term is way overused.
Way over.
I don't think that that's really what happens, but that's what it means. In the IWM, which is the small cap ETF, straddles have about 25% the gamma as a 25%, have around 25% the gamma as a $10 wide strangle when the trade is at 45 DTE. But this depends on the underlying you choose. So you can see kind of here, we just laid it out for you. The gamma of a straddle, a $5 wide strangle, and a $10 wide strangle. Obviously, the wider the spread, the less gamma risk you have. Doesn't mean it's a better trade to have less gamma risk. It just means it's a different kind of risk.
It's just math. You have less gamma.
Yep, it's just math.
Yeah.
Let's go next slide. Oh, I didn't even realize this. Closer to expiration.
For at the money strikes. Yes, of course.
Closer
that was not the question that you asked.
It becomes exponentially larger for at the money strikes.
Lower for out of the money and in the money options. Imagine that. So one specific option of all the option change.
As foretold. Closer to expiration, Kevin becomes exponentially.
If there's 200 option series, there's one that you were right about. The other 199 you were
Next
wrong
slide,
about.
Beth, as foretold.
We're told. No need to beat this dead horse, sure.
Next slide, please.
No.
Straddles are more susceptible to small moves near expiration. So, and again, this is, as I have said, as you get closer to expiration, as time goes by, you know, the gamma of a short position. This is why we manage at 21 days. This is the whole reason. So, you know, a $10 wide strangle has less than half of the gamma risk of a straddle, or, you know, 20% less than a $5 wide strangle. It's just, it's the reason that we optimize our mechanics the way we do and manage early, just not to deal with any of this stuff. Let's go to the next slide. So some of the takeaways of this particular discussion: gamma risk is higher for short options closer to at the money. For option sellers, we're focused on a volatility crush and time decay, so the rapid change in delta should be avoided if possible. And over time, gamma will decrease for out of the money and in the money options and increase exponentially for at the money options, thus making the case to manage early. As with all trading, control the things that you can control. That's what managing early is. And don't worry as much about the things you can't control. That's what the underlying stock does.
Good job out of you. We'll take a quick 90-second break and come back. E-mini S&P's up 30, volatility in by 70 cents. We'll be back in 90 seconds. We've got a market measure immediately following these messages. Back in 90 seconds.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
As a kid, I used to always tell my mom, I think I was born with speed and intelligence. She still reminds me of that. And I'm like, yeah, I definitely have no speed. But on the intelligence side, I think I figured a couple things out. My mom was a stay-at-home mom, and my dad really provided. He was a very blue-collar worker. In fact, my family lived paycheck to paycheck. And so I saw that. I actually said, I want to be financially independent one day. For the better part of my undergraduate career, I was convinced I wanted to be a stockbroker. I actually worked an internship at a major financial advising firm, and they offered me a job. They said, Jim, just go graduate, come back. But then I actually had an experience. So for all 4 years of my college career, I tutored students in accounting, economics, and finance. And most of the time, the students would come to me and basically to do their homework for them. And I would usually send those people on their way because I wanted people that really wanted to learn. Senior year, young girl comes to me. Her name's Carolyn. She needs help in microeconomics. She is completely lost. Her graduation hinged on her performance in this class. Obviously, she wanted to graduate, but I could feel this natural desire, this yearning to actually know and understand the material. I mean, I had to explain marginal revenue to her at least 38 times before she finally got it, but she got it. We go through the whole semester, we say our goodbyes. A couple days later, I'm standing outside waiting for my friends to come pick me up. I get a phone call and I missed it, but I felt my phone buzz to tell me I had a voicemail. And I looked down and it's from Carolyn. And literally, that 60-second voicemail changed the entire course of my life. So she basically said, Jim, I just want you to know that I'm gonna graduate this Saturday, and I'm only gonna do it because of what you did for me. I'm only gonna do it because of the patience and because of the time that you took with me. I never would have made it without you. I will never forget what you did for me. I hung up the phone, and I had a feeling inside of me that I'd never felt before. And I said, wow. I said, I need to explore this. I canceled plans with my friends immediately. I went to the computer lab. I started researching PhD programs. I said, I want to have more of this experience. I said, I think this may be what God wants me to do. most of financial media is all based off of story and direction. And it's really interesting because it's either you try to find the story to predict the direction, or after the direction happens and you realize you didn't know anything to begin with, you find a story to attach to the direction in a very ex post type of way. We acknowledge, we own up to the fact that nobody knows anything from a market direction standpoint. So what do we know? What can we rely on? And it's the math, the statistics, the probabilities. It's changing the landscape of investments forever. And to be a part of this team, I count that as a tremendous blessing.
Putting on strategies, that's easy. Taking off strategies, that's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there. All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, is not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
More and more trade deals to come into place. Apparently one's coming into place with the UK. We're still learning the details. We'll see if they really eventually flesh it all out. Speaking of the UK, BOE had interest rate decision today, and they chose to cut. A lot of people are cutting. Not the U.S., though. Obviously, Powell made that known yesterday. But, yeah, UK, another cut. And, finally, that is the big thing, really, is that Fed really made it clear that we're not cutting rates unless, well, there's real issues. So we'll talk about those three things and more. Lots of earnings coming out tonight. I doubt if I trade any, but I do have updates on the portfolio right now to discuss. I'm looking at things a little bit differently these days. So we'll talk about it more. Welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade, and I am your host, Jamal Chandler. Fresh off of a really quick trip to the options industry conference, which was really cool, OIC. Really interesting. A lot of people were, of course, talking about zero DTE, talking about AI. Those were a lot of the big themes. I was on a panel where we were just talking about the future of education. It's so funny, like there's a lot of times I don't really consider myself like an educator per se, but I just do a show. And you guys are sitting here and watching, it's kind of how it is for me. So, but it was pretty awesome, man. I mean, it was cool to be there. Lots of good people, lots of good friends. Gotta do that. Lots of good people, lots of good discussions being had overall. I mean, that's what you do at a conference, right? I don't know the last time I went to a physical conference. I mean, the last time I did a conference was OIC. It was like 4 years ago at this point. But we did it online. This time it was there in person in Palm Beach, Florida. And again, being on a panel with some really insightful and smart people. The panel that I was on, again, was about the education and the options industry, and they wanted our insights on a lot of different things. Jessica Inskip, works for stockbrokers.com, was the moderator of the panel. She was fantastic. And next was Mark Benzaquin, who works with OCC, a good friend. And, OCC does a lot of the same things we do. They probably deal with more beginner people, and they're so good at that part. I got to say, I said this on the panel, and it's true. I'm not the greatest intro to options person anymore. I used to be pretty decent at that. There's a certain way you got to think. And I think the best person in our crew by far is Dr. Jim. You guys know that for intro stuff. I am more of, sort of somebody who meets people in the intermediary, I would say, options area, right? I mean, most of the stuff we talk about on this show is a little bit more intermediary to maybe advanced from time to time, but that's where I think a lot of people that come and watch Engineering the Trade are. And so that's what I enjoy. That's what I feel like I'm good at. We all got to be good at something. That's what I do. And the last person on the panel was Brent Kachuba from SpotGam. I'm sure you guys have heard of him. You guys have probably seen him on this show before. He's a friend of mine as well. I've had him on the show. So it was a great panel, good people to be around, good stuff to do. Posted a lot on the socials, on the Z socials, in the last couple of days, as one does when you come from a conference like that. You guys will see that anywhere you look. Let's pull up the slides and let's talk about what's going on today before we head to the platform. U.S. and U.K. are working on a trade deal, from what I understand, and it's going to be a situation where the U.K. would fast-track a lot of U.S. items through their customs. You're talking agricultural, chemical, energy, industrial, and I think also ethanol and beef. I mean, drinks as well. So there's a lot of different things. The UK is supposed to be reducing auto tariffs to 10%, and we still have a 10% against them. Look, I can't keep up with all the details of these damn trade deals, but the fact remains is there is a trade deal, and the fact also remains the reason why you're seeing obviously stocks rip is that means the signs of the stress of tariffs are going to come down to some degree. It seems like it was always going to be a discussion for these companies. We're going to put this blanket tariff on you. You want to come and discuss? Come and discuss. It's almost like, you know what it's like? It's like you turn in a project and a teacher gives you a C and it's like you can show up at office hours and have a little more discussion about it, and you can argue with that thing all the way up to a B, maybe even A-, right? That's kind of what this feels like, this whole tariff situation. China has said, I ain't coming to your damn office hours so far. They don't care. And this is going to be a fascinating showdown between the two of them. But nevertheless, you could see, look, this was almost telegraphed today. Last night, if you saw it, Trump tweeted out that there was going to be big news tomorrow, deals with one country, right? That was the news, kept basically this futures bid overnight and through this morning. And then finally, when they did come out with the press conference, you started hearing of the rumblings about the US and the UK and what was going to happen. And then you also add into the fact that the UK, maybe this is part of the reason why they felt strong enough to be able to lower rates this morning. I mean, I find it fascinating that we have all this talk of tariffs and how much it's going to upend global trade, and yet you still hearing about a lot of countries still cutting rates. BOE cut rates, ECB cut rates. BOE just cut rates 25 basis points. They're not 4.25%, which is basically where we are, 4.25 to 4.5. The meeting was divided, though. There were some who wanted to cut rates 25%. I think more than half, obviously, and that's why the deal got done. But there were some who didn't want to cut at all. There were some who thought they should be a bigger cut. That shows you the level of uncertainty that they have right now, not only with their economy, but where things might be going. So if that's how they feel, how do some of these other ones feel? How do some of these other countries feel? And that being said, the one that really matters, not that all countries don't matter, but obviously the U.S. being the largest economy does matter. And the Fed signaled yesterday after the meeting, which there was no change, which we expected, but they also signaled that, look, we don't feel the need to preemptively cut rates for anything unless there's some issues. And it's clear that they want to be able to hold on to some of the ammunition that they'll be able to use if things get worse from here. So no change in rates from the Fed. BOE is cutting. We know UK is cutting. We know that ECB is cutting. Other countries have cut. US is still staying the same. And I don't know if that's going to change anytime soon. Leftovers, Amazon maintains a dominant lead in the cloud market. Let's move to the next slide. Probably not news, especially since we just saw the earnings from Amazon, from Microsoft, et cetera. But this is a worldwide market share of leading cloud infrastructure service providers as of last year. Probably hasn't changed that much. AWS, we know, is still on top. 31% of the world is using AWS. AWS is massive, dude. I feel like a lot of video game systems use them too, right? Like my Xbox and PlayStation for their clouds and things like that. Azure is 20%. That's Microsoft, of course. Google Cloud is 12%, although who knows if it's going to be called Google Cloud for long. You know, they're going to make them cut and get rid of some of their businesses, right? There's antitrust thing going on. That's going to be an overhang for a bit. And I saw the stock, again, I was kind of moving around. I wasn't looking at markets a whole lot, but I saw the stock. Google was down pretty big yesterday on the Apple AI or something like that, going away from their search engine, going to Safari. Alibaba Cloud, I mean, you can basically see it's those three, right? Like largely these three, AWS, Azure, and Google Cloud make up 63% of the entire market. After that, it's Alibaba Cloud, 3% is Oracle, 2% is Salesforce, 2% is IBM Cloud, 2% is Tencent. Two of those obviously being Chinese in origin. So AWS is still running the world. More than likely, if you're using some cloud type situation, it's probably running off of AWS. I feel like that's a lot of what we do at our job, and I'm pretty sure it's a lot of many of you do at your job. Unless you have some real tie to Azure and Microsoft, that's probably what you're using. And maybe after that, it's Google. But those are the top three. Amazon, Microsoft, Google, those are the top three. It's not changing anytime soon when you look at the way behind lag on some of these others. Let's move to the next slide. Volatility. You know, I did this was so anytime I pull this chart up, there's a 1 day lag on it. So as of right now, this is looking at May 7th, where we've largely been kind of in a flat term structure, but still kind of backwardation nonetheless. Folks, things might have changed today. As I sit here right now looking at the screen, May VIX is 22.10, June VIX is 10 cents higher, July VIX is 10 cents higher. We are out of backwardation officially. So while we were in backwardation as of yesterday, when you look at the blue line here on the chart for those who are colorblind, colorblind impaired, that would be the bottom line here. May 7th, as of yesterday, we're in backwardation. And you can see, even though we were in backwardation, things have calmed down quite a bit. The talk of tariffs, the fear has calmed down. And now that we're out of backwardation, that probably is an opportunity for markets to jump even higher. Now, I'm short delta in a few places. I'm overall, I think I'm slightly short delta as far as beta weighted deltas in my book. They're not big shorts. I actually just added one today in the form of a micro. I sold at 57.33. Talked about this on Futures Power Hour today. I'm willing to hold this thing up until 57.80, which is basically the 200-day moving average, so 50 points higher. That would be 50 times 5. Again, there's a $5 multiple on the micros on the MES, right? So that being the case, $250 I'm looking at for a max loss. To the downside, if it does go and I actually win money on it, what do I do with it? I'm not sure yet. You know, maybe I'd close at 5,600, but I don't know. We'd have to wait and see. Let's move to the next slide. Moral of the story, backwardation yesterday, backwardation no longer today. Next slide, please. Bitcoin. I don't fully understand the move today. Now, I'm not surprised that Bitcoin is up while markets are up. Did I expect Bitcoin to be up 5%? Did I expect Ether to be up 15% today? I did not. That's actually something I did not have on the bingo card. Huge move today. And I don't know if that's all of a sudden, those crypto traders are starting to remember that the Trump administration is very friendly to crypto and they want to get ahead of a move, or, just seeing equity markets go up, feeling strong to buy crypto today. I'm not entirely certain, but it's been a while since Bitcoin was 100. We'll see if it actually holds on to the move. Let's move to the next slide. So I thought it would be an interesting time to look at where there still is vol and where there's not. I mean, this is rapidly changing. When you look at Qs, look at the, I always, if I do this chart, I usually try to differentiate where high vol is and where it's not, right? And so generally high vol is trending in the northeast corner of the situation, if you want to look at this. Anything above 30 IVR obviously is what we're usually looking for. Anything above 30 implied vol can be, start to get a little bit rich, right? So I just put some markers right around there. And when you look at this thing in the top right quadrant, you see GDX, you see GDXJ. Obviously, gold vol is still kind of elevated. GLD is not in the top right quadrant, but it is way off the charts here. This is interesting because then you get to see, even though the IVR is super high in GLD, over 55, it might be around thereabouts now. The actual implied vol of GLD is usually not that high. GLD is usually in the teens. And so that's why being in the 22s and range, that tells you that's kind of higher for gold. Gold is, it's interesting. It's a currency, right? It's almost like currency vol in a way. It trades fairly low. I think normally gold vol is usually around 16, 15, implied vol. So that just lets you know a little bit of jump, just a few ticks, right? 4 or 5 ticks gets it in the range where implied vol rank is high. Gold vol is high. This we know. XBI, that tends to be relatively high when you're talking about biotech. Fairly elevated. OIH is fairly elevated as of right now. But things that have calmed down, the Qs have calmed down, diamonds have calmed down, XLU, XLI, EWZ, XLF is kind of mixed in there right next to XPY. It's kind of laid on top of it somehow. All of those have started to calm down. XLK, a lot of these things have really kind of calmed down, if you will. So, for me, I'm not going to force many trades, honestly. If implied vol is not that high, some of my bigger implied vol selling positions right now are in bonds. I'm short in Iron Condor and bonds. I'm short Iron Condor and oil. And I'll talk more about those trades when we get to the platform. But yeah, I just wanted to look at the landscape and see where high vol is. And I got to tell you right now, some of these things, XLB, obviously, materials is up there. Staples vol is still a little bit elevated when you look. Again, IV ranks in the 40s. Metals, XLE, obviously oil and gold, clearly those vols are staying a little bit elevated when you look at it. Retail, these are the things that are potentially still being affected by tariffs, if you've noticed. Let's move to the next slide. So, earnings, TTD, Coin, DraftKings. How about that game last night, by the way? How about some of these playoffs at this point, by the way? Kind of interesting. Last night, Knicks come back and they beat the Celtics. Dude, it was crazy. I had just landed back in Chicago, which means I could bet again. And so I pull up the betting app on the tarmac. We're kind of, if you ever landed at O'Hare, you're not getting off the plane within the first 10, 20 minutes. It's going to be about 30, 40 minutes. This is kind of how it goes. So I was looking at the app. I'm looking and I see, that the Knicks are down 10. It's at Boston. Brunson only has 7 points. I'm like, oh, this game is over. Sure, they stole one. Because, a lot of times when these teams steal a game, right, that's their job. When you're going and, it's a 7-game series, the first 2 games are away for you. If you steal the first game, you kind of coast in the second game. If you win it, cool. Like last night, for example, if you saw the Denver and OKC game, Denver won game 1. Last night, they just got somehow blown out. The Joker got thrown out of the game in the third quarter. He got fouled out, which is crazy. I am going all in on all kind of Joker bets for the next game. There's no way he's getting thrown out, and they're going to be back in Denver. Book it. Anyway, it was just surprising to see the Knicks triumph last night at Boston Garden in game 2. Now they're up 2 games in the series and going to New York. Wow, craziness. DraftKings, net, SoundHound, an AI name. Mara, of course, a name that's tied to crypto, has earnings tomorrow. AFRM has earnings tomorrow. Pinterest has earnings tomorrow. Rocket Lab. These are some names that kind of, this is the bottom of the barrel when you're starting to get the earnings on these, and these are some of the names that can really move sometimes. But yet and still, I really don't have much interest in playing earnings. Lyft has earnings. What did Uber do for earnings? Was it up? I think it was. And then Dropbox has earnings. There are so many Fed speakers tomorrow. You can just literally turn on the tube, and one of them will probably be on. It's so crazy. You would imagine they're going to be reinforcing what Powell said. Again, if it's not Powell, who cares? But they're going to be speaking tomorrow. I don't really trade this hardly ever, but the WASDE report, which is basically the report about crops, is going to be out on Monday. So for those of you who trade grains, keep a lookout for that. CPI is on Tuesday. Inflation back in crosshairs again. We just had the core PCE last week. Now we got actual inflation reports coming out, CPI and then PPI on Thursday. Number up, S&P 500 stocks above the 50-day moving average has really jumped in recent days because, again, markets have jumped. 60% of the S&P is above the 50-day moving average again. Who knew? Let's move to the platform. TTD, this was definitely one of the pandemic darlings. This stock has gotten rocked. Who's trading it? I'm curious. I want to know. Not me. not me. Well, real quick. What I got going on here. So right now I got the portfolio. Usually I have portfolio sorted by days to expiration. Right now it is sorted by beta weighted deltas because I haven't been able to keep track of. I like to, the way you sort your book is probably one of the most important things that you can do because it helps you determine how you adjust and you risk manage. You know what I mean? So right now they're all shorted by beta weighted deltas. The short deltas are on top. Long deltas are, well, it goes from short deltas to long deltas. So SPX, I have an iron condor in there, and I have the iron condor is out of the money, expires tomorrow. It was doing well as of yesterday. Who knew? And the other thing I have is a short call spread I put on, I don't know, a week or so ago. It's really in the money at this point. It's June. It's 43 days. I don't know. I think I sold, what did I sell it for? Let's see. I sold this thing for, where is it? Sold it for $260. It's currently $750. So obviously it's almost $5 in the money. I have another $240 I could lose. That's not, bank breaking stuff. So there's no reason for me to close it right now. I'm just going to keep it. I mean, again, after a big move we've had to the upside, I don't mind having some short delta on. And this thing is already, the massive part of the damage has already been done. So whatever, 100 points out of the money. It's not 150. Well, it's 50 points out of the money. It's not unreasonable that we could get back down there. Who knows? Tariff talk comes up again. Markets fall. Whatever. The one that annoys me more is this butterfly. I just can't seem to win on butterflies in the SPX more recently. And I shouldn't complain about that. Markets have been moving around a good bit. Butterfly, I mean, really is a very kind of stationary trade. So, it is what it is. I don't know if we're heading back down to 5,600 tomorrow, but every day is a different day here in this market. So that's my largest short delta position. This is another one. And I got a series of just small call spreads that I was selling during this meat of this rally, which has been really the past week. Sold this call spread for 305. It's still kind of out of the money in the Qs. Still a little bit out of the money. Also June. Still got, whatever. Again, because there's just been such a back and forth nature in this market, I figured why not. Just sold this earlier today, 57.33. A lot of times when I sell a future, I don't necessarily, and I don't trade futures too often, but sometimes when I sell them, I don't necessarily put it in what am I looking for? The trader page. Sometimes I don't necessarily do it because, again, it might be just a quick scalp. But I don't know. I'm inclined to maybe hold this one for a little bit. If we keep going higher and market and, what I'm looking at here is, I actually explained this on Futures Power Hour today, but this 200-day moving average is an area I'm keeping an eye on to the upside. I think once you get above there, all bets are off and markets are really going to skyrocket. So that's 57.80. The 100-day is 58.13. Those are not too far from each other. And all of that also kind of coincides with the big sort of beginning of the breakdown, I would say, in equity markets here. So that's what I'm keeping an eye on. I'd be short up to that level. Again, like I said, that's another 50 handles away from where I sold it. 50 times 5, the $5 multiple on each of the futures gets you to $250 max loss. I could stomach that. I could deal with it. Other short delta call spread here in Tesla that is surprisingly still out of the money, but not too far away. That was a $5 variety. So that's when I started getting smart. Just a $5 variety on this Tesla call spread short. Same thing with Amazon, $5 call spread short. Meta, same deal, $5 call spread short. Microsoft, I did that too. It just completely got smoked on earnings. Thank God I only did $5 wide. This was also one of the few trades that I sold vol for earnings in Microsoft. This one expires tomorrow. Is there a chance it drops $30 tomorrow for earning? Just for whatever reason? Probably not. I'll close this thing out tomorrow. It's at max loss basically. After that, we start getting to some delta neutral stuff. So ZN, Iron Condor is delta neutral. Crude, Iron Condor is delta neutral. ZB, Iron Condor, delta neutral. I love these bond delta neutral Iron Condors. Vol has been kind of pumped in here and it's starting to come in. But these things are way out of the way. And I tell you what, if for whatever reason it does breach either upside or downside, that would be, I don't know, there'd be a lot of problem there. Again, my in ZN 108 and 115, I can live with that. 115 is way up here, dude. That's what happened when things got panicky and scary. 108, it's way down here. We haven't seen that since earlier this year. So and that's the same situation in ZB. I'm comfortable holding these for some time. I'm going to try to squeeze as much juice out of those as possible because I just don't see my short strikes getting breached. And if they do, God help us, something else is going on. Crude, this one is messing around with me a little bit. So I have another Iron Condor that I'm not adjusting. Refuse to do it. 56, 54 is my downside of the Iron Condor. Upside is 72, 74. Oil has been the biggest indicator of potential recession. Now, I don't necessarily like to trade as if I think a recession is coming or not. I trade what I see. I don't trade what I think is going to happen. I don't try to do that. And so as a result, right now, oil has struggled, but it's starting to bounce back, which obviously works for this position. This is the reason why as much as I was thinking about buying oil at 55, I didn't want to do it because I was already short this put spread, and that was near the money, basically. So there's no reason for me to double down. I'm just going to keep this as it is. I'm not even adjusting this upside. Hopefully it bounces back a little bit more, maybe to 60 to 62 in the coming days, and vol comes in more, and then I'll just close it for a potentially good gain. So also delta neutral, those three trades. After that, some long delta trades. APA is, I bought stock in APA a couple weeks back. No order chains. But anyway, bought stock in there a couple weeks back. Where is it? Activity. Whatever, doesn't show. But XLE is another one. Again, trying to take advantage of the weakness that we had seen in oil. I am short a put spread. I've been short this for a minute here. Put spread in XLE. No order chains. What are you talking about? Oh, has it been 30 days? No. Really? Year to date. I put this on. Oh, yeah, I put this on. April 4th. That's what I thought. I guess that is more than 30 days ago. That's funny. I got to widen that out. And I've rolled it since. SMH, another one I've had on for a while, just in the money put spread. NVIDIA, another in the money put spread. So those are the few long delta things that I got. And that's my trades right now, folks, and I'm sticking to them. Again, going back to some of these earnings, I'm not trading any of them. I really, as markets have come back up, as vol has come in, as we're out of backwardation, I feel like a lot of the best opportunities have removed themselves. And I personally feel that as much as there's been headlines and news that have moved the markets this year, I think we'll get better opportunities again than we have like today. So I just got cash on the sidelines, and I'm keeping it chill. Kimberly Thomas, you have a daughter that goes to Palm Beach University? That's awesome, man. Volleyball, nice. Volleyball is becoming that is over the last 10 to 15 years, there's a lot of kids going into volleyball these days. It is definitely, one of those. I mean, people are trying to move a little bit away from the basketball. It's so saturated, so oversaturated. That's why a guy like me doesn't even have my kid in travel basketball, just because it's so. He's in 6th grade. He's 12. We don't need to be doing it as of yet. I've already done it before. I've talked about this plenty of times on the show. But don't get me wrong, he's good. We do a lot of training. He plays. Don't worry. He's going to be ready. DraftKings has earnings. I know a lot of stock traders love this stock. A lot of people obviously it's a proxy for betting. Everybody knows there's a huge betting fetish for the United States and all over, really. Oh, man, what is this stock going to do? What's the expected move here? A lot of times I think this thing is a big move on earnings, but I don't really think it is. 3 months ago was here. This was earnings last time? No, this wasn't earnings. There's no way this was earnings. It was something else. How do I feel about DraftKings? You know what? I will say, for somebody who likes to play earnings for moves, as you guys know, I like to. This is pretty cheap when you look at these calls. I'm going to buy these calls just in case something interesting happens. That's what I'm doing. Replace. Just in case, they have a blowout quarter, stock jumps like 10% or something. Well, it would need to be more than that. I'm going to buy a few calls in there. That's fun. Let's see. Coinbase has earnings. They just bought an exchange today, the largest Bitcoin and Ether options exchange. This is just going to be fascinating from the standpoint of what they say about the crypto industry and obviously the trends that they're seeing. $12 and change. That seems like about 7% move expected. AFRM is another interesting name. Again, I'm not going to play it. But I've always been interested in this whole space, especially given the situation of where we are right now in America and how people are paying for things. Is this going to be one of the things that people are using? This is an interesting proxy as well. I like it. I do. Do I want to play to the upside? It's very possible. I might. We'll see. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. I'll see you guys later.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Oh, yeah. Tasty Nation, good morning.
Yes. And, but it'll just be a mess. The reason I keep hitting on the March 25th thing is that it makes the charts messy and much harder to read. As it is now, we at least still have the series of lower highs. My, 5-month-old needs attention. Can't do it now, baby. The diamonds, the gap is sealed. The Liberation Day gap is finally sealed. And lower highs is, the series of lower highs is still in place, but we have pushed well above that gap. So don't mean nothing no more in terms of resistance. The overhead supply is much thicker now that we've gotten up here. But the next big event, of course, is going to be this weekend because they're slated to, U.S. and China are going to talk, and there's nothing scheduled, but I'm confident Saturday or Sunday they'll come out and say positive things. We had an earnest exchange of ideas. We're starting to work on a framework. Things are going well, et cetera, et cetera. They're not going to be like, screw these guys and storm off. I mean, it's going to be positive from both ends because they need that. The small caps, as I said, are particularly strong on a percentage basis. They have not yet exceeded their own March 25th highs. They were beaten down terribly. They've had a big spring back, but we definitely have some sunshine between present price levels and that peak. The cubes are also up, kind of in the middle, between, say, the spiders, the ES, which is up about 1 1/3. The small caps are about 2 1/3. Cubes are kind of in the middle. And we look here, and we are very close, like pennies away close, from besting that March 25th high. It could easily happen before the close, and it could easily happen tomorrow morning. Apple, one of the biggest components out there, of course. Maybe the biggest company in the world. I've lost track. But it's got a goodly amount of distance between its own gap. This is one of the more damaged charts out there, to be sure. So you can see that it's well below its own lifetime highs. And as I say, the damage is pretty nasty because we're below this important channel midline. And even with all the bullishness going on, it's been more or less slumping for the past 5 to 6 trading days. Semiconductors got a pop yesterday, late day. There was yet another retreat from tariffs, whereas semiconductors, or at least a class of them, was released from any tariffs. With all the carve-outs and exclusions, I mean, there's like hardly any tariffs left at this point. Sure, 10%, I guess, across the board, but they're in full retreat right now. So the notion that income taxes are going to go away because of tariffs, still mark April 15 on your calendar. It's still going to stick around. Some specific semiconductors, NVIDIA, it's up. Not that impressive, it's 1.11%. It's kind of enjoyed the easy part of its bounce, but it's not exactly raging. AMD also up. It's got its own gap to contend with right there, 108.68. But, on the whole, everything's up, but it's important to recognize like the relative behavior of all these things in the context of all this bullishness. And then one more example, particularly strong, Micron. Symbol MU, just about sealed on its own price gap at 86.70. One interesting tidbit is EFA. It's red. It's not very red. It's down a nickel. But anything that can be red on a day like this, which isn't a bear fund, is kind of amazing to me. So it sort of suggests to me that whatever the news is being interpreted as not particularly great for outside the U.S., because that's what EFA is. It's basically world equities outside of North America. So the fact that, the U.S. equities are just raging higher and the EFA is sitting around with red on the screen, worth noting. The peak on this was a few days ago, 86.47. So we'll see what happens there, particularly after this weekend, a very important weekend. Carvana is a good example of how it's easy to get faked out after hours. I was toying with the idea of shorting Carvana because they had earnings yesterday afternoon. I decided not to. And I was kind of kicking myself because they announced earnings and the stock plunged. It's like, you missed that one, you coward. I didn't feel so bad later because not only did the plunge unplunge, but it blasted higher. So Carvana is up big time and just about matching. It might even have bested its peak from February 19. So here on the daily chart, you don't see any of that plunge. This was after hours stuff, but it gapped higher today and went ripping up toward its peak from Feb 19, which was pretty much the lifetime high for all indexes. Some other odds and ends. Netflix also down a little bit. Weirdly, this has behaved as sort of a safe haven, so maybe that's not as needed anymore, just like gold's down today. But for whatever reason, Netflix is very, very lofty, of course, very richly valued. The PE on this, well above 50. And, from this channel perspective, it's not cheap. And one other example, also down a little bit, is Costco, which has managed to seal its gap nice and neat and has stayed under it for the past 5 trading days. Worth noting. Also quite expensive on the fundamental side. The Bitcoin crowd has their 6 figures back. This had fallen from inauguration day of about 118,000 all the way down to about 77,000 and has climbed up by about 30,000 or so. So we're into the 6 figures again. A lot of excitement there. We're range bound at this point until it crosses above that. I beg your pardon, it wasn't 118, it's about 109. But in any case, the inauguration peak, once that is shoved aside, which might be a foregone conclusion, then we can talk, then the sheer optimism and volume, I suspect, will rage on that because those lifetime highs are cleared. Got a very upset puppy. Hang in there, kiddo. Almost done. Strategy, of course, Michael Saylor's company enjoying the Bitcoin rally because their assets are pretty much all Bitcoin. So MSTR is up almost 6%. On the other hand, gold is down pretty hard. The front month is down almost $100. The peak stands from back in around April 22. So this is pretty obvious. The whole need for a safe haven has vanished because the trade talks, or at least how they're being received, is going so well. Equities are raging, and people are ditching the safe haven of gold in exchange for, Palantir and so forth. XME The ETF dedicated to mining stocks is also up somewhat. It's a pretty sloppy pattern. The next important resistance is this line right here, round about 60. How are we doing on time? We're doing okay. A couple more minutes to go. Oil, strong day again, based upon trade talk optimism. Crude oil is up about 3 1/3% on the front month. USO, its own gap is right like so, 67.17. That's the next meaningful resistance on oil. XOP is up just about the same amount percentage-wise, and it's getting interestingly close to its important price gap here, 119.36. That was set back here between, good heavens, between April 3rd and 4th. Actually, was that 2nd and 3rd? It should be. Let me just see. April 3rd and 4th. Big price gap there. It's taken some weeks, but we're just about sealed, and it might represent a trading opportunity because that is a gorgeous head and shoulders pattern, and it's taken some time and a lot of buying to get back up here. We're just about to seal that gap. One other item, since we're all gap happy here, that I really continue to like is XLB. 85.50 remains the stop on that. We got close, but did not violate it today. So that's definitely one of my favorite, if not by far my favorite ETF position. In the few moments we got left, just bang through just a couple of index charts here. The CompQ, close, but not crossing yet its March 25th peak. NDX, Nasdaq 100, same deal. Very, very close to pushing past that peak. It might do it before the close, but not quite there yet. S&P 500, the cash index, a little bit more sunshine between March 25th and present price levels. Getting very close on that too. And lastly, kind of an upside down of all this, volatility continuing to sink, having peaked right back here on the 7th at almost 60. We are getting down to about a third of that now. And there's the next support on that, 20.68. Pretty empty day tomorrow. Nothing really on the blotter in terms of scheduled events, but of course the weekend, very much worth following. So hope you're doing okay. We'll close out the week tomorrow. Thanks for coming by. See ya.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I wasn't going to call you out publicly.
Oh, no.
But I have to.
What?
So we're out yesterday afternoon. So we're driving down Ravenswood. Now, for people that don't know Chicago, which is most of you, there's a train that runs in the northwest, and then it goes up to the northern suburbs and runs right down the street. So one side of the train is heading south, the other goes north and south, but let's just say it goes north. So we're on the southbound. So Tom takes off in his new fancy electric car, which I can't keep up with. Do you know that there's actually stop signs on that street? Okay.
Blue stop sign?
No, he didn't blow through them. He went from like 40. No, he went from like 40 to 30, and then just kept going.
Oh, I don't stop for stop signs.
Because you're above the law. Above the law.
So
that's so bad.
Only for pedestrians.
There's streets.
Yeah, and you're in a bigger vehicle. You can hurt them. They
There's
can't hurt you.
streets that go east-west.
I don't go through red light, through stop.
No, just stop signs you go through, not red
You
light.
go through the meters getting on the ramp on the highway. You don't believe in those. You
Oh
say
no, those are bullshit. You stop at those?
Yeah, it's the law.
You stop at those red lights to get on the highway.
Yeah, it's the law.
Oh my God, you're
It's so that it's because so that
only people that stop
a-holes
at those
like
are
you,
tourists.
It's like a-holes like you,
right?
Don't make it good for people trying to get on because there's not enough room. They're synchronized for the traffic.
Oh my God,
and it's the law.
It's only for tourists.
Beth, I need some help.
It's the same people that sit upstairs at restaurants. It should say that. I've got like 10 tickets.
Don't you notice that the cars around you slowing down? Like, that's what saves me, is like, I'll be up on like Ashland, because there's so many of those things on Ashland, and you notice the traffic around you.
I forgot one on Ashland. I only get them on
down.
Western and Irving.
The same phenomenon, Mr. Pedantic. Oh,
yeah.
Bat, how are you? Jeez Louise, you would not last 30 seconds in an improv class because the whole premise of improv is like, instead of just shutting everything down immediately, is to be like, yes, and. So like, you know what? I'm going to agree with what you're saying, and I'm going to add on to this to further this conversation so it doesn't grind to a halt.
You know what's funny? As much as I like comedy, improv, like Second City Improv, doesn't do it for me.
Okay, of course it doesn't. Bat, how are you?
Do you think you could name one Taiwanese food?
Yeah, Thai food, I eat it all the time. You now learned that Thai food is short for Taiwanese food. Taiwan. Yes, look at you, Sas. I'm very proud of you.
And I want to ask our producer, John, something.
Yes.
John, can you help me here just for a quick second? Just because I don't want him to yell at me. John, have you ever had Taiwanese food before?
I've had Thai food, yes.
Taiwanese food is not Thai food.
Where's Thai food from?
Thailand. Thailand and Taiwan are not the same country. They're not even
Taiwanese cuisine is commonly referred to as Taiwanese food or Taiwanese cuisine. What are you talking about?
Oh, hold on. Oh my God, here he is. Jason, come here.
All right.
He is our Taiwanese source. When you say Taiwanese source, there's your Taiwanese source.
You're looking at him right here.
You're looking at him.
That's right.
I will take whatever Jason says. I will take it. If I'm wrong, I will apologize.
No,
I said to him, can you name one Taiwanese food? And he started laughing at me, thinking that it was Thai food.
You know, that's a common mistake because the Thai part of Taiwan, people mix it up with Thai as.
Don't defend him.
Jason, just for the outtakes later this week, I stand corrected. I am man enough to admit when I'm wrong, unlike other people in this room. I am man enough to admit that I am wrong, and I'm glad you came in to clarify this.
No, you're not.
I owe you and your people an apology.
No, you're not. Hey, do you guys, you want to know what we're having for lunch today?
The velvet taco.
No, they switched. We're having Thai food now.
Is that a joke? Did you write that yourself? You're so good.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. And you know what that means? Time for a little bit more Tasty Live. That's right, with the last call. Sadnov, even the S&P is up 66 after being up, I don't know, about 80 or so at one point at a high of 57.41. NASDAQ up 319 or so. Russell up 48. Russell, the big winner of the day, up almost 2.5%. Everything else up around 1.5%. Dow up 4.89. Volatility in by $1.36, about 20 cents off its lows. You can see the last 2 days, volatility contracting into this rally. Bonds probably the biggest mover. Down 101. It's only 1%. Go ahead.
I bought some at. I didn't buy a lot, but I bought some bonds at 114.10 right here because we sold them out yesterday about a point higher, and then I sold some 113 puts.
Makes sense to sell some putties. Yeah, I agree.
Yeah, I sold them at 135, which is when the bonds were down 102 right here. So I thought that was really the only aggressive kind of, directional trade I made this afternoon. I think if the bonds go lower again tomorrow, like every time, if they get in this low 114, 113, you got to buy them.
Well, they have been bouncing off of there. So yeah, okay. I tend to agree with you, but we got a different market than we had the last time the bonds were down at this level too, though.
Yeah. Well, I just talked to the new Pope, Southside Bob, and he suggested, he's a Chicago boy and a trader, I'm sure. And
what can't Trump do? He got us an American Pope. Even if he did spend most of his time in Peru.
I would have agreed with that, except he's from Chicago, so I would say no chance. But I have to tell you,
I think he's a registered Republican, Sosnoff. That's what I've read.
I have to tell you something that's really funny. Because they're cracking up on sports radio. The best thing I heard was that we finally got a Pope in Chicago before we got a quarterback that can throw for 4,000 yards.
Who would have thought that would have been first? No doubt. The best one you said was 9-bit Bears.
9-bit Bears.
As soon as it came out.
9-bit Bears immediately, and then the other thing I loved was when guys on the radio, because there's a lot of Southside Bobs on the radio in Chicago, and the Pope is the Southside Bob. So when is he going to throw out the first pitch at a White Sox game? I love that. I think that's.
He's never going to throw one out at a Cubs game if he's a Southsider.
Well, from what I've heard, though, he's a Cubs fan. But I don't know if that's true. But hold on. That's the internet, and
right.
It could be 1,000.
It's the internet of things. Sure.
Yeah, it could be 1,000 Cubs fans, but but the White Sox need him more than the Cubs.
The White Sox do need more help than the Cubs. I never thought I'd say that, but that is true.
Yeah. Anyway, it was pretty funny. The jokes are just on Chicago sports radio. The jokes are just flying, and they're great.
Oh, I mean, it's like when Trump became president the first time. The jokes just wrote themselves. I mean, it was just
the Pope's a little different. I mean,
it's a different light. Of course, they're not going to treat the Pope like they treat the most hated man in America by half the country. No, they're not going to do that. I think the Pope can run both lines pretty easily.
Trump is vile. Nobody dislikes the Pope.
No, for your 50%, yes. For
my 50%, fine.
Yes.
And but I don't think anybody dislikes the Pope. But I do like it.
You'd be surprised. But yeah,
I do like the moniker of Southside Bob, though. I think that's great.
It is fun. It is good.
That's great.
Everything will be meant with the term of endearment.
Yeah. Sure.
Yep.
Sure.
Hey, Sadna, we had some big movers today. To get back to the market here for a quick second. Bitcoin up 5,1017. Ethereum up almost 10%, Sadna. It's a $180 move because the product's a lot smaller, but it's a big 10% move. Oil up almost $2 to $59.94, just under $60. Big move there. Gold down $86. Big move in gold. And then we had the euro. I just want to point that out to you too. Also down about 1% or so. What do you think about kind of the flipping of the market here a little bit to numbers of old, meaning oil going a little bit higher, gold going lower?
What's weird about the euro is that it did have a huge move, but this is the first time I've ever seen the euro move 1,200 points. Good timing for our trip to Europe. But the crazy thing about it is they killed premium.
Yeah, they most certainly did. IV rank of 49, still relatively high, but yes, it is down for sure.
They killed premium in there. I have a position on. I mean, we made money in
premium. When it moves to the downside in a commodity like that, premium does usually contract.
Yeah, it's crazy. Okay. And I guess that's
it does usually contract. That's not crazy. That's the norm.
All right, whatever, however you want to say it.
What did you just say? If you agree that it usually does contract on the way down, contracting on the way down is not crazy. Am I crazy?
You're a little crazy.
I think so.
But a good move in gold for the good kids, I guess, and so that's all I really care about. And what else had a big move in commodities? I was going to say, bonds, obviously, we talked about that, and that's about it.
Well, I mean, just because you mentioned commodities down 1%, it hasn't been able to get out of its own way. I know it's not a very widely traded product.
Yeah, that's not widely traded, as you said.
Nat gas is down 10 cents off its highs. That's a decent size move for the day.
Yeah.
Okay. All right. I'm just trying to win here a little bit. Just trying to get some. You traded a lot more today than you have over the last couple of days.
Well,
Still not to your lofty numbers, but better.
I had to flatten out some stuff today. I had to get I just adjusted some of my currency positions, and I've kind of kept my positions pretty much in line. I'm pretty flat here going into the close.
You are flat. You were flat going into this move when even the S&Ps were up 25 or whatever.
The weird thing about this move is that the Russell super strong, Dow super strong, NASDAQ super strong, S&Ps
meh.
Meh. yeah. I mean, they're I mean, this is really more of a NASDAQ rally than anything else. And anyway, let's talk just quickly.
More like a NASDAQ. I mean, Russell, like you said, is leading the group here, but yes.
Yeah, but some of the stocks that have been beaten up lately, like, for example, Apple, it's up $2. It almost got to 200. I don't know if it actually traded 200, but I saw it 199 and change.
It got up to 205 cents. Not 205
there you go.
cents.
It got just over 200. I wasn't watching at the time, but I wanted it about 201. Didn't get there.
You still got some stocks lower, like Netflix is down $7. UNH, which cannot buy an uptick, is down $4.
Well, Netflix down $7 because it hasn't had a downtick, and today they bought everything else and sold Netflix. UNH and Lilly haven't had an uptick, so those are the two that people just sell because they don't want to hold junk. And those are considered to be junk. And I thought NVIDIA was very heavy today. It kind of opened on its highs, and it never even took those out. But other stocks like Google finally bounced after getting killed yesterday. Microsoft was up strong for like the 100th straight day. Tesla was strong today. Apple was strong today. Amazon finally had a decent day. PLTR, which has been really weak as of late after earnings, had a strong day. So there were
ENPH, what the bat did on his option trades today, the other day, up $5 or $6 up. That's right.
Yeah,
you could have caught that on Tuesday if you wanted to.
Let me tell you something about ENPH. I know it got cheap. Where it was in the 40s now, or whatever it is.
ENPH is 49, up $6.
Okay.
But yeah, it was 43 yesterday. I did the covered call using the 50 strike at 43 and change.
Yeah, the issue in ENPH, if you've never traded it before, is that it gets. I don't find it a great trading vehicle. That's all. I find the markets in there that you got to basically, even with the stock at $45 or $50, you got to move pretty far off mid price to get fills.
Well, I just made $2 in 1.5 days, Sadnov. So I don't know.
Okay, well, we'll erect a statue for you and place it outside of on your driveway at home, and so you can be happy and you can show all the kids in the neighborhood that you made $2 on an ENPH, ratio spread. I'm sure there'll be a stat.
No, covered call, Sadnov. Rare covered call, low price, high volatility. Hey, mechanically covered call.
Rare covered call. I actually don't like the tape action for some reason, in the S&Ps. All day I felt they were kind of heavy relative to everything else. And I'm not saying that keeps up tomorrow, but today they were just kind of a little bit heavy. Anyway, before we run out of time here.
How could you say they're up heavy? They're up 1%. They're not heavy. I mean, they were up 90 a moment ago. They just sold off by 40 handles. Okay, you can say
they're heavy relative to the NASDAQ and relative to the Russell and the Dow. That's all. In other words,
yes,
Tony,
they are the weakest. They are the weakest in the group. Somebody had to be there.
They're right where we got them, right where we want them. No, I don't have an S&P position on. I don't have a directional position on in there right now. I'm just short some premium. And you know what? It did not come in today. Let's see. S&P premium. Yeah, it's nothing. It's about a wash. There is one earnings play tonight, I think, that's tradable, which is Coinbase. It's not for the faint of heart.
Let's get to those. There's a couple more too, but go ahead.
Well, Coinbase is not for the faint of heart. No. I sold some junky puts this morning. They worked out nicely because the stock was up about 8. Now the stock's up, 11 or 12? 12. So I'm going to go home short some junky puts. I sold a few more. I'm short the 165 and 175 puts in May, and I am short in Coinbase. Let me tell you right now, replace order. I am short the June
Ivy rank of 8 and not great markets. I know. This has got disaster written all over it. But you do you, boo.
Okay, so because Ivy rank is 8, I'm not selling both sides. I don't like.
So you're going directional,
Yeah, this is one of those trades where if you're going to trade it directional, that's fine. If you're not going to trade it directional, then don't trade it because the Ivy rank is way too low to sell premium in there. So all I'm doing is selling some junky puts in May and June because I think the stock is low relative to the price of Bitcoin. And so that I think that gives it a little bit of a floor. Whether or not it does, I don't know. It's not. I don't know anything. Okay.
Well, I got some other stocks for you before we do this. I'd like to get to it if I could.
Okay, let's go.
TTD. Do you care?
I do not care. And by the way, anybody that wants to trade TTD, do it. Trade it with caution.
Trade desk, right?
Trade desk. Trade it with caution.
How about DraftKings?
Hold on one second. The reason I say that with TTD is because I've gotten stuck in that stock before without with no way out. It ain't pretty.
June markets are, they're like Coinbase, but yeah, maybe leaving a little bit better. But okay, fair enough. How about DraftKings? You were just talking about a little bit of gambling.
DraftKings, what DKNG, right?
That is correct. Up 90 cents. Kind of on its butt.
I have no position in there, but when did DraftKings get down this low?
It's been this low, it seems like, since April. Hasn't rallied since off of the April lows.
Expected move looks like it's about a little bit. Expected move looks like it's about $3.50.
$3, sure.
And how low did this stock get actually in that April low period?
It got down to $30.50 approximately.
So why do you think DraftKings is so heavy?
Because they give away money for every account that opens up.
What do you mean by that? What do you mean by that?
Make a bet on this game. Bet $5 on this game. We'll give you $100 in vouchers or whatever they do. Don't they do that?
Well, I'm sure they do, but how else do you open accounts if you're DraftKings?
Well, if you've got to buy a $5 account for $100, it's not a good math model. Even you can see that. Selling some putties here. You're going into the 8 days. Do you realize that?
Yeah, of course.
Okay, of course you do. I'm sure you did.
I like to go into. Wow, they're really selling down this S&Ps here.
They sure are up 46. They've cut the
I sold some 32 puts in DraftKings.
They said they lost money in March Madness, Sadnov.
And that's why people are selling the stock?
I don't know what to tell you, man. Don't shoot the messenger.
That would be hands down the dumbest reason I've ever heard for selling a stock, because they lost money. If you could take the other side of DraftKings losing money over time, other people gambling, you would take the other side of that till your hands bleed.
Sure. Makes sense. Yes.
Yeah.
I agree.
Okay, so I don't worry about DraftKings losing a little money, on a I don't worry about that at all. Okay, what else you got?
Let me take a look here, my friend. We have NET, if you care, AFRM.
Firm. I do have positions on in a firm. NET, again, another stock that I do trade, and I would caution you. I have a position on an NET right now. We have the 105, 140 strangle.
Mm-hmm.
I would just caution. I don't love trading this stock at all.
Okay.
I haven't done very well in there either. It may be one of the reasons I don't love trading it, but I'm glad you told me about it.
Okay.
I have a very small position on. It was put on from a trade from What's Your Assumption? And We are currently down money on it. We're down about a point on a strangle in there. So it has
I'll
not
go through the archives, find out who cost us money. I will get back to you, Sas.
And let's have that person killed. If it's possible. And here's the other thing with that stock. It is not, I repeat, not very liquid. So even though the IB rank's high, stuff in there trades by appointment only, and it's not good.
Sadnoff, you never should have covered that SPX trade. It's down to $18 now, Sadnoff. You know, seriously, you should have known.
What do you think it got to when we
almost
rallied
a full
up?
loser? I was looking at it when we were up.
It got to 28.5.
Yeah,
Okay.
I was gonna say like 50 cents or a buck outside a full loser. Yes, that is correct.
Okay, I just wanted to tell you that because
it's under $18, back over $18 right now.
Okay, what else we got?
Pins.
I don't really trade pins. Is it liquid enough?
I mean, 19 million shares have traded today, and it has 5-cent wide markets. IB rank of 54, not bad. Remember when you said, does anybody use Pinterest? And then Pinterest went up like 300% after that?
Where's it trading now?
$28. It got down to a low of around $23 or something like that.
Well, my math's not that good, but that's not 300%.
No. I meant one time we trade. Goes, does anybody trade Pinterest? Does anybody even use Pinterest? You're gonna sell this pig, and the stock was higher. That's all. And 300%.
Well, I mean, Vanetta probably uses it. That's about it. A firm has earnings. She said that's a more interesting stock. Trades 12 million.
AFRM. You got Lyft and Toast. In case you want to get to any more.
Toast is a toughie, so be careful on that one. And as for Lyft, what do you want to do there, sir?
I mean,
the hard thing is Lyft and Uber have completely decoupled.
Yeah, they have completely decoupled. I mean, it's a $13 stock.
Right. LYFT.
That is correct.
I mean, last time I traded Lyft, it was pretty tough. What's the expected move in there? $2, a little under.
Under $1.30 something, $1.40, $1.50.
It's got some volume in the stock. I mean, if you're bullish in there, I think if you're bullish in there and you sell an at the money put, it's okay. But anything else, I don't know. I wouldn't touch it.
Okie dokie. We're not touching.
It.
Can't touch this.
This is a pretty interesting sell-off, Tony. It
is up 35. I agree with you. I thought we would do this over the weekend. Didn't think we'd do this now.
I thought that they were pretty damn safe earlier today. I really did. I thought when the S&Ps were up 85 or 87 or 90, whatever it was, that they looked really good and that there was not a hell of a lot of risk. No. That market has changed dramatically in a very short period of time. I mean, up 32, you get a sell-off of, $55, $60. That's pretty significant.
It's significant. Volatility, 2240. After getting under 22, it's rallied by about 50 cents also.
Yep. How's Coinbase doing here? It's only up $9 now. Interesting. Yeah, I'm just looking at some of these prices. Yeah, that's a pretty decent size sell-off. All right, what does the new subscriber do, sir?
Oof. Like I said, I thought we would stay strong for the rest of the week here, and the disappointment would come over the weekend. Me and my Taiwanese sources all felt that way. So this is a little surprising to me right now, this move that we're getting.
Are there big numbers coming out tomorrow or not?
No, there's big whammies coming out tomorrow, Sadnoff. You got all the Fed governors speaking tomorrow. That's all. You got no news. It's Friday, the 9th. It's not the first Friday or anything like that. You got every Fed governor speaking.
Beautiful. All right, let's bring in your monkeys.
Beautiful. The overtime, gentlemen. How are you guys?
How goes it?
It goes well. How goes it for you?
My ribs are getting a little sore from all this punishment, but I remain unrepentant in my bearishness.
You got him just where you want him, Ilya. You got him just where you want him.
I think I kind of do.
It's like being down 20 points in the third versus the Celtics, right where you want them.
Yes, that's exactly right.
Listen, my Warriors are still alive. We're making headway.
You do not get to talk about sports, okay? That you could talk about markets.
Basketball is the only one.
No,
I have but one passion.
No, I'm sorry. Chris can talk about the Knicks, but you cannot talk about the Warriors. That's just
It'll be really funny, by the way, if it's a Knicks Warriors.
Oh, don't you worry, it will not be.
because then Chris and I will never hear the end of it.
Don't you worry, that will not be happening.
Curry's happening until Game 6. It's not happening.
I'm absolutely the chances of the Knicks winning 2 games in Boston. I gave it 0, but I hate Boston and I hate the Knicks game. Watch that series, painful. But anyway, let's talk to Mr. Radigan and get his take on this because Dylan, I know you had a lot to do with selecting Southside Bob as the new pope, and we're very excited about that here in Chicago.
You're welcome. You're welcome.
Yes, thank you. Thank you
This is for Tasty Nation. I just would hope that you will refer to the coverage of this new event under the appropriate title, which is you might have heard of the television show similar, but this one is called Chicago Pope. And so you're gonna find this to be very enjoyable, I think. And
yes,
so yeah,
Chicago.
I did my part for Tasty Nation. I put in the word, and it seems to have worked.
Well, the Chicago Catholic community is very excited right now. It's nonstop chatter on all the.
Not to mention he's a Villanova graduate. I mean, you got the Villanova factor, and you got the Chicago factor.
Good for the Knicks.
Which is good for the Knicks. Which is well, yeah, sure, it's good for Jalen Brunson and the Knicks.
It's a big week for Villanova graduates. So
I mean, Jalen Brunson's a Chicago kid, went to Villanova. Now you got the connections are all in place. Blah blah blah. So there you go.
It's happening. It's happening.
All right, boys. What do you think here? This is an ugly sell-off going into the close.
You love to see it.
I love it.
Made no sense why we rallied up earlier today on the concepts of a deal with a country that we have a surplus with. That's really it today.
Oh my God, I missed my last trade. Oh, bummer. I mistimed this.
Well, I think it's Ilya's fault.
Oh, Ilya,
I'll take it. Try talking sports. Try talking sports.
My smoke and mirrors have succeeded.
I will tell you one thing: they crazy bid up the puts in Coinbase. Well, I can't even tell. That's so weird. Yeah, I thought they bid up the puts in Coinbase.
Wide to look to see that.
Yeah, they're too wide. When does Coinbase come out? Today or tomorrow?
Thank you.
There you go.
So as much as we can quibble with
almost
the
all
details
of them do.
of this
Coin,
UK thing,
DraftKings, Affirm.
What'd you say, Ilya?
As much as we can quibble this or that with, this deal isn't good or it's bad or it's this or it's that, and everybody's going to yell about it. The markets liked it, and then they couldn't hold it, and we couldn't get back and close over last week's high. I don't think this means anything other than tomorrow might be a decisive moment because there isn't really a big news thing. There's just the Besant meeting with the Chinese delegation in Switzerland. So all of this is either kind of a pre-positioning for that real conversation or it isn't. If the markets take this ultimately tomorrow as a means of saying, yes, there's an off-ramp to the U.S.-China spat, which is the one that matters, okay, but they don't seem to be buying it here now.
You mean after rallying 400 points from the end of April to the high that you just mentioned, and we are a skosh above that a moment ago to sell off to be under that right now, that 400 points that we are missing it by 30
30 cents or so? You're thinking
all
that
we've
that's
done
significant?
is we've reset back to where
You heard the guy,
Liberation
Tony.
Day started.
You
That's
heard him.
it.
Shut up.
That's it. That's it.
I stand
All right,
corrected.
listen.
I heard you. I did hear you correct. I was making sure.
Yeah,
Good job.
I mean, he's deaf.
Good job.
He can't hear. All right, don't worry. When you say something,
I do.
he can't hear.
That's
All
a
right.
true fact. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with overtime, guys. Peace.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It was the best of times and the whatever this was. We're here. It's Thursday, May 8th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, as we're here to take you through the rest of the trading day. Futures market closes at 5 p.m. Eastern. If you're on the platform, on the website, tastylive.com, thanks for joining us. Come over to YouTube. Tell us what you're trading, what you think of this market action today, where we get a UK-US trade deal. It was leaked last night around 9-10 p.m. Eastern time. We get the formal announcement today shortly around 10:30 a.m. We see stocks meander and then ultimately rally as the President of the United States says that it's a good time to buy stocks. Into the close, though, we do take a step lower. There was a report that's been circulated from the usual suspects of Twitter, including people like Walter Bloomberg and Unusual Whales, that you're looking at a potential step down in the China tariff rates from 145 to 50% as soon as next week. So tariff talk is front and center. It wasn't exactly a straight buy America kind of day, though, because while stocks were up and the dollar was up and gold was down, bonds are ultimately a little bit weaker as yields press to the upside. We have some interesting earnings out here after hours. We're waiting on Coinbase right now. So there's a lot to discuss as we wind down this trading week here on Overtime. Dylan, talk to me about what we see with this UK-US trade deal here. Is this the start, the beginning of the end of all of this noise? Did we really accomplish something here? Or was it just good press?
I mean, I believe the primary motivation is to command the world's attention at all times, more than any particular policy outcome. And so every time, doing an individual nation state deal, one by one, I mean, how you could do 180 deals or whatever it is. So I just think that this was obviously a silly deal. I mean, the fact that you have to sort of act like you've negotiated an adverse relationship with the United Kingdom is comical. And so I think that the market kind of dealt with it exactly how to me, I was actually encouraged by the stock market today, which had no choice but to rally when the president said you should buy stocks because he has a history of front running his own announcements that way. And then I think the market was rational to pull it back in when it was left with nothing more than the actual news of the day or the news of the last 24 hours, which is more or less immaterial. But I do think that this is one in what will be an ongoing series of so-called deals.
Ilya, it appears this could be some of the low-hanging fruit that's picked first. The UK, you've got a Japan in there, a South Korea in there, you know, allies, people that we've historically had good relationships with, and then we can kind of move on. The UK seems like it's the lowest hanging fruit, though. Will all other deals that come down the pipeline come as easily as what we apparently see here today, which is, I don't know what the UK really gets out of this. We still have a 10% tariff rate in their direction.
So this is the whole thing. The UK, okay, fine, is the 9th largest U.S. trading partner by volume. We run a trade surplus with them. So it's unclear who, even in the convoluted parlance of saying that a trade deficit is evidence of a country taking advantage of us, which is abject nonsense. But let's take it at face value despite its idiocy. We have a trade surplus with the UK. So even on that logic, this is not the culprit that we need to be targeting. But okay, fine. They're reciprocal tariffs. Everybody gets hit. So we strike this deal. What is the nature of this deal? There is to your point, still a 10% tariff on the UK that stands. If you want to play the logic game, tough as that is, with all of this, that means that the reciprocal tariff floor that was announced on quote-unquote Liberation Day is in fact a pillar of policy. That stands. We did, on the flip side, lower the tariff on UK cars from 25% to 10%, which is, I mean, how many UK cars do you see in the street? Not exactly a big deal. Maybe this helps Waymo with all of those Jaguars they've retooled, but that's about it. This is not exactly a huge piece of the economic puzzle here. So you wonder then, okay, well, what does this deal accomplish and what does it say? Well, it doesn't really say anything particularly positive, though the markets clearly liked that there was a quote-unquote deal, whatever that means. Now, the UK has, of course, downplayed the scope of it, even as they sort of warmly congratulated the U.S. on it, but this doesn't say anything about the likelihood of a deal with China where things are acrimonious. And most worryingly, it does say that this 10% thing is a real thing. And if that's the floor, then tariffs have just gone up 5-fold in the U.S. And that's horribly damaging for global growth.
How do you interpret all these port chiefs specifically? I'm thinking about an interview recently with the Port of Long Beach in Southern California, and then there was another one circulating with the Port of Seattle, with these folks saying that that we're coming up on that we're about to see that the empty boats or the non-boats or the empty docks are sort of cycling in over this next couple of weeks. How alarming is that? How real is that? What are the consequences? How big of a supply chain / consumer product disruption is the decline in port arrivals on the West Coast?
My sense is that there's probably still a train of shipments that are at sea and coming because of what we saw as the front running of the tariffs. We saw that, of course, in spades in the U.S. GDP data, but we just got the latest numbers on the PMIs from the U.S. and finally from China this week. We saw all of those melt-ups in manufacturing activity, in exports. We're supposed to get export numbers out of China today that say, whereas we had 12.4% growth in March, the April numbers have a rise of 1.9. So all of that melt-up seems to have run its course. A lot of those ships are still at sea, I would suspect. And so we'll get a kind of hump in arrivals. But the issue is, of course, what happens next. And I think there's probably more of a smoothing in this than sort of the more hysterical reports of empty shelves suggest. We're probably not looking at empty shelves, let's say, for the next several months. But what then? And that's going to look, I suspect, nasty, because both of these countries are essentially posturing. I think both of them want this on-ramp. Trump said earlier this week, the tariffs are at 145%. That's about as high as they can go, so they're going down, as if to say, look, like, I'm telling you what I'm going to do if you negotiate. And China responded saying, well, if you want to negotiate, you got to lower the tariffs because this whole thing you started. And that gets you to a kind of puffed up chest stalemate where everybody wants off, but nobody wants to look like they punked out. So are these talks in Switzerland going to go anywhere? We'll see, but the damage is being done in real time.
Dylan, do you feel like this is a market where there's risk being short into the weekend, right? By all logical outcomes here, if you think about this, there are meetings in Switzerland on Saturday when the markets close. There is a fairly high shot that we have a gap open with news on Sunday night. How does one approach this market? Do you go in the weekend as an optimist? Do you go in as a pessimist?
I mean, it's just so speculative. I mean, it's basically pure.
It's so speculative. It's
toss a coin. I mean, so yeah. I guess the one thing I guess that occurs to me is maybe you do some sort of you find something with an expanded volatility related to the China situation, which I'm not even sure what that would be, and just be directionally neutral and short volatility on the expectation that the most likely outcome is actually a non-event.
I do want to quickly.
Volatility will be wider on Friday and tighter on Monday.
Sorry to cut you off here. We have two earnings reports that are out here after hours now. Affirm Holdings as well as Coinbase. Affirm in line, but its revenue is actually down quarter over quarter. So the stock price here is taking a little bit of a hit after hours. Affirm now down 8.68%. Likewise, Coinbase earnings are out. It had a bigger spill. It's since recovered modestly. That's Coom. Now we want Coin. That's down by 0.88% now. here after hours. It was off from 208 down to about, we'll call it 199 briefly, and it is since flashing back. Dylan, sorry to interrupt you there. Wanted to just break that in as I see people talking about it in the chat.
I'm just saying, like, the only way to deal with the China news, in my opinion, is either to ignore it, have a slightly longer term time horizon, or use it as an opportunity to sell some sort of pre-weekend volatility that your hope's going to come in on Monday.
Coinbase earnings here, EPS of 24 cents versus an estimate of $1.98. That seems bad.
Oh boy.
Let's just go through the numbers here. Yeah, that's not great. And that's not the right number. EPS of 250, like that doesn't make any sense. EPS of 254 beats the consensus forecast of 218, which is above the 165 in EPS for Q1 2024. Revenues were up 44.6% year over year by 2.07 billion, but that was below the consensus forecast of 2.09%. Everything looks pretty. There's some misses, some beats. I don't know if anything stands out. That number just didn't make sense. Why would there be an EPS of 24 cents? That's wrong. Fake news. In any event, guys, Ilya, same question to you. I mean, how do you approach a weekend like this, knowing that you face a significant gap on Sunday with a higher likelihood than we have in recent weeks?
I know how I am approaching it, and for me, it's not to get caught up in headlines. It's to let the price action tell you, because that's the only thing that makes any sense. If you look at the price action, I think that will invariably be your guide, at least in managing risk. And in any case, obviously, any kind of open-ended risk in this environment doesn't make any sense in my mind. It's why I've always, in all of my exposure here, have looked to verticals to cap risk. The only areas where I'm not doing that is in the currency futures, which are liquid and trade around the clock, and I'm using micro contracts there to keep everything contained. So for me, it's managing size, but more importantly, it's locking in risk. But other than that, I think you have to go where the price action leads, and where it leads for the S&P as a kind of bellwether for the stock market, in my mind, is still a better bet on the downside than it is on the upside. It looks like we have all kinds of evidence of technical damage here. I think, in particular, on the daily chart, you have what is about as textbook of a bearish technical setup, a topping setup, as you might envision. I mean, you have a clean evening star candlestick pattern at exactly the trend-defining spot in the price sequence here. So you've retraced all of the hair on fire in April. You've come back to the point ahead of that where the initial kind of recessionary concern in markets from mid-February to mid-March settled. Then you had this obviously overdone kind of sovereign currency crisis type thing that the markets were kind of testing out in the U.S. It didn't hold. It makes sense that it didn't hold. You come back now to essentially the starting line. You're right back to where Liberation Day kicked you off. It's as if that day never occurred as far as the price action. And now you get back into, in my mind, a recession conversation. But you can make any which narrative. The bottom line is you've reset that scare. You're back to where you started. You can't get back over, and you have to if this is going to be a rally that lasts. If the recession scare is really gone and not just the crisis, then This is it. The time to decide that is here. And the technicals give you a clear topping pattern and a failure to overturn it today with fading momentum indicators. Now, that sure does look textbook toppish. It's not confirmed, but for me, it's enough to hold my shorts until I am told otherwise. Now, if there is a blistering rally tomorrow and I get, let's say, a clean 4-hour close above the high for this week, okay, back up. But otherwise, if the price action isn't saying it, I'm not doing it. It's the same thing with the dollar. It's the same thing with gold. All of them moved in the wrong direction for what my exposure is today, but none of them crossed any red lines for me.
I don't think we crossed the red lines either, Don. And I'm just from a tactical perspective right now, until we get above that 57.73 level from April 2nd, I think it's a better risk to reward to lean short than lean long.
I agree with that. I mean, I think that the risk is that because the market is now pricing trade deals, the market has been saying for a couple of weeks, oh, this is not what it appears to be. There's going to be a bunch of deals. This is all going to be mostly, theatrics, not without real economic consequences, but the real economic consequences will be more related to general loss of confidence in American leadership and short-term disruptions in supply chains. But to the degree to which either the deals take longer to have, it's almost like a buy the rumor, sell the news. You can see even that UK deal today kind of hinted at it, where actually announcing these bullshit deals is going to actually have a negative impact on the market.
When does that change in behavior?
July 4th.
So we get to the end of this 90-day window and we have concepts of plans, memorandums of, this was basically a term sheet that was signed today.
Right.
Yeah.
Right?
Yeah.
Right? I mean, like the details to come, a UK official is out here talking after hours that they see the 10% tariff as a baseline. They're going to continue to try to negotiate that down to get the effective tariff rate lower than that. And they see this as an ongoing conversation. So frameworks, again, we're on the off-ramp. That's great. But we haven't, dotted every I and crossed every T here yet. So hopefully some of the tariff rates do come in.
Close to it.
We need to get some of these things resolved quickly. Hopefully there's more in the pipeline. If he rattles off one a day for the next week, I think it's going to be great for market confidence, right? If it's all of a sudden Monday and there's the Chinese delegation goes home from Switzerland angry and, we don't get anything from Japan, India, South Korea, market might start to lose its patience again because it's a lot of time that's passing and a lot of countries to get through. And there are mechanisms to do this in like blocks, Ilya.
Mm-hmm.
They could do this through the WTO. Or maybe like,
oh yeah, we have
but
institutions for this, don't we? But no. See, in my mind, the reciprocal tariffs thing was almost like saying we're the WTO now. There's the WTO over there, and it has its rules. Here's our rules, and you negotiate our rules with us. We are the WTO.
Ilya, a few days ago, you and I were feeling pretty schmarmy about our positions in gold, feeling a little less optimistic and smug today.
Yeah.
Is this we talk about the buy America, sell America dynamic. Stocks up, gold down, dollar up today. Bonds we'll leave to the side for a quick second. Are we looking at the stars aligning here? Is gold giving us a clear signal? Is the dollar finally giving us a clear signal that we've turned the corner and we need not worry about the economic impact? The market already has that priced in. We need to think about what comes after.
I don't think that's what this is saying. Obviously, there is an unclenching here. There's no question. The dollar is particularly strong, which is not great for me. I'm still short, modest short. But if you look at the euro, if you look at the yen, if you look at the pound, if you look at the Aussie, if you look at the Canadian dollar, go down the list of individual inputs, because obviously DXY is an old legacy basket that's terribly skewed to currencies that no longer exist, like the Deutschmark and the franc and the lira. So I wouldn't sort of do technical analysis on that, or even sort of price dynamics analysis. But you look at the euro, you look at all of these things, and sure, the dollar is stronger, but it hasn't crossed any red lines. It's at the bottom of the range for the euro, for the pound, for the yen. All of those currencies are sustaining their April gains, and really their gains since the beginning of the year, though the dollar has managed to recover basically to the most recent range bottom for those currencies. But that's really it. There's not really a breakout here that's discernible. So far, again, if the price action shows it, sure, I'll step right out of the way. No problem. But it hasn't shown it. And so I remain unrepentant.
Unrepentant. I mean, I might tap out line for stocks, right? Gold, it's going to be $3,200 an ounce. Stocks get through 57.73. I will let the price action tell me. I have my concerns right now. Risk to reward for certain things leans in one direction. Dylan, people tweet this at me all the time. Dylan's so good with oil. Dylan nailed oil this week. People in the chat, what's Radigan doing with oil?
They better check themselves before they wreck themselves, my friend. That is an ill-advised way of thinking. I mean, I'm not gonna. You can think what you need to think, but better
don't think that. Don't think that.
Don't be thinking about that.
Okay, so what does a Mr. Dylan Radigan think about oil here? Because the OPEC news scared the heck out of the market at the start of the week, of course, right? And we find ourselves now not only trading back to having filled the gap from the open, but we're sitting at 2-week highs here in oil prices. Is this just a reflection of India, Pakistan geopolitical risk, Iran geopolitical risk around the negotiations? Or
no, I mean, I've been saying this. I think that oil is trading more as a proxy for recession/growth expectations more than it is conflict expectations. And I think that oil, I sound like a broken record, but I just feel like oil at those at its previously lower prices was seriously divergent from the growth expectations of the stock, or the growth/recession, growth/lack of growth expectations from the equity markets. And that if you believe in the equity market, which I kind of do, not entirely, but I kind of do, I just thought oil was at a price extreme and expectations for economic slowness were too low. And also not just economic slowness, but to the degree to which globalization exists and to the degree to which global trade exists, objects make their way around the world generally propelled by some derivative of crude oil. And so the other theory, I guess, could have been that, well, gosh, if there's going to be a trade war that stops things moving between China and the United States, or Europe and the United States, that not only will there be an economic slowdown, but the degree to which there is economic activity will be less energy intensive, because the overall shipping rates, meaning the amount of products being shipped, is also going to be lower. But to the degree to which there's going to be deals, or there are deals, whether it's a UK deal, South Korea deal, Japan deal, whatever the deal is, and they're going to keep coming. And to the degree to which the slowdown is not that severe, which is a subject of great debate, obviously, at this point. But that's where I was at now, relative to as was the case last year. When oil's in these middle areas, who could know, right? I was bullish on oil a minute ago when it was at a lower price point for the reasons that I just described. I don't know that that applies right now.
What's your
it's more middling, and to your point, there's more sort of ambient conflict energy out there because of the whole Pakistan-India tit for tat situation.
Yeah, Ilya, how are you approaching oil here at 60? It's obviously a different setup than it was back at 55 near the start of the week. It's a nice recovery. Is oil's rally today? Oil up, gold down, dollar up. Is this all the same story? That this big scare for global growth, we've backed away from that edge, and therefore assets need to reprice a world where we're not looking at, a U.S. economy going into severe recession, but maybe a few quarters of bumpiness ahead before there's recalibration?
I think that's what the bullish argument has to believe, because I think at the end of the day, this is about growth. It's been about growth since all of this began. Right? We started the year in a kind of standstill, having hit highs on major markets back in December of last year. We start this year in this kind of uneasy stall. Then mid-February, the data starts coming in saying all of this uncertainty around trade policy and fiscal policy more generally out of the U.S. is creating a dampener effect on activity. Business confidence is down, consumer confidence is down, everybody's hoarding their money, nobody's spending, nobody's investing, everybody's backed up because the fog is so thick, nobody knows what's going on and doesn't want to lay out capital. The sell-off that followed was a recession sell-off. And then in April became something else. And as it became something else, it looks like we lost Chris here, but no doubt he's heard this shtick before.
He can't take it anymore, Ilya.
He can't take it anymore. He's just I can't do it.
Talk about it.
I can't even do it. So with all of that, so April was scary and crazy and came back all the way, but the growth scare is still there. So I think for you to believe that we're going to go higher from here, you need more than just, the U.S. is not having a sovereign crisis. Yes, we know. We've had a blistering rebound. I think now you have to believe essentially that you're in a place where the growth scare is over. And if you believe that, then yeah, oil is a buy. I don't think that there's any evidence to suggest that that's the case. In fact, we just got S&P Global PMI data that has put the world at a 17-month low on the pace of economic growth. 17-month low. Which, by the way, lines up very nicely with the 17-month low on U.S. growth, because the only game in town since the middle of last year was the U.S. China is not any less anemic. It's not any more anemic, in fairness, but it's not any less anemic, and neither is the euro area. Those economies have been basically just spinning their wheels for 6-9 months. But the U.S. had everything going and no longer does. That's sort of the upshot here. Okay, they get a deal done, whatever that means, in Switzerland. What could it mean? Could it mean that the tariffs go back down to something adjacent to 2%? No. Could it mean that it's going to go down, let's say, to 10% between the U.S. and China fast enough that the economic impact of what's already occurred isn't felt at all? Sounds like pie in the sky.
I mean, what would you need to see to become optimistic at this point, Ilya? Is it all growth for you? Is it all a U.S. economic? And is there some what's the simplest thing that would catch your attention and move you to more of the recession's not going to be that bad and growth is around the corner kind of vibes? And even, I know it's all hocus pocus, but even with the Fed governors talking in the days ahead or in the day ahead.
Because it's all hocus pocus, I am forever and always a follower of the price action. And so if the S&P is going to break, and if it's going to push through these levels that were there before, and there's Chris, before Liberation Day, and if oil breaks higher, if copper breaks higher, well, then the markets have told you. There's no need to guess at that point. The markets are telling you. But they haven't done that.
Mm-hmm.
And they're reluctant. And because they're reluctant, I'm reluctant right alongside them. I am but a mirror of the price action as it presents itself here, because I think you can get into a lot of trouble saying everything sucks now and forever, and until I see the evidence that it doesn't suck, I'm not long. That's how you miss stuff, because the markets front run things not sucking by months and quarters. I mean, obviously, the most extreme example was the rebound in stocks at the in the midst of all the COVID lockdowns, just as soon as the Fed said the magic words. The rebound in stocks in March of 2009, while the whole world was still in deep recession. So I think you have to follow the price action and keep your narrative loose. But the price action isn't there.
After hours, the market's a little bit off 56.86 right now. Sector performance today had a pretty decent sheen to it. Among the sectors that we cover here, 16 of the 25 were in the green. Led higher by the energy sectors, which noteworthy because those alongside the banks, Ilya, it does give a growth flair in a rather traditional way to the market. Dylan, I ran this exercise earlier with Jamal, so forgive me for doing this again for people who listened to Futures Power Hour earlier. But let's say right before the election, something happened and I decided to take a long nap. I ate the poison apple. I'm like Sleeping Beauty.
Sure.
And here today, I wake up, and the only chart that I look at is XLF. I would think, wow, the American banking system's holding up. Yeah, the economy's probably going through something. It's moving sideways, but 49.86, I mean, that's higher than where we were before Election Day and then some. Things must be okay. The economy's doing fine. Are the banks telling us that we're just overreacting to everything?
I mean, I don't know if the banks are telling us that or not. Obviously, we always overreact to everything. I mean, that's just sort of par for the course. I guess I'm going to take what I'll call an Ilya-ism, which is the market can be at the exact same price point, but for very different reasons. So just because the levels are similar to where I would, that the same price point or the same price levels can be communicating completely different ideas, I guess would be the distinction between, just because the levels here and the levels there and you slept and it's similar, doesn't mean that the reason that the level was where it was, 6 months ago or 9 months ago, and the levels where it is now is anything remotely similar. And as a result, it doesn't mean that the expectations for the future are, that it's not discounting the same future, basically.
Oh, and by the way, look at XLF, and where is it? It's back where it has erased the Liberation Day gap. It's the pre-holy moly level. Well, okay, but where were we before the holy moly? A recession scare. Has anything changed about that? No.
No. High of 50.33 on April 2nd in XLF. The high today is 50.37 before we back down, so we can't quite clear that hurdle yet. The regional banks are looking a little bit better, of course, today as well. 56.85 on the close. The April 2nd high there is 57.28. We hit a high of 57.25 today. So not quite scaling through everything yet, but you can see how for so many of these charts, we're basically trying to cross the line in the sand. Semis are holding up a little bit better than everything else right now. They have made an advance through the April 2nd high. Technology, broadly speaking, has made that advance through the April 2nd high, although, here we are pinned near the pre-Liberation Day highs, and that's basically where we close today. It's just going to take a little bit more. A little bit more here, and you can kind of clear the hurdle. And this seems to be just a game of confidence, right? And Dylan, if we get another trade deal, let's say Monday, China,
another one.
You get another one. You get another MOU. You get another term sheet from Japan, from South Korea, right? They bring DJ Khaled in there, Ilya. Another one, right? So
there we go.
I got the reference.
There we go. Come on over. The hip hop joke water is fine.
Dylan, I think that would actually be the most constructive thing, and you can kind of look past the economic data then, because you see that it's off ramp into an off ramp into an off ramp into an off ramp. The worst thing that happens is that you get no other deals next week, right? We got to get more deals in quickly, or at least term sheets of deals in quickly to keep spinning the wheel right now.
That's right.
India seems like it might not be a priority at this point in time, given what they have going on in Pakistan, or rather in Kashmir versus Pakistan. That probably takes a back seat. Dylan, can I throw a conspiracy at you? I think I should.
Please do. I love a good conspiracy.
Ooh. Is China behind what happened in Kashmir a few weeks ago? I can't help but think of this timeline where we've seen over recent months that American companies have been talking about and taking steps to move manufacturing from China to India. We here in Overtime, just a week and a half ago or so, discussed a news report out how Apple was trying to move some equipment to India, and instead of facing the typical 4-day delay, delays began to stack up into several months, and none of the equipment has been able to be moved out of China into India. Over the past few weeks, we've heard China call Pakistan an all-weather ally. As the trade war is ramping up, there's this horrific terrorist attack, obviously in Kashmir, and now you're engaged in a conflict between two nuclear-armed powers at a time when American companies are trying to figure out where they can re-domicile their manufacturing. India doesn't look like it's such a hot location all of a sudden. You probably want to wait to make any formal announcements.
I mean, I hope if the Chinese did that they covered it up nicely, because that would border on, that's some pretty nasty poker right there, my friend.
Haven't historically trade wars led to real wars?
They have.
All-weather ally, by the way.
Is a very strong term.
What a strange choice of words. What a strange choice of words. I mean, you sort of, when countries want to talk to each other, but they're not talking to each other, diplomacy often takes on this almost coded language where you're trying to tell the other side something without telling them. What an interesting choice of words.
I can't look past it all. I just think that, we talk about this being a chip on the field. If companies could just pick up and pack their bags and move out of China, then this wouldn't even be a conversation. Keep the tariff rates on. They move to Vietnam, Cambodia, India, Thailand, right, wherever. Cheaper labor, but not in China still. And now one of the big places that Apple over the years has been moving iPhone production to is probably taken off the map as a desirable location in the short term. So a piece of leverage is off the table for the U.S., right? Like our companies are just going to move elsewhere. They're just going to move to friendlier nations where they can, ally reshoring, friendshoring as we call it, right? We're just going to friendshore everything. We don't need to bring the factories back to America. The factories go back to countries that we have low tariff rates on that are our allies. Well, the biggest one that has the largest source of labor for electronic goods is now in a hot conflict with another nuclear armed power. What do they say? Two coincidental.
Masterful. If it was done, it would be a master play.
I can't link the two. I mean, I don't find I also rewatched all the Mission Impossible movies recently, so there is one that takes place in the River Valley. Mission Impossible Fallout, which is just a fantastic. Tom Cruise makes great movies. It's too bad he's such a.
He really
lunatic.
makes a fine film. That man he's a talented individual, I think.
I gotta rewatch Top Gun 2 again. It was so good. That was a really good movie. Dylan, talk to me about Tesla. First buddy here, a little bit of a recovery yesterday, as we noted on the show, right up against that 1 month moving average. We talk about a potential trade up here in Tesla, where if this is a double or triple bottom, the measured move being about $85 or $90 wide, depending upon your measurement points, sees a potential trade closer to 380, 390 moving forward. Today's obviously a good day. Tesla's up 3.11%, quietly a leader here. Is a way to trade this market. If the market's going to go up, right, if we're wrong about stocks that we're reached a near-term top, wouldn't a name like Tesla be one of the leaders in a continued
100%.
bull market, Matt
Yes.
Rally?
I mean, I think, I probably, if the market is going to go higher, which who knows right now, honestly, but if it's going to go higher, Tesla's going to be one of the, I would speculate that Tesla will be one of the key performers.
You'd think on a whole host of grounds, if only because sure, there is a rebound, and if there is a rebound and it's real, then it's probably linked to some kind of unclenching with the U.S. and China, which of course helps Tesla directly, but also in that the stock has become something of an avatar for Elon's proximity to the administration. Maybe you'd get a kind of sentiment improvement also, because if you walk off the trade war and the things are okay broadly, then a lot of the ill will maybe takes a graduated step lower, especially since a lot of the firings are being undone. And so with all of that, then maybe Tesla just gets a little bit of a, maybe we don't hate this quite so bad now type of a response.
Well, the auto manufacturers today, all up across the board, except for Ford, which is off by 0.05%. You see here, Stellantis was up 4.61%, Tesla up 3.11%, GM up 4.11%, outperforming the broader market. And Tesla itself, this is the one thing that drives me crazy. You have Ron Vara, a guy who is a plagiarizer and a liar about his credentials, and Peter Navarro giving the president trade advice when Elon Musk is right there. And for all the complaints I've given about him, guy is one of the best domestic manufacturers in American history, right? He knows how to stand up a supply chain better than anyone else. And he's done it in a manner where basically it's all local sourced. So Tesla is one of the companies that has the least impact, the lowest impact, thanks to these tariffs. Why wouldn't you be using Elon Musk as a guy to advise you on how to rejigger onshore manufacturing? I digress. The fact that these companies are up mostly across the board today tells me there's more relief coming. And we saw the UK steel and aluminum tariffs zeroed out. Is there a path forward for Mexico, for Canada, perhaps? If there is, are these manufacturers underpriced at these levels? They're probably going to face difficulty if consumption's down, Elia. That's obviously not a debt, right? But longer term holding, are they a going concern? Yeah, they're going to stay in business.
I mean, sure.
But if they're getting carve outs, then the market's probably underpricing them. And today's move across the board, it wasn't just a Tesla thing. It was all the manufacturers. They all had a nice little bump. I would point out technically GM, it had this false breakout in March. We stay in that downtrend as we've been meandering here, treating former resistance as support and trying to trade through former swing highs. So you can see across the board, again, GM looks like it's trying to bottom, like it's trying to climb out of its downtrend. Okay, closing back above the 1 month moving average for the first time since February 25th today. And Tesla's potentially on the precipice of a breakout. There might be something big in the works in terms of a trade deal. Maybe it's about U.S., Canada, Mexico. Maybe that's the next domino to fall, Dylan, and that's like the real confidence boost you need for the market to fully buy in that this is all just a game of 4D chess. As much as I hate to admit that, right? Because it contradicts my own point of view about how this has all worked out. But wouldn't that validate then the bulls for the next few hundred points?
For sure it would. I mean, I think that's kind of the bull. I think that's why the markets in mid-April came back from those lows. Was on the belief that wherever it's going to come from, whether it's a Mexico, Canada, U.S. deal, or whether it's a China, U.S. deal, or some combination, Europe, Japan, whatever, that one way or another, this is all going to end up in a bunch of deal making. That basically what was announced at the beginning of April is nothing more than a negotiating position that will never come to fruition.
Ilya, I think the plan for me tomorrow is I'm going to stay short NES. It's not changing. But after talking about it yesterday and today, I think it's going to be worth dipping our toes into something like 71 days out in something like a Tesla or a GM or a Stellantis, the long 350, short 400, risking 1 to make potentially 7. That's a long time. If Tesla is going to break out here, it's the kind of stock that moves in leaps and bounds. And getting back to 350, that's nothing. We went from 350 down to 300 in the span of like 5 trading days. Tesla moves like a meme. So,
especially here.
Yeah, I think, I find myself very conflicted. I'm not going to shy away from that. Monday, great day. Literally not a single thing I had. Except for Eli Lilly and my long-term portfolio and on the tastylive account, nothing was down. Today, everything except for one thing was down. So I got a
rough day.
Yeah, I got to say,
it's been a rough day.
The week is basic. I'm still up on the week. It's not as good as it was yesterday morning. But if I'm wrong and we're wrong still, we got to have something in our pocket that takes the edge off.
To me, that's the Russell. Because while a lot of the stuff in ES and NQ is easy to argue with, the Russell is harder to argue with. I mean, take a look at the 4-hour or the 8-hour here. That looks like maybe it cracked. Now, the Russell is less liquid. It's not as well appointed. But if you look at sort of where you've ultimately landed on this, it does look like maybe, just maybe, and again, it looks different depending on what you want to look at. The break looks a lot more convincing on the continuous contract than it does on the June, but nevertheless, on the 4-hour chart, you have a break. You've taken out the previous high. So I think if you look at all of this, if you're going to hedge somewhere, maybe what you have is a long Russell, short NASDAQ, long Russell, short ES kind of a vibe here, if you must hedge.
Interesting. Yeah, the Russell perking up today and leading is something that I don't think should be dismissed. They obviously are going to be a little bit more sensitive to cost increases, and the fact that there's a zeroing out of the steel and aluminum tariffs, that's something significant that we do trade with the UK about. We don't, they're not our biggest trading partner. They're in the top 10, but the metals is a big component of that relationship. So with that said, you find yourself with domestic manufacturers now having a little bit less pressure on them. They're not out of the woods. If this takes a step further, and again, more of these type of deals coming through. Dylan, you mentioned something earlier that I can't get out of my head either, though, as we wind down the show for today and the week. It's very rare that a president of the United States says that it's a good time to buy stocks, or you must buy stocks now. I think of Obama in 2009, 3 days after the market bottomed. I think of Trump in April. And I think of Trump now in May. Trump in April was obviously, he said it that morning, and then the NASDAQ was up 10% later that day. That obviously didn't play out the same way today, of course. But if you bought back when Donald Trump said buy stocks and you bought at the high of that day, you're still up. But you said that he meant to front run some of these things. And there might be some evidence that that's been occurring already in some of these markets. So How should people like Ilya and I reconcile that we have legitimate fundamental reasons to potentially be short still, knowing that he may be teasing something bigger around the corner, as he is wont to do as a TV showman in his heart?
I mean, I think you have to internalize that there's a 100% chance of a series of trade deals and be comfortable being short despite that. You can't be short hoping that there's not going to be some Trumpian TV trade deal.
Sure.
There's a 100% chance of that. You have to be comfortable that the levels right now already reflect the expectations of that trade deal. But what's not priced in is the recession that's going to be caused by the disruption and uncertainty in the flow of products and services while the deals were being, while trade deal theater was being produced.
That, by the way, might be the ultimate in the holy moly, as it still looms ahead, where the peak in this optimism is some kind of sign of a U.S.-China off-ramp. The dust lands. Everybody looks around and goes, wait, where is everything? And where is oh, yeah, there's a 5-fold tariff that's been hitting us going into mid-year, and that's going to keep on being with us for a while. In fact, the PMIs that S&P Global and Caixin released today for China was writing and saying, you see how there's people being fired in China? You see these job losses in China? That's because it'll be the second and third quarter data that really tells you what all of this has already cost. And that's Caixin talking. That's from a Chinese perspective. Not the governments, mind you, but private sector.
So talking of price increases already happening, this is my piece of anecdata. I like the Echo Spot. I have one here in my office. I have one in my kitchen. I have one in my bedroom. I have one in my gym. I like being able to talk and say, put on music. Set a timer for the laundry, right? Glorified alarm clock. The Echo Spot that I got.
I'm too much of a Luddite to talk to Skynet.
Oh yeah, no, I put listening devices all around the house. So, government, please listen in. I purchased it on October 1st, 2024. It cost $44.99. It is currently listed on Amazon.com for $64.99. Same exact model. So the price increases for things are going up. When it bites, it's going to eat into consumption, right? We only have so much money to throw around. So I will not be buying a new Echo Spot for the bathroom. I'm kidding. I wasn't going to do that. Don't need to listen in there. But we do see that ultimately just doing a spot check of going through goods of toothbrushes that I've purchased in the past. Those have gone up about 70% on Amazon, everything across the board. So do due diligence yourself, right? Look to the things that you commonly buy in the store and see if they've gone up in price. And maybe like, oh, it's only 50 cents. But yeah, 50 cents on a $2 good. Well, that's a 25% price increase. And with enough goods, that's problematic. So I hope.
Tell you what, tickets to the Outside Lands Festival here in San Francisco have gone up astronomically. I'm not sure that the trade war is at fault, but it might be emptier lawns this year.
I hope I'm wrong, Ilya. I hope we are wrong. I do. I hope we're wrong. I hope we lose money on our shorts because ultimately it means we're out of the woods economically and we're not staring down a self-made crisis. Like that's legitimately. I'd rather be wrong.
No, I'll gladly switch to making money on the long side, being long dollars and long U.S. stocks. La-di-da, let's go. That would be great. I just don't see it.
With that, Overtime is out of time for today and this week. We'll be back on Monday, same time, same place, 4 p.m. Eastern, right after Last Call. So for Ilya Spivak and Dylan Radigan, I've been Chris Vecchio. We'll see everyone soon. Hope you have a good weekend. But we're not done here on Tasty Live, of course. Ilya and I will be back tomorrow for Futures Power Hour, but he's coming up next with Macro Money. See you soon.
See you there.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What is your favorite option strategy? What is your favorite option strategy? What's your favorite option strategy?
Oh, the Condor. I love me an Iron Condor. It doesn't always love me, but I like defined risk. I like the wings. I think that you can get like some directional exposure if you want to. You can control the position size a lot easier than undefined risk, so that's just my go-to.
It really depends on the time period. Right now, it is the short put spread, right? But a couple of months ago, it was a calendar call spread, trying to take advantage of upside moves, oddly enough, that we were seeing in the market.
Call spreads and put spreads. You know, I'm rocking on a budget here, so you know we got to offset some of those debits.
Got to be a diagonal spread. Short a little bit of front month volatility, long back month gamma, and a little bit of volatility there as well in the back. So it allows you to be directional, but stay small with the position.
Diagonal spread. It allows you to stay defined risk, play a directional move, reduce cost basis with the sale of the short option in the front, and buying a lower IV option in the back.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and tastylive does it. Again, they teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We have a trade deal, everybody. I guess. That's the news that's elevating the markets today. But the real question is, can we get something done on this trade war that really sticks and really matters for avoiding global recession? That's exactly what we are going to tackle here on Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live, and we're going to take a look here at what is probably the biggest real event risk for the markets, the evolving relationship on the trade front between the U.S. and China. And take a look at some of the economic data that's informing the state of play here, as well as where we're going next. But first, let's take a look at the price action, because it is certainly of a more chipper variety here today, but again, very interestingly soggy into the end. So obviously we've had a blistering rally here for the S&P 500 as a kind of bellwether for overall risk-taking from the panic lows in April, what I've come to call the holy moly. This is the Liberation Day gap right here. And this is where the markets go, oh no, is this a sovereign or a currency crisis in the United States? And then as this volatility shakes out, the answer quite reasonably, I think, ends up being no, it's not, because even if the U.S. were to unilaterally withdraw itself from the global trading order that it has itself engineered, and which has the dollar and the U.S. Treasury bond at its center, there'd still be no viable near-term replacement for the dollar or the Treasury bond as the most liquid, most viable unit of commercial exchange and the most viable benchmark for riskless interest income that is available. And so with that, you still have the global architecture as it stands. And so the markets unclench and we get back to this starting line. We get a little bit of a pop yesterday in the wake of the Fed policy announcement, despite some initial unease with the lack of urgency at the central bank. But then really the news today is what gives us a slightly higher high here. If we go back and actually poke at the high that was there before Liberation Day going into the month of April. Interestingly, we don't stick the landing. We don't actually manage to get over it, and we ultimately recoil back into the range for price action that has emerged since the beginning of the week. We failed to clear Friday's high. We failed to make headway through this resistance that lasts, and that we actually got all the way up there only to come back in, that can be a sign of technical exhaustion. We'll, of course, wait and see. But really, the question here of motivation is very juicy indeed, because what catalyzed this today seemed to be the announcement of a trade deal between the U.S. and the UK. Now, obviously, this is not exactly the same thing as many of these negotiations, because, of course, it is the UK. It is one of our closest allies from the womb, as it were. Moreover, it is a country with whom we ran a trade surplus last year. Finally, the tariff of 10%, the benchmark tariff of 10% established by Liberation Day, which was itself a 5-fold increase on the 2% average tariff that was there before then, that stands as a consequence of this quote-unquote deal. And I say quote-unquote because nothing here appears finalized. The UK is at pains to talk about ongoing negotiation as all of this is occurring, despite the triumphalism from the White House, because, of course, they don't like that there is a 10% tariff, even though there was a little bit of a carve-out to lower auto tariffs from 25% down to that baseline of 10. It is still a lot higher than where we were before the calendar turned to 2025. And this is the 9th largest U.S. trading partner. It isn't the first. And so if what we're looking at here is optimism about the idea that deal making can happen and tariffs can come down, conceptually, the real test of that concept would be some progress with China, where, according to Treasury Secretary Scott Bessent himself, there is now an effective embargo on what is the world's most significant leg of the supply chain, the linkage between the world's number 1 and number 2 economies. So it'll be very, very interesting indeed to see if any of this holds up as Bessent heads to Switzerland to meet a senior Chinese trade delegation, ostensibly to kick off talks. And of course, before then, the posturing is loud and heavy. Asked whether he'd lower the tariffs from 145%, the president flatly said no, that he would not do that as an inducement for talks to proceed smoothly, that would be part of the talks themselves, although he did signal that the tariffs won't go above 145 and that they have a natural direction to come down from here, but said he would only do that as part of the negotiation. And of course, the message from China, the spokesman from the finance ministry there, saying if the U.S. wants to talk, it needs to stop exerting pressure. That is to say, we can talk about a trade deal, but you need to lower these tariffs first. So neither side wants to blink here, seemingly, as we head into these talks. And China has loudly said, well, the U.S. wanted this meeting. We still firmly oppose what they're doing, as if to say, we're not going to look like we scrambled to the negotiating table here. They are. And the U.S. is saying nobody is scrambling anywhere. And so both sides seem to want this off-ramp, but neither side seems willing to take a step back from the breach. And so it is with this in mind that we're going to get some very interesting economic data coming out of China to set the stage, because while there is a stalemate, it is a waiting game and beckons us to take a look at who is going to blink first, or at least where the economic damage might strike hardest. So incoming data out of China expected to show that export growth slowed sharply in April from 12.4% in March to just 1.9%. Imports, meanwhile, continued to flounder yet again, a negative number expected, down 5.9% year on year. None of this, of course, speaks to anything but weakness, and more importantly, that melt up in imports that you saw in U.S. first quarter GDP numbers. That, of course, looked like the front running of tariffs, as did the massive build in inventories. But China's key role in supplying that front running was, of course, firmly on display here. Going into the beginning of the year, we had a surge in exports, and indeed, even coming into the election last year, some pep there, but that has clearly started to unravel as front-running tariffs that have, of course, now already occurred has basically run out of runway. Meanwhile, domestic demand has been getting more and more anemic since the end of 2023, where it peaked, and that continues to be the case. As if to highlight that point, we have inflation numbers coming out of China expected to show another month of negative inflation, 0.1% year on year expected. That, of course, speaks to the absence of price pressure as catalyzed by demand for consumers. And then on wholesale prices, it's been all negative numbers for a long time, going back to the middle of 2022, and it's not getting very much better there. Again, speaking to how much throughput there is through the still most significant node of value add production in the global supply chain, how weak demand is for wholesale output, and so how weak the global trading environment actually is, and how much China is able to capitalize on it, which is obviously not very much. This continues to be a story of weak demand, both for consumers and for firms that supply both them and the external market. Now, earlier this week, we had the S&P Global and Caixin private sector estimates of Chinese PMI data. These are purchasing manager indexes, of course, as ever. 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, I should say, the faster the growth. The further you go below 50, the faster the contraction. Take a look here at the composite index, and you find a 3-month low on economic activity growth that's just hugging this 50 line. So we've slowed to near standstill, and current activity is the slowest it has been since January, telling you that indeed there was a ramping up in February and March, and then in April it seems to all have come undone. You can see that here in the breakdown between services and manufacturing, and you can see that manufacturing in particular has taken a dip here, ostensibly as this front-running of tariffs ran out of juice. Interestingly, the 3-month low on growth, that matches up with what we got from official sources. China, like the U.S., has 2 versions of these PMIs. One of them is from the China Federation for Logistics and Purchasing, which, alongside the National Bureau of Statistics, makes the government's version of PMI. And here, what you find is indeed standstill. The composite is at 50.2. Services has slowed, but it's really the story in manufacturing, which is, again, contracting, and contracting at some of the slowest rates we've seen in this entire sequence. We're basically at the bottom of the range for manufacturing performance going back to early 2023, which, of course, reiterates what we've been saying about China for quite a while. For 8 consecutive quarters now, China has had economy-wide deflation. That is to say, real GDP has run faster than nominal GDP, implying that the inflation adjustment between them is negative. That, of course, means that basically the whole economy is on discount. If prices are falling, then there is no demand to beckon them higher. And so the world's second largest economy is basically on life support here. It's treading water. It's not really going anywhere. Moreover, the deflationary gap is actually getting more severe over the past 3 quarters. So we're in a situation where China's economy still looks to be in very bad shape. But then on the flip side, of course, we got numbers out of the U.S. that don't paint too much of a better story. S&P Global PMIs give us a composite at 50.6, near standstill. If we look at what this compares like with the other set of PMIs out of the U.S., which also does too, that this one is from the Institute of Supply Management. There's a little bit of a difference in the components. So here the manufacturing is obviously weaker than it is here. It's 48 there. It's 50.2 here. Services is a little bit weaker here, 50.2 51.8 versus 51.6. But the upshot is basically the same. Both of them give us a composite level that is just above 50. And we don't have one calculated here because that's not the way ISM does it, but it's not easy, or it's not difficult, rather, to surmise. Manufacturing is a smaller component of the average here than is services. And so if you average these two, but you tilt it in favor of strength because services is a bigger deal, well, then you end up somewhere just above 50, give or take. So whatever the specifics internally, the bottom line is since the beginning of this year, we've moved off some of the strongest growth we'd seen in 3 years or so. You can see that across the board here, down to what is essentially standstill. And of course, when you compare that across the US PMIs, both versions of the ones from China and, for good measure, that of the Eurozone, you have convergence on standstill across all three of the major economies powering global growth. Whereas from the middle of last year, Europe and China were weakening into basically an idle state, but the U.S. was powering on at some of the strongest growth we'd seen, especially toward the end of the year, since all the way back in early 2022. Now, across the board here, we've ground down to basically standstill. And of course, we look at these three economies because together they comprise 58% of global GDP just by themselves. Never mind their knock-on effects on the remaining 42%, which are for the most part vendors that depend on demand from China, the Eurozone, and the US in order to have GDP contributions of their own. So if this is the story for the engines of global economic growth, that is convergence on idleness, well then it's hardly surprising that when you get the S&P Global's worldwide measure, the global PMI number that they put out alongside JP Morgan, you end up with a 17-month low on economic growth. And here's that pop in manufacturing around the front running of the tariffs. You can see it here. But that's hardly the bigger story because, again, that's a smaller piece that is services, and we can clearly see here, services has been steadily slowing, especially since the beginning of the year, and is now at the weakest levels we'd seen since the latter part of 2023. Take a look at the breakdown of the components. None of it is especially encouraging. Output growth, much slower. New business growth, much slower. New export growth has gone from growth to contraction. Future output, that is a measure of sentiment, sharply lower. Employment from growth to standstill. Outstanding business was shrinking, is now shrinking at a slightly faster rate. Input price inflation weakening a little bit, ostensibly because of demand destruction, but output prices actually accelerating, as if to flag that stagflationary risk that has come out of both the U.S. Activity surveys, the ISM and the S&P Global, as well as the Fed itself, when Jay Powell spoke this week following the FOMC monetary policy announcement. Why do we care about this? Well, clearly we can see that this composite PMI globally has been a pretty good approximation of where global GDP is heading. And the trajectory here seems to be that the path of least resistance is still down. Come all the way back to where we are on markets and consider that if the path still is toward recession. If the US and China have converged on standstill where Europe was waiting for them and the global economy has not started to improve yet, then there is a long tail to any negotiation to really put this recession monster back into the box. And so it becomes very difficult to envision how you don't get a global recession in this environment. Now, maybe there's a China deal this weekend, or at least a very cordial meeting with a clear sign of an off-ramp, but the damage has been done. And it will take months in terms of recovery to even begin to see that there is a dip, and then to envision that after that dip, there will be a rebound. And maybe that's enough for sentiment if a deal is done. But as this posturing continues, the economic weakness that is the foundation, while the posturing goes on, suggests that the recession is very close at hand. And the question now is, can it be managed to something mild? And something that sentiment need not be worried about. And if not, well, then it's what we were worried about on the way to exactly where we are now. And although the proverbial holy moly may be over, this part of the story is still very much in play. That's Macro Money for today. We're here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. That makes this the last show of this week. Macro Money will be back Monday next week. I'll be on with Chris for Futures Power Hour tomorrow and on Mondays, as I am every week. I'm on with Victor Jones for The Price of Truth on Tuesdays, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Thanks for watching. Macro Money's back next week. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What is going on, everybody, and welcome back to Risk and Reward with Gus and Errol. Really volatile day in the market. I know there was a lot of anticipation with Trump, a lot of conversations. We'll get into all of that. Going to be talking about student loans today, so I'm excited for this topic of the day. But my brother Gus, how we doing today? We'll get into it here in a moment.
Yeah, doing good. It should be a fun one. I agree. I got a haircut scheduled uncomfortably close to this stream, so I'm gonna be booking it out of the studio once we get off here. We'll see if I'm able to make that turnaround or not. I don't know. But other than that,
what kind of
good.
haircut? Like length?
Just length. I just need to get it cleaned up. I try to keep it like just above my eye, so I'm well past that level. But
well, now we know. So whenever it gets to that level, everyone, myself including chat, we're gonna let you know it's time.
It's true, and I'm like, I don't know, it's overdue. I'm probably like 2 weeks past when I was supposed to go back. I try to do like every 6 weeks, every 8 weeks, something like that. So yeah, reining it back in. But yeah, good day as a whole. Nice bullish day in the market. Kind of spearheaded by some positive comments from Trump surrounding the UK trade deal this morning, and then everything else to that end. But yeah, portfolio is mostly long delta with a lot of shares. So when the market goes up, I look like the greatest trader alive, and today is one of those days.
I hear you. I have such an extreme short bias, like we've talked about over the last couple. You can just I lean short, and I'm glad the other day we ended up throwing on that long Apple. And that long, what was it? Was it Meta? Another underline we had thrown. So we got more long delta on, even though I wasn't feeling like getting long, but it definitely saved me in case something like today happened. You know, today happened, and those positions were able to hedge the existing positions that I had on since I was leaning such short negative delta. But that's how it's going for me on my end. If we have enough time, we'll get into the platform, chop up a little bit more of these trades. Anything new though? Anything new you've been eyeing? Anything new you threw on that we need to know about?
Yes. Yes is the short answer. I picked up Match.com this morning. Very similar sentiment to what I was talking about this past Tuesday. I posted it in the follow page, but the idea is just that they just had a very strong earnings call with very strong numbers and what seems to be bullish forward guidance to me. And they dropped almost 7% this morning. It's sort of a sentiment dip. Bumble fell off, and so people believe that Match is following that. But Match.com is Tinder, Hinge, and then they have like 2 other sites as well. But I really liked the way that the earnings call went. They said that they're doing all sorts of different things to try to address the slowdown in their users. People They found that holistically society was growing a little bit tired of dating apps, and so they're trying to find ways to shake it up, something that I saw that I didn't know existed. I'm not on these dating apps, but on Tinder, apparently now they have a double date function where you can like group up with a friend, like a buddy, and then find two other friends that also want to go on a date. And they said that they've seen success with that. Numbers are steadily climbing back up. They beat revenue, they beat EPS, fundamentals look sound, and I say it all the time, America is getting lonelier. So I'm bullish there, but yeah, I added some shares in the dip, and then I also picked up some pretty serious leaps. September 19th with 20 is my critical strike there on some verticals. So
yeah,
feeling good about that one.
That's
good buy low spot.
That's a really interesting feature or function that they added. At first, right off of hearing that at face value, I was like, "What? That's weird." But then when I think about it again, that would make a lot of sense. Number one, breaking the ice, meeting strangers, and also, if you're anybody for that matter, but especially if you're a lady and you don't want to go meet somebody randomly, you want more of a group setting. I can see why that might be beneficial. Super different. It reminded me of the Uber share ride where you can share rides. So that's what that feature reminded me of. But really interesting to see how that landscape's adapting.
I have questions about it. I would actually like to know a lot more because how does it work? How does the initial messaging phase work? Who's talking to who? Are you guys independently deciding which of the other pair you want to go out with? I don't know. I have more questions on that front. But holistically, yeah, I think it's a cool idea. And then the other thing that they're implementing, which I think sounds, dystopian and kind of a little strange, is they have like a AI voice agent that you can practice flirting with. It's called Game. Which is very odd to me. I suppose I wouldn't fault anybody if you need some reps. Apparently it is pretty well done. But seems a little strange. I don't know if I would sit in my bedroom flirting with an AI for practice. That's
no. This kind of ties into the conversation that we had a day or two ago where we were talking about there's a difference between communication and socializing. And it's looking like there's being some efforts for that social. So AI is playing a role in terms of sharpening your social skills. So what can AI not do? Impressive nonetheless. We'll see how those things pan out. But yeah, no, dating apps, extremely popular. Not on one. I'm getting in a lot of trouble if I was on one, but no, I love it. We'll go ahead and jump into these slides here as we chop it up a little bit. I know, the topic of the day is going to be student loans are back. Student loans are back. What do we think about this so far, Gus? I know we had a little bit more conversations about the resumption of a lot of these things and the potential consequences as we're about to get into it. But when we talk about this topic, what first comes to mind? What do you think? What do you feel about this?
Yeah, student loans. It's been a long saga. Began in 2020 with all of the other COVID craziness. Payments technically resumed in 2023. Then they kind of technically resumed in 2024, and now they're really resuming in 2025. Complex, nuanced thing. We have a very wordy first slide to set up the timeline on all this, so we're all clear-headed in. But yeah, I don't know. I think it's interesting. I feel for those who have defaulted on their loans or who are now going to have an additional expense added to their monthly or weekly expenses, however they may choose to amortize it. But at the same time, I kind of see the other side of the coin where I'm like, man, if you haven't made a payment in 5 years, maybe this is on you a little bit. So yeah, it's an interesting topic with a lot of nuance, some implications on the broader economy, and yeah, we're excited to get into it.
Absolutely. So President Trump has ended the suspension of student loan payments. Here's what it means for the economy.
Yep. So first of all, let's set up this timeline. Initial pause on student loan payments in general began in March of 2020 with the CARES Act, which was passed by President Trump at the time. So that effectively lasted for 3 years until September of 2023, and there was an extension by the Biden admin in the middle there. But until September 2023, when loans began accruing interest again, but payments were still not due until really September of 2024. They started accruing interest September 1, 23. October of 2023, you were supposed to resume payments. But until the end of September 2024, they had this 12-month on-ramp period, which is specified here. Borrowers were shielded from certain penalties. It couldn't hurt your credit, and you couldn't default, was the situation. So basically, you didn't have to freaking pay until September 2024. April 30th of this year, 2025, marks 6 months since that on-ramp period ended. And then the Department of Education is officially resuming involuntary collections on those who have defaulted as of May 5th, which is 3 days ago at the time of this recording. So that means that the Department of Education can now take wages from people. They can get into your tax refund. They can get into your Social Security benefits. Department of Education is going to do whatever they can to start actually collecting on these payments once again. And we have 5.3 million borrowers who are currently in default, meaning that that would be they defaulted sometime in that on-ramp period or sometime into 2025, but you couldn't default in that on-ramp period, so you didn't technically default until April 30. This stuff is it's a very nuanced timeline. But the point is, pause began in March 2020, and we are officially, actually, for real, resuming student loan repayments right now, and the Department of Education has the authority to garnish wages, taxes, Social Security to make it happen.
No, absolutely. I think, like we talked about with inflation, interest rates, all those topics that are very prevalent right now, just like tariffs. I think whenever these things come about, you become extremely educated on these topics. And I think, now that this is going to be a very common topic because it's being resumed, I think a lot of people are also going to be getting educated, like myself. Like, again, there's just very small, starting, pausing, deep. What does that mean? So I know there's little intricacies that I picked up on and have an even deeper understanding on, just because this topic is very common right now, and we're talking about it, we're researching about it. So this is going to have huge implications. So I'm excited to see how those are going to pan out. But we got Donald Trump and Joe Biden right here. What do we got on this one?
Yeah, smiling Trump and Biden here. As I said, Trump initiated the pause in March of 2020. Congress extended it, and then Biden extended it slightly further, but it eventually became too much of this giant outstanding bubble of loan debt. There was budget issues, legal pressure and also some lobbying from the people who stand to gain from these loans being repaid. And SCOTUS, the Supreme Court, struck down President Biden's notion to fully forgive student loans in 2023. So essentially, with all of the nuance that we just outlined in the first slide, we are still basically just on the end of the original framework that was set up with the CARES Act in the first place, with some slight modifications. But this is the timeline. This is how things were supposed to go. And once again, I kind of circle back to my original point of, not only did you know this was coming, you had 2 or 3 extra years on what the original timeline was. This is not a surprise. Is really the point here.
Yeah. Chad says, thanks, Donald Biden. There we go. 100%. There's a little bit more context on these student loan repayments, but let's talk about some groups that'll be affected. Recent graduates, obviously, 2019 to 2023, especially. Many of these borrowers entered repayment during the pause and haven't had to make a regular payment yet, making the adjustment financially jarring. That's kind of what you just mentioned. It's been 5 years. Have you not made a payment? So it's been some time, and I would argue maybe some negligence to some, and then also some people probably forgot. Like, even just the topic of student loans, it's like, oh, I totally forgot that was a thing. We heard about the pauses, we heard about this, that, and the other. Then we're getting hit with inflation, CPI. Then it's just like, oh yeah, student loans again. Low income borrowers as well, those earning under 50,000 annually will definitely feel the pinch, especially with inflation still affecting essentials like rent, groceries, and then again, borrowers with no degree. This kind of all of these bullet points really come down to the same bottom line. And about budgets are going to start to get squeezed here a little bit, but borrowers, with no degree, many took out debt, didn't complete a degree, limiting their income and potential while still owing loans. I would say that, and then also, I know we're going to start seeing a lot more shifts in our economic environment. I think this is a really interesting topic. I don't want to go too off course here, but getting degrees that might not be in the job market by the time that you graduate, or even maybe 2 or 3 years after you graduate, because whenever you're finding a job, you're not looking to have a job for 2 or 3 years. You need some long-term stability. So I think, with the rapid development of the technology that we're going through right now, it's going to be interesting. Like, I don't want anybody to be in a difficult position, but it's going to be interesting to see how, with all these new tools, AI softwares, what, areas and occupations are going to be in less demand, and you might be going to a degree. You might be in your 2nd or 3rd year, recognizing that, this occupation isn't even in demand anymore because of the development of technology. So a little off course there, but just going to be interesting to see how these things pan out. But obviously, borrowers with no degree, first generation college students, might be, family situations. Everybody's situation is different. Often lacking family financial support, navigating repayment with limited financial literacy or guidance. And again, we're adults. We can't take out these loans without being 18 anyways. But I think it's still important to at least acknowledge, everybody does come from a different situation. Some people are paying for their college while they're in college. And some have the support of parents that some might not, right? This isn't an excuse for anybody to default on it. We're all responsible. We're all adults. But I think during this time, it's going to be important to at least acknowledge that at least. But right.
I agree. I think that that's a very valuable thing, a very important thing to acknowledge in the grand scope of all this. And also, while you are technically an adult, once you're 18, you're still very much a kid. Your brain is quite literally still developing. And I will note that, while I'm kind of, I'm not making light of the situation, but while I'm saying like, how could you default after 5 years? I also understand that it is kind of predatory the way that student loans work in the first place. Colleges will give you bad guidance, will encourage you to get a bad degree that is not going to pay well and to take out $100,000 in loans to do it. And that's what's always been the craziest part about student loans to me, is that if you wanted to get approved for the same amount that you get in student loans, but for a house when you're 18, they would say, hell no, you have no income. We're never going to give you this money. But then for some reason, when it comes to student loans, you're suddenly just instantly cleared to take on 6 figures of debt in many cases. And it is, I don't know about predatory. Maybe that might be too strong of a word. But there's issues with this system. I don't mean to make light of it.
Absolutely. No, absolutely. And I think that's a pretty accurate word. I think we could call it how it is. Again, we are all responsible for the choices and decisions that we make. But just as a nicotine company, they are predatory. It's your decision to go out and buy nicotine, do these kinds. It's your decision. But there is a beneficiary, whenever offering that bait. It's kind of like bait sometimes. But at the same time, we are absolutely responsible for our decisions. And we have to reap the consequences, whether that's positive or negative. Our parents teach us that growing up.
Well, and there's big issues too, I think, with colleges and advisors in college really giving kids bad advice, like about as far as what majors and things that they should do. A specific example that I could throw back to the 1990s for is my own dad came into college, didn't exactly know what he wanted to do, and he decided that he wanted to do geology. He thought geology would be really cool. And his advisor talked him into English, and that's a decision that he has regretted for some time, because geology, you can go oil field, there's all sorts of high-paying jobs. That's a STEM major compared to English, and he found that the job opportunities just weren't there when he got out of college, and eventually he had to circle back in his late 30s, early 40s and get his MBA. And so you get into situations like that where not only are you allowing kids to take out a crippling amount of debt that will follow them for the rest of their entire life, but then also on the other side, the advisors are often advising low-paying majors that aren't ever going to be able to pay off the debt. So it's a very bad system that's broken on a lot of fronts.
Yeah, 100%. And I just like to reinforce the fact that we're all responsible for our own decisions, but at the same time, I like the word predatory that you brought up, and I do think it's accurate, even though it's such a strong, aggressive word, especially with the connotation behind predatory. But especially it being one of the loans that you can't default on, that you can't declare bankruptcy on, that you can't do X, Y, and Z on. And it sounds strategic, right? It sounds like these things were put in place on purpose, and there might be a beneficiary. But at the end of the day, we are responsible for the things that we sign. We're responsible for the decisions that we make. We have to reap the consequences. And like we just heard in chat, it's just how you went through life. So some broader economic implications: reduce consumer spending. I think this is also a strategic move as well. I think that reduced consumer spending is a little bit calculated, but borrowers diverting hundreds per month to loans means less spending on retail, dining, travel, and discretionary goods. Maybe we might even see even more of a slowdown in inflation because of things like this. We also have housing market pressure. First-time homebuyers might delay purchases due to tighter budgets, higher debt-to-income ratios impacting demand in the housing market. Right, this is going to be a tough situation if we get that time window that a lot of young people were looking for to take advantage of the overpriced housing market. And this is going to kind of shrink that pool a little bit that was looking to take advantage of that, because again, this capital is going to be needed to go to different areas and whatnot. Credit card delinquencies may rise, right? Many borrowers leaned on credit cards during the pause, which is crazy. During the pause started a while ago, and I know we were just talking about Coachella. About 60% of those tickets were purchased using a buy now, pay later service, right? And then at the same time, right, consumer debt is almost at an all-time high at the same time. So it's almost like we could kind of see these things brewing about 4 years ago. Now we're coming to a little bit more of a consensus, but we could definitely see those brewing over the years.
Yeah, absolutely. And yeah, I think these are all great points, and especially the housing market pressure. First-time home buyers is already a market that is dwindling. There's no shortage of complaints about that circling on social media, and for good reason. Housing prices have vastly outpaced wages in the United States over the last 20, 30 years. But you're talking about now shrinking that pool even a little bit further of what was already small. So it is an interesting spot, to say the least.
Absolutely. As we jump to this next slide here, someone said some parents should be parents. Yeah. I know for myself, I don't know about you, Gus, but I know, many areas that I need a lot of improvement of, because I also know, whenever you're bringing a child into this world, number one, you need to be able to guide them, direct them, and teach them. And I think the experiences that we go through in life, is just equipping us for the tools to be able to do that and actually guide another human being. So I think some people are also, just, again, born into different situations. And it's not the fact that, I know we're getting some comments too, it's not the fact that people don't care about poor people. I think it's more so, I think a lot of the time what it is we struggle with certain things in our life, whether we're in our 30s, 40s, 50s, 60s. So we also see, I struggled, other people, so we all feel it. We're all kind of in this together. We all have moments where things are tougher than other times. But just back to the parent comment, it is important. A lot of these things, a lot of these issues do start from having good parenting, and at the same time, in a lot of cases, not really, because I know there's a saying too, and again, not to get off track, it is all about perspective, because there's that one saying, right? There was a dad, there was two sons. There was a drunken dad, two sons. One became very successful. The other one became a drunkard, just like his dad. They both were asked why they were in the position that they were in today. And one said, because of my dad. The rich guy said, because of my dad. And the poor one said, I'm like this because of my dad. So at the end of the day, we do get to choose our choices and choose a perspective that we want to take. But as we get into this last slide here, what to watch next? What does all this mean? Does this mean the market's going to boom? Is the market going to crash? What does all this mean? What can we even expect? Delinquencies, default rates. I know we're kind of talking on the same touching points, just from a different angle, but early data on missed payments show how borrowers are coping and could trigger changes in service policies or some political pressure. Spending behavior shifts, like we just kind of talked about, consumer spending going to be going down a little bit. And I think that ties into spending behavior shifts. Watch earnings reports from consumer-facing companies like Target, Walmart, especially Starbucks. Watch out for Starbucks. And then an impact on inflation. Less consumer spending may help ease inflation slightly, especially in services and retail sectors. Great topic, very educational. So we'll see what pans out of this. Any other thoughts on these last couple of slides here, guys?
Yeah, I think it's a very interesting and changing labor market. And I also think that it's very interesting that the labor market is in some ways shifting back towards college degrees not being as essential anymore. Still an incredibly valuable thing, and we're still a long ways away. But with how much easier it is to be a self-starter in the age of the internet and the age of social media, there are lots and lots of avenues that you can take to be successful with no college degree, or there is no shame in trades. I'm always saying this. I'm from Texas. There's no shortage of blue-collar boys down there. And I'll tell you what, there's people that went to trade school right after high school and have been making close to six figures a year for all 4 years while I was in college. The entire time they're making that money, and they're doing really well. You can circle back and go to college later if those things start to weigh on you. So I think that it's really become this cultural thing where we feel that you have to force every kid to go to college, and it's absolutely essential, or you will be a deadbeat. And it's just not really the case. If you don't know what you want to do, don't take out $100,000 in loans to major in something that's not going to make you any money. You can take your time and find your passions and decide the real right angle that you want to take. So, it's just. It's interesting, big nuanced thing. But as you said, at the end of the day, everybody, and as I saw in chat as well, everybody has to be the CEO of their own life. If you make mistakes, and you got to just roll with the punches. It's not how hard you get hit. It's how hard you can get hit and whatever.
Keep moving forward. I got you.
It's not how hard you get hit. It's how hard you can get hit and get back up and keep fighting. That's what I'm looking for there. Jeez, I really lost my train of thought in the middle of that one.
No. All good. But this weekend is Mother's Day. If you guys have a mother and you're able to call them, don't forget, order some flowers from now if you need to, or whoever might have been that mother figure in your life. So let's remember that this weekend. And anything else to add before we hop on out of here today? I love talking about topics where you can actually give or that have some meaning behind, or very educational, and also just getting different viewpoints. I love talking about these things. So anything else, guys.
I know it is always enjoyable, and there's lots of conflicting viewpoints going on in the chat here, and I think that's the beauty of talking about these things. I agree.
100%.
Yeah, I think
100%.
that the discourse is the most important part here, and it's really important to get and see all these different perspectives, and yeah, it's going to be interesting to see. And I also, this impact on inflation, I think that's a very good point, is that maybe in the grand scheme of things here, this actually could knock down inflation a little bit. So that's an interesting touch point there.
Yeah, well, lastly, I was listening to an audiobook. I can't remember who said it, but there was a great point. I was like, wow, that is really wise. I want to implement that. There was the quote said, I don't like to have an opinion on something if I don't understand the other party's argument better than they do. And I was like, wow, that was some wisdom for even me to hear, to really start diving into other people's opinions and understanding why they have that. I might not agree with it, but let me see where they're coming from and why they feel so strongly about this. Might not change my mind or my opinion, but let me see where you're coming from.
Well, yeah, and I think a very powerful mindset and something that actually has fundamentally changed my life is that it is okay. It's totally okay to say I'm not educated enough to have an opinion. And in the age of the internet, it feels like you're not allowed to do that, and it feels like you have to be an expert on every topic and argue with all these people on all these things. Everybody has a voice, and that's a good thing and a bad thing, as we've discussed in previous shows. But I think that add that to your vernacular. It would be a piece of advice I would give to anybody. I'm not educated enough to have an opinion. I use it regularly because there's so many things going on all the time that so many people have opinions on, and often I don't really know enough to speak on it. And so I think that's a prevailing issue. Also, I'll float something else totally random here. This is going to really derail things, but I saw somebody mention 1-800-Flowers. Do you know about the Katy Perry Act in California? This is something that I just recently learned about.
Enlighten me.
Yeah. So Katy Perry has 2 instances where she has sued super duper elderly homeowners, like owners of mansions, and then just like drug them through the mud and created all these court costs. There was one from 2015 to 2019 where she was actually trying to buy a convent, a former convent full of nuns, and there were 2 nuns who were very outspokenly against selling to Katy Perry, and one of the nuns actually died in court, like from stress, because she was in her 80s, and then after that, she tried to buy, and this is the tie-in, she tried to buy the mansion that the CEO or the founder of 1-800-Flowers owned. He was 82 at the time. And then after he had signed, he said he wasn't of sound mind because he was on a bunch of medication and tried to pull back on it. And her and Orlando Bloom drug him all the way through the mud until they finally got the house. And then they sued him for another $6 million in damages because he tried to go back on it. So anyway, there's now this law in California called the Perry Act, which is like Perry is capitalized. It's a whole acronym. But there's a fun fact for you all. Katy Perry is out here suing elderly people for their houses, and it's working.
Thank you for that. I need to learn something new every day, and I definitely want to have learned that on my own. You're putting it out there. That's crazy.
Yeah, I saw an Instagram post and had to back check that. But that is all factual shit that actually happened. So
wow, that's insane.
Don't give Katy Perry the streams, guys.
Don't do it. Also, if anybody watched the Nuggets game yesterday, no, you didn't, and we'll leave it at that. That's gonna wrap it up, guys. Thanks for taking the time to chop it up with us a little bit today on some of these topics. Of course, we'll be back. We'll have an update on a lot of the positions that we put in. We'll be back with another risk of the week, adjust those positions, give a breakdown on them. But that's going to do it for today's stream. Be sure to stay tuned for more coming on next. We'll catch you guys next time. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl.
Turn.
Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmy, shimmy.
I took 5 lessons for Casey's wedding, and all I knew how to do was
Right together, spin it around. Yup. And you want to clap. And then strut down, strut down, strut down, strut down. Right together, spin. Left together, spin. Hitch, 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 cross, turn, shuffle, lead, shuffle, rock, shimmy, lasso.
this is not good.
Hey!
Oh, he's got the walk down.
Not you.
He's got it down.
It's perfect, and you got the band. You got everything.
That is not even close.
God, bitch stole my. Oh, it's flawless.
Look, it's beautiful.
Flawless.
No.
You're walking way too fast.
And go stick your finger in all of our lunches.
Now complain about something.
Oh, God.
You watched the debate, you knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a blank
VHS
VHS tape to spare for the debate. Stas, what comes up next? The opening bell. Don't look so surprised. Sadlov has been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
What has
Wasn't
changed?
it?
I don't think so. Nothing's changed. The only thing they did, I think, was add the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here.
Do not engage.
When I got,
we didn't, wait a minute. So
when I got in this business,
we used to open it at 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that a $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard
Time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Oh, yeah. It is Thursday, May 8th, a little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Tasty Live's evening show, a little podcast, a little podcast called the price of truth, the show where we like to explore the incentives that govern our world. And every single day I say this, but we are getting our money's worth. Lots of incentives to explore. Before we do it, we should say what's up to the people. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade mobile and desktop applications. If you don't already have both, do yourself a favor and go get them. But if you want to be a part of Bing, this little guy, this little chat in the middle of your screen, there's only one place to do it, and that, my friends, is over on the evil Google YouTube. So head on over there, subscribe to the channel, find the Tasty Live channel, and hop in. Start bashing your metacarpals, your phalanges, your skull even against the keyboard to create random-ass characters and spoof the Google algorithm into putting us in front of as many people as possible. Should say what you rascals are in the chat. Let me say what's up. Oh, I'm going to sneeze. I can tell it's coming. What's up, Catan? How are you? Big Deal, Sleepy Mocha, Lone, Brian Watson, the GOAT of YouTube. What's up? Mark, how are you? Cato, Emmett, Theta, Lincoln, Joseph, Jay. What's up, everybody? I can't quit you. What's going on, everybody? My apologies. First and foremost, my apologies for not being here yesterday. Was it yesterday? I forget. All the days are running together. Yeah, a little medical situation at home. So I was in the hospital for yesterday. I got back a few hours ago. So my apologies. All is a little bit better on this side of the aisle, not me. One of the kiddos. But there's lots to talk about. Of all days to miss a Fed day, of all days to miss, I miss a Fed day. But quite honestly, if I was going to miss one Fed day, that was the one to miss. Good God. What a waste of a conference. I said this on Twitter, but what a complete waste of time that was. Let's talk price before we get there. S&P 500 up a little bit more than 0.5%. The NASDAQ up about 1%. The Dow Jones up 2/3%. The Russell, the little engine that could, up nearly 2%. And it's funny, man, you're starting to see a little bit of that, a little bit of the quote unquote broadening out. Every time that trade threatens to strike, it gets squashed down with reckless abandon. But a little bit of Russell outperformance here, and I'll get to stocks. I promise you, I will get to stocks. And there's a lot of stocks to talk about, a lot of sector stuff to talk about. But before we do it, do you mind if I just tiptoe? Let me dance over to ever so slightly to the bond market, because every once in a while, a broken clock is right. Approximately twice per day, but the curve, the 210 curve has come in. Does anyone see where it's come into? About 47 basis points. And does anyone remember when, right as the Trump administration was starting to soften the rhetoric, we were at 65 basis points. And I said, if the market believes this, if they believe this rhetoric is going to turn, I think we could see a flattening of the 210 into 45 basis points. I got short the twos. And I don't know. I've been picking my spots on the back end of the curve, but I just, every once in a while, it's fun to see these things work out. And so the 210 is back into 47 basis points as of today, my babies. And that mostly has a lot to do with the market repricing those twos. Has a lot to do with it. Pull up the curve in front of you guys. So we've seen this short end of that curve lift quite a bit. We're back up to 3.88. Obviously, the Fed sort of dragging its feet, doing whatever they were doing yesterday. A whole bunch of absolutely nothing. The market just, would you ever call a press conference just to tell people how much you don't know, how much you're uncertain? You know what I mean? Somebody said the funniest thing. Somebody said that could have been an email. I thought that was so funny. I thought it was so funny. But anyways, the market had long expected June to be the continuation of this cutting cycle. No, the market no longer believes that. It's giving it about a 16, 17% chance of that happening, at least today. Probabilities are dynamic. That can change tomorrow or with the next data release, the next press conference, who knows, the next tweet. But at least for now, it seems like the Federal Reserve is communicating that they would prefer to let the data tell them to move. Now, whether that means they're actually here's what I think that means. That means they're waiting for the unemployment number. They're waiting for this little guy. So what is our current unemployment rate? Something like 4.2%. So when some of you guys get fired and this number gets up there to 4.4 or something of that nature, then they'll move. That's kind of the way I interpret it. Or if this number gets scary, the GDP number. Until then, everyone's scared. At least everyone's pretending to be scared over there at the Fed building. They're pretending to be scared of tariffs. So we got a decent flattening in the 210 curve. What does that also mean? That also means a little bit of trust, I think, in the pieces of paper, the greenbacks that the United States issues, I suppose is the way that I would frame that. Just a little bit of trust. So gold off just a little bit here today. The 210 flattens. And then what I had also started to play was a short euro, short 6E. And we got a nice little break, a continuation of that today. And I think that's the trade in the very short term, in my personal opinion. I don't know what to do with equities necessarily. That's a hard one. But long dollar, flattening of the curve, and I don't really know that I don't want to play the short gold again. I think it could be very lucrative, but I think it's a hard short here. You know, it was a lot easier to pull that trigger at 3,500. I think it's harder at 33. But I'm also long silver. I don't know if I should be long silver, but I do think the gold silver ratio comes in. It was more than 100. I don't know if it still is more than 100. But I think that gold silver ratio could normalize, not will. I think it could normalize here. I like playing it to get back down to 90. So the question is, if that's true, and that's a big if, but if that's true, how do you normalize? Do you normalize by silver rallying, or do you normalize by gold selling off? I suppose both those could happen at the same time, but I'm hoping that we get a little bit of a silver rally out of this. And so those are kind of my plays. The silver rally is not really working out. That's of all of them, that one has not worked out over the last 2 days. So that's been a little bit of a dud. Let's see here. I'll read some of these. No yesterday's show and no this morning. Thought Victor was gone. Nah, man. They're just, Tom and these guys are super flexible, and they had to, had some stuff going on. My comment didn't make it to the feed. CCP interference confirmed. I don't know what you're saying, though. Appreciate that, Emmett. Trump tweets seem to have more effect on market. No, man, that's not it. It's not it, people. I'm telling you. Stop. Do not do this thing where we like overly simplify what's happening. It's hard. I had a conversation on Twitter. It's really, really. So here's what I think. I think we live in a very, I think we're living through the fourth turning. There are moments in time when the entire global order or the entire either monetary system or global order in general is sort of reorganized. Bretton Woods, you could argue, was one of these periods in time. Nixon in 71, leaving the gold standard. When was that? August 15th, leaving the gold standard. Maybe to a smaller extent, like the Plaza Accord. I don't think that was to the same extent, but like we've gone through these big periods of reorganization in the past, and we're living through one right now. And that, I think, there are people that understand that, like explicitly, they understand it. And then there are people that don't understand it explicitly, but implicitly, they kind of look around, they go, there's a lot of change here. You know what I mean? Prices are changing, governments are changing, the news is changing, medicine is changing. The sort of the social contract feels to be fraying a bit. I think people implicitly know that there's a bunch of change, and that makes you nervous. And when we get nervous, we cling to things, you know? We cling to these like totems to help us feel safe. Some of those totems might be, it's all the president's fault, right? And man, we got to get that guy out of there and get a new person in there so we can restore order to the world. That's sort of this overly simplified totem that makes you feel safe. It's wrong. I mean, you definitely might want a new president, but like to put all of the problems of the world into these singular totems, that's sort of this mechanism of our brain. And it's not true, or we overly simplify a narrative like, wow, the market's moving on these tweets. It's not. It's in my personal opinion, it's bigger, it's broader, it's more complicated than that. And I think to step back and see the bigger picture here, that no matter how much you don't want this to happen, it is happening. You know what I mean? And you can argue whether it's the result of one person or it's the inevitability of incentive, it's the inevitability of how a debt-based monetary system works, that there are constraints in that system, and once you reach the constraint, you need to reorganize or change the rules to allow or get past those current set of restraints. And I sort of believe the latter. I believed for several years that we were headed towards an inevitability that must be dealt with. And in my personal opinion, it wasn't going to matter who was in the White House. The only question was, how do you deal with that inevitability? But I say that just to say this. I do think what we are living through right now is really complicated and it's highly uncertain, and the distribution is wide. And I think it behooves everyone to do their best to get outside of whatever individual confirmation bias we have and to try to see a bigger, more complicated, richer, more nuanced picture of what's happening when we look outside. Because it is big, man. Edward says, Vic, tell us the truth. I don't get it. Hey, Victor, we were about to put your face on milk cartons. The unanimous vote, though, Victor, very intriguing. It's always unanimous, Catan. It's the new pope from a sanctuary city. Catan, it is. Yeah, Bitcoin over 100,000. We kept saying on this show, man, we right here, right here. You see this big highlight? You see that big area we highlighted where we said, this is interesting. This should not be happening. Theoretically, it should be much weaker. It's staying in this tight range. This thing looks like it's coiling. I don't want to freak out on the existing long trading position. Let's hold it. And isn't it weird that this thing moves to 90? Nobody's saying anything. It's moving to 95. Nobody's saying anything. This was like huge news just to get to 69,000 a year ago. And now, very quietly, the only people talking about Bitcoin were the people that are in that community, which I think is interesting, right? It's always the moment that you need liquidity. That's the moment this thing's going to start showing up everywhere in everyone's feed and on the news and all that stuff. Isn't it funny? Isn't it funny how it's real quiet when it seems like we're in an accumulation phase? No, nobody's talking about it. At least your cab driver's not really talking. Your Uber driver's not talking about it. Super quiet. Then we'll reach this point where it seems sort of, this number's crazy. This seems stretched. Then all of a sudden, it explodes. It's all over your social feeds. It's all over the commercials. Your Uber driver's talking about it, and guess what comes next? But we don't seem to be anywhere close to that. And it's not just price, man. It's like the amount of deals that are being done in this space. It's like everybody knows. It's almost like everybody knows when Trump and his own family are positioning in Bitcoin, and you kind of look at his economic policies. I posted some video. I think Yanis Varoufakis, the previous finance minister in Greece, a guy whose opinion I respect very much, and who wrote a great book called Techno-Feudalism. He's been really sort of articulating what he sees as sort of the goal of the Trump administration from an economic standpoint. And this is one of those things too, when people just go, this is pure chaos. It's like, no, you're in the algorithm that is feeding you that narrative. Because there actually is, in my personal opinion, if this guy who is not a Trump supporter, he's not a Trump apologist in any way, shape, or form, if he can sit down, and this is, he's the former Greece finance minister. There's a joke in there somewhere, but he's a really smart guy. And if he can sit down and objectively explain sort of what the objective is, then perhaps person who's going, this is just crazy, it's a monkey pushing buttons, it's like maybe you're the one who's really, really far off on this. Maybe you're getting fed just spoonfuls of what. But here's the point. The goal here is to significantly devalue the dollar and still somehow hold the reserve currency of the world. So that's a tough thing to do, to devalue and hold the reserve currency at the same time. And if you look at sort of his moves, right? He launches his own coin. He's, creates a Bitcoin strategic reserve, which is really just holdings of Bitcoin right now. You could look at that and you go, oh, he's just rewarding the crypto people from giving him money. And you're like, or his economic policies are going to weaken the dollar. And if it weakens the dollar, it's good for a certain class of financial assets. And if it's good for a certain class of financial assets, then why not get long? Now you can have that argument that that's personal or self-enrichment all you want to. And I'm not going to argue against it. But I am going to sit here and say that the amount of deals and money that's going into the Bitcoin space, the amount of people that are interested in it from a national sovereign point of view and perspective, it is bubbling each and every day, man. And this isn't just FOMO stuff, This isn't just FOMO stuff. This is like real business. This is real accumulation right now. How many Me Too companies have you seen that are doing something similar to MicroStrategy? I've seen a handful already. Sometimes I think about a world like we kind of have two tiers of money right now. You know, if you have enough money, then money in your world is, well, I can argue sort of illiquid assets, but let's put that to the side. There's like treasuries and then there's dollars. But I could see a world where two classes of money, Bitcoin and then central bank digital currency, which is effectively a dollar, but it comes with more control. So if you have Bitcoin, it's in a sort of an asset that holds its value against a depreciating dollar. The depreciating dollars are given out to the poors, you know? It's a thing that once AI disrupts the entire sort of labor structure, it's just like, all right, there's not as much room or opportunity for productive purpose. So here's your UBI units and central bank digital currency. But you only get them with compliance and obedience, right? And if you have enough Bitcoin, you're not subject to those same rules. Because you're not relying on its issuance, the CBDC issuance. I know what I'm saying is crazy. I'm sorry. Sorry for going down that rabbit hole. My point is I would, you know, you could look at this and go, this is a retest, a double top for some to distribute out of their 100,000 position. That's not the way I'm betting. I bet this thing makes new highs. That's the way I'm betting. And, oh, by the way, we had that discussion. I forget now because the days all run. I don't know if this was last week or this was early this week. But I think we talked about, I talked about how I wanted some longer-term, stupid upside Bitcoin exposure. And then we talked through it, looked at BTC futures, but the options, one, are not, they don't offer the greatest liquidity. But then two, they only go out like 80 days. So you can't get much long-dated exposure. MBT is even worse. I think there's only one series. Yeah, one series of 50 days. So I ended up going with IBIT and just bought some D2025, so some longer-dated upside calls. So just letting you know, I ended up pulling the trigger on that. And this could I didn't get a great price, you know. Maybe if I would have thought through this and put that bet on 20 points ago or 10 points ago, it'd be a lot smarter. Here, I don't feel great about it. It feels like a little bit of a FOMO at 57, but I didn't put a ton of money into it. Just a little lottery ticket. Taif says, at Victor, bear market rally, my friend. That's the way that I'm positioned. That's the way that I'm positioned. But the problem is, Taif, like, I'd feel more comfortable if when you said those words, like when you say bear market rally and everyone calls you an idiot, then I feel like we're closer to a top. Like when I was talking about getting long exposure when the markets were S-ing their P's down at 5,000, everyone called me an idiot in the comments. Everyone said, you're an idiot. You don't know what you're talking about. You're an apologist. What's wrong with Victor? How can he not see what's going on? I saw that all the time. And it was almost like, it almost made me even more confident that was a decent risk reward. And the problem is here, this is pure anecdotal sentiment. So there's no hard data behind this. But the problem is here, I hear more people calling this a bear market rally than those that sort of are confident in the rally. And that's a problem for me, from just pure anecdotal sentiment. I would much rather a bunch of people say, you're an idiot. That was just a fluke 3 weeks ago or 4 weeks ago now. And you missed all those prices. And now you're just trying to, you're just hoping it goes down so you can get lower prices. I would much rather that be the stuff that I was hearing. But too many people are calling it a bear market rally, which means if you're calling it a bear market rally, it probably means you're underpositioned right now. And if there are enough people who are underpositioned, then the pain trade is actually up. It's not down. And the market tends to go where it can inflict the most pain on the most people. And if most people are underpositioned right now because everybody knows this is a bear market rally, then this thing goes dumb higher. This market goes stupid higher until it makes you a believer, and then we roll over. All pure anecdotal sentiment stuff, the psychological warfare that you play with yourself inside your own mind. I do agree, but I think the way I'm playing this is a barbell. That's why I own that's why I want to own dumb Bitcoin upside, because if I'm wrong, then the high beta stuff is going to go dumb, stupid to the upside. And if I'm wrong, there's still a chance that Bitcoin doesn't get murdered. There's a chance. So I'm playing sort of in the equity world. I'm mostly neutral. Same thing I've been, like maybe a couple hundred portfolio deltas to the upside, not much. And then, but I am long Bitcoin to trade as a trade, not just a long-term investment, but I'm long Bitcoin as the barbell, the high beta upside, so that if I'm wrong, well, I'm not going to make as much on the portfolio deltas that I would have because I put a hedge over the top. But this long Bitcoin is high beta, so it should perhaps help me with any missed long deltas. That's sort of my thinking. Tungsten, how are we feeling about equities today? It hasn't changed, man. It hasn't changed at all. I think the administrator, if they get their wish, they would like to keep peppering the market with a lot of these trade deal announcements. But in my personal opinion, I think yeah, like if getting these trade deals announcements is a surprise to you, then you were just on the wrong side. You were just too pessimistic. You were too the Great Depression, 1930s repeat. Like you were way offside. So to me, these announcements are not a surprise. What I'm more interested in is any details in these deals themselves, which I'm not seeing a ton of yet, but I haven't had a ton of time to go through them. But I sort of think that's probably good. I don't know how much it does for you in sentiment, right? As soon as you confirm the talks with the Chinese, okay, you got to deal with the UK. Let's take a look. Well, the UK was only a 10% tariff anyway. It's a signal that to me, this is a signal. They reinforce that 10% is going to be the floor. The markets were right. At the very beginning, the markets had priced about a 9 or 10% tariff. And to me, the only reason we dump is because the reciprocal tariffs were on some countries were so far above that. The market was way off sides on that stuff. But if you believe that we were going to work our way back, that was all just sort of over-rotating to try to negotiate it back down to 10%. It was the attempted creation of leverage. Then I think a deal with the UK doesn't do a ton to change the market's initial perspective that this was a 10% floor, and you just sort of wonder what they're going to get out of it. I'm going to read a little bit. The deal with the UK keeps a 10% blanket U.S. tariff on UK imports, adjusts tariffs on UK autos so that the first 100,000 vehicles imported from UK car manufacturers each year are subject to a 10% rate, and any additional vehicles face a 25% rate. It creates $5 billion opportunity for new exports for U.S. farmers, ranchers, and producers, including more than 700 million in ethanol exports and 250 million in American beef and other agricultural products. You know, this is the one I knew was coming, especially for Europe, because they have a lot. They have really, from my perspective, they had pretty good laws on what they would. On food safety and food health. You know, they already, if I'm not mistaken, they already banned a lot of these food dyes. You know, they don't import our ethanol and our beef mainly because of what we do to it. And I made this joke before that Americans don't even want this shit. We want to reform the seed oils in our country and the steroids in the beef and the glyphosates on the produce. We don't want this shit. And so I thought whatever's coming with Europe, I guarantee you that the ethanol business and the beef business, they're leaning into the administration to say, make them take our stuff. So this one doesn't come as a surprise. Commit both countries to working together to enhance industrial and agricultural market access. That's a big nothing burger. That's just a line to pad that this is doing something. Close loopholes and increase U.S. firms' competitiveness in the UK's procurement market. That's basically saying, in my opinion, that's saying that the UK is not going to, needs to work with the U.S. to not allow China to go through the UK to then export into the U.S. That line, that's what that means to me, the closed loophole line. And I'm guessing we're going to see that repeated on a lot of these announcements. Streamline customs procedures for U.S. exports. Establish commitments on intellectual property, labor, and environment. That's another one to try to prevent IP theft. Secure the supply chain of U.S. aerospace manufacturers through preferential access to high-quality UK aerospace components. So this is interesting. This sounds like a flip. Hold on. Secure the supply chain of U.S. aerospace manufacturing through preferential access to high-quality UK aerospace components. I got to look at that one. I don't know what that one means. Because there's only really Boeing on my side and Airbus on theirs. Create a secure supply chain for pharmaceutical products. I don't know what the hell that means. Most of our stuff comes from either China or Germany. Require the U.S. to negotiate an alternative arrangement to Section 232 tariffs on steel and aluminum. Yeah, so now I need to go deeper into this announcement, but like on its face, there's not a ton here. I don't know. Maybe I'm missing something. Did anyone else go through this in depth and actually see anything in the UK trade agreement that was like eye-popping? I haven't had the time to dig into the whole thing other than sort of the fact sheet that was put out by the White House. One of the things I think that came out is that from the U.S. perspective, that there's a new market access to $5 billion of exports. Tariff revenue will be $6 billion in external revenue. UK tariffs were 5.1%. They're now 1.8%. U.S. tariffs were 3.4%. They'll now be 10%. I am reading that. That's coming from some source in the administration. I don't know if that's 100% true. You got to read a lot of this stuff with a grain of salt. I think that airplane or the aerospace line was just about something about Boeing being able to buy parts from them at some cheaper or preferential pricing. That's what that sounds like. I don't know. I guess sorry to the Europeans. When it comes to your food, you're about to have bigger humans. Congrats on all that steroided meat we're about to send you. When I first came to Singapore, one of the guys asked me, a younger guy on the desk, he goes, like 5 or 6 of you have come over now. Or maybe it was like 8 of you have come over. He's like, you guys are all big. Why are you guys all so big in America? And I thought it was funny. I just thought maybe a survivorship bias or something like that. I was like, no, actually, he was probably onto something. Anyways, how am I feeling about equities? And it hasn't changed. I just wish sentiment was a little bit poorer right now. So because it's not, I could totally, I was kind of hoping we'd get a 5650 or 5700 roll, with 5800 being sort of where I saw it getting to on the max on the upside. I don't know if I see it that way. I some part of me thinks 6,000 could be in play. I don't want to trade for that. Like, there's no part of me that wants that 120 points in the S&P. So I just got to figure out how to keep my P&L positive if that happens. So the equity part of my portfolio is kind of capped right now, and that's why you hear me saying a lot of other things. What I'm doing with bonds, what I'm doing with Bitcoin, what I'm doing with silver, so that's me trying to find other opportunities to keep my P&L moving in the right direction if I've hedged off the upside in equities. And so the best case scenario would be for a dump, depending on the catalyst, but it would be for a dump to 54 or 52, release the hedge, and look for opportunities again at cheaper prices. That's the beautiful world scenario. But in a not so beautiful world scenario, it's okay. The downside hedge is taking up the money that my long equity portfolio would have made, so I got to go make it up somewhere else. Last year, U.S. imported, this is from Uptick Downtick, last year, U.S. imported 102,000 cars from the U.K., non-issue. Yeah, they have to figure out a way, because if I'm not mistaken, maybe that's the EU, though. That's different than the UK. All right, let's keep going. Catan says they don't want our chicken. Night moves. I agree. They do have higher standards of food in Europe. Not for long. But by the way, much of the rest of the world, not for long. This is basically big ag is using these tariffs to say, all right, if America wants to eat healthy, that's fine, but somebody else is going to eat this stuff. Big Deal Donuts. This is true. We don't want it. I think isn't this the greatest irony? It's like when we, and I say we, just sort of assuming, not putting you in part of this movement, but just saying collectively we have put Robert F. Kennedy Jr. in the Secretary of Human Health and Services role. And could there be any greater irony of exactly when that happens? It's like Big Ag is forcing Europe to eat this stuff. Ironic. So then the question becomes, okay, what happens? Do we change our standards to meet EU's restrictions? Doubtful. Highly doubtful. Or is the more likely scenario that the EU is going to have to relax their local laws to accept our exports? Highly probable. You guys got a lot to say on the food stuff. Hold on, let me read through some of this. You guys talking about Pfizer? Oh man, I lost my place. Now I can't find where you guys were talking about all this stuff. You know what was up big today? EBS. So it's like 34%. Remember that little guy we were talking about? They have vaccines for is it bird flu, monkeypox? Brad Glazer, more anecdotal thoughts. Some of that chatter is just parroting of what I heard the experts say. In my opinion, we are too early in this phase to call this a bear market or a bear market rally. I guess so. I guess if you want to be totally nuanced about it. I personally, I think we got the NASDAQ corrected more than 20%. I think the S&P at one point got close. And I'm not like, if it walks like a duck, if it quacks like a duck, you know what I mean? So if we're off 10%, I call it a correction. If we're off 20%, I call it a bear market. And I don't think too much about the nuance of those words. To me, I'm just talking, it's just the percentages, right? So at one point, the Russell was down 21%. The NASDAQ was down 19%. The S&P, I think, at peak was down 15, 16%. So, yeah, I mean, we were somewhere between correction and bear market, technical correction and bear market territory. And I don't even think those numbers are just pulled out of the air, too. You know, what makes it a correction at 10 and a bear market at 20? I don't really think about the nuance of those words. I just, when it's close to 20%, I call it a bear market. That's all. Tiago says, Vic, I told you in the middle of the crisis in April, calling it a crisis, in the crisis in April that my portfolio was highly hedged in Fartcoin. Today, I'm flying high. Congratulations to you, my friend. Yeah. Yeah, so I think, I don't know. I don't really know how I feel about these trade deals. You know, this is all it's just openings for a lot of these entrenched monopolies or oligopolies to impose their will on other countries. And, you know, to me, it feels like the inverse of Biden's subsidies, which was preferential treatment to monopolies and oligopolies just through different methods. They gave money directly to corporations. In this case, we're giving market access directly to corporations. And I don't understand why we can't, you know, why we shouldn't be just opening up opportunity just more broadly and allowing markets or people to compete for those opportunities. It doesn't really seem like that's happening. But I don't know, maybe I'm just too much of me is too idealistic, you know? I need to be more pragmatic. Let's talk about the VIX and the volatility structure. So VIX, I don't know, can I say it got crushed? Quietly crushed over the last 3 weeks. Back to 22. If I could say that's one saving grace, that while the narrative seems to be a bit still negative or not super positive. I would say one saving grace is that vol continues to work its way down. I would love to see vol at like 18 right now. I feel much more comfortable betting against the market direction right now if vol was back to 18. And so I think we still got to get there. VIX term structure, interestingly enough, it's looking a lot better. It's looking way healthier today than it has in the past. I mean, we've been looking at this in straight backwardation for a very long time. This thing's flirting like it wants to go flat. Flat is not great, right? That's not contango, but which is its normal structure, but it's looking a lot healthier than it has in the past. Another, I think, good, helpful signal, I think, for the position of betting against this thing, meaning betting against the market, betting to the downside, is that you don't have as much hedge, as much fear in the market. Now, the bad thing is it's flat, but it's flat at 22, 23. So it's not flat at like 18, it's flat at 22, meaning there's decent demand for protection in the market still. And you're still paying a decent price for hedging activity. Like I said before, I'd love to see this back at 18. I'd love to see this normalized into contango as a sign that true complacency was in the market. But we're not there. We're not there yet. This is from SLG. I own a small ranch of about 600 acres with about 150 head of grass-fed beef. It's amazing how hard it is to sell. Everyone wants to eat healthy, but not take time to search. Yeah, SLG. I agree. I agree. Jay says Amish in my area have that market cornered. I have grain acres I rent out. Their presence put a floor on prices for a lot of things. Interesting. Let's keep cruising here. I talked about this earlier for just a minute. I want to go back to it. The cuts starting in July now, and we've only got 3 priced for the year. So we had the over-under discussion a couple of weeks ago, maybe it was last week, when we were priced at 4 cuts for the year, 4 and a possible even. Would you take the over, the under? And I think some people wanted to take the over. I wanted to take the under. I took the under, and that means I sold short-term instruments. My preferred was the 2s. I sold the 2s, and those have risen. I know this is so I sold the 2s. Those have dropped in price. The ZT futures have dropped in price, which means their yield has risen. So far that was a decent bet, and I'm going to hold it. I think they end at 2. I think if they can get away with it, they cut. It's somewhere between 0 and 2. But I do not think inflation. I don't think inflation is a problem right now in the data. I think it's a problem in real life. I don't think it's going to be a problem in the data for the back half of this year. I think that's a made-up story. Completely made up. This is the one I was telling you about earlier. It's called Emergent Biosolutions, I believe. We traded this one. Traded this one a few months back, and I still own it, actually. Some of it. It's vaccines and antibody therapeutics for infectious diseases and opioid opioid overdoses. It provides medical devices for biodefense purposes. Oh, God. This is an emotional hedge, man. You know, sometimes you buy these things and you want to lose money in them because you don't want the future where these things make money. These kind of look a little bit sick. Some of these miners look a little sick. I'm thinking it's probably time to hedge these things. Put on a collar. I'm long equity, particularly in Newmont mining. And I kind of think it's time to put in a collar on some of these stocks. They've done really well. We've made some decent amount of money in this. These things have come from like 40 when I first started talking about it up to 57 at peak. I think it's probably time to sell some upside calls and use that money to pay for downside protection and lock in some of these profits. On Newmont especially. This thing has been a big ripper this year. It's probably time to collar this bad boy or just to sell it out outright. But I don't, this would, for me, was a longer term position on a relative basis. I still think they're cheap and they're under owned. But I do think it's possible, given everything I said about gold and the gold silver ratio, I think it's possible we see a little weak pocket here in gold. And these miners, the chart looks a little sick. Earnings they're going to have blowout earnings. You could sell the 55s, pay for the 50s, and just keep on basically $2.50 of risk on Newmont. But you lose any upside above 55 in the short term unless you choose to roll. I think that's what I'm going to do. Anyone buy the dip? Oh, the other thing I didn't get to talk about yesterday was Google. Anyone get the opportunity? I say the opportunity. Anyone buy the dip in Google yesterday? Any of you degenerates? I did. I think I got 151.60 or something like that. I put whatever price I got on Twitter somewhere. But I bought it 151.60. I got a decent price actually. Night Move says upside target for me and Newmont mining is 70. I think it could get there. Yeah, yesterday I bought a little bit of Google, and I haven't been really establishing new positions here. But I really liked that setup. Apple adding AI to search, potentially threatening, what's that, the 20 billion or something like that Google pays Apple. I liked it. I think those types of things, in my personal opinion, are going to force Google to actually try to make money again, to do something interesting or innovative. They've just been sitting on the stuff that they own. They haven't been doing anything interesting at all. I was just going to get there. Mark says I bought the Palantir dip. Yeah, up 8% today. That's insane, man. This one, none of the old school defense companies are rallying. I don't get that. Raytheon a little bit. I don't get that, you know? It's like old school war is out of style. It's all drones and AI. What do we need? What do we need warplanes for? What do we need ships for? I can't pull the trigger on Palantir. With a new stock position here, which sucks, man. It sucks, but I gotta stay patient. You know what's funny? I'm gonna end up buying it. You know, I'm gonna end up buying it at 100 and thinking it's cheap. You know, this thing's gonna go to 150, crack down to 100, and I'm gonna buy it. And I could have just bought it in this congestion area. But I just think it's expensive right now. But it's so clearly like the next, I don't say clearly, it's so clearly the next thing. It's so clear we're headed to that world that I was like so fearful of, sitting in my home office in 2021, 2022, thinking about stuff, taking things to the far end of the distribution curve and going, oh, well, over here I'm in a bread line. And over here I'm getting CBDC credits. There's 150 vaccines on the schedule, on the CDC's vaccine schedule, and I need permission to leave my house. I have limited carbon credits that I don't use, that we sell off for additional CBDC credits. That's where I got when I took myself to each end of those distribution curves. So then I said, okay, well, what works in both? So I was like, all right, well, prisons work in both of those environments. Probably healthcare, certain elements of healthcare work in both of those environments. And on this side, it's way more about biotech. And so that's when I started messing around. That's why I wanted to accumulate mRNA, though I think they might have done a lot of brand damage. They might only be good for parts at this point, but mRNA, Pfizer, EBS, and then I started thinking about drones. So who's got decent drone technology that's directly investable? EVOTLs, it's basically like flying cars, flying vehicles, flying drones. Yeah, and then I thought about the right tail of the distribution, because you can't just always live in the left tail. No matter when you get left tail risk, you get a response that catalyzes you to the right tail. So if you're right about the right tail, you just might be early. So then I just thought, well, I'm going to buy all this stuff. I'm going to buy the drone technology and the biotechs and the automation. I couldn't get to the AI because it was too expensive. I'm going to buy the nuclear energy. I'm going to buy utilities. I'm going to buy water as a service, or water treatment. And sort of that's how I saw the world. And I go, I'm just going to buy the stuff that creates the parts that create that world, and just sit on it. And then, the other part was like the materials. I'm like, oh, well, the critical materials, they take on a whole new meaning in that world. Rare earths, all these critical materials have a new heightened importance. So that's how I thought through those things. And that's the stuff I mainly hold. And I didn't want to buy NVIDIA and Microsoft necessarily, because I was kind of late. I felt the prices, they were already pricing that part of it. So let me go buy the second and third orders. That's kind of the way I thought through what I was buying. And Palantir at the time was like $18, something like that. It was maybe low double digits. And I was like, well, this is that world. If that world is coming, like this is the perfect representation of the type of automated, authoritative control you would need in order to establish or maintain order in a world that nobody really wants. Nobody wants to live in that world. So how do you maintain order in that world? And it was a bit more academic than this. I'm just explaining like the sort of the core thought process behind it, you know. And then you go into the TAMs of each of these businesses or the potential total addressable markets, what people are saying, and then what you believe to be true. Who are the market leaders? What do those companies actually look like? Are they real? That's kind of the hardest problem. It's like we live in a world with so much, you know, so many fake companies, fake NGOs, fake initiatives, fake nonprofits. Figuring out if a company's real is actually pretty hard. All right, let's keep going. End of the week here. I'm telling you, data didn't look half bad this week, which I love. And we are now at the end of the first week in May. So this is 30 days past quote unquote Liberation Day. I was told I don't want to be too cavalier. I don't want to be too cavalier about this too early, because I do think there is logistics and supply chain risk. But, you know, people were effectively saying that the first week of May, by May 10th, your grocery stores were going to be empty. And I acknowledged the risk, acknowledged that there were concerns about this, but then also logically, we looked at durable goods. We looked at GDP. You look at retail sales, like all this stuff is getting pulled through to right now. So where do you think all this, if you can't say, you can't have two opinions. You can't have these same two opinions that on one end, everyone's doing pull through purchasing because of tariffs and the uncertainty it's creating. You can't say that out of one side of your mouth. Then on the other side of your mouth, say, the stores are going to be empty. What do you think they're doing? Where do you think all that inventory is going? You think it's going to the consumer or the producer? And I think most consumers, the people in this world, they think that way. They think, oh, I better go buy some stuff to get in front of tariffs. That's not the average person on the street. They are not thinking, I got to go buy my new kitchen before tariffs hit. That's not how they think. So a lot of that buying was at the producer level. And so, yeah, like if this drags on with China for a long time, I think there might be less SKUs available and toys and stuff like this. And here's the other thing. Here's what I think is a very high likelihood that as we get closer to the holidays, if a deal has not been struck, as we get closer to the holidays, you're going to see a five scale, is that it? 5 scale, 5 alarm fire. 5 alarm. You're going to see a lot of alarm. The narrative that we're running out of stuff and that we don't have anything, it's going to be everywhere. It's going to be on TV and the 5 o'clock news. It's going to be in your news feeds. It's going to be on YouTube. It's going to be everywhere. And I would just implore people to think critically and logically when you start seeing that stuff. And judge things by your own personal experience in the real world. I think the biggest problem a lot of people have is they spend a ton of time online. And when you spend a ton of time online, you can there's a reality there that can get shaped for you. And then you forget that, oh no, when I went to the store, I got everything I need. I can get everything I need. If you personally are not impacted by this stuff, or you personally don't see it, you should take it with a grain of salt. That's all I'm saying. Because the longer this drags on, you're going to see it everywhere. And you got to ask yourself why. And then if you personally are seeing that same experience, well, then it's a different story. Then it corroborates. I don't think it's going to be in 4, 5, 6 weeks. I don't think it's going to be the issue that people thought it was. It's like, come on, man. You think our supply chain our supply chain is much more, I think, brittle than people would want to believe. But I think if you think we can't get cheap trinkets from other places for the holidays, think again. Things are getting shorter. This is Howie G says, things are getting shorter. In the last 5 days, Best Buy Dell 650 laptop is now $800. I don't know. Is that a lot or a little, Howie G? What's that relative to its normal price? Victor, what are you smoking? I need some. What do you mean? What do you mean? Howie G says, we will have shortages in the next 4 weeks. Yeah, but that's a moving goalpost. You're now at 8 weeks. 4 weeks from now would be 8 weeks from Liberation Day. And the people screaming about logistics the loudest said in 4 to 6 weeks, you're going to see empty grocery stores. And then the other thing, we will have shortages, sure, but on what? On what? So if I go to the grocery store and I can get oranges and apples, and I can get, meat, like what exactly should I be freaked out about? Should I be freaked out that there are less, what would be an example? Like less video games available at Best Buy? Should I freak out about that? I don't know that, like, I personally am not going to freak out that there's less video games available. I personally am not going to freak out if there are less, stuff with like cheaper circuitry, which is a lot of this stuff comes from. So like if there's less, what is that thing called? What's that thing called? The little cars that kids ride in, the electric little cars. I've been searching for that word for like the last 30 minutes. I can't think of the word.
Power wheels?
Thank you. Thank you. Jesus. Yes. Should I be freaked out if there's less Power Wheels at Target? No. If there's less action figures on the shelves? No. I'm not going to be freaked out. And not only that, if you're not careful, you being nervous about shortages, it's going to do the same thing they did post-COVID, where they convinced everybody about this revenge spending concept. And everyone's like, ooh, I'm glad I'm out of my house. Let me go spend all the money I just saved up. If you're not careful, they are going to trick you guys into spending all your damn money to get in front of shortages or being happy that you found something that was supposed to be in short supply. Captain Crunch Victor. I don't get it. You think I'm crazy? Is that what that means? Howie G says, no, you should not be freaked out. You are on the other side of the world. That's true. That is true. Laptops are commodities that run the world, including your YouTube show. Wrong. Most people watch this on their phone or their tablet. I hear what you're saying, Howie. If you believe that you're in 8 weeks, people aren't going to buy a laptop. By all means, in 8 weeks, let's have that. In 4 more weeks, let's have that conversation. I am willing to bet you there are going to be shortages of certain SKUs, or low supply of certain SKUs, and I'm willing to bet you that the story is going to be told, it's going to feel like that's the biggest deal in the world. And all I'm saying is that it probably will be beneficial for people to take a step back and a breather from the way things are reported, and then and objectively ask yourself, was I ever planning to buy this thing or not? Did it personally impact me? And if the answer to that is no, then perhaps just frame it up differently for yourself. That's what I'm saying, Howie G. That's all I'm saying. And if in 4 weeks, my friend, I'm 100% wrong, grocery stores are empty, then I'll say this was a lot more impactful than I thought it was going to be on products that people care about and they need. But my mental model right now is one, there aren't going to be as many shortages as people think, and the shortages are going to be in items that are outside of people's critical consumption. But if I'm wrong, I'll say I'm wrong. Victor, damn, Vic didn't get his kiddos Power Wheels. He had one of those they had a motorcycle. I just couldn't think of the word, Victoria. New Kimberly Thomas. This is the most interesting thing that anyone said. Kimberly Thomas, new American-made products will fill the stores. I think they will, not inside of this time frame, not in 8 weeks. But I do think, look, there's a big part of me that is thinking, for a while, the game was just buy high beta assets and the Fed's going to print you into wealth. Okay. Then the game began, just come up with some nonprofit organization that, fixes some problem on, certain aspects of our society that can never be fixed. Fix those things. And some government program will give you hundreds of millions of dollars, if not hundreds of thousands of dollars, and that's your golden goose, right? Now, to me, it seems like there's a big opportunity to make real business. You know what I mean? To create real economy business in the U.S. I think there's also a big opportunity just to own Bitcoin, I think, and not do anything really productive, and then probably create wealth, if I'm right. But outside of that, there's an opportunity to create real business in the American economy right now. I do think that's true, Kimberly. All right, here's Soul Train says, honestly, Vic, can you admit if Big Lots, Party City, Kmart, and other consumer stores are closed, does that not equal empty shelves? If they had business, they would not have closed up. So correlation, not causation, right? All these, Kmart went out of business years ago. Party City went bankrupt after COVID. Big Lot, like these, just because these businesses just because these stores went out of business has nothing to do with what happened 30 days ago with these announcements. I hear what you're saying, but they're closing up for a whole different reason. And I would argue one of the reasons this place closed up. Let me not go down that path. Kimberly said the same thing. Where the heck is there a Kmart? I thought those places went out of business. Howie G says, I'm 76. You guys are not going to fill the gaps. You cannot even make it into work 5 days a week. Okay. Starting to help frame up your view of the world here. Okay. We can't make it into work 5 days a week. So let me hear. So what you're saying is, because your experience has been that, I don't know if that's a direct dig at me or if that's just if that's maybe a more broad dig at just the generation. So let me assume it's a generational thing. Because your experience has been higher levels of truancy with a newer generation, they are incapable of creating business. I don't think that's a good point at all. One, you don't show up to work 5 days a week to work for somebody else who tells you what to do. Ergo, if you owned your own business, which had your own unlimited upside potential, where you're motivated in a completely different way, you would not be successful. I think that's probably largely off. I get what you're saying. You're generally saying if you have a good work ethic habit, you apply it in all cases, and I would agree with that. But I also think like one person who doesn't show up at the job where you are at doesn't mean that all in our generation aren't capable of creating entrepreneurship opportunities for ourselves and for others. I just think it's a miss. I could make it into work 5 days a week, but instead I do it more like 6 days at random times for false emergencies by people with stupid priorities. That's really funny. All right. In closing, counselor, this is one of those times where I could be out on a ledge too early, and I will openly acknowledge that. I think there's one thing I want to do when I come here every day for 4 days a week. Zing. And that's I'm trying to make money. I'm not trying to be right or look good in front of an audience. I'm trading my real money, not a trade account that Tasty has given me. Like this, I'm trading my real money to try to make a better life for my family. So the decisions that I make in front of you on a daily basis, they impact the school, the money that's available for education and for my kids' legacy and after their kids' opportunities. And so I'm not trying to look good in front of you guys. honestly. And there's going to be some times when I make bad calls and it doesn't work. And I'm hoping that I can be intellectually honest with myself and have the integrity to come in front of you and say when I'm wrong.